price seems to be the aim there, as stated by the management. And Novartis in focus, the drug maker over in Switzerland, of course, boosting its sales target. Two key cancer drugs, Kisqali and Scemblix, in focus, and they're raising their peak sales target because of these two drugs, Guy.
Okay, here we go, Thursday session. I'm going to throw defence stocks in there as well. Keep an eye on defence stocks in Europe. But let's take a look at some numbers. Let's figure out what's happening here. We put the AEX in this board just to give you an idea of how that market is going to open. FTSE 100, I'm not sure, is a particularly good tell on the European story this morning. It's up by 0.2%. Take a look at what is happening with defence stocks. Take a look at what is happening in the pharma space. Take a look, of course, what's happening with the chip sector. But maybe a subsector of that, the cybersecurity space, could be interesting in the light of what we saw yesterday with Palo Alto. There's plenty in the mix. We haven't even talked about the Fed yet and what's happening there. Keep an eye on the yen, keep an eye on Japanese stocks. But European stocks at the get-go this morning are up quite nicely. CAC out of the gate reasonably early, up by 1.2%. The AEX is up by actually a similar amount, which is interesting. The IBEX is up by 0.8%. The FTSE, actually not a massive underperformer this morning, only up by 0.6%. But it is a market on the front foot. But how long does the NVIDIA sugar rush last for, I think, is a key question this morning. Kriti, what is happening in sectors and single stocks?
I mean, no surprise. That tech read-through that you're already seeing on that index level is certainly bleeding through. Your biggest index contributor is ASML, but it's powering a rally across all sectors. I think this one's interesting because you can see that this is a pretty broad-based rally on our hands. Basic resources, banks, telecom, travel and leisure, sectors that wouldn't necessarily catch the NVIDIA read-through are higher today. We should point out as well, though, that the market has been selling off throughout most of this week, especially here in Europe. You have seen a lot of the underperformance. So there is a broader bounce back to be had, and perhaps a little bit of a sigh of relief when it comes to those NVIDIA earnings, as given it was a big macro event. It's not the only stocks that are moving, though. You are seeing, I would say, a decent amount to the downside. Only 54 stocks on the downside, broad rally, but kind of a mix of what we're seeing, Anna.
Yeah, very few to the downside, as you say, in the stock 600, and no sectors to the downside. So that does seem to be fairly conclusive, at least for the moment, where this sugar rush, as you put it, Guy, has delivered us. The technology sector then up by 1.7%. Financial services also doing not bad. Banks on the back of that as well. Autos and auto parts, though, lagging. And that was another sector that was sold off with that cyclical sell-off that we saw at the beginning of the week. And it's not bouncing this morning. That seems a little bit more beleaguered. Valeo within that sector seems to be the main laggard in the French market this morning.
Paribas up massively. BNP Paribas up by nearly 6%. I was trying to work out what it would do on the back of bringing forward the capital uplift that they've delivered today. The market's taking that very strongly. I wonder whether that would impact buybacks and things like that. But once you look into the details, that's not the case. So that stock's up really strongly. Not as much as ASML, but it's a decent gainer this morning. I'm just trying to see if defence stocks are coming back. Rolls-Royce is up a little bit this morning, 1.5. Rheinmetall is rising as well. Not completely kind of reversing some of the losses we saw yesterday. And I think here's a little cold water just in terms of what we're seeing in the session this morning. On the week, we are still down, even with today's decent bounce, on the stock 600 by 2.32%. So we're still down.
We love a 6-day chart, right, Guy?
Oh, that's Monday, Tuesday, Wednesday, Thursday is where we are right now.
On Monday, we'll get to a 6-day chart. There is a lot going on, though, to your point, and it feels like the tech story is dominating across the board. Yesterday, we had a conversation with the NASDAQ CEO, Adina Friedman, about this very conversation. I should say, I think earlier today, actually, I'm getting my time difference on. This is happening at Bloomberg New Economy Forum in Singapore earlier about the pace of growth in AI investment. Take a listen to what she had to say.
There's going to be some uncertainty as to exactly the path of progress, the path of investment, and these types of signals that you get from the companies that are really leading this revolution are the ones that the investors need to be able to help them understand that it remains on track. The hyperscalers and other major tech companies, I think, are continuing to drive the support for the overall view that this is a great investment to make over the long term.
Adina Friedman there, the CEO of the NASDAQ, commenting not only on NVIDIA's earnings, but of course what you're seeing in that broader AI story. With us right here in studio is Laura Cooper, head of macro credit and global investment strategist over at Naveen. Laura, there's a lot going on here in terms of the tech space, but I think the biggest concern, the biggest cold water that's being thrown on this is the circularity of some of these deals where investments are happening and lending is happening and the banks are involved and Jensen Huang is making investments in some of his, what you would have thought were rivals a couple of years ago. Are you worried about the circularity of this trade?
I don't think we're worried about the circularity at this juncture. I think, to Guy's point, the stock sugar rush can extend because we are seeing the tech exuberance really drive the market. I think maybe what we're watching for is cracks in that CapEx signal, but we are seeing genuine returns on investments from some of those upstream ecosystems like semiconductors, like cloud infrastructure, and we think this can persist into next year as we start to see more of the next wave of AI, that diffusion, go downstream to some of those sectors where the productivity gains are mispriced. Yet, to your point, yes, there is some concerns around the circularity, but I don't think that's necessarily a story through the end of the year because we are expected to see even more CapEx next year. But I think the concentration risk is probably one of the crucial factors that we're watching for.
But if we're putting the emphasis here on CapEx, as you suggest, especially going next year, shouldn't that be reflected in valuation? Should NVIDIA's kind of trading multiples look similar? This is an exaggeration for the Chevrons, the Exxons. I ask every guest this question. I can understand that you're trading on a growth stock kind of multiple, but if it's ultimately based on physical, tangible assets, why is that not showing up?
Well, I think at this juncture, we are still seeing these companies being able to generate very strong earnings despite having these heavy CapEx spends. And if we look at other metrics like the price to earnings growth ratio, that does suggest that markets are pricing in for the next 2 to 3 years about 15% earnings growth for some of these large AI players in the space. And given what we've seen more recently, I think that is an achievable kind of target for them to aim for. So it maybe suggests that, yes, there are these pockets of frothiness in the market, but overall, I think this is, still the early innings of this AI adoption. It does suggest that we are going to see further momentum in some of these, even though we see bouts of volatility, which we think really the past few days has been a healthy correction to shake out some of those unprofitable areas that have kind of benefited from more speculative money.
So, Laura, good morning. So you say it's early innings of AI adoption, which seems obvious. Is it still, does that translate into early innings of the tech rally then? Or so is there really that much still to go?
I think it's a very different story because what we have seen is this momentum chasing stage of inflows has been quite remarkable, really broken away from that tech adoption trend line. And so, yes, I do think we were in for a near-term consolidation to really shake out some of those unhealthy pockets of the market. But I do think that as we go forward, these companies are able to show their earnings. I think the key risks that we're watching for, one, I mentioned the concentration risk, but also the execution risk. These are very capital-intensive businesses. They're very compute-heavy. Will investors continue to pay this premium for these tech stocks until we see the productivity gains from some of this CapEx? I think that's really the key question. Are we going to see more of the valuation fatigue as the risk on the horizon for next year?
Yeah, if we like looking for things to worry about, then we could worry about big tech. We could also worry about private credit. But you like private credit. You say it's been attractive for some time. You continue to see it as quite attractive. We have a very highly read story on the Bloomberg terminal this morning that's it's a BlackRock private credit CLO failing a key test as bad loans mount. Now, it's just one CLO, and perhaps that doesn't tell us anything about the market, but everyone's looking for signs that something is not right in this particular part of the market. Are you concerned about that, or do you just do you just look through this kind of news flow?
I think we're going to see increasing pockets of stress in the private credit market as we do start to see more of those late cycle dynamics come through. But it really does warrant just being able to discern quality in this market. What we've seen is just this insatiable investor demand for this space against a backdrop of very weak covenants. So we're going to see some of these kind of episodes emerge. When we look at the private credit space, I think we're really looking, it can tie into the AI theme in terms of financing a lot of the AI build out. So looking at infrastructure debt, looking at kind of financing the grid upgrades. I mean, just the electricity capacity for some of these data centers really suggests there is a significant opportunity in more of that physical layer of AI, not just kind of the digital layer around those kind of equity pure plays in the tech stocks.
Does the Fed need to cut aggressively for all of those things to come true?
I don't think that's necessarily the case. I mean, we have seen quite a significant paring back of Fed easing expectations.
When do you think the next Fed cut comes?
I would lean towards early next year. I think certainly the FOMC minutes yesterday rule out that December cut. We've seen, first of all, the hawkish rhetoric from Chair Powell at last meeting. We also are seeing increasing comments towards inflationary risks. And then we have this kind of air pocket of data now with the payrolls print for November not being released until after the December FOMC. So Powell has likened this to essentially driving in a fog. So they're not going to make another insurance cut. They've already done that in December. So I think market pricing is probably looking a bit more fair for December. But even till next year, we're leaning into maybe 2-3 cuts. Powell has said neutral could be anywhere from 3 all the way up to 4%. They're kind of near that already. So
is inflation going up or down?
I think in the near term, inflation risks are tilted to the upside.
Okay.
We're only seeing
How
about
much?
half. I mean, our forecast for the end of the year, which is very difficult in this time of data blackout, but we're looking at about 3.2% on that core gauge for this year. Some disinflationary pressures next year. But if we see the Fed cut more aggressively, if we see a shift in the composition of the Fed, perhaps that could be reflationary. So I think all in, the risks are tilted to the upside.
How many rate cuts do you think we need to get from the Fed to get to 4%?
Oh my gosh, Guy, leave her alone.
No, this is the kind of this is the game right now, where the Fed goes, and Nvidia is great. You're Nvidia today. I'm going to be the Fed.
I know. I don't understand why
She said we
we're
got
role
great
playing.
Starring role.
You're Nvidia. What are you complaining about? What do you think?
Does that make me a hyperscaler?
I mean,
it's like you're in the middle, so you're the hyperscaler.
I mean, our neutral forecast for the Fed is anywhere from 325, 350, kind of in the range, in the middle of the range of what Powell said. But I think financial conditions are already quite easy. You know, we are seeing consumption being supported. AI is a predominant driver of the U.S. economy, about 0.3 this year, remaining elevated next year. So this is still a fairly resilient backdrop.
Yeah.
We're watching for cracks in the labor market, but at this juncture, you know, seeing some signs of stabilization, albeit the blackout certainly doesn't help on the data dependency front.
So resiliency is the word you use there, Laura. I'm interested in some lines just dropping from UBS, from the CEO, Sejura Motti, who's talking about the pipeline of capital markets activity. He says that the pipeline is building in capital markets. And I suppose that goes along with some of the things you've been talking about. You know, we're seeing a lot of investment in AI. That's changing the game in some sectors. We're seeing expectations of lower rates. We'll see what is actually delivered, but maybe that supports an M&A story as well. Are you seeing that as another reason to be sort of risk on?
Very much so. I mean, if we look at our forecast for the U.S. next year, we think the fiscal impulse is going to be a predominant driver of that. And that includes not just tax cuts, but the deregulation environment. And we think, yes, that will spur greater M&A activity. And if we look at the credit market, we think that's going to open up, you know, even greater opportunities. So if we look across the credit spectrum, anywhere from senior loans all the way to the private credit space and pockets of high yield, this is going to be an ample opportunity, we think, for income-generating investors seeking that income generation in their portfolios.
Okay, you're Nvidia. I'm.
Which I know you say is a good thing, but everyone's rooting for Nvidia to drop.
You're the hyperscaler. Laura's the market. Laura's the market. So we've got to listen to her. Always listen to the market. Laura Cooper, thank you very much indeed. Head of Macro Credit and Global Investment Strategy over at Nuveen. Okay. Let's take a look at what the Core 6 looks like this morning. This is the story. Very positive picture emerging for some of the tech stocks. You can see ASML is higher. Positive note out on the defence sector today. Was it from JP Morgan, I think? Or Morgan Stanley, I can't remember, one of the two, talking about the fact that maybe yesterday's move down was a little overdone. Rheinmetall bouncing back quite nicely this morning, but a pretty positive picture. Nestle to the right. That's the safe haven story, down by 0.2%. Let's find out what else is moving the market. Chloe Mellis here with details.
Good morning, guys. So BNP Paribas is moving quite strongly this morning. We're up 5% for the French bank after it brought forward its capital ratio target, saying it will essentially be able to hit it ahead of time. And it also unveiled a new buyback. So this is a measure of resilience, of profitability for the bank. And that's making investors quite happy. BNP has been trying to reverse a recent slide in shares because of some recent legal troubles that have held back that stock. And it seems that this raised the target and this new buyback is making investors quite keen on BNP this morning. Moving on to some read across from Nvidia, and we are seeing quite positive movements across those AI-related companies in Europe after Nvidia provided an upbeat earnings forecast and the CEO pushed back against this narrative of an AI bubble. So we can see ASM and ASML, providers of semiconductor equipment, and then also Schneider Electric and Legrand, which are providers of data center equipment. We could only fit 4 on the board, but we are also seeing Infinity Infineon, Semi, all of those companies within that AI-related sector moving higher this morning on the back of this NVIDIA forecast. Moving on to Vodafone, which is down this morning about 2% after the CEO said that she wants revenues from business customers to make up about half of the total in the medium term, compared to about 25% now. And as part of this broader strategy, wants to invest more in AI and cybersecurity. This is a strategy and an idea that maybe doesn't resonate with investors very much, and we are down on the back of this morning. And finally, Valeo, the provider of auto parts, of braking systems, for example, is down almost 6% this morning after saying that it operates in quite a demanding environment at the moment, and it provided some new medium-term targets that disappointed investors a little bit. This is obviously a sector that has been struggling because of the broader weakness across that car sector, and that seems to be reflected in those shares in Valeo this morning.
Chloe, thank you very much. Chloe Melly from our equities team with an update on some of those movers. Coming up on the programme then, we check in on European chip stocks and get more on NVIDIA's punchy earnings beat. It certainly is having a read across into European assets this morning. More on the tech sector next. This is Bloomberg.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Welcome back to the opening trade. We are 80 minutes into the session, and the word of the day is NVIDIA. I would argue it's the Fed, but we're going to stick with NVIDIA for now. As you can see, what we are getting today is a fairly decent pop. European equities are still down a little bit on the week, so just a little bit of cold water on the word of the day. But nevertheless, I think you've got a fairly solid session underway. Chips are doing well. This is the story. Like you can see, ASML, it's having a great time. And as you can see, generally, chip stocks across the board are doing pretty well. NVIDIA bounced after hours. I think you can see that in the numbers today. I think it was, what was it up? 5%? There you go, 5%. We'll bring you the early trade at the top of the next hour to give you an updated idea on what we are going to be seeing. NVIDIA has delivered a decent set of numbers. Like, the gross margin was epic. You can't really argue with those kinds of numbers, to be honest. The AI industry is in a bubble. Well, Jensen Huang doesn't think that it actually is. Remember, this is now by far the world's most valuable company, and it expects sales of around $65 billion in the January quarter. Just for context, that's roughly $3 billion more than analysts had predicted. Jensen Huang, as ever, wearing a tie. I'm just going to point that one out, but still, nevertheless, pretty optimistic.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
So Criti this morning is NVIDIA. But if I buy a chip from NVIDIA, from Criti, am I going to make money making that chip? That's maybe the question that I think is the critical one that we need to answer. But let's get some more details on what is happening here. Matt Bloxham from Bloomberg Intelligence joining us. Let's just deal with NVIDIA first of all. They will deal with the wider questions. That was a good set of numbers.
It was, but we've become accustomed to good sets of numbers from NVIDIA. You know, that 65 billion you mentioned of sales for the Q4, about a 5% beat and 66% year-on-year growth. So this is a business that's doing incredibly well. And I say 75% gross margin, a hugely profitable business too. And that profit is kind of what helping to kind of fund, you know, everything else, you know, and there is that kind of circularity that's still out there as a question for the industry. But yeah, you know, the near-term outlook certainly for NVIDIA is a healthy one. They talked about $600 billion of capex from their big customers going into the industry next year. So I think, yeah, there's no signs that this is going to slow anytime soon. I'd say that the second half of next year is perhaps a bigger question mark about whether that super cycle can be sustained or not.
Let me ask you about China. They don't count on anything from China, do they? And Jensen Huang has been popping up at every sort of Team America White House event you can imagine recently to be praised by President Trump and to try and persuade President Trump, perhaps, to allow him to talk to the Chinese about selling more and more advanced chips in China. He seems to be making some progress.
Yeah, there's this GAIN AI kind of law that they're trying to push through, which would essentially require NVIDIA to meet domestic demand first before supplying other markets, including China. We'll see where that comes, because there's obviously some other political lobbying going on in the US to continue to restrict them because of the concerns about military technology. I think that they're right to assume that China's a zero opportunity for them, and I think that's the way the wider market sees it too. So it would be kind of an incremental opportunity. Personally, I think the Huawei and the other domestic manufacturers are catching up on the technology, still behind, they're catching up. And the Chinese government has a China first policy, and it's encouraging, if not mandating, its local businesses to source locally, not from NVIDIA. And that's easier to do as the technology catches up. So I think the outlook for China is a tougher competitive market going forward for NVIDIA, even if policy restrictions from the US administration are relaxed.
Well, I think what's fascinating there as well is we saw this with the relationship between Donald Trump and Crown Prince Mohammed bin Salman as well. They moved Saudi Arabia to being kind of a new tier of ally to, in case you do see those restrictions happen, that the chips can still get to the Middle East. We're putting a lot of emphasis on just one company. Should we be looking at the Microsofts, the Amazons, the Oracles of the world to kind of detect where the problem child is?
Or maybe even the opportunity. But I think, they are potentially the problem child next year and beyond, because they are making to some degree speculative investments. They're anticipating that this AI super cycle continues, and they're building capacity for the kind of midterm. And they're in an arms race with each other. They because one's doing it, the other has to do it. Otherwise, they're going to be out of the picture. So I think, but to continue to keep their shareholders comfortable with the outsized capital spending they're making, they need to continue to show evidence that this investment is helping their bottom line. whether it's through extra sales growth, better margins, more market share, and that needs their customers to continue to spend. So that's enterprises. Our enterprises seeing enough return on investment across their businesses to justify that and to continue to spend. Will consumers spend $20 a month for AI products? And that's going to take time to kind of become clear.
All right, Matt Bloxham from our Bloomberg Intelligence team walking us through the NVIDIA story, the political story, and of course, the read-through into the broader sector. Speaking of the read-through into the broader sector, crypto has been kind of tied and intertwined with what we see in the tech space. So Bitcoin at the moment trading back above 90,000. We're looking at about a 92,000 handle right now, higher by just shy of 2% as it kind of gains a little bit more momentum with risk assets. It comes after it hit the lowest level in 7 months yesterday, extending the more than $1 trillion wipeout across the asset class story. So where does it get its cue from? Well, Anna Herrera, Bloomberg's senior editor for digital finance, joins us around the table. Anna, we were just having a conversation with Matt there about the tech story. Is crypto driving the tech conversation, or is the tech conversation driving crypto?
I think it's the tech conversation driving crypto, which is a bit ironic because for years we heard crypto would be sort of an asset class that would sit on itself, sort of something that was uncorrelated, digital gold, a hedge against inflation. And now actually we're seeing as it gets more institutionalized with ETFs, perhaps we're seeing really that it's moving with other risk assets, right? When risk aversion gets high, we're starting to see sell-offs. And while prices are up today, we've been in a sort of downward spiral that's wiped out most of the gains that crypto has had since it over the year. So we're watching and seeing will it continue to be correlated with risk assets, or will it go on another trajectory?
There was this whole idea that institutional money would be this kind of stabilizer. What's going on?
No, it's clearly not stabilized as much. I guess it's stabilized in the sense that perhaps you can now say maybe when other like tech stocks are down, you can think Bitcoin, but there's still. It still goes down 10% and very quickly, or even more, right? And you can lose gains of over that you've accumulated in a year in like a week.
How do you think institutions feel about that?
So I think institutions. Well, it depends on the type of institutions. The conversations you have, obviously, with firms like endowments, the really big ones, they say they still can't, justify going full in because they can't explain when there's a sudden 10% loss in an hour or something to their that's not the kind of risk they can take. But they can step in the market with market neutral strategies and things that are a bit less risky.
Anna, thank you very much. Thanks for the update. Bloomberg's Anna Herrera with the latest on that crypto story. Yeah, real weakness coming through in Bitcoin, but not today. Today it's up with the AI story, with the NVIDIA story, with the tech story. Coming up, we check in on markets and questions around a tech bubble. We'll get some views from Carson Block, CEO and founder of Muddy Waters Capital. Stay with us for this conversation. What views does he have on the big tech landscape, the wider investing landscape? How is he thinking about 2026? 8:26 here in London. This is Bloomberg.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Africa,
a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. It is a tech story, but there's other pieces of it too. Let me walk you through it. Broadly, we are seeing a 1% gain on the stock 600. The underperformer is right here, the FTSE 100, but still higher by 0.7%. That's your broader risk on read-through. The CAC Iran is really benefiting from that tech trade as well, plus the BNP story is moving that market. The DAX, though, which is, of course, helping with some of the SAPs, the tech story, is also benefiting from defense, which is coming back from some of the sell-off that we saw yesterday. But, Guy, tech across the board.
Okay, let's talk about kind of the internals and what we're getting and what we're seeing. I have mixed news in terms of what we are seeing. So let's start with the basic arithmetic. Stock 600, 480 up, 104 down. Nice ratio, so that looks pretty good. However, look at what is happening with volume. This doesn't feel like a convincing big volume kind of a day, which I think is interesting as well. Take a look at what we're seeing in terms of the gainers. I think they're fairly obvious. That tells you maybe we haven't learned that much over the last 24 hours. There are some interesting stories here. I'm not sure ASML is actually one of them. It is up. NVIDIA had a great day. ASML is up. Shocker. The other story is Novo beginning to come back a little bit. The story of the morning, actually, to my mind, is in the banks. BNP Paribas out with numbers this morning, well, out telling the market that it's going to bring forward its CET1 target. That's great news. Returning money to and returning money to shareholders. This is good news, and the market's responding really positively to this. Basically, it feels they can do this and give money back. And the fear in the European banks has been maybe that after a great period of giving money back, that would start to peter out a little bit. Maybe not. Anyway, let's move on to the laggards. Again, Nestlé, National Grid, Vinci. These are basically utilities. Maybe not Nestlé, but you could argue maybe Nestlé is a kind of utility of the food business. It is the biggest food business in the world. It is a staple. It is all of those kinds of things. When you go back into growth and you go back into tech, what do you sell? That probably is the narrative this morning. There's also a yield factor in all of this as well. But I don't think none of these things are hugely shocking this morning in terms of the way that the market is positioning. Anna, what else do we need to know?
Yeah, let's get an update on some of the other stories that we're covering this morning. Investors are zeroing in on today's release of the delayed US labour market report, which is expected to either kill or rekindle waning expectations for a Federal Reserve interest rate cut next month. The data will likely be the only official major jobs data published before Fed policymakers meet for the final time this year. That'll be the middle of December. The Japanese Prime Minister Sanae Takaichi is set to unveil $112 billion in fresh stimulus. Documents seen by Bloomberg show the economic package will be funded by an extra budget that's about 27% bigger than what was pledged in her predecessor's spending plan a year ago. Sources say, given the larger size, additional Japanese bond issuance will also be bigger than last year, and we've seen JGB markets responding, yields going higher. BNP Paribas has announced a new €1.15 billion share buyback and plans to reach a target for capital strength earlier than expected. As Guy was telling us, this as the French lender's CEO seeks to reverse a recent slide in the stock price. The bank also said it plans to lift its CET1 ratio by 13% by 2027, a year earlier than previously planned. Chrissy.
Yeah, lots to watch in terms of what is actually moving this market. Green on screen across the board. Let's get a little bit more on that, especially as NVIDIA earnings seem to be blowing this market away. You're seeing the ripple effects as we just walked through. Well, let's see how you go from here. Carsten Block, founder and CEO of Muddy Waters Capital, joins the program here in London. Welcome to London.
Thank you.
Lovely to see you. We're seeing green on the screen today. I think there was a lot of jitters earlier this week about whether or not we would get to this point coming after those NVIDIA earnings. There's a lot of people, Guy Johnson included, who are looking for the moment that the bubble pops. If you're one of those people, how easy is it to short the market right now?
Well, so I presented at Irisone yesterday, and I dropped a long, and so some people asked me, are you done with short selling? No, but I would much rather be long than be short in this market, I think is the terse answer there. Look, if you're out there trying to short NVIDIA or any of these big tech names, you're not going to be in business very long. So there are, when I look at AI, you have all these AI adjacent companies, you have these AI player or AI pretenders. That's where you would want to look to short. However, so long as the leaders such as NVIDIA are still going up and to the right, I think that would be a very dangerous trade. So yeah, we have a list of names that we think are suspect, and when the time is right and some of the froth is out of the leaders in this space, that's when we're going to look at them. But until that point, you know, we're staying out of those waters.
You said until the froth comes out of some of the leaders in the space. What is the canary in the coal mine that suggests that froth will come out?
Yeah, actually, you know, I want to rephrase that a little bit, because I think the way this will kind of end is that you'll have an oversupply of speculative assets. Right? It'll eventually crush the demand for speculative assets. So we see these cycles periodically. We saw this at the end of 2020 going into the beginning of 2021. I mean, it was so bad, that's when you had these, you know, almost valueless stocks that were ripping. And so what happened was Wall Street responded by producing a lot more financial product. You had all these de-SPAC transactions, and that just collapsed the demand. So I think that's what's going to happen. So it likely won't be NVIDIA that starts cratering, but it's going to be all the wannabe AI, wannabe tech names. There just will be too many of them, and it will overwhelm speculative demand. And then that can start to sink or, you know, cause a little bit of suction for the leaders in the space.
Good morning, Carsten. I wonder, we've talked about AI and as in what it's doing to the overall market, but I wonder what it does to your business, to the identification of short candidates, for example. I know I've heard you talk earlier this year about how maybe it doesn't help identify them that much, but I wonder how much that conversation is evolving, because you mentioned, you know, maybe there'll be companies that overstate the benefits that AI might bring to their business because it's very zeitgeisty, it's very trendy right now, and when the tide goes out, might be the time to start identifying those. I mean, is AI useful to you in trying to identify the companies that have overhyped AI?
Well, we are still not using it to identify, but what is helpful, I mean, definitely uploading a bunch of documents, and if this isn't super important, saying, okay, create a summary and then sending that around. So large language models are helpful for that. And I say large language models because I'm not a tech person, but some years ago, somebody explained to me how a large language model worked. And they said, this is not artificial intelligence. This is not actually thinking. And so I'm on a chat group in Austin with some people who are very big in the venture and tech space. And I asked them this question last week. I said, okay, when you look at all of these CapEx plans for, you know, AI data centers, what portion of this is for large language models versus other forms of, you know, quote, AI? And nobody could answer the question. And so I think that's actually what's very interesting, because my understanding is that large language models are unlikely to evolve to the point where they can actually be smarter or, you know, nearly as smart as a human. Whereas there are other types of AI models that could be evolved to that point. So as far as large language models go, they're great for parsing large amounts of information and creating summaries, but they haven't helped us with pattern recognition up to this point.
Okay, so that's not where you get your ideas from. From what you said there, then you do think that maybe we've overhyped. I mean, are we going to see businesses? There's talk of businesses using, agentic AI agents to help them do things more productively. This is the big productivity secret, big productivity gift waiting for us over the next 5 years or so. We've got aging populations globally. Is that to hope too much? It's not going to be that way.
Well, certainly there's some functions that these seem to perform reasonably well. I mean, they're not 100% accurate. And I do think that large language models, if we want to talk about high-value knowledge industries, I do think that they are coming for the legal industry in a big way. I mean, just when you think of how much of law is reviewing documents and trying to distill them and synthesize those documents, large language models don't understand what they're reviewing. And to date, I mean, there are a number of lawyers who've gotten in trouble for relying on them, but they will probably, I assume they will get better at that and they will stop hallucinating cases. So the legal services profession, they really do need to watch out.
I was talking to the CEO of a large bank in Europe the other day, talking about the kind of the mechanical process of passive money coming into the market and how the market's become terrible at valuing things. Can you is this marks out of 10 for this market valuing things just because of that flow, that passive flow story?
Well, look, I absolutely believe that passive has broken the markets in terms of greatly diminishing price discovery. And there was a very interesting paper written 2 or 3 years ago by some academics. It's called the inelastic market hypothesis. So they say, look, this classical theory of finance that when stocks become too expensive, people make rational decisions and reallocate to bonds, that's broken. That doesn't hold. And so they estimate that with the U.S. market, that every net dollar that flows into the U.S. market, in aggregate, market cap increases by $5. And so that demand for stocks is inelastic to price. Like the higher they go, again, classical finance.
So the market is irrational.
So the market is, well, I mean, you could look at it and say it's irrational, but if you understand what passive is doing, and by shrinking the supply of stocks, by constricting that, because it doesn't matter how expensive NVIDIA gets, right? All of these funds that are buying the S&P 500 index, they will not sell NVIDIA until they have net outflows. So they will buy it every day at whatever the price is if they have inflows. So up to a point, passive has a role in the markets. But now passive is becoming the market when you look at a lot of the major indices. And that's why you also see all this dispersion in the indices, right? So if you look at it in a given year, roughly 2/3 of the companies in an index are underperforming the aggregate performance of the index, which is being driven by a small number of companies. And that concentration is just one of the offshoots of the passive phenomenon.
Let's go from kind of macro to the very micro. You talked yesterday about Snowline.
Yes.
Do you like Snowline because it's a gold company, or do you like Snowline because it's going to get bought?
Well, okay, so, it can be both, right?
Okay.
Both things can be true.
Try and get a choice.
So, look, the reason that we got interested in mining a few years ago, our macro thesis has nothing to do with the price of metals. It's that for a couple of decades, there's been an under-allocation of human talent to the mining sector. That's on the operating side as well as the investment side. So we feel that especially in junior mining, there's real edge because there are not a lot of investors out there who actually understand the dynamics there and know how to look at these companies. So when we look at Snowline, as we call it, is a true tier 1 freak deposit. Majors, regardless of the metals, they have to acquire because they've stopped doing greenfield exploration. Their exploration budgets are focused on their existing deposits, trying to find adjacent deposits. So majors are devouring themselves because they're producing and removing any terminal value that they would otherwise have. So they have to acquire companies like Snowline. In the gold mining industry, Snowline is the only deposit that we're aware of that can move the needle for a mid or major miner at this point. So yes, we think it gets bought, and the dynamics in gold are such because, again, the majors are depleting their reserves that they have to acquire companies like Snowline.
Carson, I know we just went really micro. I'm going to macro it out again as a final question to you. You said a couple of things in Guy's passive investment question. You kind of indicated there is kind of a buyer of last resort to some extent, which brings me nicely to the Federal Reserve. You mentioned the SPAC collapse in a couple years ago. It felt like what popped that speculative bubble was higher rates coming down the pike very, very quickly. If we start to see that again from the Federal Reserve, is that what pops the bubble? Or to what extent is this rally being driven by the Fed greasing the wheels?
Well, so, I mean, my take, the rates went up in the second half of 22. And I think, GameStop was really the peak, the end of January of 21. It was really the peak of the highly speculative stocks. So it was kind of funny because in 22, when I would do the rounds, people would say, oh, this must be a great year for you because the S&P was off, because that responded to rates. In the bread and butter world of most short sellers, where we're in small and in mid-cap stocks, 21 was a great year. 22 was kind of meh as a result because so much of the air had come out of it. So I think that when we're looking at things that are interesting for us to short, not beta hedges, but alpha shorts, I think that's just going to be caused by the imbalance between, supply of speculative names and demand for them. But, what happens with rates, that's going to have much more of an impact on your large cap. So for the few short sellers that are still out there basically trying to do alpha shorts in that space, which I don't know why you would, that's, that'll matter more to them than it does to the few of us who are still doing shorts elsewhere.
All right, Carson Block, CEO, founder of Muddy Waters Capital. We'll leave it there, basically wishing a little bit of a blessing to the folks who are willing to take on the NVIDIA rally. We thank you so much. Let's talk about what's coming up in the day ahead, because, of course, the Fed does feature pretty strongly in that. The EU-South Africa Leaders Summit, we've got Walmart earnings, and, of course, we have plenty of Fed speak as well. But a lot of that might be reacting to jobs data coming down the pike, or maybe the lack thereof. Valerie Titel joins us around the table. Val, what do we expect?
Hey, finally the backlog begins to get released from the Bureau of Labor Statistics. We get that delayed September non-farm payroll report. Both the unemployment rate and the household survey will be released today. So congratulations on that, I guess we should say. However, the one big thing about this is it is highly delayed, and we've already seen Fed members really digging in their heels against this December cut. So essentially, the market would need a really big miss when it comes to the non-farm payroll report out today in order to start tempting perhaps that December cut back on the table. So in the absence of that, perhaps the market might be looking more at the weekly jobless claims figures that are released today. This is the most timely piece of data we are going to get from the survey of last week. So perhaps maybe the weekly jobless claims could take the shine off of this highly delayed NFP, but there's still many questions over the delayed report when it comes to the October CPI and the timing of the November CPI. So a lot of questions still for the Bureau of Labor Statistics.
Valerie, great stuff. Thank you very much indeed. Busy days still to come. We're setting you up for it, trying to get everything in line. Which data should you be focusing on? Up next, we're going to be talking about Ukraine. There's another peace plan being pushed forward. Defense stocks are up today. They got absolutely whacked yesterday. Rheinmetall is down on a two-day basis by 3.85%. It's up this morning. What is happening with this story? Pay attention. It has a market impact, and we're going to watch it next. This is Bloomberg.
A cidade estava sitiada
Início ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Thursday the 20th, good morning. 50 minutes into the session. European equities are at session highs. We've gapped higher into today's session, but yesterday was not a particularly good session for European equities. Nvidia seems to have changed the story, but there are other factors as well. Take a look at European defense stocks this morning. They are bouncing back really quite sharply. As you can see, some decent performances being put in across the board within that space. I want to show you Rheinmetall, though, over a 2-day basis, just to give you an idea of how bad yesterday was for this sector. And as you can see on the 2-day basis, we are still down and down reasonably hard. Now, this feeds into our next story, which is what is happening on the geopolitical front. A U.S. military delegation meeting with the Ukrainian officials. This is part of a fresh bid by President Donald Trump to rejuvenate peace talks with Russia. The talks on Ukraine are taking place after another U.S.-Russian proposal modeled on the Gaza ceasefire deal. Got a tepid reception, though, from Ukraine supporters. The president expressing his displeasure with the conflict, though, and how he feels about Russia's Vladimir Putin.
But I've settled 8 wars. I have 1 to go. You know what that one is. I thought that was going to be my easy one because I have a good relationship with President Putin, but I'm a little disappointed in President Putin right now. He knows that. I thought that was going to be the easy one.
Turned out not to be. Our chief Europe correspondent, let me get that straight, Oliver Crook, joins us now. Ollie, what do we know about the latest proposals? How are they different? What do we know about the details?
So we understand it's cast in the same sort of mold as the Gaza proposal, which was at least effective in bringing the Israeli and Hamas conflict at least to the beginning of the end in that ceasefire. This, unlike that plan, which was a 20-point plan, is a 28-point plan. This was originally reported by Axios yesterday, and there are 4 main buckets that this will focus on. One is bringing peace to Ukraine. The second is going to be the sort of broader security guarantees for Ukraine, the broader security architecture within Europe, and then the future relationship between the United States, Russia, and Ukraine. Now, we should say this is very early days for this. This has not been run past any of the sort of European diplomats from what we understand. We don't know how much of this has been shown to Ukraine, but from the reporting that we've put together, that the Wall Street Journal's put together and Reuters have put together, the content of such a plan would require the Ukrainians to relinquish all of the Donbass, which not all of which the Russians currently have possession of. The Ukrainians would have to give up territory they currently possess. There will be some articles about basically their refusal, preventing on them to join NATO, also potentially diminishing the Ukrainian military, and also potentially barring the sort of international force that would be in Ukraine after a ceasefire in order to prevent another invasion by the Russians. What are the Russians willing to give? This is the big question. As far as what we've seen from the reports so far, they're basically just promising not to invade Ukraine any further or any other European country. This, of course, will not be sufficient for the Ukrainians or the Europeans because, of course, the Russians had already made that promise back in 1994 during the Budapest Memorandum, which the Russians were a party to. the United States is a party to, and the Ukrainians were a party to, basically giving up Ukrainians' nuclear capacities in order to guarantee sovereignty. So now we should say that this is a very sort of early proposal. That being said, on paper, from what we've seen so far, amounts to a large concession to the Russians.
Ollie, thanks very much. Bloomberg's Chief Europe correspondent Oliver Crook continuing to guide our thinking about what's happening with the Ukraine story. Has been moving markets to some degree over the last 24 hours. We'll continue to watch those developments. Now, it's day 2 of Bloomberg's new economy forum over in Singapore, where global leaders are tackling critical issues from shifting geopolitics to the future of the markets. We're joined now by Bloomberg's Francine Lacroix, who has, of course, been leading and steering a lot of these conversations. Fran, talk us through the highlights. We've spent a lot of this morning talking about the read across from NVIDIA's numbers, the focus on big tech. No doubt some of that cuts through where you are.
Yeah, hi, Anna. It's very clear that actually the discussions here continue on AI and trade. So we started the day with Gina Raimondo, the former U.S. Treasury Secretary of Commerce, and she was very clear, but she had a message for the audience, which was, look, America first does not mean America alone. But then we had a slew of chief executives coming on stage. We had the ABB chief executive. We also had FedEx, and they were both saying, look, if you look at our supply chains, they've really shifted quite significantly over the last 9 months. The FedEx CEO pointing to rising trade flows from China to Asia. And there's this idea about the T3, the emergence of a lot of Asian economies that would rather do trade amongst themselves instead of having to choose between China and the U.S. So U.S., China, and India will be the T3. These are also 3 large leading technology powers in the future. That's according to the Indian Minister for Transport. It was a good conversation. He talked to Editor-in-Chief John Micklethwaite. And on the global front, we also had a couple of discussions about climate change, which we don't hear about as much anymore compared to, let's say, a year ago. On the global front, we had the chair of the DNB Bank saying, look, ESG is facing a reset. So they're not expecting a walk back, but certainly a change in language with a lot more focus, for example, less on ESG and more on ocean on planet, which more investors can get behind.
All right, Francine Lacroix over at the Bloomberg New Economy Forum. We thank you so much joining us out of Singapore. You can catch more interviews from Francine and the team, of course, Singapore. In the next hour, she'll be joined by Patrick Maloney, CEO of CIV, and David Ha, the CEO of Sakana AI. And as she said, of course, the AI theme running strongly in Singapore, something that we're very familiar with here as well, and has been in the conversation of the morning. I think the takeaway for me has been that we started off this morning saying, well, there's the NVIDIA story and then there's the Federal Reserve story. And even though the markets are kind of viewing that as maybe 2 separate things, I think they're going to converge soon.
Right, maybe. And then also in a European context, add the defense story, because actually now technology, not the best performing sector this morning. It's industrial goods and services, which includes the defense names, bouncing back from the market reading too much into some of those other media reports yesterday around the prospects for peace in Ukraine, it would seem, at least in the first instant.
Looking forward, we've got a lot of data coming out a little bit later on. We're going to head to paying attention to that out of DC.
Some data, the only data.
Well, the only data, but the claims data is going to be, I think it's going to be pretty interesting. Fed commentary. I just wonder whether Japan's going to be the story, though, back into the day, into tomorrow's session. Dollar yen continues to be pushed higher. What happens next on that trade, I think, is going to be absolutely fascinating. But as we've already indicated, there is a great show coming up next. The Pulse has got some fantastic guests. Francine's going to be walking you through the next hour. That's what markets look like this morning. We'll see you again Friday tomorrow. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
NVIDIA boosts markets with a bullish revenue forecast that beats expectations. We'll bring you our interview with the chief executive, Jensen Huang. Hopes fade for a Fed rate cut as the October jobs report is scrapped, leaving policymakers without a key data point ahead of next month's meeting. Plus, top U.S. military officials arrive in Kyiv in a renewed push to revive peace talks, while EU foreign ministers weigh fresh sanctions against Russia. So you know the drill. First things first, let's check on the markets. We're also getting pre-market for NVIDIA in just a couple of seconds, but it's very clear that global stocks seem to have put, at least for today, the worries about an AI bubble back, well, forgetting about it today. S&P futures gaining some 1.2%. Global stocks seem to be advancing. That's also true for the European markets. After a robust revenue forecast from NVIDIA seems to have dispelled some of the fears that we saw in the market about a potential bubble in the AI industry. So it did surge yesterday post-market trading after reporting some upbeat earnings. Attention now turning to the path for interest rates as markets wait for the release of the September jobs report later on Thursday. We also had some strong results from the AI bellwether, actually supporting some of the quirkier parts of the markets that you can see in Europe. Euro dollar 115.21, then gold. We always like to look at gold, 4,068. NVIDIA pre-market just getting a bid, so let's bring that up for you to see exactly what it's telling us about the future and the path forward for NVIDIA. So, welcome to The Pulse. I'm Francine Lacqua here in Singapore. Day 2 of Bloomberg's New Economy Forum, where the theme is thriving in an age of extremes. Now, we're taking on some big topics, existential questions around capitalism to shifting tides in geopolitics, and of course, AI and trade. Now, first, investors are focusing on today's U.S. labor market report, which of course will play a crucial role in the Fed's rate path ahead. Now, the September payrolls report comes after a delay caused the government shutdown and will be the only major jobs data published before Fed policymakers meet for the final time this year. Joining us now is Tom Orlik, chief economist from Bloomberg Economics. Tom, thank you for joining us. Look, I mean, the problem is that it's quite backward-looking, so I think it's something, but September, I don't know if we'll move the markets unless it's really, really bad.
So our view, Francine, is it's going to be stale, but it's going to be solid. Okay. Consensus is, I think, around 50,000 new jobs created in September. We're looking at data from payrolls processors to try and get a more accurate read. The view from our US team is could come in around 100,000 new jobs. So that will be a pretty robust number. Now, the mood on the Fed has already shifted. markets a few weeks ago were pricing in a December cut as more or less a certainty. The probability now has come down, I think, to around a third. If September jobs come in around consensus, or even more if they come in around our expectation of 100,000, we think that could seal the deal for the Fed staying on hold at that December meeting.
And Tom, is that because Fed officials, I mean, we heard from quite a lot of them, but they seem to be grained into not really changing their thinking for now?
So there is a sharp divide on the Fed board, Francine. On the one hand, you've got Chris Waller, Stephen Myron, and the Doves, and they're very focused on the jobs numbers and fear the US market is going to stall out. Well, a jobs print at 50,000 or 100,000, that's not going to make the case for them. On the other hand, you've got the hawks who say, yeah, the labor market does face some stress, but probably that's more related to immigration policy. Maybe it's early indications from AI, not stuff the Fed can do much about. And look at the inflation numbers, still close to 3%. That's a long way above our 2% target. This is not time to cut rates.
Tom, here we've had some really good discussions on supply chains, on debt, but is it really AI that's driving the conversation, and the fact that maybe it's too soon to know, you know, the use case of AI, or how they make money on all of the investment that there is in AI, but how it changes our economies going forward?
So the NVIDIA results, of course, have eased some of the fears about that AI bubble and the risk of a sharp correction in stock prices. But you're certainly right, Francine, that a lot of the conversation here at the New Economy Forum has been around AI. And there's been a pretty robust conversation. Concern that some of those valuations are stretched short term, but also a huge amount of optimism about the transformative potential long term. And in some of the discussions today, businesses sharing their anecdotes about how it's already affecting their hiring plans. And, well, I expect this is already on your radar, but for young graduates coming out of the market, AI is not helping their job prospects.
Tom, thank you so much, as always, for joining us. Tom Orlik, our chief economist from Bloomberg Economics. Now, NVIDIA, as we were saying, has delivered a surprisingly strong revenue forecast and pushed back on the idea that the AI industry is in a bubble, easing concerns that had spread across the tech sector. The world's most valuable company says it expects sales of about $65 billion in the January quarter, about $3 billion more than analysts had predicted. The chief executive has an upbeat outlook about the company's future.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Now let's get more from Matt Bloxham, senior analyst for Bloomberg Intelligence. Matt, a very, very positive picture painted by the numbers, but also the chief executive.
Yeah, that's right. So $65 billion is the guide for their Q4. So about a 5% beat versus consensus. To be honest, I think we've become very used to NVIDIA beating to the upside. So it's very familiar from that perspective. I think obviously some issues there still remain, I think, around the AI bubble, but we'll have to see what happens.
So, I mean, where do we stand on that, Matt, in terms of the wider AI market and fears of a bubble? What's next? I feel like there's a lot of anxiousness in the market, and then they hear from NVIDIA, and it's like nothing to see here, back to normal. What's the next cliffhanger?
Yeah, so I think most of 2026 is pretty much in the bag. The company yesterday talked about $600 billion of spending by their biggest customers, mainly the hyperscalers, next year. So I think in terms of that near-term revenue outlook is pretty robust. The big question, and Tom kind of alluded to that a little bit, is are the end customers, the likes, kind of enterprises, consumers getting real value out of the AI transition. And I think particularly the enterprise market, as CFOs and CEOs start to evaluate the benefits of AI through next year, that's then they'll be making much bigger decisions about doubling down on the AI transformation in their businesses. That's where the next leg of demand needs to come from to sustain that high level of capex we're seeing from the hyperscalers. And if that becomes more muted, then that becomes a bit of an issue for the broader market. So I think near term, nothing to be concerned about. Beyond next year is where the question marks are. So I think there's going to be a lot of scrutiny around CEOs and CFOs and what they're seeing from their pilots on AI, what the return on investment is, how enthusiastic they're being once they see the results of those tests come through.
Matt, thank you so much. As ever, Matt Bloxham there from Bloomberg Intelligence. Now let's stay in the tech space. We're joined by Patrick Maloney, Chief Executive of CIV, an investment firm that backs and builds technology companies in critical industries. Patrick is also co-founder of the nuclear company, a fleet-scale nuclear development firm. So thank you for joining us. I mean, there's quite a lot going on in AI right now. We're just talking to Matt about the fact that, look, investors may be doing a bit of yoga today because everything's fine. But what do you see in the future? Are these, does something need to happen to valuations, or are we just going to stop and start concerns about where they're priced to perfection?
Yeah. I mean, I think you're exactly right. We are, of course, seeing incredibly frothy valuations in anything correlated with AI. But I think it's important not to confuse that with the absolute tectonic shift that we're seeing right now in terms of the application of these technologies in every enterprise, every government, every industrial system. Our fundamental view is that we're, call it 1% penetrated. I mean, right now, these companies are just in the process of retooling as we speak and have barely begun to scratch the surface of the impact of these technologies within their foundational companies or organizations. And so, yes, we see price, but ultimately I wouldn't confuse that personally with the importance of what's about to happen across these places.
I guess, Patrick, it's all about money. So is there worry that there's so much money being spent now that unless we see a return in a timeline that makes sense to investors? I mean, that's the problem. That's the mismatch.
Yeah. I mean, I think what we've seen historically is where we've seen these incredible investments, and really what we're talking about is incredible investments in foundational infrastructure, right? Is ultimately, this infrastructure is actually the foundation upon which these industries get built for the next multiple decades. And so, yes, of course, we're seeing trillion-dollar commitments for new digital infrastructure and new, manufacturing capacity, both in the U.S. and globally. But ultimately, it's that foundation upon which all of these new industries will be built. And so, no, yes, we think it's ahead of the curve, but ultimately, it's the foundation upon which these new markets will be built.
Where are you seeing the best investment opportunities?
Yeah. I mean, listen, I think right now it'd be hard not to look into the nuclear energy space where, we've seen, of course,
especially with your title.
Yes, of course, but there might be a reason that we also decided to go build there is, our fundamental view is we are incredibly short power for the next multiple decades. And so we had 20 years of relatively flat global energy demand, 1% to 2% growth a year. And of course, now we're seeing inflecting demand for energy, but supply is a laggard. It's concrete and rebar and steel. And our view is that the only way to cross that chasm at the density and capacity we need was the one thing we solved 75 years ago, which was nuclear fission. But where we had to go solve that problem was in deployment. And we need to go build now, and we need to do it better, cheaper, faster than we've done in the past.
Yeah, how fast? So there might be a point where actually nuclear is adopted and it starts to make up for some of the supply concerns we have on energy consumption.
Yeah.
How far are we from that
How
point?
far are we from that? Yeah.
Or how close?
Yeah, if we started yesterday, we'd be one day closer than we are today. But the reality is, if you look at the U.S. today, we don't have any net new commercial projects under construction. And at the nuclear company, we're 100% focused on changing that, and should be able to announce relatively soon the first net new nuclear generation being built in this, in the U.S.
But that's what then it takes 10, 15 years.
Yes, I think the beauty is, what we have to do is get into the place where we're now designing once and build many in a series. And so, yes, the first reactors should take longer than ultimately the sixth and seventh and eighth reactor. But when you look globally, you can see on average we're getting to sub 5 years in some regions when you standardize and execute in a series.
Will it be adopted? I mean, I guess the biggest barrier is people are scared, and it's regulation.
Well, certainly regulation, but I think what's interesting is if you look at the U.S. as an example, 5 years ago, you would have found left, right, center all actually net negative on building new nuclear generation. If you look at the Pew data today, what you would find is left, right, center all pro-new nuclear generation. And so we've seen an incredible shift in sentiment on this issue, really in many ways just driven by demand, right? 5 years ago, we hadn't had the demand equation, but today, every hyperscaler, every industrial partner today understands that their future growth is actually just a derivative of their ability to access clean electrons at incredible density. And so that's why we're seeing the resurgence that we're seeing in that space.
What would be the impact actually on energy prices?
Yeah, the impact on energy prices, I mean, I think right now what we're seeing is energy prices are increasing at an exponential pace. We haven't seen the kind of increase that we're seeing today in really any of my career. The only way to solve that price increase is ultimately to create more supply. And so what we have to do is get back to building, and whether that's energy systems, but it's also robotics and compute and manufacturing capacity. This is really a global story of decoupling, right? Where supply chains are really becoming the new form of national security.
But so could you see a world where for the next 10 years, energy prices still keep on going up because of how much we need? And after 10 years, it goes down, or what timeline?
I wouldn't say it would go down. I think if you're talking, if you look at historically, we generally haven't seen energy prices go down for any sustained period of time. Generally speaking, demand has always increased, and we've managed to keep up with supply. But what I will think is, what I do believe you'll see is a decrease in the rate of the acceleration of those prices, provided we're willing to meet the meat of the market by building new capacity now.
Patrick, the buzzword is private and public partnerships. So how do you approach them? How much do you see them? And is it the best business model or template that you can look at?
Yeah, I mean, when we're talking about building new nuclear capacity, for an example, you're talking about some of the largest industrial projects going on in the world at any point in time is going to be new nuclear generation being put into the grid. The only way to build at that scale is to do it in extremely close partnership with governments and sovereigns who are willing to provide the long-term capital at an efficient, cost of capital to be able to support these projects. So as an example, our first fleet of reactors is $60 billion in CapEx, 6.6 gigawatts. The only way you can really finance that is in partnership with government. And so we've worked very closely with the U.S. government to be able to support that kind of initiative.
When you support founders, what do you look in founders before you decide to actually invest and help them grow?
Of course. I mean, I think the first thing I would say is, my general view is there's no such thing as an outlier company without an outlier founder. So first, you have to find the person that's crazy enough to go try to attack the biggest things in the world. But I think what's different today from where we were coming from before in a world that was predominantly just software-based is you need to be able to understand how to work in systems, right? It's not just I'm going to go build new software. Oh, 100%. You're talking about regulations. You're talking about working deeply with governments. You're talking about the very deeply connected webs, both geopolitically, from a regulatory perspective, from a capital and capital structure perspective. These companies are much more nuanced in terms of how they scale. But the size of the opportunity are, I think, the next multiple trillion-dollar companies that are going to be built are going to be based on these kinds of systems-based thinking.
And Patrick, what's their exit strategy in general? Is it companies that want to stay independent and stay private, or is there an aspiration to IPO or to sell?
Yeah. Well, I think the beauty is both of those pathways are open today, right? And so if you're looking at the public markets, we're seeing incredible demand from the public markets for exposure to themes like nuclear power, right? You have multiple relatively new, relatively early companies that are trading in the tens of billions of dollars, just given the public demand for exposure to that theme. And then, of course, you're also seeing the global energy companies. You're seeing the major hyperscalers. All of these companies now are realizing that it's an intersection of technology and where it meets the physical world that's going to define the next multiple decades. And so the aperture is just really open.
Patrick, thank you so much for joining us. Patrick Maloney, the Chief Executive of CIV and co-founder of the nuclear company. Now, coming up, we have a great interview. Lebanon's Prime Minister says a plan to close the $80 billion deficit is underway and hails the IMF's role in his nation's recovery. Our exclusive interview is next, and this is Bloomberg.
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Wednesday. Chancellor of the Exchequer, Rachel Reeves, delivers the UK's autumn budget. Can she boost growth and productivity by unlocking investment? How will the Treasury raise revenue without breaking tax promises? And will the budget prove that a fairer economy can reward working people? Bloomberg Television brings you special coverage starting with the Chancellor's statement to Parliament at 12:30 p.m. UK time. And tune in Thursday for the opening trade budget special at 7 a.m. Bloomberg, context changes everything.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix at the Bloomberg New Economy Forum in Singapore. Now, Lebanon's prime minister has revealed his government is moving to finally tackle the country's $80 billion deficit in the financial sector, which would pave the way to unlocking much-needed funds for the crisis-hit nation. In an exclusive interview with our own Jumana Bersachi, Nawaf Salam says he's open to input from the International Monetary Fund.
We will have this law before the, or this draft law before the government will work hard to adopt it in the government. Then, I mean, it will be beyond my capabilities. I mean, it will be in the hands of Parliament. But this in itself, I mean, will be an important signal that we are moving in the right direction. Especially that we are also aiming to have a program with the IMF, and that's one of the key issues, I mean, with the IMF.
Do you think the draft law in its current format, and I don't know all the details, right, and we're waiting to see all the details, but do you think the draft law in its current format would be acceptable to the IMF?
Well, I hope so. But I mean, it's not the Bible. It's not the Quran. Definitely, will be open to amendments, changes in order to not only satisfy the IMF, but there are also other actors that may have different inputs. So, but the process will start soon. Actually, the process has started. I mean, we are working hard on this.
And Lebanon wants to work with the IMF.
Indeed, I mean, that was part of our ministerial declaration, and we went twice to DC. We receive every other month delegation coming from the IMF. We want, I mean, to work with the IMF. It's not that we want, but I mean, I think that we need an IMF program for itself, of course, but beyond itself, I would say, because an IMF program is like giving you, I mean, a certificate de bonne conduite. I call it. It's like taking your vital signs, tell that you are going in the right direction. And when I say beyond it itself, definitely, I mean, if we can get $3-4 billion, that's not nothing. We badly need such funds, but it's a door open. I mean, when you have, if you are in a program with the IMF, I mean, for investors, whether public or private, this means that you are in good health.
Well, that is Lebanon's Prime Minister speaking to our very own Jumana Bersetchi in Beirut. Now, a U.S. military delegation has met with Ukrainian officials as part of a fresh bid by President Donald Trump to rejuvenate peace talks with Russia. The talks on Ukraine are taking place after another U.S.-Russia proposal modeled on the Gaza ceasefire got a tepid reception from Ukraine's supporters. Well, we're now joined by Oliver Crook, our Chief Europe correspondent in Brussels. Ollie, great to speak to you. So talks have been fairly low-key so far. What do we know about what's actually being discussed?
Yeah, that's right, Francine. We've only really discovered about this 28-point plan that's really in the same model as the Gaza, Hamas, Israel plan that we got from Steve Witkoff, Jared Kushner, who are also sort of the authors of this plan. This one is a 28-point plan, and sitting opposite the table to them on the Russian side is Kirill Dmitriev, who's been talking as the sort of spokesman for the Russians, has been the liaison for the United States, and he has been basically discussing this proposal, which we are now getting from the Trump administration, sort of shopping it around to various people. And the Europeans still have not seen this plan, which is a point that many of the foreign ministers have made walking into their meeting today in Brussels. But what we understand is they'll have three main buckets. One is to try to bring peace in Ukraine. The second is about security guarantees for Ukraine. The third is about a broader security architecture within Europe. And then the fourth is the future relationship between the United States and Russia and with Ukraine, of course. Now, we have drilled down a little bit into some of the details of this plan. We should say this is still very early stages, and this is from our reporting as well as reporting from other media outlets saying that basically that the United States under this plan would ask the Ukrainians to give up all of the Donbass region, which is not all occupied by the Russians at this stage. So this would mean the Ukrainians giving up additional territory to the Russians within those discussions. There would be limitations on whether or not the Ukrainians could join NATO for a number of years. There would also be limitations on the size of the military of Ukraine, and there would also be limitations on whether or not, and basically forbidding an international force to be within Ukraine, which is of course seen as a key principle for the security guarantees to ensure that the Russians wouldn't invade Ukraine again in the future. Now, what would the Russians be willing to give up? This is the big question. From what we understand in the early stages of this reporting, basically it would amount to a guarantee from the Russians to not invade Ukraine again and to not invade any other European nation. That may not be worth a whole lot because, of course, the Russians had already agreed to not invade Ukraine and had agreed to basically have Ukrainian sovereignty back in 1994, and they violated that. So still early stages, Francine. We should say this is not been made public. So these are early discussions about what a draft proposal could look like, but at the moment looks quite concessionary to the Russian side.
Yeah. Yeah, and Ollie, in Brussels today, foreign ministers are also discussing plans to stop Russia's so-called shadow fleet from exporting oil.
Yeah, that's right. So this is one of the other sort of sanctions that the Europeans could put forward to the Russians, but we should say this is all pretty marginal. The main thing that the Europeans need to do if they want to get serious and if they want to get an actual seat at the table is to figure out what to do with those frozen Russian assets, 140 billion euros, sitting with those in Belgium, trying to monetize them and get them to Ukraine. That is really the only point of leverage, the major point of leverage that the Europeans have right now, and they have still to this point been unable to get an agreement like that. We will see if the leaders will be able to in December, but this may be their last chance if the Trump administration is pushing this plan aggressively.
Ollie, thanks so much. Oliver Crook there, our Chief Europe correspondent in Brussels. Now we have plenty more to come. Here from Singapore, we speak to the co-founder and chief executive of Sakana AI. This is a company positioning itself as Japan's answer to OpenAI. Well, David Ha joins us next from the New Economy Forum here in Singapore. This is Bloomberg.
climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The conversations that matter, the insights you need. This is the Pulse, and I'm Francine Lacroix at the Bloomberg New Economy Forum here in Singapore. Now, NVIDIA boosts markets with a bullish revenue forecast that beats expectations. We'll bring you our exclusive interview with the chief executive, Jensen Huang. Hopes fade for a Fed rate cut as the October jobs report is scrapped, leaving policymakers without a key data point ahead of next month's meeting. Plus, top U.S. military officials arrive in Kyiv, Ukraine, in a renewed push to revive peace talks, while EU foreign ministers weigh fresh sanctions against Russia. So the theme here at this year's Bloomberg New Economy Forum is thriving in an age of extremes. So we've been speaking with Singapore's Prime Minister about the issue, including the fierce competition between the U.S. and China. Well, Lawrence Wong told our editor-in-chief, John Micklethwaite, that the recent Leader Summit brought a much-needed temporary stabilization in the relationship.
Because the two leaders will meet probably 4 times next year, because President Trump has said he will visit China, President Xi will probably visit back, and then there's APEC in Shenzhen and G20 in Miami. So many opportunities for engagement, and it's much needed for stability. The intense competition and rivalry will continue, I'm sure. The mutual suspicion and distrust remains, but the guardrails will ensure that the rivalry does not slide into a full decoupling or worse, confrontation and conflicts.
Well, we're now joined by John Micklethwaite, our editor-in-chief. John, it was a great interview because he was at pains of not saying too much about the U.S. and China, but actually,
what a surprise.
At the end of the day, this is his biggest headache.
Yes, I think if anyone, it's not just his biggest headache, it's the biggest headache for Indonesia, Malaysia, everyone in ASEAN. And already, you might argue, already for the new Prime Minister of Japan, it's already a #1 headache. So in all this area, obviously more than any other area of the world, the battle, the struggle between the US and China sits behind everything. And if you're something like Singapore, you have made a virtue over a long time out of being able to play both sides. But on some issues, it gets slightly harder not to make choices.
Do you see more? I mean, a lot of the conversations here in Singapore at the New Economy Forum have been on trade. Do you see more Asian countries trading amongst themselves?
I think that trade is quite interesting. If you look amongst ASEAN trade, if you put China to one side, there hasn't been as much as you would expect from a kind of trade bloc, and that's one of the issues. Later on, I asked him about whether this could ever become something like the EU. It's a terrible sign when you stop putting forward the EU as being the ideal solution to everyone's problems. But that actually they would like, Singapore, I think, would like to see some kind of trade bloc which made more sense. But trade generally is everything. You look at this entire region, Trump hit them, including his allies, with tariffs. Singapore has a trade deficit with America. He still clobbered them. And that is difficult on two different levels. One, it means they have to rethink trade policy, but there's also that central issue here about who's my ally and who's not. And especially you've got China right next door.
A lot of the conversations was also talking about de-dollarization, the move away from U.S. assets, and then overlaying all of this uncertainty is AI.
Yes, and AI sits in the background. I mean, AI, as you know, even better than me, is that AI has been the great godsend for the Trump economy, all that money being pumped into it, everyone thinking about it. But behind it again, if you look at it through the prism of US-China, and you have a lot of difficulty there. What chips are allowed to go into China? Talking to a banker just now, how much of your back office do you want to have in China if that's going to cause a problem with the Americans and so on? It's like some terrible divorce where everyone is looking and trying to work out trying to remain friends with both sides, but everyone is very, very conscious, and particularly the two sides are very, very conscious of who is doing what, where, and that's the problem.
Next week, November 26th, we have a UK budget.
Yeah, just to bring us back to hope.
Well, we don't really know what's in it because it feels like there's been quite a lot of leaks almost to test the market.
I think the interesting question is whether the Chancellor knows what's in it. On the basis it seems its biggest changes seem to go on backwards and forwards like a yo-yo. And actually, being serious, I think this is, compare, when Starmer came in, there was, I think, a widespread acceptance across the business community, and Rishi Sunak is here, and I think he would possibly accept this too. There's a widespread acceptance that Labour would be fine with business, and I think the evidence so far has been disastrous on that count. And yet again, they are playing around with something which, due to their own internal problems, but makes it very, very difficult if you own a business in Britain to plan. And it's all these things that they've done where it could have been so much easier if they just put up income tax by whatever, and that had paid for the gap in the budget. Instead of which they played around with inheritance taxes, all these little ones which they don't really seem to care about, but which mean an enormous amount to business people. And that's frozen a lot of activity, and they're paying for it.
But John, fundamentally, is it because they don't understand business, because they're not comfortable with even big business, but also the smaller businesses?
I think that has to be the suspicion. It's not. It's certainly, in some ways, being a big business is easier than being a small business. It's the small businesses which are being clobbered by this, and it's if you compare the adaptability and also the kind of manager qualities that Gordon Brown and Tony Blair brought when they came in. It's been a lot of people, me included, you looked and saw the way that Starmer and Reeves handled themselves in opposition, how they ran their campaign. That was very businesslike. I saw somebody the other day who pointed out that, what happened, he talked about all the people who they had gone round and seen, and each time they would sit and see the Labour opposition, it was then writing down notes when they talked to business leaders. And he said, no, they weren't writing down notes. They were writing down their thank you letters to the previous people they'd just seen, and rather than actually taking note of what was going down. And that's certainly what it feels like. So I think from the business side, there has been, I think, a collapse in enthusiasm for Labour.
So we'll see what's in the budget. John, thank you so much. As ever, John Micklethwaite, our boss, Bloomberg News editor-in-chief. Now, NVIDIA's bumper revenue forecast for the current period helping counter concerns that a global surge in AI spending is poised to crash. The chief executive, Jensen Huang, telling us Chinese sales are not included in the outlook because of U.S. restrictions. Well, he spoke exclusively to Ed Ludlow about seeking to re-engage with China and the company's upbeat forecast.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. but we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start, that's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Well, that was the NVIDIA chief executive, Jensen Huang, speaking exclusively to Bloomberg tech anchor Ed Ludlow. Now, the global AI boom has found its way to Japan. Earlier this week, Sakana AI, one of the country's most promising tech firms, raised more than $100 million at a valuation of about $2.6 billion. Now, the raise by the NVIDIA-backed firm underscores the growing investor interest in Japan's burgeoning AI scene. Joining us now is David Ha, chief executive of Sakana AI. David, so good to speak to you. I mean, it's pretty incredible, the trajectory that you've had for Sakana. It's 2 years in the making, and again, a huge valuation. You're trying to take on OpenAI and other big language models.
Well, I'm not necessarily sure we're competing directly with OpenAI. I think, our name, Sakana AI, means fish, and in particular, a school of fish. And I think every company has their place in the ecosystem. Yeah. But it's been quite a journey in the last 2 years. I think for a company, an R&D company in Japan, we always have to do things differently, especially when we're competing with US or China. And in year one in our R&D, we developed novel methods to not only develop our own model, but to combine models from all over the world to create new models efficiently for particular applications, to get them to do really well at them. We've also...
So do you train it differently?
Yes.
So it's basically in the training that where it finds the information is different, so it's more organic?
Yes, for us, we develop our own models, but we also use existing models, whether they're open source models or closed source models, and we're able to combine them into creating a new system that will produce particular capabilities for a user-defined application. Our company is also really known for pioneering the AI scientists, creating technology to use these technology to come up with new ideas. Mm-hmm. And I'm proud that earlier this year, in our second year of operations, we've developed a really growing and healthy enterprise business in Japan, where we actually have the chance to deploy our technology to help some of the largest Japanese enterprise companies. I think Japan is experiencing one of the largest digital transformation projects in history, and it's actually a good time for this AI developments, and I think AI can really help transform many of these enterprises, and we're there to work with some of the largest banks and insurance companies and securities houses.
And do you think this is a template also for other countries? Like, what's your biggest hope actually for Sakana?
I think, in 3 to 5 years' time, we want to continue our mission of deploying and developing the leading R&D in Japan for Japan. We want to use our technology to really advance and make Japan more productive, the society better in Japan, and more adaptive to this new change. I think there is generally quite a bit of anxiety in society. People are afraid of change, especially Japan. And I think it's really important for companies, in particular in Japan, to deploy this technology in a very mindful way.
How big do you want to be? And actually, is there an exit strategy? I know you're only 2 years in the making, but do you keep it private? Would you look at IPO at some point? And how big do you want to grow it first?
Yeah, for me, I haven't thought about exiting or IPO. This is probably my last job in my career.
You're in it for the long term.
Yeah, we're here in the long term. I think when we're talking about IPO or exit, it depends on the success of the company. We're in this in the long term. I think I want to build a very sustainable, growing AI company with a solid business model. Unlike, I think many AI companies now, it's very difficult to achieve profitability, but we really want to have this sustainable growth and really work with the largest enterprises in Japan to grow with the country as Japan needs to adopt this new technology.
David, I mean, people are worried about AI for different reasons, right? First of all, that we can't really control the technology, or it could go into wrong hands. The other one is that it doesn't put the human in the middle of it. So, it could displace jobs and you start losing critical thinking. The third is the idea that there's so much money being plowed into AI that the business model changes as some of the investors look to do returns. What are you most worried about?
Yeah, I am worried about many of these issues. The last question you asked is about investment in AI and valuation and how to make money. And ultimately, all AI businesses need to have a solid business model, need to generate not just revenue but profits. And I think right now many AI companies are trying to develop the leading technology at all costs. They're trying to expand at all costs to get the very best model at all costs without really thinking properly about structuring a business model. And I think your second question, which I think is really important for me, is to have our technology right now. I don't think we're at the stage where it can replace humans en masse. We need humans in the loop. In particular, in the context of Japan, I think a lot of knowledge for large Japanese enterprises and society is not written down in a rule book. LLMs are trained on text, but a lot of human knowledge is trained on trust between humans and among colleagues. So it's really important for this technology to be used with humans, to have a human in the loop, for humans or workers to actually check the outputs and take responsibility for the actions of the AI. And I think this is something that we're really mindful of as we're deploying these technology in enterprise companies in Japan.
And David, you're right that there does seem to be, trillions of dollars being poured this in the race for the sake's race. Does it actually make a difference to you and Sakana if this race is won by the US or China? Because it does go back to also geopolitics.
It is, and Japan is in a very special place. I think Japan, to me, is a very special country. It's a leading democracy in Asia, in the region, but it's also situated right between US and China, two of the dominant powers. And my view is for Japan to develop its own sovereign AI ecosystem. It ultimately has to cooperate. I don't think Japan can develop its own, AI in a Galapagos island where, it's just ignoring everyone else. We have to combine best technology around the world with the Japan specific, different modes, different vibe that suits for the country. So that's the way that our company is approaching building this technology in Japan.
So interesting, David. Thanks so much for joining us. David Ha, the Chief Executive of Sakana AI. Now, we have lots more from newsmakers in the tech space. Tomorrow, we'll be speaking to the chairman of Foxconn. The Taiwanese tech giant is also a major NVIDIA server partner and also well known for assembling hardware, including Apple iPhones and MacBooks. Coming up, markets bracing for the U.S. jobs report. We'll discuss what kind of print could swing the Fed towards the December cut. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix at the Bloomberg New Economy Forum in Singapore. Now, bond investors are awaiting September's U.S. jobs report due today to determine if the Fed will cut interest rates in December. Now, weak report showing poor hiring is likely to revive bets on a rate reduction. For more, let's talk to Ven Ram, cross-asset strategist at Bloomberg's MLive. Ven, great to speak to you. How bad do you think that report needs to be for the December rate cut to go back up?
Good afternoon, Francine. I think that, it's got to be a terrible report. The median expectation is that the employers added 51K jobs in September, but because this is for September and we are getting a delayed report, it'll have a limited impact on the Fed, much more than usual. Yesterday, we heard from the BLS saying that they are going to suspend publication of the October report. So this will be the last report that the Fed has in hand before they meet in December. Now, if the median expectations are met, the Fed will take it. And the Fed minutes from last night suggest that, many participants are inclined to hold rates at the current level into the year end. So if the median expectation prevails today or thereabouts, or if the reading is thereabouts, I think that the Fed will hold rates. But if it shows a contraction, I think that, the bets that were removed yesterday from the markets will come back on for a rate cut in December, because that will have the Fed worrying about, the weakness of the jobs market, and considering that they won't have an October report, they will be mighty worried about the state of the labor market. So in all, we need a very weak print today to upset the market's calculations.
Ven, thank you. As always, Ven Ram, their cross-asset strategist at Bloomberg MLive, with a pretty interesting report on jobs coming up. Now, Bloomberg understands that China is weighing a new property stimulus package in a bid to steady its struggling markets. Now, we're told that some of the new measures being considered include providing new home buyers with more subsidies, but also lowering home transaction costs. With us now, John Farrar, our APAC Senior Executive Editor. John, so good to speak to you. I mean, there's China, there's India, and then we talk about trade. One of the main themes that we've been following here at the Bloomberg New Economy Forum. What's your take on China right now?
Well, this really is part of a much sort of longer-term story with China. Look, we talk a lot about China's power when it comes to rare earths, when it comes to exports, when it comes to new technology like cars. Rightly so. But that ignores the fact that the economy does have serious problems, and this property downturn, which has been going on for 4 years now, it is weighing on so much in the economy, on consumer spending, on the consumer outlook. So this is yet another attempt by Chinese policymakers to try to get their arms around this. So far, they haven't really come up with that silver bullet, but this is just sort of, and maybe there isn't one silver bullet, but this is like one more sort of policy measure along the way.
But this also comes out, it took a lot of people by surprise when we're talking about deflationary prices. Yeah. In China. So there could be longer-term implications for that as well, and their fight with the U.S.
Right. And again, the trade war, the U.S.-China trade war, it's sort of, we talk a lot about China's strengths, but like every economy, they have a lot of problems, right? Deflation, and it's not just in the housing sector, right? It's sort of this involution idea, this idea that, you almost have too much capacity, you have too much competition in some sectors, and that's like driving down prices. Great for consumers, but one of the messages that we've heard here at the conference this week is that does make it very hard to make money in China if you're a foreign company, as opposed to maybe a country like India.
Yeah, and India is really, I mean, we've talked a lot about India here, and they're trying to position themselves as maybe like the T3. You have the US, China, and India.
Yeah.
I don't know whether that's wishful thinking and would take quite some time to get there.
Yes, they're talking about like semiconductor parity by 2032. I mean, that is a long way to go for India. But, this is under Modi, this is a country with huge ambitions. Economically, there is sort of momentum there. They've been growing, strongly over the last few years. Our new economy forum will be going there next year. So, we'll see how they're doing in a year's time. But I think, the challenge for India is to convince the rest of the world that they can actually ramp up the sort of manufacturing capacity in such a short period of time. Yes, there is manufacturing around the country. Apple are investing, but they don't have the 30, 40-year track record in that space that China has. So that is the big question for India right now.
Overall, your main key takeaway, and we've had such great discussions.
Amazing discussions. I mean, I still think, look, it's hard to get away from AI. So yesterday was the day of sort of some skepticism. We had John Waldron talking about, valuations. But of course, NVIDIA's results overnight just sort of blew all of that pessimism off the table, and we were back to sort of bullishness. We had Rishi Sunak today talking about it, but also in the background, lots of interesting conversations about energy. So, you take a country like India, huge AI ambitions, as well as semiconductor ambitions, but where are they going to get all of the energy that will be needed to power all of these data centers? The scramble for AI in many ways is a scramble for energy, and I think that's something we're going to be talking about tomorrow in the final day. So energy and AI have been sort of the two big topics, and obviously China in the background, China trade war, have been the big topics here this week.
Yeah, I like the way we framed it, like scenarios in the ages of extreme, right? And we don't really talk about probabilities that much, but we're economists tend to think in scenarios, because actually the divergence between what could happen has thoroughly increased in the last year.
Yeah, I mean, as we heard from Prime Minister Wong last night, we are living in goes without saying, in a much more in a world where these sort of outlying possibilities are much more probable, feel much more probable. And I think that's also the feeling right over the last few years. It's not just people are definitely predicting that this extreme outcome will happen, but it feels more likely, it feels more possible than might have been the case 4 years ago. And again, that sort of dampens the animal spirit somewhat.
John, thank you so much. John Farrar there, our APAC Senior Executive Editor. Now, we'll have plenty more, of course, on everything to do with the markets. Look out for that U.S. jobs data, the first we've had in a couple of weeks, because of what we've seen, of course, with the government shutdown. This, a reminder, is for September. So we were speaking to Tom Orlick, who was saying, look, it's quite backward-looking. It is an interesting data point, but maybe it will take quite something or a big miss to move market expectations. That's it from this year's New Economy Forum in Singapore. Of course, tomorrow we'll have a day, of course, another day with also a conversation with the Greek Prime Minister. This is...
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. NVIDIA to the rescue. The chip giant out with a robust forecast. Jensen Huang saying the firm has plenty of new chips to meet demand. A sigh of relief then. Global stocks rally as NVIDIA eases bubble concerns, potentially arresting a week of heavy selling in tech. And the return of the data. Well, one set, the September jobs report. It's the last NFP we'll get before the Fed's December meeting. So that all has an impact on today's trading. And as you can see, we're off our highs, but we are firmly higher for futures, particularly NASDAQ 100 futures. After a week, several sessions at least, of heavy selling in tech. But bear in mind, we're still up 17% year to date on the NASDAQ 100. We're still up almost 13% on the S&P 500. Those NVIDIA results, though, definitely helping things. A robust forecast, and that doesn't even include China. Let's take a look at the bond universe. Not much change there, but we know that we're getting an NFP report today. It's pretty out of date, and that's the last official labour market data we're going to get before the December meeting. So after those hawkish minutes yesterday, pretty high bar for the Fed to actually cut in December. Markets are pricing in less than a 30% chance of that actually happening now. Well, let's get to some individual movers. I think we know one or two of them. Over to London and Valerie Teitel. Good morning, Valerie.
That's right, Bonnie. Let's start with a check on the chip makers. NVIDIA really leading the gains after that guidance beat and a raise from the main AI chip maker. NVIDIA shares higher by over 5% in lifting all of its rivals in the space. AMD up over 4%, Broadcom up nearly 2.5%, and Intel up over 1.25%. Now, Bonnie, it was all down to these comments from Jensen Huang saying their demand for that Blackwell chip, that chip that is used to power AI data centers, is continuing off the charts. We're also seeing a rise when it comes to cloud computing names. The likes of CoreWeave are up over 8%, and Oracle, who signed that $300 billion cloud computing deal with OpenAI, also sharing some of the joy, up 2.7%. Now let's move to a stock in the red. This is Palo Alto, the cybersecurity company. The shares are in the red, down over 4%. Even though they beat when it came to their results, they did announce an acquisition of Chronosphere, paying over $3 billion for it. Maybe there's a bit of doubt in the market this morning on whether that was the right price, with Palo Alto shares down just over 4%. Bonnie?
All right, we'll keep our eye out for all those stocks. That is Valerie Teitel there in London. And in just moments, we're going to be taking a closer look at NVIDIA's results with Frank Lee of HSBC. Later in the hour, a drumbeat to the September jobs report with Keith Lerner of Truist. So let's get straight now to the biggest market mover of the day, NVIDIA, crushing doubts around AI.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Good morning, Matt. Matt, it was NVIDIA's first beat and raise in 6 quarters. Who are the new clients? Why was it able to do that?
Yeah, I mean, I think the client list is a very familiar one. It's the big hyperscalers, so the Googles, the Metas, the Amazons of this world, all demanding AI accelerators to expand their business. And some of that business is like genuine demand from customers, and some of it is more speculative, that they're kind of building capacity for the kind of next 2 to 3 years as they anticipate more AI spending, particularly by enterprise customers.
Now, gross margins did improve. We've been waiting for this all year. We're at 75% now, Matt. Can they continue to improve, or is that it? Is that the high bar?
I think that's probably the high bar. I mean, it's a pretty good margin to be generating. And actually on the call, they did, flag that there may well be some gross margin pressure on a 1 to 2 year view because input costs are rising, but they're doing everything they can to manage that. So I think somewhere in that kind of 70-75% range is probably where it's going to stay. But yeah, it's a great profitability story.
Yeah, for sure. Jensen was downplaying China, saying, look, at the moment we're talking about $0 in terms of revenue. We're not even thinking about it. But we know the White House has now asked Congress to reject that bill curbing NVIDIA exports. So what might that mean for the coming quarters?
Yeah, I think there's a lot of different kind of policy views on this in the US. So it's unclear how easy it will be for the restrictions to be removed. I think the other issue here is that the dynamic in China has changed quite a bit too. Rivals like Huawei, they're still behind by some distance on the technology, but they have closed the gap to a degree. So Chinese businesses can buy decent performing AI accelerators from local providers, and the Chinese government is encouraging them to do so. So I think even if restrictions were lifted on NVIDIA, there would potentially be more of a kind of demand issue for them in that market, unless they were fully unrestricted and they could sell unrestricted on the kind of the Blackwells and the Rubins, which I think is unlikely.
Yeah, Matt, okay, thank you so much. Matt Bloxham there on Bloomberg Intelligence. And tomorrow, don't miss our interview with the chairman of Foxconn, Young Liu. The Taiwanese tech giant is a major NVIDIA server partner and also well known for assembling Apple iPhones, MacBooks, and other hardware, of course. Well, Frank Lee of HSBC says NVIDIA's beat and raise, even without China, should help inject confidence back into the AI narrative. He writes this. NVIDIA also addressed the AI bubble concerns by highlighting increasing applications, longevity of the GPU lifecycle, and continuously increasing CSP capex. Frank has a $320 price target on NVIDIA, and he joins us now. So, Frank, obviously you wouldn't have been too surprised then by this great set of results, this beat and raise with margins up to 75%. How do we all, including Jensen Huang, have so much visibility suddenly into the coming quarters?
Yeah, I mean, I think if you look at Jensen, he's already highlighted that visibility about a month ago at the GTC in Washington. And we've also seen it at about a month ago when we upgraded NVIDIA with our bullish target price because of what he's doing in the supply chain. He's given very aggressive numbers to TSMC for next year. And so that shows that he does believe in his orders. And I think the whole narrative shift of a growing market outside of the CSPs is coming through, through the enterprise, through sovereign AI. And I think if you look at CSP percentage of revenues, it's about 50% now. But this is down from where we were probably 12, 18 months ago when the number was much higher. So we do think, that the narrative of this growing TAM seems to be playing out.
So if it's going to grow beyond the hyperscalers to a significant degree, how do you see the mix shift then between hyperscalers, other clients, enterprise, and who would those enterprise clients be? And obviously sovereigns, are there new ones on the horizon?
Yeah, so I think what you're seeing is that the market is, I think the debate in the first half of the year was really, who's fighting for share within these hyperscalers, whether it's going to be NVIDIA with a GPU or it's going to be the ASIC being led by Broadcom. But it seems like what we're seeing now is that actually the market's big enough where everybody's growing. The ASIC players like Broadcom will continue to see growth and share gains within the hyperscalers, but NVIDIA continues to push the envelope with these new players. And we are seeing, a lot of the neo cloud coming through. It's more difficult to quantify given that there isn't like a big number CapEx, but so far from what we see the supply chain and from NVIDIA's confidence, it does seem to suggest that, we are going to see this market continue to grow.
This White House decision that will ultimately very likely lead to the ability by NVIDIA to export to China. Will it mean much for the bottom line, given what we just heard from Matt Bloxham, that China and Chinese companies are being encouraged to use Huawei and local domestic companies?
Yeah, I mean, I think the China story it occupies a lot of airtime, but I think if you look at the bottom line, it's not as big. I mean, if you look at the China revenue opportunity at its peak a couple of years ago, it was more than 20% of the market. Now it's down probably to less than 10%. And I think, as we can see the evidence from NVIDIA's beat and raise this quarter, and even the $500 billion visibility he's talked about, that doesn't include China. So I think, if China comes in, it's an optionality. It's great. But at the same time, I don't think it's as critical for them to continue to drive their growth for next year.
Frank, is the street okay with those margins disimproving a little bit? I mean, it was waiting all year for them to get to 75, mid-70s, let's say. If they come under pressure in the coming quarters, will that hit the stock?
Yeah, I think the reason that people do see some concern on margin is because of the significant increase in a lot of the component pricing, especially around the DRAM, the memory, the HBM memory, that the memory prices have gone up. But I think NVIDIA feels fairly confident about their margin profile. But it also shows you the pricing power that they continue to have is still there, and that's why I think they can navigate through the increasing cost structures that they're going to get hit with.
Frank, you look out as far as full year 2028, and you're looking at a PE there of 28 times, and obviously, a 72% increase from the current price. What gets us there? Is it these new customers, or what else is it?
Yeah, so I think what we feel is that the earnings upside is still not quite recognized by the overall street. Just looking at the data center revenue next year, we have about $350 billion in revenues. That is significantly higher than I think where most of the street was about a month ago. But that number we believe now is much more, I think, being supported by NVIDIA's $500 billion visibility. So we do feel very confident with that number, and I think that will continue to drive NVIDIA as just the earnings growth momentum. So I think this is a really important quarter, because, as you said earlier, they actually saw a beat and raise for the first time in 6 quarters. So I think this is what the market is excited about.
One of the risks that you do see is weaker than expected data center momentum, which you're not saying is materializing, but it could materialize in the future. What would that look like, and would it be because of electricity needs, or just because suppliers can't, outfit those data centers fast enough?
Yeah, I definitely think that the power is becoming a bigger issue in consideration, especially as NVIDIA moves their client base away from the hyperscalers into these sovereign AIs. This is something that I think the overall supply chain is quite aware of. We have about probably 12 months to 18 months before this really becomes a mission critical issue. So we do think that there will be enough time to continue to see how the power infrastructure builds out over the next year to see whether or not that will truly be a bottleneck.
Frank, I wanted to ask you about the older models, the older chips and so on. They're doing pretty well, right? They're lasting maybe much longer than NVIDIA thought. Is that going to be a problem for NVIDIA down the line?
And so far, it hasn't. I mean, I think they've highlighted on the call that they still had quite a bit of their Hopper revenues. But at the same time, I think they continue to show that there's a lot of demand for their new products. In fact, I think one thing that could be a positive surprise is the Rubin launch next year. This is coming in, I think, so far we think it could be a much smoother ramp than we saw on Blackwell initially. And we had some yield issues on the supply chain of the NVIDIA rack. We don't think it will be as much of an issue next year now that they've had an experience of doing their own assembly. And I think some of the kinks that we've seen in this year probably will not be as much of an issue next year.
Frank, thank you so much for joining us today. A pleasure to speak with you. That is Frank Lee of HSBC. Now to other top stories trending on the terminal this morning. UBS CEO Sergio Ermotti pushed back speculation that the bank is looking to leave Switzerland, calling it absurd. Ermotti said that the leadership is seeking a compromise on contentious capital rules, and that being a Swiss bank, quote, is the best possible outcome. TikTok parent company ByteDance's valuation soaring to $480 billion. A Chinese investment firm bought a stake at far above recent levels, a strong sign of interest in the company. According to sources, the tranche of stock had been priced at roughly $200 million, with a $360 billion valuation for ByteDance. China is considering new measures to support its struggling property market on rising concerns that the sector will threaten to destabilize its financial system. Policymakers are said to be discussing options, including giving new homebuyers mortgage subsidies for the first time. Coming up, President Trump signs a bill to compel the release of all Epstein files and records. More on that next. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You said they ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. President Trump pushing the Justice Department to release the Epstein files. He announced that he has signed the bill on Truth Social and added, quote, "Do not forget the Biden administration did not turn over a single file or page related to Democrat Epstein." Bloomberg's Suzanne Lynch joins us now for more. So, Suzanne, how will his base react to the release of these files? I mean, will there be anything in there that potentially we don't already know about?
Yeah, I mean, this is a significant moment. It is capping months-long investigations, accusations and controversy over these files. And we saw that about turn by Donald Trump over the weekend, calling for these files to be released. Now, what this means is that Donald Trump, as he announced, has signed this bill instructing the Department of Justice to release the files. They do now have 30 days to do so. But there does seem to be suggestions in the text that there will be room for the Justice Department to decide maybe not to release some information if it is deemed to invade privacy or is related to any ongoing investigation. So let's see how this plays out. As I said, 30 days to go on this. I think Donald Trump has bought himself some time in trying to get over this political crisis, but we're not really going to know how this plays out until these files are released and we see what information is actually released.
Sure, and as you say, any redaction or everything that sows doubt even after the release is only going to rile up his base even more, and some politicians that are obviously calling for transparency here. Elsewhere, we know that Trump is going to host the New York City Mayor-elect Zohran Mamdani at the White House on Friday. Hard to speculate what kind of a conversation they might have, but he certainly wasn't a fan originally before Mamdani became Mayor-elect.
Yes, these are two very different New Yorkers who are going to meet in the White House on Friday. Donald Trump, of course, was very clear in his views about Mamdani. you know, casting him as a communist, casting him as very far left, and ultimately backing Andrew Cuomo's unsuccessful bid for mayor. So it's going to be quite a meeting between these two people, these two New Yorkers who are completely at opposite ends of the ideological spectrum. Now, Donald Trump has threatened to withhold more federal funds from New York. Last year, New York received about $10 billion of federal funds, so about 8% or so of its operating budget for the year. But we do expect a kind of an interesting, if not fiery, exchange between the two men on Friday. And even just speaking there about the Epstein files, you know, Donald Trump has been at pains to try and pin that on Democrats. So we do expect, and one would expect, that the president comes out fighting against Democrats during this meeting with the new New York mayor on Friday.
And then, Suzanne, there's this Genesis mission. It's President Trump rolling this out, a part of an executive order to boost U.S. AI efforts. What could that possibly mean, given that the U.S. seems to already have been trying to do that, you know, and particularly now giving NVIDIA likely permission through Congress to actually export to China again?
Yeah, it's interesting. I think the element to watch here is what comes at a federal level in terms of AI regulation. Donald Trump has criticized what he sees as bad decisions, basically, by U.S. states on AI regulation, and he's trying to bump up federal powers over this. So one possibility is that something on this, some kind of language, could sneak into a defense bill, for example. We don't know as of yet how that would manifest itself, but this is definitely the line that Donald Trump is pushing. He believes there should be more federal power over AI regulation. He's warning that the U.S. may fall behind if it doesn't take the stronger federal stance in terms of AI. Of course, this is not just a conversation that's happening in the U.S. As Donald Trump himself, he spoke about China and the fact that the U.S. may lose ground to China on this if it does not bulk up and toughen up and take the lead on AI regulation at a federal level. But of course, this conversation also happening in places like Europe, in the EU, in the UK, as all these different centres of power try to get ahead in the next stage of AI development.
Yep, definitely a sovereign race. Suzanne, thank you so much for joining us today. That is Suzanne Lynch. Let's take a look at markets now. A big day ahead of us after we got those NVIDIA earnings. Don't forget we get Walmart as well before the open. Right now, a very positive tone with S&P futures pointing to gains of more than 1%. Same for the NASDAQ, more in fact. Not too much movement there for the Bloomberg Dollar Index, but the yen is firmly above 157. That story continuing, a weaker yen. We have a little bit stronger for sterling right now. It's trading at 130.84 as we march ever closer to that Rachel Reeves budget. And the 10-year yield, as you can see, at 413.67. Coming up, Larry Summers stepping aside from teaching at Harvard while it investigates his Epstein ties. That and what else is making headlines in your front page news. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GPS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times leading with former Harvard president Larry Summers stepping back from his teaching duties effective immediately. The university is investigating his ties to Jeffrey Epstein. Mr. Summers has also resigned from the board of OpenAI. Now, the Times notes Mr. Summers will keep his tenured status at Harvard and is only on leave from his position at the Harvard Kennedy School. Next up, the Washington Post reporting the administration is renewing efforts to end the war in Ukraine. Special Envoy Steve Witkoff is pushing a revised peace plan that contains provisions opposed by Kyiv, including a significant loss of territory and strict limits on Ukraine's military. People familiar with the matter say top U.S. military officials are on an unusual diplomatic assignment in Kyiv. This after a secretive meeting between Witkoff and top advisors to Ukraine's president in Miami this past weekend. And finally, on the Wall Street Journal front page, a web page for the Centers for Disease Control and Prevention now says vaccines may cause autism. The new text, which was posted yesterday, notes HSS has launched a comprehensive assessment to probe the causes of autism. It's a reversal for Health Secretary Robert F. Kennedy Jr., who had assured senators during his confirmation process that the CDC would not remove statements that say vaccines do not cause autism. Coming up, we'll look ahead to the September jobs data next with Keith Lerner of Truist.
Younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in decline. That's the climate of happiness. It's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about. It's about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. NVIDIA to the rescue. The chip giant out with a robust forecast. Jensen Huang saying the firm has plenty of new chips to meet demand. A sigh of relief. Global stocks rally as NVIDIA eases bubble concerns, potentially arresting a week of heavy selling. And the return of the data. Well, one set anyway, the September jobs report. The last NFP, in fact, that we'll get before the Fed's December meeting. So let's take a look at how those markets are shaping up for this session. We're off our highs, but as you can see, futures pointed markedly higher, particularly NASDAQ 100 futures. That index, of course, still up 17% year to date. NVIDIA is up 5% in the pre-market, and that's really going to help things today. We also, in bonds, are considering Fed moves and potential, Fed hawkishness after yesterday's FOMC minutes. We're not seeing any real change, but we do have the idea of a Fed cut now getting further and further out the horizon, less than a 30% chance being priced in right now. Bitcoin has come back. It was above 92,000 earlier this morning, but again, hard to know what happens with that particular coin. Let's get to some individual stocks to watch now. We have NVIDIA and lots more with Valerie Teitel. Valerie.
Good morning, Bonnie. Yes, let's start with a check on the chip makers, including NVIDIA, after that guidance beat and a raise yesterday after the bell. NVIDIA shares up just shy of 5%, but lifting all chip makers that are involved in the AI chip making space. AMD up 4%, Broadcom up 2.7%, and Intel also in the green, up 1.7%. It was all about this rosy outlook for the demand for those Blackwell chips, with the CEO telling Bloomberg that demand for Blackwells is off the charts, lifting all chip makers this morning. Let's also have a check in on the cloud players, because we're seeing some decent moves there as well. CoreWeave markedly higher this morning, up by 8% in the pre-market. We're also seeing shares of Oracle up 2.5%. Remember, these are two of the big cloud computing names who have signed massive deals with the likes of OpenAI in the last few months. Lastly, let's look at a tech stock that is not in the green, and that is Palo Alto. This is the cybersecurity software firm. Shares are lower, down 4.5%. Even though they did come out with some pretty decent results, they did acquire, or at least announce an acquisition of a company called Chronosphere in order to make its foray more into the AI-enabled cybersecurity realm. Perhaps the market is telling the shares at the moment that they might have paid too much for that, with the deal around $3.3 billion. Bonnie?
Whole narrative still all about AI, Valerie. Thank you so much, Valerie Teitel there. Well, we're less than 3 hours away from the release of the delayed September payrolls report. Here to take us through what we might see is Stuart Poll of Bloomberg Economics. So, Stuart, what do we know already about what we're going to see today?
Well, when we look at a lot of the bottoms-up data, when we look at private payrolls reports, it looks as though this is actually going to be a pretty hot report. Right now, the consensus is calling for about 50,000 jobs added during the month of September, but when we sharpen our pencils, it looks like it's going to be closer to 100,000 jobs added. That's about 3 times the pace of hiring needed to hold the unemployment rate steady at 4.3%. But I don't think that we're fully out of the woods yet when it comes to cooling of the labor market. We still have yet to see all the federal workers who took the Doge buyout rolling off federal payrolls. After the Trump administration took office, those workers had about 9 months before they would roll off and take that early buyout. We should see some of those payrolls declining, federal payrolls declining, when we get into October. But of course, we're never going to get that October report.
Exactly. It's just not going to come out because I guess the survey wasn't able to be done. The Fed knows this information, right, in the background. Why then would it feel comfortable not cutting in December?
Well, it looks like there's a lot of attention being given to trying to communicate that the Fed is still committed to the 2% inflation target. When we looked at the FOMC minutes, seeing that many FOMC members as early as October were deciding that a December rate cut was not appropriate, seeing it that early really shows that this push that we've seen, this hawkish rhetoric that we've seen, has been a deliberate move to strip out pricing from December. And I think that if we were to see 100,000 jobs added during the month of September, it could even suggest that the terminal rate this cutting cycle is not actually close to 3%. It could be closer to 3.5%. We could get fewer cuts in 2026 than are currently being priced in. So when we see this jobs report in 3 hours or so, I don't think that it's really going to be December SOFR futures that are trading. It's going to be something like 2 years trading. Right now, it's pricing. Right now, the 2-year rate is at 3.6%. I would not be surprised if we had 100,000 jobs, that moving up to 370.
Wow, that would be a big move. It's an interesting experiment, isn't it, Stuart? Because this is the first time that I can recall where the Fed is genuinely on its own. I mean, sure, you could say the market is pushing it, but the market doesn't have information either. So it looks like the Fed is not, you could never say that the Fed was actually being pushed by the market to do something or not do something at this next meeting.
Yeah, right now, everybody is looking at the same broad swath of alternative data sets. What we find when we created our alternative labor market index, a comprehensive index focusing on a few dozen alternative labor market indicators, we find that right now the labor market is about 1 standard deviation weaker than it has been historically, but it's actually been improving just gradually over the last couple months during the government shutdown. So while everybody is focused on how the Fed is flying blind, we actually think when we look at all of the alternative data that the Fed is looking at also, they're thinking maybe we're through the worst of it. Again, I think that October would be a pretty bad print, but since we're not going to get it, and since we're going to get the November labor survey, the November jobs report after the December meeting, I think right now everybody is comfortable just saying the alternative data is pointing toward a gradual improvement, very modest, gradual improvement, and so the Fed should stay nimble and stay on hold for the time being.
Stuart, thank you so much. That data out again in just less than 3 hours. That is Stuart Pohl of Bloomberg Economics. And joining us now for more on all of this is Keith Lerner, CIO and Chief Market Strategist at Truist. Keith, what do you make of what Stuart said there? Are you at all concerned about a labour market weakening, this feeding through to the consumer and so on? Or, is it okay to not panic for now?
Yeah, well, great to be with you. I thought that was a really good analysis of where we are. So, the big picture, if I step back, I mean, this market, the S&P 500, peaked back on the day that Powell spoke and pushed back against the overall market. So I think today is important. There's two key drivers of this market. One is the AI theme, and the other theme about a month ago was the thought of this kind of rate cutting cycle, and that's been pushed back. I think that's why we've seen some weakness, especially in some of the areas that were more of the frothy areas as well. But I think for the market, we got the AI news overnight or last night from NVIDIA. I think that's a positive. I think what the market today is looking for is maybe somewhere like Goldilocks. If it's 100,000, as Stuart mentioned, or hotter than that, I think that the market, can still do fine. I think the tech names will continue to do fine. I think the rotation trade will have more of an issue because the rotation trade likely needs the Fed cutting cycle to commence. So at this point, we're still sticking with tech. We still think we have more of a muddle through, economy. But again, the rate cuts are probably more necessary for the 493 or for the sporting trade that people are hoping for.
So, Keith, one of the things that Stuart said was that there would have been weakness in November if the data had been collected. Does that mean that if we don't get a cut in December, that the Fed might be doing something wrong, and indeed, everybody will panic once that labour market weakness really starts to show through, if it does?
Well, I think that's the risk, is on the labor side. We're more concerned about the labor side than we are on the inflation side, especially even in this employment report. Wage growth should continue to come down. We're seeing housing prices come down. Oil prices are down. So I think the focus should be more on the employment side, but the Fed also has scar tissue of the inflation that happened a few years ago. So I guess all in all, that is the risk to the view. I mean, our view, though, is more likely as we move into next year that we will see a modest uptick in the economy because we will have, at least a little bit more clarity on tariffs. We have this tax bill or some of the incentives really going to hit in the first quarter as well. And we still expect the Fed to moderately cut rates. And I don't know that it matters so much whether it's December or January. It's that the path is still one that moderately reduces lending rates over the next year.
So, Keith, just in the very near term, then, are we setting ourselves up for a nice Santa Claus rally?
Yeah, I still think there's upside into year end. I think what happened, as I mentioned, the market kind of peaked back at the end of October. But we also have to realize we're coming off for the S&P 500, one of the strongest 6-month rises that we've seen in history. So we were up more than 35%. The technology sector was up over 70%, semiconductors up over 100%. So, coming into this month, I think what we had is a really elevated bar. We had stretched sentiment, stretched prices, and we've reset that a bit. But I think the first piece of a year-end rally is the NVIDIA print. The second piece, I think, is having something kind of like that Goldilocks number in the employment side, and then the market can get back into gear. So again, we're going to see later today whether that happens, but I still think the technology side is where you want to be.
Yeah, today is going to be important because when we saw sentiment turn a week and a half or so ago, or as you say, the October 29th was the peak, it really did turn and several stocks really saw massive sell-offs. Okay, overall, the NASDAQ is still up 17% year to date, but could that sentiment turn happen again several times?
Yeah, well, I mean, even like after a report like yesterday, we see futures up. What we want to see is that more buyers come in. So we move from the kind of the fear of the last couple of weeks to some people trying to be greedy and they don't want to, fear of missing out later on. But it's also interesting, I think, going back to some of the corrections, underneath the surface, we've seen actually a lot more damage in some of the frothy areas. There was a meme ETF that just reopened after being closed for several years in October. That meme ETF is down 40% since just opening, in October. So to me, a lot of that some of that froth has been taken out of the market. Are we at extreme negative sentiment? No, but at least we have more of a, at least that bar has been reset somewhat lower, so that hopefully stocks can start to reclimb that wall of worry again. But again, I mean, obviously, like I said, this report today will be important for that.
So the little bit of a rotation that we had been seeing, does this NVIDIA earnings report now reset that and arrest it, basically?
Yeah, it doesn't mean that it has to be either or. Like there's some trends that we're seeing, some improvement in healthcare that likely continues. But I do think ultimately the dominant theme of this bull market still remains AI and tech. And given all these macro headwinds, and we've seen that with some of the retailers this week, I still think the secular growth that we're seeing is still within tech. And coming out of this earnings season, we're looking now at forward earning estimates for the technology sector over the last couple of months is up about 9%. So upward revisions for the tech sector up about 9%. That's about double what we're seeing for the overall S&P 500. So in a time where there's still a lot of macro uncertainty, you're still seeing secular growth. I know there's some concerns around debt financing and some of these other agreements that we've seen recently, but at the end of the day, you at least have more visibility. And I think with NVIDIA's earnings, that kind of really highlights that secular growth that's still intact.
Now, Keith, we still have a VIX that's above 20. Look, it's likely to come down further today if stocks rally in particular, but there are a lot of concerns on the horizon beyond what the Fed does, right? We're looking at potentially another shutdown after the end of January as well. Do you give that much consideration?
We do. I mean, but also, Vonnie, when I think about the markets in general, there's always this what I call carousel of concerns. Like once one concern recedes, another pops up to fill that void, and in some ways that helps. Helps markets climb the wall of worry. I think what's really most important, the North Star of this bull market has been profits. And yes, the government shutdown could affect things again, but I don't think that's going to have a dramatic impact on where the biggest profits are, which is still the technology side as a whole. So listen, there's a lot of risk. This is not a time to be max bullishness as far as markets, but I still think the bull market deserves the benefit of the doubt. And I would focus more on the profit trends than I would kind of the short-term noise around the government shutdown. And as I mentioned, we still expect a modest uptick as we move into next year because there's some offsets giving, like I said, those tax incentives, a little bit lower Fed rates and so forth.
Keith, I love it. A carousel of concerns. Keith Lerner there of Truist, thank you so much for joining us this morning. Now to other top stories trending on the terminal. TikTok parent company ByteDance's valuation soaring to $480 billion. A Chinese investment firm bought a stake at far above recent levels, a strong sign of interest in the company. According to sources, the tranche of stock had been priced at roughly $200 million, with a $360 billion valuation for ByteDance. A portfolio of private credit loans managed by BlackRock performed so poorly that the money manager waived some management fees, a rarity in the credit world. The portfolio value declined enough to breach an over-collateralization test. BlackRock declined to comment. President Trump has signed a bill ordering the release of files related to Jeffrey Epstein. The bill requires the Justice Department to release all information from its Epstein investigation within 30 days. Trump's signature, a sharp reversal of his previous efforts to block the files' release. Coming up, calming the AI jitters, NVIDIA's upbeat forecast has investors breathing a sigh of relief after fears of a bubble bursting. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
NVIDIA CEO Jensen Huang, they're speaking exclusively to Bloomberg's Ed Ludlow. Those shares extending gains in pre-market trading as NVIDIA's forecast soothes investors' concerns of an AI bubble. Joining us now is Tom McKenzie, host of Bloomberg Tech Europe. So Tom, there really wasn't a black mark on this earnings report, right? We had a revenue outlook that beat, we had a beat in the quarter, we had margins that beat estimates, in fact, really, but met the estimate for the entire year. And, you know, did you see anything that should cause doubt over NVIDIA's future?
Essentially, no. I mean, look, Bonnie, as you know, there are still significant questions when it comes to NVIDIA and the future, but certainly they have punted the question of demand further into 2026 on the back of these earnings. Just briefly recapping for you, look, third quarter, to your point, they came in with that beat, $57 billion of revenues. The estimates have been for $55 billion. The margin came in at 73%, 73% margin. In the fourth quarter, they expect that margin to increase to 75%. That's the margin forecast for the fourth quarter. And they expect sales to tick up in the fourth quarter to around $65 billion US. One executive, the CFO of the company, also projecting that in the quarters ahead, they're going to get above their previous forecast of $500 billion worth of sales. That's a forecast they made last month. Into the future, they say they expect to top that as well. The question really from Ed Ludlow in that exclusive conversation was around the demand picture for Blackwell and whether or not they can meet the demand. And Jensen Huang was saying, yes, we're sold out when it comes to the data centers, but we still have chips to sell into other customers and clients. The questions that I focused on that still remain unanswered for NVIDIA include the Chinese market, where they are forecasting zero sales, and to what extent investors will continue to be patient on that hyperscaler spend on these chips. The expectation from NVIDIA is that hyperscaler spend could reach $600 billion next year. Are investors going to remain patient before they get real and material examples of monetization, the customer use of these products at the end of this cycle?
For sure. Now, you mentioned China there, and you know, we know that China may not add so significantly to its bottom line, but it is still appreciably good news that the White House has asked Congress now to reject that bill curbing NVIDIA exports, because it removes a little bit of the geopolitical uncertainty, at least, right?
Absolutely. And look, Jensen Huang telling Ed Ludlow that he thinks the Chinese market is probably worth about $55 billion for these AI accelerators. He's been very clear that on which side of this debate he sits. You have the national security apparatus, of course, concerned that exposure and Chinese companies getting access to these chips is going to accelerate their progress and lead to risks, particularly when it comes to embedding some of these chips potentially into Chinese military hardware as well. On the other side of that debate, of course, are those, including President Trump's own AISR, saying you need to get that market share for US producers with this kit to ensure that they continue that leadership. The fact that this bill, under White House pressure, is looking less certain, and this bill would have forced the clients of NVIDIA and AMD to prioritize US customers over Chinese clients, the fact that that's been derailed is good news for Jensen Huang and NVIDIA, at least for now.
Yeah, absolutely. Tom, thank you so much. That is Bloomberg's Tom McKenzie there. And tomorrow we'll be speaking with the chairman of Foxconn, Young Liu. The Taiwanese tech giant is a major NVIDIA server partner and also, of course, well known for assembling Apple iPhones, MacBooks, and other hardware. Well, sticking with earnings, retail results continuing with Walmart reporting before the bell. Let's bring in Bloomberg's Maddie Parker for more. Maddie, what are you expecting to hear from Walmart and from, obviously, the conference call?
Yeah, so Walmart, of course, is going to be watched very closely by consumers, by other big retailers, but also by Wall Street. Obviously, the size and the footprint of the brand kind of means it's just basically a barometer for wider US economic health and the strength of the US consumer. We are expecting Walmart to post some quite strong sales growth in the third quarter, and it'd be really interesting to see how they're able to kind of attract consumers who we know are feeling the pinch, who we know are reaching for discounts, and they may well kind of get the edge on some of their other competitors. We've seen other big box retailers like Target, like Home Depot, actually have to cut some of their full-year outlooks. It'd be really interesting to see whether Walmart kind of have been able to pick up some of those consumer demand, or whether they'll kind of go down the same path as some of their competitors.
Yeah, I mean, the stock is up more than 11% year to date, but given the rally generally in the S&P 500, I guess you could say that that is maybe just lagging a little bit, although some of the other retailers, you know, Target down 36%, for example. What indication do we see about the strength of the consumer in the run-up to the holiday season?
Yeah, I mean, it's we've kind of been banging the same drum for a while about kind of consumer confidence being quite low at the moment. That's not just in the US, that is across the board. We know that consumers are being cautious. We know that they're being impacted by very stubbornly high inflation. There's been unemployment, and we know that consumers are kind of feeling the pinch on their finances. They may be reaching for some more discounts, but having said that, there are of course pockets of optimism within retail. We're kind of approaching what we call the golden quarter in retail. So we're talking Thanksgiving, there's Black Friday, there's Christmas. So these are really, really important times for retailers. This is kind of crunch time. You know, if consumers are ever going to spend their money, it's going to be now. It's been really, really interesting to see how Walmart do amongst those other retailers as well in the run-up to the festive period. Yeah. And yeah, it'll be really interesting to see how that develops.
Just more than an hour to go before those results. Maddie Parker, thank you so much. Well, coming up, we're going to get you set up for your trading day with Fed Speak as well, and of course that delayed jobs report. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. Here, I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, Walmart and Bath & Body Works earnings coming before the bell. Then, of course, the delayed September jobs report. It is out there, and it's coming to us at 8:30 a.m. Eastern. And lots more Fed speak throughout the day. We have Hammack, Barr, Cook, Goolsbee, and Myron all on deck. In terms of micro movers, NVIDIA obviously driving stocks higher across the board, including AI and cloud computing shares. Then we've Palo Alto Networks extending post-earnings declines, even though it beat and had an outlook boost. But it is acquiring Chronosphere. It's a second acquisition this year, this time for more than $3 billion. Regeneron higher as well after the FDA approved EYLEA. Let's take a look at the macro picture as we approach this exciting trading day. This is Bloomberg.
cidade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
The question now is, are we facing a bubble?
You cannot get away from the comparisons to the late 1990s.
The market's done a little bit of work here to take some of the froth out.
These companies have a ton of free cash flow and very low leverage.
I don't have a huge concern as to big tech running out of cash anytime soon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming to Thursday, NVIDIA gets it done.
Sales are off the charts for Blackwell. Business is very, very strong.
A solid beat helping to lift the cloud hanging over U.S. equities just as investor bets on more rate cuts are continuing to crumble, hours away from the last jobs report before the Fed's next meeting. That data just around the corner.
And very little else is going to follow it. And that, I think, is the big tell. We're going to get that non-farm payrolls coming up later this morning. At the same time, we may get September retail sales on November 25th. After that, crickets. Crickets, crickets. Probably nothing else major before the next Fed meeting. And this comes as we heard that pushback in the Fed meeting minutes. Right now, there is less than a 30% chance being priced into Fed funds futures. The Federal Reserve is going to cut next month down from more than 100% chance before that October Fed meeting.
The bias is to do nothing at the Federal Reserve, based on the communication we've heard from Fed speakers and the Fed minutes yesterday afternoon. If the bias is to do nothing and you have limited data to change that point of view, they're going to do nothing, unless we get a major downside surprise on the jobs report later on this morning at 8:30 Eastern Time.
That's why some people are saying that there is an asymmetric risk. You always talk about how you learn something from the data, something else from the market reaction. Some people are saying that there is a bigger downside potential for markets if this is an upside surprise. Try to twist your head around that, Stuart Kaiser. If this is an upside surprise on non-farm payrolls, because it will imply that the Fed will not have a reason to cut rates next month.
Yesterday, we had the Bureau of Labor Statistics come out talking about the fact that there's not going to be an October report. It's all going to bleed into November when we get some update on the economy besides today. The president at that moment, because I looked down at my Bloomberg, because a redhead cross, said, we have more jobs today than we've ever had in the history of the country. And I'm not going to speculate, and I don't want to be a conspiracy theorist, but doesn't he get the payrolls report the night before? Is there a chance he saw what we were going to get today at 8:30 before he took the stage yesterday?
I can only share the estimates for you. The median estimate this morning is 51K. The range is pretty wide. The high is 105. The low is -20. For this market this morning, it's all about NVIDIA. NVIDIA in the pre-market higher by around about 5%. A decent beat, strong guidance. NVIDIA has a story to tell. It's a good story to tell. Is it enough to rebuild confidence in this whole story?
Well, right now, yes, that seems to be at least the answer momentarily when you take a look at the read-through, not only from the likes of NVIDIA, but also CoreWeave and some of the other names that have gotten beaten up over the past couple of weeks. The $500 billion number really caught my attention. They were asked whether they really still see $500 billion of orders tied to their Blackwell and Rubin chips through the end of next year. And their CFO said it probably will exceed that. And that, I think, really got people's attention. Suddenly, this was going to be the biggest company or one of the biggest companies out there by revenue, not just in market cap.
What caught my attention, of course, is Jensen Huang talking to Ed Ludlow last night. The most important thing, our forecast on China is zero. We still want to engage with the Chinese government. We are still trying to engage with the U.S. government, and that made it very clear he's engaging with them. The president called him out yesterday and told him to stand up. You're doing such a fantastic job, Jensen, but it's not working at the moment. They are not selling those chips into China.
I think it's really important to draw a distinction between the company and the stock. The company was always going to be okay. This earnings story was always going to be rock solid. Why? Because their biggest customers are doing better than good and spending lots of money and told us they'll spend even more. This is about whether this is enough to restore confidence in the stock. This is enough to shift things back towards a better view of the AI story, because the AI story on a stock level has broken down in the last month or so.
Yeah, this is why Jensen Huang was saying, I'm just not seeing what people are talking about when they're concerned about us reaching the end of our limit. And I agree with you. It doesn't seem like this is a surprise that they are going gangbusters and that everybody wants to buy their chips. The bigger question is, what does that pipeline look like into the years to come, and can their customers afford to pay for it? And that, I think, is a key question. You add to that the fact that maybe the White House is pushing back against some of these curbs on NVIDIA to sell chips over to China. Well, it gives you a pop.
NVIDIA in the pre-market higher by 5%. A lot of stocks rising in sympathy. The stock market is higher by 1% on the S&P 500. Coming up this hour, we'll catch up with Brian Levitt of Invesco as stocks snap a 4-day slide, Angelo Zeno of CFRA as NVIDIA earnings reassure investors, and Andrew Honhorst of Citi on why December rate cut hinges on this morning payroll report. We begin this hour with stocks rallying after NVIDIA's blockbuster results.
We're growing some 60% a year. Just quarter-to-quarter growth of our company is $10 billion. We grew an entire size of a company just in one quarter. You're seeing an exponential growth in the amount of compute demand necessary for AI.
NVIDIA topping sales forecast by roughly $3 billion. Shares up 5% this morning. Joining us now is Brian Levitt, Chief Global Market Strategist over at Invesco. Brian, good morning, sir.
Good morning.
Is this enough to restore confidence?
I think it is. And, you know, we had this period of time where all people wanted to talk about were bubbles and overvaluation. The reality is a lot of that was hyperbole, and comparisons to 1990s were hyperbole. This is, in my opinion, enough to restore confidence. And, you know, we have to remember also some of this slide also coincided with policy uncertainty at the Federal Reserve, and volatility almost always emerges when there's policy uncertainty. So I think we'll start to restore some of that confidence.
Well, let's take a step back. What's the last few weeks actually been about? What's been driving things, and what are these numbers this morning? What did they change?
There's been a couple of things. I would say, one, the uncertainty around the Federal Reserve, where obviously if you're going to have changes in where you think the discount rate is going to be, that makes a pretty significant difference, particularly to non-profitable tech. So that coincided with the slide in non-profitable tech. And the market all of a sudden started to become concerned about the investment figures by some of these businesses that were really shifting their narrative, like a Meta or an Oracle. But you know, the reality is the fundamentals are still sound. I'm not the first person to say that a lot of this investment spending is being driven by well-capitalized, well-funded businesses. Capital markets are still open and available to those that are borrowing in this space. So I don't think this is a bubble. I don't think it's a 2026 bubble story. We can assess it as we move out into 27 and 28, but I think investors were premature in assessing that.
So we got the bubble word out of the way. Let's just talk about whether the leadership can still come from big tech, and whether we're looking at the same dynamic in 2026 as what we've seen in 2025, which is big tech leads and everything else bleeds. Essentially, the rest of the economy kind of just chugs along at this sluggish pace. Is that kind of what you expect to continue? And this is a great chance to go back into tech, because that's what's going to be the leadership next year?
I think you could get some broadening. I'm not suggesting that the global economy is going to move to a new, higher, sustained level of growth. And so if that's the case, then growth stocks are going to continue to perform well in that environment. Where the hope lies, and what we would like to see in 2026, is a pickup in leading indicators globally back towards more of a trend type of an environment. You'll get that through some policy easing in the United States, some policy support in Europe. So that could help to continue to unlock some of the value that exists in the market. When I talk about value in the market, China was a very deep value market. You'd seen small caps pop a little bit at some points this year on Fed easing. Emerging markets can do well if the Fed is easing. So there are opportunities elsewhere. But if you're looking out over the next year, 18 months, and we're not going to a new higher sustained level of growth, then growth stocks should continue to do well in that environment.
Does a Fed rate 25 basis point rate cut matter that much? I mean, the idea that $1 trillion was taken off crypto because the Fed's not going to cut by 25 basis points next month. I mean, you just have to wonder, is that really what's going on here, or is there something deeper that gives you a sense of kind of how things are shaping up and what the Fed's role in it really is next year?
Yeah, well, I mean, there's this expectation that the Fed's going to bring the rates down towards neutral fairly rapidly, or there was this expectation, steepen the yield curve, hopefully reaccelerate parts of the market that are more rate sensitive. Small caps get a bid in that environment, more, the larger banks get a bid in that environment. So when you back that out, valuations are going to adjust in different parts of the market. So I don't think 25 basis points is the end-all, be-all in December. I think there's some confusion around where the Fed is going and where ultimately the neutral rate is going to be. And we're still in a bit of a restrictive environment with regards to the funds rate in a time when payrolls are weakening. We'll see more today, but if you look at the ADP numbers, payrolls are clearly weakening. Inflation expectations are contained. And so it's sort of confusing what you're hearing out of the Federal Reserve.
Is it confusing to understand where the Fed is going because we don't know who the leadership is going to be next year?
There's part of that, although I would expect that if the thought is that more members from Trump's world are coming into the Fed, you would think the impetus would be for rates to be lower, and I would think inflation expectations would be moving out, and that is not the case. I think the surprise here a bit is they're more hawkish than would have been expected, and so inflation expectations are actually going a bit lower here. So my concern, I've put inflation aside as a concern. My concern is on the growth side. We will get...
Even with $2,000 checks, potentially?
Well, $2,000 checks could certainly help, but there's an offset to that, which is, the price increases from the tariffs are supposed to hit households, somewhere along the lines of $1,500 to $2,500. So I view that more as an offset. I think of the inflation story as a one-off shock that probably isn't even as big of a shock as some had feared, where I worry more, I'd rather have 3% inflation than 5% unemployment. So I would err on that
I think the Fed chair agrees with you. Jim Bianco of Bianco Research has got a great take on all of this. He thinks that the recent push from the president to put his own people on the Federal Reserve has made this Federal Reserve more independent, not less. And it's emboldened some of the people on the committee to express themselves even more. In fact, if Governor Myron's going out there doing his own speeches, doing blogs, and being very outspoken, it's actually pushing others to do exactly the same thing, which is maybe one factor, at least one factor behind some of the disagreement, the public disagreement we're seeing play out on the committee.
Yeah, which is difficult for the market to really understand how to deal with, right? Because where does that leave you in terms of what the guide is going forward? I agree with you, though, and some people would say this is welcome. At the same time, yesterday, the fact that President Trump said the one thing he's not happy about with Treasury Secretary Scott Bessent is that the rates aren't lower, and that if he doesn't get it in order soon, he's going to fire his beep, and that to me is really telling.
We're going to spend some time on that in just a moment. Brian Levitt of Invesco is going to stick with us. Anne-Marie was in the room when that statement was made. We'll get her thoughts on all of that in just a second as well. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Good morning, John. Shares of NVIDIA are rising 5% in the pre-market. The chip giant delivering an earnings beat and boosting its revenue forecast. CEO Jensen Huang saying demand remains robust for the company's AI accelerators and that sales of its Blackwell chips are, quote, off the charts. Meanwhile, the delayed September jobs report is due out at 8:30 a.m. this morning. The Bureau of Labor Statistics saying it will not publish an October employment report. They will incorporate those payrolls figures into the November jobs report set to be published on December 16th. That's more than a week later than originally scheduled and after the Fed's final meeting of the year. And as you all were just discussing, President Trump joked that he would fire Scott Bessent if the Treasury Secretary doesn't help secure lower interest rates. Speaking at a U.S. Saudi investment event, Trump saying the only thing Scott's blowing it on is The Fed adding rates are too high, Scott, and if you don't get it fixed fast, I'm going to fire you. That's your Bloomberg Brief. John?
Yahira, thank you. Up next on the program, taking aim at the Fed.
I'd love to fire his ass. He should be fired. Guy's grossly incompetent. You got to work on him, Scott. The rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Anne-Marie was in the room. We'll get her thoughts in just a moment. Plus, Bloomberg's Tyler Kendall live from Washington, D.C. From New York City this morning. Good morning. At the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the stock to watch this morning. Nvidia in the pre-market higher by almost 5%. A lot of stocks running alongside this move off the back of earnings overnight. Strong earnings, decent guide. Wedbush saying it matched buy-side hopes. HSBC hoping it restores confidence in the fuller trade. JP Morgan saying Nvidia is clearly gearing up for further significant upside. That move generating this move. Equity futures near session highs, up by more than 1% on the S&P. On the Nasdaq 100 higher by 1.5. That's the stock story. In the bond market, yields a little bit higher at the front end of the curve. Up a basis point. We break back through 360, 360, 63. Under surveillance this morning, taking game at the Fed.
I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. You got to work on him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
So here's the latest this morning. The president's frustration with the Federal Reserve unlikely to fade anytime soon. Rate cut bets crumbling as the BLS indicates there will only be one more jobs report before the Fed's next meeting. AMH was in the room. Anne-Marie, things went quiet with the Federal Reserve. Things have picked up this week.
Absolutely. The president is clearly very frustrated with what's going on at the Federal Reserve, and he said this in the Oval Office when I asked him. He said it yesterday to an audience, which people laughed, but then looked around like, is he seriously thinking about firing the Treasury Secretary, who he then went on to say, Scott Bessent is the one that keeps telling him, sir, please don't fire him, don't fire him. He has 3 months left. And then he said, you know, Howard Lutnick is more of that individual who says, yes, sir, get him, Trump's words, get him the hell out of there. So this seems to be a little bit more of insight we got from the president on the debate that's going on behind the scenes.
Can you just imagine that headline dropping across the Bloomberg terminal, how this market would respond?
Yeah.
If the Treasury Secretary left, never mind, the Fed chair.
10-year yields would spike And you would see markets sell off dramatically. It would not be exactly an easy response or digestion period.
Trump knows this because he also said Bessent has been a voice of reason. You're very lucky to have him. And I think at that moment he realized, oh, there's some finance people in the room. Maybe I need to make sure they understood I was joking.
That's why none of this is happening. None of this is happening. Bloomberg's Tyler Kendall's down in Washington, D.C. She joins us for more. Tyler, welcome to the program. We've got a new schedule from the BLS. Can you share it with us, what we will get, what we won't get?
Yeah, hey, John, good morning. Well, today's release is set to be the latest comprehensive look into the labor market ahead of the December meeting. As you guys are outlining, it doesn't appear that President Trump is going to let up on his criticism or pressure of Fed Chair Jerome Powell. Yesterday, the BLS confirmed that it will not release a standalone October employment report, marking the first time that this has happened, according to BLS archives that go back to 1994. Instead, the agency is going to release the October payroll numbers rolled in to the November employment report, but officials say that they're unable to retroactively go back and collect the household data, which means that we will never see some critical data like the unemployment rate for the month. Instead, this combined report is set to be released on December 16th, which is one, a delay, and two, of course, after that December meeting. It's going to be just one of the lasting legacies of this historic government shutdown that we saw come to an end, as we are still waiting to see if or when we get the consumer price index for October. But John, amid this lack of data, the White House is trying very hard to reassure American consumers that they have a grip on affordability. This includes, of course, that proposal for a $2,000 tariff rebate check. But we have new reporting out this week from Bloomberg News that Republicans on Capitol Hill are pushing back hard against this idea, saying that they would instead want that money to go towards reducing the deficit.
Tyler Kendall with the latest in Washington. Tyler, thank you. My guess is that is a leaf blower.
That was a leaf blower, yeah.
Right? That's
Every
the
day
buzz of the
there's
leaf
some
blower.
sort of gardening going on, whether it's mowing. I believe this morning is a leaf blower. You know, it's fall, going into winter. The leaves are falling around the White House.
Things
It's
get
beautiful,
messy,
though.
obviously.
I'm looking up the budget for lawn care at the White House.
Need to cut that back, right?
It's always something. I'm pretty impressed.
Brian Levitt of Invesco with us around the table. Brian, we won't talk about that. We've got a jobs report in 2 hours' time. How relevant is this report for you and the team?
I think it's very relevant. We've been watching, if you look at the ADP private payroll 6-month average, 52,000 jobs. So you've seen demand slow, but you're also seeing supply come down as well. So you haven't seen a big pickup in the unemployment rate, but nonetheless, it's pretty representative of what we would categorize as this mid-cycle slowdown. You've seen it in a lot of the world. If you look at leading indicators for most of the world, everybody's kind of clumped together around trend without any significant impetus. So it's important, and it's going to set the stage for where the Federal Reserve goes next. And as I've already indicated, I would like to see them lower rates.
You're not alone. We probably won't get it if this job number comes in around 50K, because the story just won't shift. Now, we should point out we don't know what's going to happen with the CPI report. We haven't had a clear indication about that. But just imagine the December 10th meeting. Got one more data point. Got to make a call on that meeting. You've also got to put out forecasts. How on earth do you put out forecasts with very limited data going into year end?
It's not easy, although, I mean, you have to, it's kind of like driving in the fog a little bit, although it's not as dense as I think some people think. You just got to parse through other data that you can focus on. And, you know, we've been watching credit card numbers. We've been watching private sector payrolls. We've been watching inflation break even. So you can get a general sense, a good feel for this economy, and I would still categorize it as one that's in a mid-cycle slowdown. Now, mid-cycle slowdown could become worse if inflation starts to pick up and the Federal Reserve has to stay put. I don't think that's the case, and I think that easier policy can help move us out of what's been this recent soft patch.
We have seen pockets of distress in certain areas of the credit markets, and not just the high-profile blowups, but in auto loan delinquencies that you've seen picking up. All of the subprime lending in general has seen some pretty high non-payment levels. I just wonder if the Fed doesn't cut rates, does that make you less likely to want to take risk in credit in particular, based on how loose things have been and what you're seeing on some of the delinquency fronts?
Yeah, I would rather be higher quality with regards to that if we're going to continue to persist at this same pace. The one thing I would note, a lot of concern earlier in the year about credit card delinquencies, which did move up from a very low level. They have flatlined recently, and a lot of that has been quite correlated to the move in inflation. So when a lot of this, across many of the income quintiles, you saw a pickup in nominal borrowing, but you did not see it in real. So a lot of it was inflation driven, and then as inflation had moderated, credit card delinquencies have leveled off. So yeah, there's no doubt that at the lowest quintile level, there is challenges that are starting to emerge, and that's all consistent with a slowdown in the economy. It's as that starts to move up income brackets, that's when you start to become more concerned about a recession.
When you say you want to move up quality, does that mean that credit investors are being pushed to lend to the biggest hyperscalers who are rated very highly rather than the rest of the economy that looks more risky without Fed rate cuts? In other words, are they being forced to fuel what people are worried about?
Forced to fuel, yeah. I mean, if you look at it if you look at an investment grade index in the credit space right now, you're looking at a spread of 80 to 100 basis points above the risk-free rate. I mean, it's a 5% yield, which really isn't all that bad. I mean, you take a look at where a lot of the forecasters would put a 10-year expected equity return, you're pretty close to 5-6%. So sitting in investment-grade corporate bonds is not the worst outcome here. But yes, I would like to see rates move lower, and I would like to see other parts of the economy, more rate-sensitive parts of the economy, benefit from it.
Brian, can we go back to Washington for just a moment? This week, I've seen the president the most frustrated he has been with the Fed.
Yeah.
Treasury Secretary Scott Bessent does have the credibility on Wall Street. What would happen in the markets if he were to fire him?
Yeah, that is the irony of all of this, right? We're sitting here trying to get interest rates down, and the administration is saying things that I think would spook the bond market, right? And so that's why I've been so focused on the inflation expectations, because the bond market seems very sanguine about all of this. But if that starts to shift, that's a very different outlook for rates. And with valuations at 23, 24 times forward earnings, a move in rates would result in a valuation correction. So yeah, I don't think I know that that's not the right direction for the administration.
You've seen a list of the candidates to replace Fed Chair Jay Powell. Is there anyone on that list that would disrupt market-based inflation expectations?
Perhaps. I would say the closer the person is to the administration, or the closer, the more it looks like somebody's coming in from the administration to make significant changes. One of the big reasons that the inflation expectations have been relatively contained is because the Trump appointees have generally sided with Jerome Powell to this point. So if there's a sense that that's going to change, that's a risk factor for the market.
If they were the director of the National Economic Council, for instance, would that be one of those candidates?
Those were your words.
Yeah, okay. Brian, thank you. Leave that there. Keep you out of trouble. Brian Levitt of Invesco. I say it for him. I think there are some concerns about maybe Kevin Hassett taking a wheel.
And that, frankly, is the base case right now in markets, that he would be the preeminent person. And he was in a conversation yesterday with Anna Wong of Bloomberg, and he actually did say he would worry about inflation, and it hasn't fully gotten under control yet. So maybe trying to seem like more of a reasonable candidate in the eyes of the market, given the fact that he's teed up.
The Treasury Secretary has the credibility of Wall Street. Kevin Hassett doesn't have that same credibility. And these are the words of people who were calling me last night, knowing I was in the room both times the president spoke about the Fed, to voice their concerns.
Equity markets doing better this morning, up by 1% on the S&P. Up next, we'll catch up with Angelo Zeno of CFRA on NVIDIA's rock-solid results. From New York City, you're watching Bloomberg TV.
have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Snapped a 4-day slide on the S&P 500 in Wednesday's session this morning. Early morning on Thursday, we had some weight to the rally, up by 1% on the S&P. On the Nasdaq, up by 1.4%. On the S&P 500, NVIDIA, 8% of the index, 100% of the enthusiasm so far this morning. In the bond market, 2s, 10s, 30s, waiting for the payrolls report 2 hours away. Yields are higher by 2 basis points at the front end of the curve, 361.26 on 2s, 10s around 415. The median estimate this morning, 51k, the high 105, the low -20. I tell you, -20. If we get that in 2 hours' time, that's going to change the conversation for December 10th.
Yeah, will it be good news, though, for markets? I know, I'm just making people get really frustrated, but this whole idea, what is this peak number that gives people confidence that, yes, the Fed is going to cut rates, but not, oh my God, holy cow, this is the world collapsing in an economy that's really on its back foot. What's that sweet spot? And I think that's the difficulty with these numbers. How do we even interpret them, given some of the noise that we've seen?
32k.
You think that's the sweet spot?
Anything around stall speed, anything that gets them worried that we're close to stall speed, is going to give people like Governor Wallace some extra fuel to try and convert some other people on the committee.
18. That's fine.
18?
13, 32?
I think like around that 20 mark
okay.
is enough to make it nervous.
Okay, you're going to Price is Right rules.
I was joking about 31, 32, but I think you get the picture anyway. As we count you down to the opening bell, about 3 hours away, 2 hours away from that jobs report. Let's get you some movers. Here's Danny with more. Hey, Danny.
Hey, John, you said it. It's the stock of the morning, and it's NVIDIA, the company, and Jensen Huang going a long way to say the industry isn't in a bubble. Of course, there's a difference between the industry being in a bubble versus prices, but shares are up 4.6% after that sales growth. That was the best in a year. This does enough to erase the past 7 days of price action, which we know for NVIDIA and a lot of these AI stocks has been challenging. Speaking of which, this on itself is helping to do a lot of work for the entirety of the AI-related industry. Some of its peers, AMD, for example, if we look at that, has been rallying this morning. Also, some of the cloud providers, Oracle, CoreWeave, that have also seen their spreads widen on their CDS, seen their stocks drop. Those also rebound. One of the biggest gainers this morning is CoreWeave, up 7.5%. Elsewhere in tech, we also got earnings from CoreWeave yesterday. In those earnings, they also announced a $3.3 billion acquisition of a cybersecurity company. Elsewhere, results mostly in line. Didn't really give any big update to their forecast. Analysts over at Vital Knowledge saying that it was a fine quarter, but the fact that it wasn't even better means that the equity is going to sell off and we'll have a knee-jerk reaction. That's what we got. Those shares down nearly 4% in the pre-market, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. On our radar this morning, the White House going to bat for NVIDIA.
Where are you, Jensen? Stand up. You have done such a good job. And you had a good 2 days, I understand, right? A good 2 days. If Jensen's happy, I'm happy.
I think it's fair to say Jensen's happy this morning. Sources telling us here at Bloomberg that the Trump administration is pushing for Congress to reject a bill that would give American companies first access to chips, limiting potential exports to China. Elsewhere, the Bureau of Labor Statistics scrapping the October payrolls report after failing to collect household data during the government shutdown. It's the first time the agency has foregone releasing monthly job figures. And finally, Walmart, set to report earnings in just under 30 minutes' time. Investors eagerly awaiting results from the retail giant for a a read on consumer spending into year-end. Analysts expecting steady sales growth in the third quarter. That stock is up so far this morning by 1.3%.
To me, this is going to be the tell, especially based on what we heard from Target as well as Home Depot and Lowe's. Do we see the same kind of pushback that we've heard in other retail earnings, or do we see a sense that there is a recovery in the underlying consumer? If they beat expectations, the key question will be why? Is it because of efficiencies and technological advancements, or is it because the consumer demand superseded their expectations? The why is more important than the actual numbers, and that's what I think we're going to find out.
We've had two misses already, notable misses so far this week from Target and from Home Depot in the last couple of days. Walmart about 30 minutes away. Let's stick with the earnings. NVIDIA results easing AI bubble fears after posting a 65% jump in profit.
We've done a good job planning for a very, very strong year, and we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Angelo Zeno of CFRA writing this: NVIDIA's data center revenue demonstrating sequential acceleration. That validates our thesis on sustained hyperscaler spending. Angelo joins us now for more. Angelo, are these numbers, is it sufficient to restore the faith in this story once again?
So, John, thanks for having me. And I'd say, for today, yes. I mean, I think some of the concerns that are out there in the market continues to linger. And we all know what that is. I mean, I think probably the biggest issue out there is on the, the concern about financing and, getting the necessary financing from a number of these customers, not necessarily the hyperscalers, which we all know over the last 3 years have been absolute monster spenders. But as we look here kind of over the next 3 to 5 years, and we get this broadening out trade within the AI ecosystem, the likes of, the Oracles, the CoreWeaves of the world, OpenAIs of the world, they're going to be bigger contributors in these forecasts that you have out there for NVIDIA, as well as the rest of the AI ecosystem. And the question is, clearly, is the financing going to be there as we kind of broaden out here?
Angelo, I'm so pleased you've gone there, because we've been drawing the distinction between the company and the way the company is perceived in the stock market as a stock, because they're two very different stories. And Angelo, when it came to the earnings of NVIDIA, yes, they're fantastic. Yes, the guide is solid. But in many ways, some of that was inevitable, because we know what's happening elsewhere. Their biggest customers are spending a lot of money and promising to spend even more. Angelo, what I'm trying to understand this morning is whether what they've unveiled overnight, yesterday afternoon, is sufficient to reshift the story around the way people are treating the stock. Because over the last several months, for a long, long time over the last several years, there was a view in this market that this story was built on the balance sheets of the hyperscalers. And this all made sense. It was strong. Now there's a worry that this is built on something else. Debt-fueled financing, maybe very skinny revenues developing over at OpenAI, and a loss of confidence. Angelo, and this is what I want to keep going back to, have they said anything in the last 24 hours that gets the market to reshift its thinking again about how it addresses this story in the stock market?
So not necessarily, but that being said, listen, I think when you kind of look out here over the next couple of years, I think the expectations out there, I think from most of the analyst community, is not one where, we're necessarily expecting north of $1 trillion in spend from OpenAI. At least that's not in the forecast, in the consensus estimates at this point in time. So I think that's a good thing. But when you kind of look at the broader investment community, they're kind of looking at, hey, listen, there are these promises that are being made or commitments being made, and there's no way they're going to meet these commitments. What I would tell you is that they don't necessarily need to see those full commitments being made in many respects. And there are going to be many different ways that NVIDIA is going to continue to see higher revenue and a broadening out of their ecosystem. And I think it's also important to note that these hyperscalers will probably get much bigger in nature here over the next 5 to 6 years. I mean, we're looking for Microsoft to see their revenue double here over the next 6 years. We're looking for Alphabet to see, their revenue go up, 70 to 100%. So that cloud business for these hyperscalers are going to continue to get much bigger. We've seen the great momentum out of Q3 earnings season from these hyperscalers. So we do think those companies will continue to pave the way. And then that broadening out trade is going to be the question mark. But again, I think as long as it's incremental in nature and we see some sovereign AI opportunities like we just saw announced yesterday, I think that's going to help the overall narrative and get the stock higher here.
Angelo, that's a key point there, the sovereign purchases, and we'll get to China in just 1 second and how feasible that reopening could potentially be. I just wonder if you were satisfied by the response to having to finance some of your customers to continue buying your chips. There's a lot of fear around circular financing and why NVIDIA feels the need to do that if there is so much external demand.
I think in some respects, NVIDIA feels like it's an obligation of theirs. And, you know, I wouldn't necessarily go as far as to say they're doing anything that isn't prudent in nature. I think this is one of those instances where it's extremely expensive to build a data center. You're looking at a gigawatt, data center at about $50 billion in nature. And NVIDIA is essentially taking the lion's share of the profits for the industry. So in many respects, what they are doing is reinvesting those profits into the ecosystem to help build the AI ecosystem. In some respects, I don't necessarily think that's a bad use of funding. I also think it helps kind of improve the stickiness across, where they are within the ecosystem. So overall, I'm not necessarily concerned about some of these circular financing issues. However, and I'd actually expect to see more of this take place here over the next couple of years. So it is something that I think investors need to get somewhat comfortable with. But again, I mean, if it gets to a level where it gets just out of control, I think that's where it becomes problematic.
How much upside is there to NVIDIA's shares if President Trump gets his way and the Congress is forced to drop some of the restrictions in terms of sales into places like China from NVIDIA?
So I'd say I'd say China itself, we're looking potentially at least $20 to $30 billion in annual, sales added to NVIDIA's revenue. We think that would be conservative in nature. And, again, that would probably add, let's call it about 8 to 10% to their revenue trajectory. And you'd see a likewise impact in terms of the stock price move. Let's call it a 10 to 15% initial boost, we think, from that approval. So, we'll see whether or not there's going to be upside if there's approval, and then, to what extent those companies will spend on NVIDIA's ecosystem. But, the good thing is it's at $0 at this point in time, and there's significant upside potential if they're able to get into China.
When you think about the upside potential, I know the Commerce Department yesterday came out with the green light to sell chips to the UAE and Saudi Arabia. Is it big enough to fill that gap that exists right now, that hole, when it comes to Beijing?
Probably not. I mean, and maybe over time it will be. And again, the good thing is it's $0 in revenue, or essentially zero, coming out of China. I would say this: China's got the second largest ecosystem of hyperscalers out there, right? You do want to sell into the Alibabas, Baidu's, Tencents of the world, and that would be an enormous positive if they can do that. I'd also say, when you kind of think about the developers that are out there, the developer community, it's something that Jensen has repeatedly said he wants to make sure he's got access to, and that they continue to build on NVIDIA's ecosystem. That's not something you're going to get in any other area of the world. So it's extremely important, we think, from that perspective, that NVIDIA gets back into China.
Given that, what you just said about how he talks to Chinese developers, how difficult is this line to walk for Jensen Huang when it comes between Washington and Beijing?
I think it's a difficult line. I think if there's anyone that can successfully do it, it's Jensen, and maybe you throw Tim Cook in there in some respects, and how he's handled kind of the China-U.S. relations. I think there aren't many CEOs that can do a good job with that. The great thing with Jensen is it seems like he's got the ears of both nations at this point in time, and that's a huge positive. He's got that power, and we think, in many respects, we'll see how all this plays out. But it's taken longer than we've thought, to be honest with you. We thought at this point in time we probably would have seen NVIDIA, back into China. But again, these geopolitical uncertainties, you never know how long they're going to drag out.
Angelo, always appreciate catching up with you, particularly after that result. Angelo Zeno there of CFRA. NVIDIA in the pre-market higher by more than 5%. Frank Lee of HSBC publishing a little bit early this morning. Top of the note, first bullet point, beating and raising again, even without China. That's where the potential upside is.
When you start talking about 64% sales growth, then you start talking about the potential to add 10 to 20% on top of that. This is the reason why people are ambitious about this stock, and definitely getting a boost from President Trump saying, if you're happy, I'm happy. Well, guess where he's going to be heading then?
Well, potentially China. This is still a debate within the administration. I don't know how many times I continuously hear from one side of those on the camp that we need to get China addicted to American tech. We need to get the world addicted to American tech. Basically, that's what Jensen Huang has been talking about for years. Then there are others that are China hawks that are saying we cannot give them our most advanced chips. Right now, that's not happening. But potentially, things could change because remember, they're still negotiating this trade deal, which is supposed to happen before Thanksgiving in terms of inking it and us getting some text.
Stock is up this morning. The broader market is too, up by 1.2% on the S&P 500. With an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Republican lawmakers are resisting President Trump's proposal to send $2,000 checks to working-class households next year. The White House says the checks would be funded by tariff revenue, but lawmakers prefer to use that money to reduce the deficit. Meanwhile, the U.S. is planning to buy and own as many as 10 new nuclear reactors. The Trump administration says rising electricity demand, including from AI data centers, is a national emergency. The reactors could be paid for using Japan's $550 billion funding pledge. The goal is to get the reactors under construction by 2030. And we are seeing shares of Warner Brothers Discovery rising 1% in the pre-market. Sources telling us here at Bloomberg that Netflix promised it would keep releasing the studio's films in theaters if it's successful in buying the company. Warner Brothers put itself up for sale last month following interest from Netflix as well as Paramount, Skydance, and Comcast. Bids are due today. That's a Bloomberg Brief. John?
Yahira, thank you. Up next, counting down to payrolls.
The key thing to note for the September report is there's a potential for residual seasonality to support this data rather than this necessarily signaling a significant improvement in the pace of job gains.
Andrew Honhorst of Citi joins us next. The estimate from Citigroup for later this morning, 105. How do you cut rates on December 10th with 105? That conversation up next.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalize on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Looking to add some weight to yesterday's rally, the S&P 500 higher by more than 1% on the S&P, on the Nasdaq up by 1.6, on the Russell, the small caps up by 0.55. Under surveillance this morning, counting down to payrolls.
The key thing to note for the September report is there's a potential for residual seasonality to support this data rather than this necessarily signaling a significant improvement in the pace of job gains. That September number reflects the fact that you've seen job gains that would have been spread across the summer. So it's essentially a bit of catch-up. I don't necessarily see it as a kind of good print.
So here's the latest this morning. Investors counting down to the delayed September jobs report. The median estimate in our survey forecasting 51K. Andrew Honhorst of Citi with the street high estimate of 105, writing further rate cuts will depend crucially on the upcoming jobs data, and we continue to expect 75 basis points of further cuts this cycle. Andrew joins us now for more. Andrew, good morning.
Good morning.
You had penciled in December. Have you erased that yet?
Well, we're waiting to see how the data come out, but it is a big change in terms of analyzing that December 10th FOMC meeting when you find out that the jobs data for October and November is coming out December 16th, when we thought it was going to come out a few days ahead. Now it's coming out a few days after. So I think it's actually going to be a really tricky scenario for the Fed because they know they're making that decision 6 days ahead of 2 months of jobs data. And I completely agree with what Abigail was saying. This report for September probably going to look a little bit stronger, just the way that the seasonality works out. Those October and November numbers, I think, will be weak. So, yeah, really tricky situation for the Fed now.
So you're at 105, but with a big asterisk. You don't think that's a strong 105?
Yeah, I think that this really is just the seasonality that we have in the data. And the reason that we're getting this is because it's a low hiring economy. And the month of September is typically a low hiring month. So when you hit that with the seasonal adjustment, it looks okay. October and November, you're going into the holiday period. That's when businesses are supposed to be hiring. That's when you're supposed to see that demand picking up. It probably didn't happen this way that it did in prior years. While we were shut down, we had a lot of headlines about layoffs, actually. So it looks like we're going to get some weaker data for October and November. Difficult for the Fed. I think what you're supposed to do is kind of try to chart a course through this. This is a Fed that's been very reactive to each data point, and if you're only having the September data point, today's report will matter quite a bit, even though it's stale.
How much do you really predicate the 75 basis points of rate cuts in this cycle on what the Fed does next month? The idea that if they are late, they could cut more. If they are early, they could front load that or potentially even go to a lower neutral rate once we have new leadership at the Federal Reserve.
Yeah, it's interesting. As we're pricing out some of that probability of December, you could think that maybe we should be pricing in actually more cuts further down the line because you'll be restrictive for a little bit longer. I think it doesn't make a huge difference at the end of the day whether they're cutting in December, whether they're cutting in January. And if we get 2 weak jobs reports or 2 months of weak jobs data, I should say, on December 16th, then they probably would cut in January. And it's not going to make a huge difference in terms of how much they'll eventually need to cut. But absolutely, the risks are to the downside on employment. And that can mean that you end up cutting much faster at some later date. So it was interesting to read the minutes yesterday, and you see most Fed officials still want to cut further, but this really strenuous debate around what to do in December. I would say if you think you're restrictive, if you think that the labor market is loosening, why wouldn't you be headed back to a neutral rate?
What's the threshold for the jobs number? And I don't like playing this game, but the market's playing this game. What threshold is there to ensure that the Fed does cut in December?
I think in today's number, what would be the surprise that maybe could bring more people into Waller's camp that, yes, December should be a rate cut, is to see the unemployment rate move up. If we moved up to 4.4%, you're kind of on the fence. If we moved up to 4.5%, I think we're getting a cut in December. So I think that unemployment rate is key here. The payrolls number, I mean, we have 105,000, which sounds like a decent number, but remember, we're coming from 3 months where we were at only 30,000 per month. So it's hard to really change the narrative in a big way around payrolls. That is just weak hiring. And the question is the weak demand matched by weak supply, or is it that demand has weakened even more than supply? And the unemployment rate will tell us that.
Andrew, to not look political, should the Fed just move the meeting?
Well, I mean, it would make a lot of sense for them to move the meeting. Honestly, you're going to have so much more data on the job market, which is the key variable that you care about. I don't think that they'll end up doing that, but again, it's quite difficult when you have these meetings that come right before major data releases.
So we have the September print today, and then what do Fed members look at between now and December?
Well, you have other things that you can look at, and some of those things we have been looking at. We've had the state-level data on claims for unemployment insurance, and that's giving us some comfort, and I think Fed officials some comfort that we haven't had a sharp deterioration while the government was shut down. It's not that we've had a big pickup in initial jobless claims, which would show that layoffs are picking up. On the other hand, continuing jobless claims, those have been trending higher, staying higher, which could indicate that the unemployment rate has moved higher. So be watching that. I think all of these alternative data statistics are getting more attention now. The ADP numbers, for instance, they're not that well correlated with the actual official payrolls numbers, but they've been weaker. So Fed officials, we were looking at all of that. You know, we're going to get jolts ahead of the December FOMC meeting, the amount of hiring, the amount of layoffs. That usually isn't a really market-moving number, but maybe this month it will be because that's the only data that we have.
You're expecting another 75 basis points of reductions. How are they going to be spread out over the next 12 months? Is it over the next 12 months? How do you see things playing out?
I think it actually probably comes faster than that because I think we'll see this weakness in the upcoming jobs data. And remember, that November jobs report was during the government shutdown. You had workers who were furloughed still during the November reference week. So when we get that unemployment rate on December 16th, because we're not going to get the October unemployment rate, we will get it for November. It will be on December 16th, and it should be higher by at least 0.2 percentage points just on those furloughed workers. So we're going to be seeing unemployment rates north of 4.5% before the end of the year. I think that's a pretty clear path to cuts.
Do I smell 50? Do I smell 50? Coming from you and the team?
It's something that we need to think about. It's something that they need to think about. I think there is a reluctance to do that after doing that last year, and their preferred way of moving would be 25 basis points at each meeting. But absolutely, if you don't cut in December and then you see weaker jobs data, 50 comes back on the table.
Andrew, thank you. Looking forward to the updated note, which I feel like is coming out very soon.
You.
Thank you, sir. Andrew Honhorst there of Citi. On the Federal Reserve and a jobs report. The jobs report later on this morning. The median estimate in our survey, something around 50K. Andrew, well north of that, north of 100. But he thinks that's a weak 105 that he's looking for later.
Because of the pull forward from some of the weaker months before, which is why revisions is going to be interesting. Move over, Nirvana. It smells like 50 basis points. Sorry. I apologize in advance, but this is, where we're at right now.
Does it not smell like 50 to you?
I think that it could if they don't cut rates and if you do get a really bad print, especially
Andrew's data on the 16th.
Yeah, I mean, that to me, I think if you get a 4.5% unemployment rate by December, that could really move the needle.
And that the president will certainly welcome. But can you imagine, given all his bashing the last 48 hours, that meeting in December has become very political.
You get bad jobs data on December 16th, you'll get an Oval Office address that evening. Cut the interest rates now.
Yeah.
Emergency meeting.
Yeah, but how do you parse that with a strong labor market?
You'd have a pretty strong argument to do it if you get those weak numbers anyway on the 16th. Coming up on the programme, Seema Shah of Principal Asset Management, the former World Bank President David Malpass, David Seif of Nomura, and David Bellinger of Mizuho from New York City, the second hour of Bloomberg Surveillance. Up next.
Used to be, one would say, what's that got to do with the price of tea in China? When they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We're coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
The trajectory for growth and the trajectory for inflation appear to be improving.
You'd rather see a stronger economy and a better labor market.
The big problem is on the inflation side.
There's still that continued uncertainty.
We are calling for a more notable downshift in economic growth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. A double dose of good news from two stocks. Futures up by 1% on the S&P, on the Nasdaq up by 1.5. Nvidia, after the bell yesterday, with decent numbers and a strong guide, that stock is up by 5%. And just moments ago, Walmart out with a beat and a raise. That stock this morning just about negative by 0.8%.
Yeah, this is an interesting story. So they see their full-year adjusted earnings per share of $2.58 to $2.63. That is in the high range above their previous full-year adjusted earnings per share estimate. At the same time, they are transferring their stock to the stock exchange, to the NASDAQ, from the NYSE, which I think is really interesting. How much does this really speak to where they are getting gains? This idea of winning over price-sensitive shoppers with digital spending and their fact that they can negotiate with some of their suppliers. They talk about people looking to save money. This isn't exactly the read-through people are looking for some sort of sense of confidence in the economy.
Sounds like trade down, and that's been a story for this stock coming out of the pandemic over the last several years or so, and this is the inevitable problem covering this story from macro perspective. If Walmart does well, things must be really bad. And if Walmart does poorly, then things must be absolutely terrible. And Walmart's doing well this morning, so things must be really bad.
Well, Walmart has changed its profile. It's catering increasingly to higher-end shoppers, so they can play all sides of this story. They offer a lot of, like, for example, really expensive sneakers and things like that on their different platforms. There is a question here about whether they are gaining share, and they are doing so because of their size, because of the revenue coming from digital, because of advertising from digital, because of their data collection on digital. The bigger you are, the more of advantage you have, and that, I think, is a theme that we've seen throughout this economy.
Shopping around in the pre-market at the moment, the name is down by about 1%. But the earnings are pretty decent and the guide is strong. Put it together with Nvidia, there's a better story to tell for the equity markets so far this morning. Story might change. 8:30 Eastern time, 88 minutes from now, the jobs report. The median estimate in our survey, something around 50K. The high is right up here around 105. The low is right down here at -20. Somewhere in between, there's going to be a major debate about what to do on December 10th at the Federal Reserve. And we already know what the president would like them to do, and that's cut interest rates.
That's cut interest rates. And he went as far as he has about job burning the Fed yesterday, saying that if his Treasury Secretary Scott Bessent doesn't fix it, he's going to fire him. Obviously, the president was talking tongue-in-cheek. He was trying to be a little bit funny, but obviously he is growing very frustrated about the rate cut cycle right now and the fact that people are talking about that they might be on hold in December. But Andrew Hollenhorst did a great job mapping out how difficult this is for the Fed. They meet, and then 6 days later, they get 2 months of jobs data. And this is a data-dependent Fed. Shouldn't they be getting the data first, then deciding on what to do with interest rates?
Then they've got to put out an outlook. This is the problem. They've also got to put out the SCP and all the forecasts for 2026 and beyond and update them. Torsten Slock of Apollo just moments ago published in the title, "The economy is likely to re-accelerate in 2026. That's what the hawks on the Fed are arguing for. Things are going to pick up. Ignore the bad data. Torsten saying, looking ahead, growth is likely to re-accelerate next year, driven by lower trade war uncertainty, a weaker dollar, and the positive effects of, guess what, the one big, beautiful bill."
This is what a lot of people say is underestimated right now, just how much people are going to be getting rebates at the beginning of next year, put aside even those $2,000 potential checks. And that will spur consumer spending. As for now, though, that is the future. And when people look at the now, the commentary, particularly with the lower cohort of income earners, really isn't very positive in terms of the hesitance to really spend.
But the White House is thinking about the timeline. They want to get the interest rates reduced as quickly as possible, as they only really have a year out into the midterm elections. So you're going to start to see some of that fiscal impulse coming from Washington from the one big beautiful bill, maybe the $2,000 dividend check, which has its own issues with inflation. But they want to get ahead of the rate cutting cycle because it's going to take months for the market and the economy to digest lower interest rates.
Bond yields this morning higher by 2 basis points at the front end of the curve. Twos at 361. A busy morning coming up. We'll catch up with Seema Shah of Principal Asset Management as equities bounce. We'll speak to the former World Bank President, David Malpass, as President Trump pushes harder for a Fed rate cut, and David Seif of Nomura, with long-delayed payrolls data landing later on this morning. We begin this hour with stocks pushing higher following strong results from NVIDIA. Seema Shah of Principal Asset Management writing, the winners in today's market will likely be those who adapt quickest to shifting signals without overreacting to noise. Seema joins us now for more. Seema, good morning. Did we get some signal from NVIDIA?
Good morning. Well, I think we got some reassurance, we got some relief. I think some of the narrative around the AI concerns around a bubble are not going to be entirely solved by the results yesterday, but it certainly feeds a beast. But I would expect that the market is, is still going to keep wanting some kind of proof as we go through to the next earnings season. But certainly for now, I think the market can maybe shift some of its attention to what is the backdrop in the macro picture, and certainly what is the Fed going to be doing next.
Seema, we've spent a lot of time on this over the last several weeks. What is behind the shift in the way the market is treating this story, and what is insufficient about what we heard from NVIDIA to change it?
Yeah, I mean, I think it's a really important question. I don't think it's very easy to answer, though. Certainly from our perspective, it might simply be that just with this vacuum of data and searching for a narrative, we have this real understanding that so much of the macro picture, if you're thinking from a long-term perspective, is really based on the AI CapEx trade and how these companies are going to be performing. So I think maybe that's taken at home, but certainly some of these worries have been there for a while. They've been accelerated by the shift towards debt financing, more and more news of circularity. So the risks are building, but I think that there's a vacuum of news at the moment, or at least from an economic data perspective. And maybe now, as we get back into the normal way of things, hopefully some of the relief starts to, at least can be sustained.
Seema, John was talking about how a lot of people are betting on tech as they wait for that reacceleration that Torsten Slock of Apollo expects to see in the beginning of 2026. Do you think it's too early to bet on the U.S. economy really gaining steam in Q1, or do you think that this is the time to get in on that kind of trade?
So we are quite sanguine about next year. We're expecting growth to be around trend. We do think that the OBBA bill is going to be quite important in Q1 for some consumers, and I think that's key. There is a bit of a disparity between who's going to be particularly supported and who isn't, and it does really fall on the higher income households who have less of a multiplier onto consumer spending. So I think that does mute the general impact, but certainly it's a fairly positive story, and I think we feel quite comfortable with that idea. From a risk perspective, this to us suggests that you should stay risk on, focusing on technology still, but also thinking about which other parts of the market to be dipping into.
How much do you really focus on big companies? And I'm looking through the Walmart earnings and the fact that they really are gaining share. They are capitalizing on their digital footprint. They're capitalizing on just how quickly they can make deliveries. And what we heard from the CFO was that they have seen slight moderation with lower income consumers, but all around pretty steady sales for higher income and middle income consumers, households. I'm just wondering, is this an endorsement of size mattering, and that basically any kind of trade down kind of move has to come trade down maybe in creditworthiness, but not necessarily in size?
So it is interesting. And, we have seen over the last couple of quarters, and actually, I mean, generally in theory, that when there are challenges that need to be navigated, large businesses have an easier way of navigating, and they have the big balance sheets of profit margins to try and navigate certainly some of the more structural dynamics. We're still leading into that, but actually when we're doing our surveys of small businesses, we're also not detecting too many tensions there. They are feeling that the economy is doing okay. Of course, they're feeling some strains, but they're not really struggling to navigate. So again, this does add to that general picture of being fairly sanguine, focusing on large companies for some of the safety in there. But it doesn't mean that the small businesses are falling apart by any means.
Well, what Lisa just highlighted from the Walmart earnings is basically the K-shaped economy, that those on the lower end are still struggling. How does the Federal Reserve target them?
Well, so they are struggling, but we don't exaggerate that picture. They're feeling strains. It's not enough to really topple the economy over. It's something that that I think policymakers want to be trying to deal with. I don't know if it necessarily falls within the Fed's wheelhouse. I mean, it's a fairly blunt tool in terms of interest rates and what that can do. This, to me, makes almost more sense why the Trump administration is starting to think about what they can do potentially for lower-income households. But we don't think, as I said, that this really changes the narrative too much. We just think that over time, these strains, this K-shaped economy, is going to continue to be exacerbated until policymakers, mainly from the government side, really deal with those issues.
Seema, it is outlook season. Over the next week, the next 2 weeks, the next 3 weeks, we'll get tons of outlooks drop from tons of banks looking ahead to next year. And typically, it's pretty easy to establish a bias, a consensus view. Where do you think that consensus view is right now into next year?
So, look, we're in the process of putting together our outlook as well. It's been a particularly hard task this time because of the lack of data and this feeling of we're not entirely sure what we're navigating. Overall, though, we are expecting there to be a benign outlook for 2026, consideration of some of the risks, but most of them not really falling on the macro side, but still trying to figure out what exactly is going to happen with AI. How are these companies going to continue to perform, and can they really continue to deliver to the point that investors can continue to stay comfortable with their exposures to big tech?
Seema, it's good to see you. As always, thank you. Seema Shahdev, Principal Asset Management, putting together the year ahead outlook. Last year was pretty easy. Massive American outperformance. That's what everyone was looking for going into 2025. What happened? First half European, massive outperformance. We squeezed that consensus view pretty hard. I just wonder what it is into next year. It feels like a little bit of a muddle at the moment.
Well, yeah, because the market's been muddling and the economy's been muddling, and so people feel a little bit muddled, and we're just getting data that also will be muddled. I do think that this whole idea of companies that are AI-related companies, that idea is going to shift heading into 2026, and that seems to be what people are talking about. Which are the companies best using these tools to drive efficiency? And do we get this sort of ongoing gap between the idea that companies are doing very well and a lack of jobs that they're creating? And to me, that really is going to be one of the biggest question marks heading into next year.
Also, question marks around policy. We still don't know what the Supreme Court is doing with IEPA. We don't know if Congress is going to be willing to do these $2,000 checks. We know we're going to have the one big, beautiful bill. And then on top of all of that, who is going to lead the Federal Reserve? We saw a lot of policy out of Washington from the White House and Congress, 2025. 2026 is going to be about what this new Fed looks like.
I've said this a few times. Earnings right up here, payrolls growth right down here, and everything in between is where the game's going to be played. A lot of tension brewing down in Washington on that front. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. Walmart shares are falling 2.3% in the pre-market despite topping earnings expectations and raising its full-year profit outlook. The company saw strong online sales in the third quarter, all this alleviating some concerns about a consumer pullback. Walmart also announced it's transferring stock exchange listings, moving from the NYSE to the NASDAQ, but keeping the WMT ticker. Meanwhile, Japanese Prime Minister Sanae Takaichi preparing to unveil $112 billion in fresh stimulus. The economic package will be funded by an extra budget about 27% bigger than what was pledged in her predecessor's spending plan a year ago. And New York City Mayor-elect Zohran Mamdani will visit President Donald Trump at the White House tomorrow. Mamdani won the election on a progressive platform that includes freezing rents, universal child care, and higher taxes on corporations and the wealthy. President Trump threatened to pull federal funds for New York following Mamdani's election. That's your Bloomberg Brief. John?
Yahara, thank you. Looking forward to that one, that's for sure. Up next on the program, taking game at Fed Chair Jay Powell.
I'd love to fire his ass. He should be fired. Guy's grossly incompetent. You got to work on him, Scott. The rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Up next, the former World Bank President David Malpass, live from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Stocks are positive, up by 1% on the S&P. Thank you, Jensen Wang. Over at NVIDIA, the Nasdaq up by 1.4%. A better tone so far this morning. We'll see if it sticks. Going into payrolls, 1 hour and 14 minutes away. Under surveillance this morning, taking game of Fed Chair Jay Powell.
I'd love to fire his ass. He should be fired. Guy's grossly incompetent, and he should be sued for spending $4 billion to build a little building. You got to work on him, Scott. The only thing Scott's blowing it on is the Fed. Because the Fed, the rates are too high, Scott. And if you don't get it fixed fast, I'm going to fire your ass, okay?
Here's the latest this morning. President Trump expressing frustration with the Federal Reserve for not cutting interest rates, joking he would fire Treasury Secretary Scott Bessent if he didn't help bring down rates. Bloomberg's Tyler Kendall joins us now for more. Tyler, the president's words, it's the one thing, the only thing that Scott's blumming it on, the Federal Reserve. Where's this additional pressure coming from, and does it put an additional spotlight on the race to replace Fed Chair Jay Powell?
Yeah, hey, John, good morning. Well, it definitely does highlight the pressure from the administration to get out a pick for this top spot, as President Trump had told Anna Marie earlier this week that he is looking at both surprising but also standard candidates to fill the Fed chair's role. Of course, though, President Trump went on there to say that it's really the Treasury Secretary Scott Bessent who has been urging against firing Fed Chair Jerome Powell before his term is up in in May of 2026, seeming to clarify that he, of course, was only teasing there. But you're exactly right. There is this heightened pressure, perhaps because the FOMC is only going to get likely its last comprehensive look into the labor market today with the September employment report ahead of the December meeting, as the BLS confirmed yesterday that it will not release an independent standalone October employment report, instead of wrapping the October payrolls into the November employment report, but with no sight of any household data survey being conducted. If you look at a calendar, that's set to be released on December 16th, of course, just 6 days after the December meeting, so we're not going to have that visibility there. The other part of this, John, of course, is that the White House has felt under pressure when it comes to affordability, and we know that not all of their plans are landing well within the Republican Party. We have new reporting out from Bloomberg News that some Senate Republicans are pushing back on the administration's plans to release tariff rebate checks. Of course, this has been one of those proposals floated to get more money into consumers' pockets amid those slew of losses that Republicans saw earlier this month when it came to the elections across the country. But, John, at this point, those Republicans are saying that they would rather have that money be put towards paying down the deficit instead of going to those checks.
Tyler, thank you. Appreciate the update. Tyler Kendall with the latest from outside of the White House. The former World Bank President David Malpass weighing in the Wall Street Journal, writing, by lowering interest rates late and signaling a pause, the Fed is causing higher mortgage rates and unaffordable costs for small businesses that borrow at floating interest rates. David joins us now for more. David, good morning.
Good morning, John.
Good to see you, sir. Let's talk about it. What kind of damage would a Fed pause do?
Fed pause means that you stay where you are. I think we're at the bottom of the 10-year yield cycle. It bottomed in October, and we'll see it stuck here unless the Fed can change models. Powell has kept articulating this trade-off between growth and inflation. So in that mix, it's hard to get the whole yield curve down. I think it's quite possible by changing the model, but that's going to take almost a majority of the, at least of the governors and maybe even of the whole Federal Open Market Committee. That's the 19 people that really have opinions on the Fed funds rate.
Does the model include using the balance sheet more to lower longer-term yields?
Hi, Lisa. I think the balance sheet itself, the size, has more to do with the type of lending that's going on in the economy. What QE did was cause big companies and the government to be able to borrow huge amounts of money. So it fed right into the affordability crisis that we're facing right now. So I would like to see the Fed realize that having a big balance sheet means that you're borrowing from the banks, and the banking system is what we need to get started in order to get to lower inflation and to affordability. So it's a different model. I think QE really didn't work except in that moment of crisis in 2009.
At the same time, there are a lot of people in markets who agree with you that rates need to be lower in order to help a cohort of the economy that is more highly levered to the short end of the yield curve and some of these longer-term yields that the Fed might have some influence over. I just wonder what you think of the trade-off with financial stability, the idea that, yes, it's a blunt instrument, you're affecting one cohort of people, but you also might be propping up Bitcoin values as well as, CoreWeave.
The Fed exaggerates that and talks about the liquidity problem and says we can't put too much liquidity into the economy. I think we're way beyond that. That's old think. That's 20th century kind of thinking in terms of the models. So the Fed's really got to look at it that their balance sheet is part of the problem, not part of the solution for each market. You know, we've lost the interbank market. The repo market is now under strain in part because the Fed dominates it, and they're not planning ahead for the intra-month liquidity needs that are really needed. So what I think is necessary is reforms across the board for the Fed to do a better job. They haven't been getting the inflation rate. They keep thinking that high rates is going to solve inflation, which it doesn't do. So you've got to break out of that model, move to a model of what I call a price rule model, and that would give you lower rates across the curve, and you'd have both the mortgage rates coming down, but also small business lending restarting in the country. We need that for the supply chain. Small business lending is the core of growth.
David, you start your opinion piece, and you mentioned it this morning about the affordability crisis. This is going to be huge ahead of the midterm elections. But what the president is doing consistently, criticizing the Fed, talking about $2,000 dividend checks going out to Americans, doesn't that make the Fed's job to actually cut interest rates so much harder?
We'll have to see how change occurs. If you think about it, people were very critical of the trade policy change and of DOGE, but that broke the ice and caused people to rethink what was wrong in the old models. So that may be what the president is able to achieve. If you say that the goal here is to get the Fed from its old models to ones that actually work for the modern economy, for a crypto asset kind of economy where the Fed is not really getting to a solution, then maybe you have to really speak out in order to get the change. Secretary Bessent did that in his October or September, in his September pieces in the Wall Street Journal and International Economy, and that was very important for him to say why QE doesn't work, why the Fed is contributing to the inequality and the inaffordability crisis.
The tweaks you're talking about at the Federal Reserve, who is best to implement them when Jay Powell steps down in May?
The president is looking at the candidates. I think it needs to be someone who articulates the reforms and really has depth within the model. You know, one part of the model problem right now is the CPI. How can you use CPI or even the core PCE deflator, which comes out of the Commerce Department, how can you use those measures when the prices are changeable by the tariffs? So if you're using tariffs and it slows down price increases in some areas, how can that be the right targeting mechanism for the Fed? And I think that's what's getting picked up in the gold price. They're thinking the Fed is going to use the same model and there'll be a big fight over what to do with the interest rates, so people hide in gold. But the better way to go is to have a growth solution where capital can flow to small businesses, and that's achievable, but it means a lot of change in the Fed, in economics, and in, I think it's going to have to be in the FOMC itself, the makeup of the FOMC.
We've got 30 seconds left. I want to squeeze this in. Can we get that graphic up again? Which names do you like? The Kevins, Hassett, Walsh, Rick Reeder, Governor Waller on the committee right now.
So they can all do it if they articulate the amount of change, and then they have.
They can all do it if they agree with you.
They have a team.
You're allowed to have an opinion on a name.
People need to say that they want a price rule rather than inflation targeting, that they want a smaller Fed balance sheet because that will enable small business lending. The bank capital issue is a really big one. The Fed's been saying to be safe. To Lisa's point, how do you get safety? That not the way the Fed is doing it. They say safety means them in the middle of every market. Well, that's not a solution.
David Malpass, it's good to see you, sir. Thanks. Kind of describing yourself a little bit as we talk about the next Fed chair, but I'll leave that there. David Malpass, the former World Bank president from New York City this morning. Good morning. Up next, David Seif of Nomura.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Programming note, don't miss this. Tomorrow morning, 8:30 Eastern Time, the man leading a big push to cut interest rates at the Federal Reserve, Governor Stephen Myron, live on Bloomberg Surveillance tomorrow morning at 8:30 Eastern Time. Has his job got a lot harder with the limited data we'll get between now and the Fed's next meeting on December 10th? The next jobs report is the last jobs report before that meeting. The next jobs report, 60 minutes away. Into that, equity futures positive by 1% on the S&P 500, a lift across this equity market on the Nasdaq 100 higher by 1.5. With some single names this morning, some morning movers. It's Danny Berger. Hey, Danny.
Hey, John, let's go through the big earnings we got this morning and late yesterday. Walmart shares now down about 0.5%. That's despite the fact that they beat on their earnings and they raised their guidance for sales for the second consecutive time this year. By the way, that beat $2 billion higher than what was expected on revenue. Even so, shares do fall. Not that much this morning, but we have seen Walmart outperform so far this year. And as part of that announcement, they will be changing their listing from the New York Stock Exchange to the NASDAQ, reflecting what they say is a technology-focused company. Okay, but the real technology-focused company and the focus of everybody is NVIDIA. Those shares continue to do much better in the pre-market trade, up 4.9%, with a beat and confidence from Jensen Huang and the rest of them. I mean, we maybe knew this was coming, considering the hyperscalers are spending so much and spend so much in the third quarter, but those shares, again, doing better this morning alongside all of the other AI-related names and most of the tech companies this morning. Elsewhere, we also got Bath & Body Works earnings. Those did look poor. Those shares down 13.5%. The CEO there commenting, saying that it is a weak consumer who's not spending. It's the cost of tariffs. But oddly, this is a new CEO. They came in May, and his big takeaway, the reason that they aren't doing well, he blamed it on the old CEO, saying that their old strategy didn't work out. They expanded more and into non-core areas. They're going to bring things back, turn around the company. But it's the old guy's fault, not mine, John.
Always blame the old boss. Danny, thank you. Danny with the latest. If you're missing retail right now, you get absolutely obliterated, and we're seeing it with that stock so far this morning. On our radar this morning, Walmart posting an earnings beat and raising its full-year profit outlook, but seeing a dip in third-quarter comparable sales for Sam's Club. The retailer also planning to move its stock exchange listing to the NASDAQ. The stock is down 0.25% this morning, and that move is notable.
It is. It basically conveys that Walmart wants to be seen as much of a tech company as it is a retailer. And this comes as they're seeing real gains from their online presence, and they've been investing in artificial intelligence throughout their entire stack. And it raises this question of how much of an advantage do the first movers have if they adopt some artificial intelligence now, can use it for efficiencies, can compete on price, gain market share, and then what will it look like down the line for the retailers that are left behind?
Last few years has been about the enablers. Is it going to shift to the adopters in the year ahead? Walmart's down by about 0.25% in early trading. Let's talk about the politics and the affordability issue dominating some of the retailers right now. Republican lawmakers resisting the president's proposal to send $2,000 checks to working-class households next year. The White House saying the payments would come from tariff revenue, but lawmakers prefer to use the revenue to reduce the deficit.
So I've gotten a lot of memes sent to me, which is the power strip. and the cord on the power strip plugging into itself. So basically tax everyone with higher tariff levels and then give some of those tariff proceeds back to Americans. So what was the point of it? You talk about circular financing and AI. This is somewhat circular financing when it comes to tariff revenue raising. And Republicans are concerned because they spent an entire year going after the Biden administration for giving out checks, and they don't want to see inflation get goosed once again.
Traditionally, the conservative argument would be to remove some of that friction, just cut the taxes to begin with.
Yeah, well, look, that traditional, you lost me at traditional. I think that that's sort of where I'm at right now. And you can understand this sort of friction right now between what's going on with the rank and file Republicans and fissures that are starting to form with President Trump after the midterm elections. And this idea of how much is that going to continue and how much pushback will there actually be some of the initiatives that people are worried that could cause inflation and were criticized under Biden.
We might see some tension tomorrow. This is what I call box office tomorrow in Washington, D.C. President Trump hosting New York City Mayor-elect Zohran Mamdani at the White House. The two sides attacking each other ahead of this month's election. President Trump threatening to pull federal funding from the city if Mamdani won.
And that federal funding is huge. We're talking about nearly $10 billion in 2025, 8% of the city's budget. But look, you have here on one side Jamaica Estates, a guy from Astoria. They're both Queens guys. They both love New York, but they do see things differently. And I'm not just talking about Mets and Yankees. They see things differently when it comes to how New York City should be run. And I imagine tomorrow in the Oval Office, even though incoming Mayor Mamdani is the one that requested this meeting.
Good point.
He knows what happens when you go into the Oval Office. He knows what happens into the Lion's Den. It is going to be, as you say, fireworks, box office.
Look out for the full coverage right here on Bloomberg TV. Let's turn to the labour market. The data's not far away. Investors eyeing the delayed payrolls report due out in just under an hour. David Seif of Nomura writing, unless the September report is terrible, we think the Fed will want more current data before considering cutting again. David joins us now for more. David, good morning.
Good morning.
Good morning. It's good to see you. I mentioned the Governor Myron interview tomorrow morning at 8:30 Eastern Time. How does that guy convince the rest of the committee to cut interest rates with such a limited pool of data between now and the next meeting?
The limited pool of data is going to make it very tough. And I think, we had a number of things that could be seen as hawkish yesterday. We had good NVIDIA earnings, of course. We had a pretty hawkish set of minutes come out. But I think most hawkish of all of it was the Bureau of Labor Statistics announcing that the report we're going to get in less than an hour is the last one we're going to get prior to that December Fed meeting. It really allows the camp of hawks that were on the FOMC, and there are at least 5 or so of them, to align themselves, at least for the time being, with the group led by Chair Powell himself, who says, we're driving in the fog and should slow down. And it makes it tough, at least for this December meeting, to get a cut through. Now, that alignment may fray as soon as the data come out, 6 days after the Fed meeting, but for now, it seems like it's likely to be in place.
Governor Myron and Governor Waller would probably make the argument, why wait? We shouldn't be reactive. We should be looking forward here. And as a problem, we're close to stall speed on jobs growth. Neil Dutter of Renmac put this out in the last few days. The Fed is comfortable being reactive, waiting for things to be obvious before deciding to do something about it. Not great. Is that your view on their current stance? Is it so-called not great?
I think when we look at how much data are out there, there's so little out there right now that you might not want to hold the Fed to the same standard as in normal times. Usually it is one thing to say, okay, you have all the current data, the data that should have come out, and still you're being reactive. And it's another thing to say that, hey, we haven't gotten labor market data since August. We'll have it for September, but it's going to be 70 days old by the time we get it today, and then another few weeks by the time of the Fed meeting. That's a harder sell in this specific moment, and it's why this, what I'll call temporary coalition of the hawks and the driving in the fog people, it may well really last through December. But it's unlikely that it will necessarily stay that way unless the data continue to come out in a hawkish way.
Don't we kind of know what's going on a little bit more than we did 6 months ago? That it's a muddle through or a declining picture for people in the lower income cohorts. They're really struggling. You see that with cost of living concerns. You see that also just with incomes that are not keeping up with inflation. You see, though, pretty robust spending by middle and upper income consumers. You see that consistently. That has continued. At the same time, that there is this expectation for prices to go up, We heard that from Walmart coming up in the upcoming months, but also some potential offsets with an increase in income from the tax refunds. Why isn't that picture pretty clear for people?
Well, I think it's increasingly clear that we have a K-shaped type economy continuing on, to use the term that's been used a lot. But you know, even more than that, just it's sort of a feast or famine economy. So in addition to the wealthy doing well and lower income people struggling, you also have a situation where people who have jobs actually are keeping their jobs, but people who are looking for jobs, especially young people, are really struggling. I think when we turn this back to the Fed, though, it's less clear that the Fed should really be reactive to this. Yeah, please.
But that to me is the big debate, is it not? What the Fed's role is in trying to equalize a K-shaped economy. Is that their mandate? Is that something that falls into their purviews or their historical precedent?
I think right now, clearly the consensus, not universal, but the consensus is no, it's not something. This is among Fed voters I'm talking about. The only Fed voter who has really pushed back on this idea is New York Fed President Williams, saying we should explicitly look at lower income people and focus on them in setting our policy. And this is a less strong dovish argument than, say, Myron, Waller, and Bowman, who are just saying it's not even about that. It's a bigger picture thing that everybody needs help right now. But in terms of really focusing in on the lower income people, the people who may be being left behind right now, I think there aren't many voices on the Fed for that.
Lisa brought this up earlier. So what if they don't cut in December? Will there be a ton of damage done if they're just going to pick up the mantle next year?
Well, I think that's really that really is perfectly encapsulates Powell's argument, right? That what did you see yesterday when the BLS announced this? You saw market odds for a December cut go down, but market odds for a January cut go up. And so a lot of the thought is that, hey, wait a minute, you know, we're just kicking the can down the road by 6 or 7 weeks here. We still have the option as the Fed to cut in January if we find that, oh, that data that should have come out prior to the December meeting did indeed justify a December cut.
If the Fed does not cut in December, does the chances of this Treasury Secretary becoming the Fed chair increase?
I think there's going to be, if the Fed doesn't cut, I think there's going to be a pretty strong reaction, both from the president and from his allies. I would say that irrespective of what the Fed does in December, the president is very likely to choose someone who is a staunch loyalist. This has been his preference for posts, and this is a post that's going to be tough to fire someone from. So I think Bessent, Hassett, and I would say Myron himself all have a decent chance of getting this role.
Could you be a staunch loyalist and credible to financial markets?
I think that, yeah, you absolutely can be. I think that it's a difference of, are you simply parroting talking points, or are you making arguments that are strong arguments that, hey, not everybody may agree with, but are logically consistent arguments?
You can see how the calendar's set up, can't you? December 10th, Fed meeting. Probably don't cut. 6 days later, some terrible jobs data on the 16th. And around the same time, you get an announcement of the new Fed chair from the president in the Oval, alongside whoever it might be. And that individual could be very outspoken about what they want to do with policy and what isn't happening with policy.
Someone described it to me last night, though, the difference between the staunch loyalist and someone that's credible is that Trump respects Bessent so much, so the markets know that he will respect his opinion if, say, they couldn't cut interest rates. Meanwhile, other individuals that maybe head up other organizations within the White House feel that that is one-way direction of travel from the president's mouth to that individual, not a dialogue back and forth.
Of course, this conversation can change in about 50 minutes' time. We get a weak jobs print. People will be talking about a rate cut on December 10th, and it all goes away, Bramo, and everything's going to be okay. Happy Christmas.
Maybe it's okay if it's in the 18 to 32,000 range, at least not below that. Look, there is a question, and we're raising it. You said smells like 50. And I do wonder if you have the trajectory you just talked about, no rate cut, terrible data, then a new Fed chair who is announced, whether the odds of a 50 basis point rate cut in January skyrocket. And I think that is a very astute point.
David, it's good to see you. Thanks for dropping by. Thank you, sir. David Seif there of Nomura. Let's get you an update on stories elsewhere. With your stories worldwide, your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. A BlackRock portfolio of private credit loans has performed so poorly that the money manager waived some management fees, a rarity in the credit world. The portfolio value declined enough to breach an over-collateralized test. BlackRock declined to comment. Meanwhile, President Trump is signing a bill directing the Justice Department to release all records tied to the late disgraced financier Jeffrey Epstein. President Trump had resisted the release, but over the weekend told Republicans to support it. He's hoping to dismiss scrutiny of his relationship with Epstein as a political distraction. And Meta's AI pioneer Yann LeCun is officially leaving the company. Sources telling us here at Bloomberg, LeCun started his own company. Meta is planning to partner with his startup, but details are still being finalized. LeCun is known as one of the godfathers of the AI industry and reportedly openly criticized Meta's AI strategies. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next, a tale of two consumers.
The consumer has been struggling for a while, especially on the lower end. That upper end spend has really been able to carry things. Not so much for the retail sector, because as a whole, they need more than just the upper end, except the very high luxury stuff.
Up next, we'll catch up with David Bellinger of Mizuho from New York City. You're watching Bloomberg TV.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. And Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equity futures positive. We're up by 1.2%. Still, some things to play for this morning. 8:30 Eastern Time. The jobs report just around the corner. Following some really decent numbers from NVIDIA, that's got the stock market higher by 1.7% on the Nasdaq this morning. Under surveillance this morning, a tale of two consumers.
The consumer has been struggling for a while, especially on the lower end. I mean, you've seen some of that delinquencies on the lower end in auto loans, delinquencies on the lower end in credit cards, but not on the upper end. That upper end spend has really been able to carry things, not so much for the retail sector, because as a whole, they need more than just the upper end, except the very high luxury stuff.
So here's the latest this morning. Walmart reporting third quarter earnings that beat estimates as it continues to capture more higher-end consumers. David Bellinger of Mizuho has an outperform on the stock, a 115 price target, and David joins us now for more. David, good morning.
Good morning.
What was your first reaction to what we heard this morning?
Look, this was a really solid quarter. So you had same-store sales growth in the U.S. up 4.5%. Some of the buy-side numbers were maybe closer to 5, so didn't hit the highest of expectations, but they did raise the guidance. You had this nice e-commerce growth acceleration as well. The U.S. e-commerce growth for Walmart's been growing around 20%. This quarter was 28, so a nice step up. And within that, the really good number was paid delivery was up 70%, 7-0. Thought that was a typo when I first saw it, but it's a big number, really good, and it shows you that the mid-upper income consumer is spending a lot at Walmart.
Whose lunch are they eating right now?
Look, it's widespread, really. So Target's got a lot of issues. I think they're really, Walmart's really narrowing the gap versus Amazon here, right? They've got a great fresh business, great grocery business. Well, Amazon's trying to come back and fight back a little on grocery, but Walmart's clearly the leading player in that space, and I think that's where they get this frequency of purchasing, and then it leads to other discretionary type items.
I'm glad that you mentioned Amazon. It does seem like Walmart wants to really emphasize that its main competitor is Amazon, not Target, by listing on the NASDAQ rather than the New York Stock Exchange. Do you think that that's a feasible comparison, that truly is what's going on, that Walmart's biggest competitor right now is Amazon, and Walmart is essentially as much a tech company as it is a retailer?
I'd absolutely agree. Amazon's their biggest competitor. Walmart is a retailer. I know they try to talk about themselves as a tech company. They're incredibly tech-enabled, right? Very, very well ahead of the game versus others. One thing that we spent a lot of work on is this agentic technology and agentic shopping and what that could mean. And Walmart's really going all in on this, spending a lot of time, a lot of resources. Amazon's been pretty opposed to this initially, that maybe they want to protect their advertising business. It's $60 billion plus of revenue, really high margin. So I think Walmart sees that as their true potential to step in and narrow that divide and basically get a lot of people shopping through this agentic technology.
For people who are not familiar with agentic sales strategies, what does that actually look like on the ground? What will experience of shopping online at Walmart be that it won't be at, say, Amazon, that you think will or won't work?
Yeah, so we don't have a perfect example of this yet. It's all building. There's been some sampling of this, but it's not mainstream yet. But you would basically have, ChatGPT might become your mainstream browser now instead of Google. And you type in there, hey, I've got a 7-year-old daughter. She wants to have a K-pop Demon Hunter's birthday party. What do I need for 15 kids? And it'll tell you everything you need. You could have a one-click checkout to Walmart. Things like that, or they'll even preemptively order your groceries for you. So Walmart might know when you're out of milk and eggs before you do, hit you with a preemptive order, and you're basically a Walmart customer for life. I think what could really push this over the hurdle is Walmart Plus is $98 a year, this membership they have. If Walmart were to introduce a ChatGPT Plus membership as a perk of that, a $20 a month value, I think that would push a lot of people into at least a trial of agentic when the technology's right. Maybe that's 6 months from now, maybe that's 12 months from now. But
that soon.
If that membership perk comes out, I think you could drive a lot of attention to it.
Will other retailers follow?
They should. It seems like everyone's going down this path. Yesterday, Target announced an OpenAI partnership. So we're seeing more and more of it. But Walmart's clearly one of the early leaders, one of the first to do this, and they're pretty much ahead of the game at this point.
How have they been dealing with the policy uncertainty around tariffs in Washington? Because most recently, we got tariff reductions on a number of food items, and Walmart basically is America's grocer. I think it's 60% of Americans shop there for their groceries.
Yeah, that should definitely help. So a lot of the tariff dynamics have been changing by the minute, right? And what Walmart's done really well is they're passing along the cost in these discretionary items, not really touching the food category, so that they protected that really well. unless you have a specific tariff on bananas or something like you have to raise that price. But the discretionary items is where more of the price increases are coming. And what Walmart's done really well is they've taken their inventory levels down very tightly so that you don't have this inventory risk, this markdown risk in the next year. And they've also pushed a lot of consumers into their marketplace where they don't own that inventory, right? And they'll push the inventory risk over to those marketplace suppliers. If there's an item selling really well, they'll go and buy all the inventory out from the marketplace suppliers and take the risk, but they know it's moving, basically.
Can we finish on leadership? Sometimes it's difficult to draw a distinction between a company and its leader. Can be good, can be bad. I think of JP Morgan and Jamie Dimon, Disney and Bob Iger at the moment. What is Doug McMillon to Walmart, and how are things going to change under John Furner?
Yeah, Doug has been huge. He's, in our view, the most consequential leader at Walmart since the founder and Sam Walton. And they've got an incredibly deep bench, though. So you got John Furner. He's going to step into the CEO role early next year. He's been the head of the U.S. business for 6+ years. I think he joined Walmart in 1993. So he's been around for a long time. We're not worried at all about this leadership transition. We see it as Doug basically going out on a high note here and handing over the reins when you're switching to this, AI-based Walmart, this agentic Walmart. He's the right guy to take over now.
We don't follow the company as closely as you do. I just wonder if it came out as a surprise to you in the last week or so, because it certainly did to us. Did it surprise you that he's stepping down?
Yeah, Doug's 59, but I thought he might stick around for a couple more years. Maybe he's gearing up for a presidential run or something, right? There's not a lot of bigger jobs than the Walmart CEO.
You think he might have an interest in politics?
It's possible. I mean, he speaks really well at these events. He knows how to talk to a room, and yeah, he's been great for Walmart.
David, it's good to see you.
Thank you.
David Bellinger there of Mizuho on Walmart. A lot to discuss with this company right now. The future of spending and shopping, Bramo. You ready for that? ChatGPT, preemptive buy-in?
I mean, if someone could fill my fridge, buy gifts for my kids, do all that for me, I mean, I don't know. Let's see how good of a job that they do. One thing, as you were talking, I was looking at the number of employees at Walmart, because that's going to be ultimately a real question. And if Doug McMillon does run for office, that will be a key question that he has to ask. And what we have seen is a complete stability in the number of employees. Actually, it has trended down to 2.1 million from 2.3 million back in 2016. So it raises this question: how much is this replacing some of the operations that people used to fill?
He's staying on as an advisor through January of 2027. So that means he would have time to then run for the election in 2028.
I like how you're there already.
Yeah.
You're already
I
thinking
sent some
about
emails already.
Your point on aligning with the tech story a little bit more, and I think where they've struggled to really draw a comparison is to say, look, we're taking on Amazon. This isn't about us and Target anymore. And I think the market's probably got to that point now. It's taken a while, though, because we often talk about the comparison between a Walmart and a Target. Target, unfortunately, for Target, it's kind of not the story at all. Walmart's looking firmly elsewhere.
Real question now is, how are they going to expand on the entertainment side of things, the cloud? What extra steps are they going to take in this tech metamorphosis?
So this is weird, isn't it? It's a week away from Thanksgiving, which feels strange. I don't know where that's come from. And it's 34 minutes away from a payrolls report on a Thursday. All of that still to come in the next hour.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10. because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The question now is, are we facing a bubble?
You cannot get away from the comparisons to the late 1990s.
The market's done a little bit of work here to take some of the froth out.
These companies have a ton of free cash flow and very low leverage.
I don't have a huge concern as to big tech running out of cash anytime soon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
This is it. It's Payrolls Thursday. It's the last jobs report before the Fed's next meeting. Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equities up by 1.3% on the S&P 500. The NASDAQ up by 1.75. Thank you, Jensen. Thank you, NVIDIA. That stock this morning higher by 4.83% in the pre-market. The next leg of this story this morning, the jobs report, 29 minutes away. The SMNR survey, around 50K. The high, north of 100,000. The low, -20. The range is pretty wide going into this one, and this one takes on additional importance going into next month's meeting.
Yeah, it's late, it's backward looking, it's going to be noisy because it's going to be potentially backfilled by some of the softness that we saw in the prior months. And yet this is it. After this, we get retail sales on November 25th, this retail sales from September. And then as far as first-tier data, we get what, jolts? I mean, other than that, we don't really get much because we don't get the November payrolls report, any of the CPI reports, and yet the Fed has to make a decision.
Fed's got to make that call, and the Doves have got to convince the rest on the committee to make a move. Tomorrow morning at 8:30 Eastern Time, Governor Myron's going to join this program. Governor Myron's got a tough go of it right now. To convince the others, the holdouts, the hawks, that they should reduce interest rates, you need some data on your side, and we're not going to get it. What's the refresh for that argument?
Honestly, this is a very difficult one, and I'm very curious to hear how Stephen Myron plays this. He's going to talk about forward-looking. You can't just necessarily skate to where the puck is. You have to look at where the puck is going, whatever kind of hockey analogy you want to talk about. Nonetheless, given the meeting minutes that we got yesterday, how much pushback is he going to get that the economy is fine and they don't have justification, especially given the expectation for some sort of reacceleration in the first quarter of next year?
I think Governor Myron needs to make the point that they cannot make a decision in December based off you've outlined it, stale data from September, which is why actually it would make more sense if they could actually change the calendar, get the data first, and then make a more intellectual, better decision with more insight on what is actually going on in the economy. But it's not just Stephen Myron that has a problem right now. The president yesterday was joking, but there was some truth to that. He wants the Treasury Secretary to fix it. He wants the Treasury Secretary at some point potentially put some pressure on the Fed to make sure that they are continuing in this rate-cutting cycle.
Just think about the calendar. Let's take a beat, go through this. So we get the payrolls report at 8:30 Eastern Time. December 10th, the Federal Reserve meets. The 16th, you get an update on all the data. Let's just assume, I don't know what's going to happen with this jobs report, but let's assume it's at 50K. Everyone sits around a table and goes, don't know what we're going to do, need more data, let's not cut interest rates. Then on the 16th, things are absolutely dire, they're terrible. And the president comes out and says, new Fed chair. Here's the replacement. I'm making an announcement. We've got a new Fed chair. That's the fireworks. I know, like, I'm writing a movie script right now for financial markets, but that's the fireworks potentially into year end around this story.
Well, I'll add to the fireworks. The plot continues that in January, with the likelihood of a 50 basis point rate cut skyrocketing and potentially following it up with additional such moves later on, especially if they can make the argument, whoever the new Fed chair is and some of the compatriots on the FOMC, that actually they have been too late and they need to play catch up. So there are a lot of aspects to this movie. Nonetheless, the fireworks will be there. Stay tuned. Coming right up.
Things were quiet. Things were super quiet. Enter Anne-Marie into the Oval Office, asking questions about the Federal Reserve, and it's back on a table again. So the president turns around and says, I'm going to make a politically correct, maybe a politically correct nomination. Important to note, nomination, because it's the Senate that's going to do the confirmation later on this year, and I think, or early next year, and I think that's going to be really important for this appointment. If you think about the pushback that we're starting to see from Republicans on Capitol Hill around certain issues, there's potential for pushback on this issue as well. So if you want to play it down the line, who out of those 5 is politically correct?
Governor Waller, the most traditional candidate he can take, and someone that already has been really shaping the Federal Reserve's view on what happened with the labor market. We've said it how many times. It felt like Jay Powell, that speech he gave in Jackson Hole, was written by Christopher Waller, and then they agreed with him and they cut interest rates. If they were going to pick a traditional individual that has credibility, even amongst Democratic circles, it'll be Governor Waller.
Yeah, right now I'm looking right now into how much does the market understand the potential risks if it's somebody who is perceived as connected to President Trump. Look, when it comes to Kevin Hassett, and I think that we really have to understand that Kevin Hassett seems like the front runner here. Question is, how does he distance himself enough from President Trump to get confirmed at a time when he is perceived as someone who is going to be overly dovish, needs to play into President Trump's hand, but also potentially needs to be credible with the other members and potentially the Senate and the Banking Committee.
We've got to talk about some single stocks as well in a moment. We'll talk about NVIDIA. Right now, I want to talk about Walmart just briefly. In the pre-market, positive by about 0.25%. They came out, decent numbers, decent guidance, decent outlook. Walmart right now, though, is having its own success, and I think it's important to point that out. But yes, Walmart is doing well. The stock is higher by 0.5% of the pre-market, but that doesn't necessarily tell you that the consumer, the American consumer or the American economy is doing well. This is not just a story about consumption, it's a story of execution and taking on your competitors.
And so Walmart, just taking a step back, has shifted its business model significantly over the past couple of years. They have moved from a retailer that catered to the lower end of the consumer base to one that caters increasingly to high-end and middle-income consumers. It has invested heavily in technology and wants to be seen more as a technology company, or as much of a technology company as it is a retailer, thus the move from the New York Stock Exchange to the NASDAQ. Now there is a question of how much share they're gaining and whether we can really get a macro read from some of their earnings and extrapolate that out to what's going on with the consumer and the way that it had been in the past. What they are telling you is they are seeing that weakness in the lower end. They're seeing ongoing strength in the middle and the upper end. They are gaining share, competing on price, but still having to raise prices. And this dovetails with NVIDIA. This is the adopters. This is really the key question. How many companies can do this, have the scale to do this, and how many will win because of the adoption going forward, not just the semiconductor prowess?
Walmart up this morning by 0.4%, NVIDIA higher as well. Coming up this hour, we'll catch up with Ed Ludlow, with stocks rallying as NVIDIA's earnings ease AI concerns. Elsewhere, Kelsey Barrow of JP Morgan Asset Management joins us as we break down the latest jobs data. That data 23 minutes away. And Sarah Malik of Nuveen as December rate cut bets continue to crumble. Let's turn to NVIDIA. Exponential growth on the horizon.
We're growing some 60% a year. Just quarter-to-quarter growth of our company is $10 billion. We grew an entire size of a company just from in one quarter. You're seeing an exponential growth in the amount of compute demand necessary for AI.
So here's the latest. The NVIDIA CEO, Jensen Huang, speaking to Bloomberg TV following the chip maker's earnings report. Shares soaring in the pre-market by more than 5%. The man himself, interviewing the man himself, Ed Ludlow, joins us now for more. Ed, good morning, buddy. Great job yesterday evening. What stood out for you?
Yeah, it's the trifecta, right? The demand is intact. And if you look at the performance of not just NVIDIA's shares this morning, but the shares of every other name that's associated with the data center build-out, they're all higher because they believe what Jensen said. Supply is intact. We have plenty of Blackwells to sell. And we're in this ironic position where we went into this earnings print with very high anxiety about how high the bar was to clear. Now, if you read the sell-side notes, people think that actually this figure they've given of $500 billion by the end of next calendar year is a little bit conservative. And the final part is that he was infighting talk about the competition. They just don't see the competition being there. And, you know, the anecdotes that Jensen gave in the interview is that if companies look at, say, custom ASICs chips, or they look at Google's TPUs, they come crawling back to NVIDIA and say, actually, we've looked at it, it doesn't work for us, we'll stick with you.
Ed, we've made the point a few times over the past few weeks that the story around the company is solid. The story around the stock is different. Ed, did he talk about that distinction at all, how the market has started to treat the broader story around AI and the ecosystem?
Yeah, I mean, you know, disputing an AI bubble, saying, quote, we see something very different. That's not new, though, right? You know, we had the opportunity to ask him point blank about an AI bubble on October 28th. And the argument that he's making on the valuation side is not the same as the market's one about the strength of balance sheets and cash flows being different to the dot-com era. It's that there is software being created by all kinds of companies. I heard what Lisa said about Walmart, right? Walmart has the strength to invest in AI. But what's coming out the other side, in Jensen's mind, is something tangible that's actually useful and worth paying for, be that at the consumer level, the enterprise level. And Jensen's sticking to his guns on that. And so, you know, are we in an AI bubble? To his mind, we're not, because he sees revenues at all the people that have invested in his technology.
At this point, though, Ed, you have to wonder whether the price of some of these chips, in particular Blackwell, as well as the Rubin chip that will be coming out, how much it is cost prohibitive to most of the potential adopters to really enable them to move into the next phase of AI adoption, right? I mean, this sort of goes to the question of why they need to finance some of their potential buyers, because it's so expensive to get these chips in any kind of quantity.
Yeah, I mean, to be fair, you know, there are lots of questions that Jensen just didn't answer. So I basically said to him, are you sure that OpenAI is good for it? And, you know, his response is, well, we're being disciplined in our approach where we invest, where we see there'll be a return. But he didn't really answer the question. You know, OpenAI has, $1 trillion of commitments around the world over a long period of time. And how they finance it, you know, to NVIDIA's mind, they might say they don't care. But there is a concern around that side of the bubble. You know, leverage, free cash flow positions of some companies. Oracle is now in a negative free cash flow position for the first time since the early 90s. So there are little cracks appearing. The problem is that Jensen just exudes confidence and doesn't really answer the question.
Well, there is this potential holy grail for them, which is being able to sell some of the Blackwell chips, the Rubin chips over to China, and there seemed to be some optimism on that front based on President Trump's commentary. How feasible do you think that that is?
Yeah, you know, this is still the balancing act that Jensen Huang is pulling off. The base case assumption is zero revenues from China. But in the course of the conversation, you know, they want to be there. They'll continue working with the administration, continue working with the Chinese government as well. But in the immediate term, the news flow of last night was more really about the Middle East. You know, the Commerce Department has allowed them to sell those chips or transfer the chips that were as part of the president's visit and delegation earlier in the year. But with the condition that NVIDIA guarantees there's no diversion into China. So the national security tension against wanting to be in that end market is still there.
Ed, thank you for the update. And once again, nice work yesterday. Thank you. Ed Ludlow with the latest. Look out for more from Ed on Bloomberg Technology alongside Caroline Hyde in about 3 hours' time. That stock is higher in the pre-market by more than 5%. As we count you down to the payrolls report, let's get you an update on news worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John.
Harvard is launching a new investigation into its ties to Jeffrey Epstein after lawmakers released email exchanges with former university president Larry Summers. Harvard's Crimson student newspaper reporting as well that Summers is leaving his teaching role immediately amid the probe. Meanwhile, President Donald Trump joked that he would fire Scott Bessent if the Treasury Secretary doesn't help secure lower interest rates. Speaking at a U.S.-Saudi investment event, Trump saying the only thing Scott's blowing it on is the Fed, adding rates are too high, Scott, and if you don't get it fixed fast, I'm going to fire you. And speaking of, President Trump is preparing to sign an executive order that would allow the Justice Department to sue states over AI regulations it deems unconstitutional. The draft order seen by Bloomberg directs the Attorney General to establish a task force that would challenge state AI laws. That's Bloomberg Brief. John.
Yahara, thank you. More from Yahara later on this hour. Up next, we'll get you some morning calls centered around one stock, NVIDIA. Plus, we'll catch up with Kelsey Barrow of JP Morgan Asset Management as we count you down to the payrolls report. We'll get a preview from Mike McKee. That data, 16 minutes away, live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
There are going to be many different ways that NVIDIA is going to continue to see higher revenue and a broadening out of their ecosystem. And I think it's also important to note that these hyperscalers will probably get much bigger in nature here over the next 5 to 6 years. We've seen the great momentum out of Q3 earnings season from these hyperscalers. So we do think those companies will continue to pave the way.
That was Angelo Zeno of CFRA on NVIDIA earlier on this morning. The numbers yesterday afternoon pretty decent. The guide strong. The market off to the races into the opening ballot by 1.3% on the S&P 500. On the NASDAQ 100, up by 1.8. Let's get you some morning calls this morning. One stock in focus. The big one, NVIDIA. First up, JP Morgan raising its price target to $250, seeing the company gearing up for further significant upside to revenues. Elsewhere, Wedbush raising its price target on NVIDIA to $230, saying its results and guidance match buy-side hopes. And finally, Evercore raising its price target to a street high, $352, noting increasing inventory and supply commitments. The stock is up by 5%. So the AI trade this morning is doing okay. How's the economy? This from Walmart just moments ago. Lower income households are under additional pressure. That ain't new. That right there's the problem.
Yeah, and they talk about even though there's resilience in the rest of the income levels, that really has been the place that you have seen some slight moderation. That in the words of the CFO, John Rainey. A real question here about how the Fed addresses this. And increasingly the question is that the Fed's role? And will cutting rates help or hurt some of the inequalities that become evident in all of the retail earnings, but especially these from our Walmart?
Walmart up by 1.2%. Jobs data around the corner. Let's stay on the economy. The payrolls report just about to cross in about 13 minutes' time. Bloomberg's Mike McKee has a preview for us. Good morning, Mike.
Good morning, John. You ever go to your refrigerator and there's something in the leftover container and you don't know how long it's been there and you don't know if it's good? That's kind of where we are here. It's been about 50, 60 days since the September data were collected, and so it's a little bit stale, or maybe a lot bit stale. We'll find out at 8:30. Go back to the day before, which would have been September 4th, it's supposed to be released, and here's what we were expecting. At the time, 51,000 jobs. The consensus today hasn't changed. I guess nobody figures they know anymore. ADP, if you remember, in September came at minus 29,000, and the whisper number on jobs day in September was for 75,000. So we've got a wide range there of what it could be. We will get an unemployment rate. It's not expected to be any different, 4.3%. So, guys, it's kind of a question of how bad the leftovers are. Yeah, I guess if they're bad, that might influence thinking about the Fed. But if they're as expected, this one will just sail off into the night.
Not my apartment, not my refrigerator. Mike McKee, as you were speaking, Anne-Marie was pointing at me. That thing's orderly. Everything's lined
John's
up.
apartment, just a side note, John's apartment is insanely organized. Maybe me, because I go on a lot of trips, sometimes I extend them.
You said I've got time. To line up the yogurt.
I do come home and end up having all this stale goods.
Don't forget,
this is a employment report for my household.
We also get jobless claims. So that's going to matter today because it's the first one, actual one calculated by the Labor Department since the shutdown began. So that will give us something new at 8:30.
Something fresh. Mike, thank you. Thanks for getting us back on track. We appreciate it. Kelsey Barrow of JP Morgan Asset Management has this to say. While the Fed may have been uncomfortable with the lack of government data, our conclusion from the information that is available is that the labour market continues to gradually weaken. Kelsey joins us now for more. Kelsey, good morning.
Good morning.
Looking forward to having you through the jobs number in about 10 minutes' time. Let's talk about that jobs number. Is it stout? Does it make a difference to the debate on December 10th?
Well, if we look at it, it's been 76 days since the last jobs report. So if anything was in my fridge for 76 days, I would say, yeah, that's stale. Now, I think the most important thing that we've learned over the last 24 hours as it relates to the rates market is the new BLS schedule. So the fact that the Fed is not going to see the October or November jobs report until after the decision. And as a result, probabilities that the Fed is going to cut in December has come down. Now, I'm going to go into a little bit of what the Fed could do or will do versus should do. Now, what they will do, I think, is probably skip the meeting unless we get a really poor payrolls report today because of the lack of data, because they are, quote, flying blind. But I don't really believe they're flying blind. You know, we've all been in planes. You go in a plane, you fly through clouds, you fly through fog, right? I'm not a pilot, but I'm pretty sure that when a pilot is flying a plane, they're not looking out the window, right? They have all of these technical radars and instruments that they're using. And honestly, I think that there is enough data out there for them to assess the labor market. And as I said in that opening, to view it as generally weakening over time. And that's even if this jobs report today comes out a little stronger. And if we were to do a whisper number, which I know we don't have for today's number, I would say it feels like the market is prepared for a modestly stronger number relative to what's on the echo screen for consensus.
So let's say it is moderately stronger and you don't get a 25 basis point rate cut next month. Does that mean that a 50 basis point rate cut in January is more likely?
I don't think so. I think that they feel moving gradually is appropriate, particularly when you're so close to neutral. So I think that if they do skip, we're still looking for a 25 basis point rate cut in January. The market has been very efficient in terms of its repricing. So the past few days, you've seen the probability of December go down. But all of those rate cuts have really just been pushed into 2026, and the terminal rate for the Fed funds rate hasn't actually changed very much. So it's still around 3.1% approximately. So the market is really looking at this as a skip, not a pause, not a hold. And I think that the dot plot is also going to communicate that, meaning even if they don't cut in December, the 2026 dot is going to be below the current Fed funds rate.
I don't want to go back to this, but the idea of the expiration date of the food in your fridge, 76-day-old Wonder Bread or canned beans are very different than 76-day-old strawberries. And I just wonder how useful it potentially could be. Even if maybe you don't want to eat it, you could eat it and not get sick. I mean, is there something in this jobs data that's going to be relevant to how you see the trajectory for the Federal Reserve?
Yeah, absolutely. But what I would say is if you look at the NFP chart, you pull it up on the Bloomberg terminal, you type in GP, what you're going to see is a sawtooth pattern, right? The jobs numbers don't go in a straight line. You have a slightly hotter, you have a slightly weaker. You have to focus on the trend. And so that's what I'm going to be focused on in a few minutes' time. I'm going to be looking at what the 3- and 6-month moving averages are. I'm also going to be looking at how much of the jobs are cyclical versus acyclical. So most of the hiring that we have been seeing really in the last 6 to 12 months has been acyclical hiring. Which is, I think, an indication of the fact that the labor market under the surface is a little bit more squishy. Why that matters for the Fed, it doesn't mean that they need to do emergency cuts, but it does mean that if they do continue to cut, it doesn't threaten their inflation mandate. And that's really, the question here is if they continue to cut, does that threaten their ability to get back to 2% on inflation? And we would say no, that we're not really seeing evidence in the cyclical sides of the economy that wages are reaccelerating or the labor market is retightening.
From your view, how political has December gotten?
I'm not sure it's gotten particularly political. I think this is actually more about the fact that we are getting close to estimates of neutral. And so every single decision from here on out just gets harder. And to be fair, it is harder for them without some of the data that they had. So I wouldn't necessarily say it's more political. I just think that it's a tougher part of the economic cycle to try to determine what's going on.
Anne-Marie asked this question earlier on. I'd love your view, your opinion as a market participant, how you would react if they delayed the meeting until after the data dropped on December 16th. Not saying they're going to do that, just as a market participant, how would you respond to that? Is that a good thing?
I would be very surprised. I think the market would be very surprised. I mean, that's
surprised in a negative way, though.
I mean, I'm thinking through this as you're laying it out
for me.
Sure, no
worries.
And I guess the market would probably view that as the risk that the data that they're going to receive is weaker. And so, the Fed wants to pause so that they don't miss an opportunity to cut and then have to wait all the way till January. But it seems like a pretty high hurdle. I mean, they put out those dates for the schedule years in advance.
It's good to gauge some of this, though. That's how a market participant would think about it if they delayed the meeting.
Yeah, I thought that was savvy. In other words, it raises the chance of them cutting actually above where they are now. That would be how it's perceived in markets.
Kelsey Barrow of JP Morgan is going to be sticking with us into the jobs number. That jobs number drops in about 4 minutes' time. Up next, Nita Richardson of ADP will be here to react. Mike McKee is here to break it down. The jobs number up next.
coming to you live from Kuala Lumpur. The whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can't be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
So here it is, a delayed payrolls report drop in on a Thursday. Very strange stuff. The September jobs report, which turns out to be the last jobs report before the December Fed meeting. This is where we're at. The jobs report just around the corner. Equity futures near session highs, up 1.2% on the S&P 500, up by 1.7 on the NASDAQ. In the bond market, yields look like this, 2s, 10s, 30s. Yields high at the front end by a single basis point. With a jobs number, here's Mike McKee. Good morning, Mike.
Good morning, John. 119,000 jobs during the month of September, better than the double, basically, the forecast of 51,000. So it turns out to be a pretty good number for the month, and the unemployment rate comes in higher, 4.4%. So an argument on both sides of the employment mandate there. Labor force participation rate at 62.4% goes up. Average hourly earnings, 0.2% is lower than the 0.3 forecast and the 0.3 in August. On a year-over-year basis, that's 3.8%. There's some base effects in there. And average weekly hours, 34.2. The change in private payrolls, 97,000. That's up from 38,000 in the month of August. They don't list any necessarily revisions at this month. I'll have to go deeper into that number to see if we have that. The September number of 119 comes after a minus 4,000 in August. August revised down to minus 4,000. So that is a change definitely in the outlook for the labor market. And that may have an impact a bit on Wall Street. Jobless claims come in at 220,000, lower than the 227 that was anticipated. Doesn't tell us what the prior week was, but it does suggest that things are okay. Here we have the continuing claims, 1,950,000. So that is lower than the last time we got it, which is 1,974,000. Philadelphia Fed business outlook is the other number that we got, negative 1.7. That's better than the negative 12.8 that we had in the month of October. That's not a government number, of course, so it is up to date. So overall, it's kind of a mixed picture on the employment report. Good news in terms of the number of jobs in September, but not on the unemployment side.
Mike McKee, thank you, sir. Stay close, take a beat. We'll go through the market action. So this is the reaction about 2 minutes after the jobs report dropped. Equities near session highs at 1.5% on the S&P, on the NASDAQ up by 2%. In the bond market, look at what bond yields are doing. And we'll get into the why. We're down 3 basis points to the front end of the curve. 10s are down by 2. 30s are also down by 2. So allow me to give you a preview of the Fed meeting on December 10th. It goes something like this. President Smith walks in, bolts up the door, says no chance. Look at payrolls, 119, massive upside surprise. Governor Myron opens the door again and says, wait a minute, look at revisions, look at unemployment, look at continuing claims and the upside surprise we've got there. And that's the debate and how things are set up between the hawks and the doves on the FOMC next month.
Yeah, your new career is going to be as a scriptwriter of the FOMC and what actually happens there. I'm looking right now at continuing claims. They came in at 1.97 million. This is the highest level going back to November of 2021 and comes in tandem with the unemployment rate rising. So Andrew Hollenhorst nailed it when he was talking about how it's going to be north of 100,000, but it is not going to be a good payrolls number. And a lot of people at the Fed will point to the unemployment rate and to ongoing continuing claims that keep creeping higher and say, look, this is a soft market and the demand is just not keeping pace with the supply of jobs, even if it is somewhat smaller than it has been in the past.
Mike McKee, you want a second beat. What do you see?
Well, we're looking at some of the categories here, and we see that construction jobs were up by 19,000. In August, they were down by 14. Goods producing overall, 10,000. So manufacturing falls by 6,000. Trade and transport by 2,000, and it looks like professional and business services down by 20,000. The real strength in education and health, as always, 59,000 gains. Leisure and hospitality gained 47,000. Government gained 22,000, and that may be somewhat of a diversion because, of course, in October, a lot of people fell off the payrolls who had been fired earlier by DOGE. I think the one number that stands out, though, is that August we lost 4,000 jobs in the revision. That's going to mean that we were set up for a definite weakening, and maybe we got a bit of a bounce back in September, but it's going to make the October numbers that we will get in terms of number of payrolls much more important.
Mike McKee, thank you, sir, with the latest jobs report. If you are just joining us, an upside surprise on the headline number, but plenty of nuance beyond that. Slightly wonky, but another number that's interesting is 80.2%. Here's what's coming from the BLS today. The September estimates from the Establishment Survey include both data collected on a normal schedule prior to the shutdown and also September data that businesses self-reported electronically during the shutdown. As a result, the Establishment Survey collection rate, 80.2%. For this initial release of September 25 data is higher than usual, so a higher quality report, if we can call it that.
Yeah, so where does this leave us? Does this leave us with a good report or a bad report? And you talk about how it's going to be a Rorschach test. That said, the fact that this is backward-looking, it's 76-day-old data, at the same time that you're seeing the ongoing continuing claims tick even higher, does seem to indicate there could be some kind of shift on the FOMC that leans toward where the market would like it to be.
Neela Richardson of ADP joins us now for more. Neela, welcome to the program. Some timely data, some not so timely data. How are things set up in the labor market from your vantage point?
So the rule in my house is 3 days and it's out. That's why we have a weekly index now. But I'm going to say that good news, bad news, it's always good news to see job gains. So I am cheering this September number. I'm cheering the fact that it seems a bit stronger in terms of the response rate. But I have to go back to August because that's where the ADP numbers and the BLS numbers are almost in sync. We saw 4,000 drop in August at ADP. And that's very similar to what the BLS saw as well. So going into September, there's strength there, but we note that in October, that strength may have been mollified. September is an easy month for seasonal adjustment. There's not as much hiring, but when you go into that October, November, December period of seasonal workers, it's going to be a little bit more challenging to offset the seasonal factors. And to note, the private sector was driving this jobs report, but it was the consumer-facing private sector that really carried the water in this jobs report. So goes the consumer when it comes to healthcare, when it comes to leisure and hospitality, so goes the labor market. The connection between the consumer and the labor market has never been stronger when you look at this report right now.
Neela, given that backdrop, does this give you the justification in your head for the Federal Reserve to cut rates next month? If you could just sort of go there and get a sense, is this a strong read or a weak read in your view?
The whole context of the Fed view of the labor market is that labor demand and labor supply are falling in lockstep. I think this report challenges that notion because what you see is that the unemployment rate ticked up, and on the worker side, you also saw a bit of a rise in the labor force participation rate. To me, that suggests that more people came into this market looking for work and didn't find it. And that's especially supported if you look at the continuing claims number that is continuing to edge up, telling us it's taking longer to get a job. This is a highly concentrated labor market. Only a few sectors are strongly producing jobs. It makes it challenging for workers with a general skill set to find employment. And I think that's what's going to challenge the Fed in December. It's not just a strong jobs market they have to look at the demand side. It's how the supply side is faring in a very concentrated labor market.
Does a Fed rate cut change this picture? I guess that is the key question that everyone keeps sort of coming back to.
Well, if this data is backward looking, a Fed policy move is very much forward looking, right? We won't immediately see the effect of a rate cut on Main Street. It will take several months for that apparatus to trickle in, especially when you look at the key way that Fed policy transitions into Main Street is through the borrowing markets, through the credit markets. Are consumers positioned right now for those big ticket purchases, a house, a car, a refrigerator, that really drives the labor market forward in terms of new hires? I think when you come to the holiday season, that's where the rubber meets the road. That's where the disconnect between the wealthy consumer and the low-end consumer really matters, because if that low-end consumer, that low-income consumer can't purchase in the same ways they do over the holidays generally, then we won't get the growth factor leading into the first quarter of the year. So a lot is going to be borne on the shoulders of that low-income consumer over the next 3 months, both when it comes to seasonal hiring and when it comes to seasonal spending.
Nita, good to hear from you. As always, Nita Richardson there of ADP on the labour market. If you are just tuning in, the number dropped just moments ago. Payrolls came in at 119. That's an upside surprise. The estimate was 51K. That's a big upside surprise. But a lot of nuance elsewhere. A few other data points to point out. Negative revisions, unemployment climbing to 4.4%. From 4.3, the estimate was for that to stay at 4.3%. And some more timely data if you're looking at continuing claims. Continuing claims, the wrong kind of upside surprise. So if you're out of work in America at the moment, it's getting harder and harder to get back into the labor force. And that's what you see from that number almost repeatedly over the last several months. To get the market reaction, equity futures still near session highs on the S&P 500 and on the NASDAQ, supported by decent earnings from NVIDIA. Bond yields off the back of this initially lower. They stay lower, down by 3 basis points on a 2-year at 3.55. Kelsey Barrow of JP Morgan still with us. Kelsey, you've had 10 minutes to go over these numbers. What jumps out to you?
Yeah, so first of all, on the market reaction, clearly the market was somewhat prepared for a stronger number as it relates to September. But then what you had in the mix of it is a number of things that pointed to less strength than just the headline number alone. So to me, the things that stood out were the unemployment rate moving higher, and on an unrounded basis, that actually moved to 4.44. So not far away from 4.5. So, that's a meaningful thing to me. Continuing claims, also new cycle high. As you mentioned, it means it is harder to find a job. And then the third thing I would say is the concentration of job growth is still very high. So as I see it, 59,000 jobs created in healthcare and education, which is an acyclical area of the economy, and that's more than half of the job gains. Where you have the cyclical areas like manufacturing, professional business services, negative.
Are you saying there's a chance we might get a rate cut next month?
Yeah, this really is an interesting development. I mean, our base case has been that you will see a December rate cut. We tempered our expectations because of the announcement from the BLS. But, our general view is that the Fed is going to maintain an easing bias, and that's ultimately what's important. What's most important for the Fed is that the labor market is cooling, and as a result, it means they're able to cut rates without threatening their inflation objective. We see wages continue to moderate. We see inflation outside of tariffs as fairly benign. The bond market tends to agree with us as it relates to, you look at the inflation market itself, fairly benign pricing there. And so I think this is an interesting report that leaves December potentially still on the table, although it's going to remain a pretty close call.
If they decide not to cut in December, do you get more conviction to go into long duration bonds? The idea that this will cause the cracks to widen that we're seeing in the labor market.
So I think what we've experienced over the last few weeks are great examples of fixed income behaving the way that you would expect in periods when the market is trading risk off. Serving as the ballast, serving as the diversifier within your portfolio, and that obviously comes down to having duration in your portfolio. So that is something that we have liked. We have a range for the 10-year of 3.75 to 4.25. When we're at the top of that range, you have the opportunity to increase that position. When we move down to the bottom of that range, we need to be thinking about two things. Are we still in a soft landing, or is the economy changing? If we're still in a soft landing, there's a limit to how much lower yields can go. If we are concerned about a harder landing, then there's even more space for rates to rally from here.
Kelsey, you brought up a great point. We're a hair away from that line in the sand, really, that Jay Powell's outlined, 4.5% unemployment rate. We were almost just there. Isn't that going to give the impetus on the Fed that they should be concerned with the labor market?
Quite possibly, but I do think that there are still two core groups that are going to not necessarily change their view as a result of this jobs report. I just don't think it's enough. So that the people who wanted to stay on hold probably aren't going to look at this immediately and say, I need to change my view. But they may be more likely to be less vocal in terms of their dissent. So it's kind of maybe a nuance there of they're less intensely against it because they are seeing that there are things happening on the other side. But for those who are more concerned about inflation, that picture hasn't changed. We didn't get any new data on inflation yet, maybe a little bit on the wage side, but that's limited. And they can still say 4.5%. That was what was in our forecast, so not surprising us to the upside, and still a relatively low unemployment rate versus history.
Kelsey, good to see you. Thanks for doing this.
Absolutely.
Thanks for your time. Kelsey Barrett there of JP Morgan Asset Management. She says there's a chance you might get a rate cut next month. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahira. Hey, Yahira.
Hi, John. Recapping the jobs data we got moments ago, the U.S. adding 119,000 jobs in September, over double the average estimate in our survey. The unemployment rate ticking up to 4.4% and average hourly earnings rising 0.2% from the month prior. Weekly jobless claims for the last week came in at 220,000. That was below estimates. Meanwhile, Republican lawmakers are resisting President Trump's proposal to send $2,000 checks to working-class households next year. The White House says the checks would be funded by tariff revenue, but lawmakers prefer to use the money to reduce the deficit. And New York City Mayor-elect Zohran Mamdani is visiting President Donald Trump at the White House tomorrow. The meeting marks the first time the two leaders and political polar opposites will come together since the election to discuss how they can work together. President Trump threatened to pull federal funds for New York following Mamdani's election. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next, Sarah Malik of Nuveen on the odds of a December interest rate cut. Plus, Danny has your morning movers. AI stocks rising across the board following NVIDIA's blockbuster earnings report from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Clearly, the market was somewhat prepared for a stronger number as it relates to September. But then what you had in the mix of it is a number of things that pointed to less strength than just the headline number alone. So to me, you know, the things that stood out were the unemployment rate moving higher, and on an unrounded basis, that actually moved to 4.44. So not far away from 4.5.
Something for everyone in this morning's jobs report going into the next Fed decision. About a month away. Kelsey Barrow of JP Morgan Asset Management there. Off the back of that jobs number, we're higher by 1.6% on the S&P. The Nasdaq up by 2 percentage points. With your movers into the opening bell, here's Danny Berger with more. Hey, Danny.
So we got through the risk events of the past 12 hours. The jobs report, one of them, NVIDIA after the bell yesterday. You've seen the reaction all morning. It's a rise in the pre-market for 5% after they beat a strong guidance when it came to their sales. So NVIDIA shares trying to push back against this notion that there is bubbles. That's certainly what Jensen Huang was talking about yesterday with Ed Ludlow. Elsewhere, all the AI-related stocks doing really well today, including the likes of CoreWeave. Those shares up 10% after losing nearly 50% over the past month. AMD, one of NVIDIA's competitors, those shares up 3.7% in the pre-market. Finally, we also heard from Walmart this morning. For them, the shares have been going back and forth, but now decisively higher, up by about 3.8%, 3.6% at the moment. It was a beat on their revenue. They increased their sales guidance for the second time this year. Also in their announcement, they announced that they would be moving their listing to the NASDAQ from the New York Stock Exchange, saying that they want to emphasize their technology focus, John.
Danny, thank you. Looking forward to the show alongside Matt Miller in about 10 minutes' time. Looking ahead to the Federal Reserve meeting, Sarah Malik, the CIO of Nuveen, writing December rate cut as a toss-up, but 3 rate cuts are expected over the next 12 months as the Fed leans incrementally dovish in the second half of 26. Sarah joins us now for more. Sarah, welcome. We've got to reflect on the data out just moments ago. Something for absolutely everyone. Does it change the debate for December 10th on the FOMC?
But we got 2 new data points today to help us determine whether we're going to get that rate cut in December. This is, first of all, economic data trickling in with this employment data, and also technology and consumer earnings. So first of all, on the payrolls number, for September, the number is stale. There's something for everybody in it. While we beat on payrolls, we have downward revisions and increasing unemployment rate. So I think that's mixed in general. We saw the odds of a rate cut move up from 30% to 40% on this number for December. Second, the good news is earnings, which has been the good news for the past few weeks. NVIDIA earnings strong, Walmart showing the consumer is still shopping. That's good for earnings and good for large cap tech. The bubble that people were talking about in the markets was mostly Tech will lead. We will get 3 rate cuts over the next 12 months, but December's still a toss-up. We may approach close to 50% chances of a rate cut, but most of the Fed has been leaning hawkish recently. We heard that in the Fed minutes yesterday.
Sarah, you said that tech will lead, and this is an important point. Will tech lead because the Fed has been more reluctant to cut rates aggressively, or will it lead despite the fact that the Fed is more reluctant to cut rates?
Tech leads for 2 reasons. The first one is a moderately weakening economy. We are seeing that in the payroll data. And second is a slower pace of rate cuts. The moderate growth is good for tech because they have their own structural drivers. Artificial intelligence is alive and well. We can debate when will we see the ROI on all of the dollars spent on AI, but we will see AI continue to increase productivity for companies and eventually boost their revenues. That's the main structural driver for technology stocks. And I think they will continue to lead from here unless the economy shows significant signs of accelerating or the Fed dramatically decreases rates.
Talk about timely. Speaking of the labour market, this from Verizon just moments ago. Today, we will begin reducing our workforce by more than 13,000 employees across the organisation and significantly reduce our outsourced and other outside labour expenses. Sarah, efficiency and operational efficiency, is that going to be a big theme for next year?
I think 2 themes will be for 2026. First of all, is that efficiency because of artificial intelligence. Every company seems to be talking about that. And also, because of inflation, we're hearing more and more about affordability and actually some decreases in tariffs in areas like beef and coffee. Is the economy still affordable for the consumer? Hearing a lot out of Walmart on that today. Those are 2 themes I think that are bubbling up and will continue through 2026 as we talk about how are we going to incorporate the value of artificial intelligence into our business models.
Sarah, just before you go, top picks right now into the new year, what are they at the moment?
We love infrastructure. Infrastructure has tailwinds, more building in the United States, shift to artificial intelligence, and electrification of our economy. One stock in particular, NiSource, an Indiana-based utility, will be a nice play on this. It's one of the fastest growing utilities in the region. And we also like more conservative stocks that grow their dividends, dividend growers also. And NiSource is one that pays a 3% dividend yield.
Very cool. Sarah, thank you. Good to hear from you. As always, Sarah Malik there of Nuveen. Danny put it well. The risk events are over. They're in the rearview mirror now. We've had the jobs report. We've had Nvidia. We've had Walmart. Can we open the door to a year-end rally, or do we need more?
Well, we need the post-risk event spin, which is clearly what is going to happen and what is going to happen. We are getting word from Beth Hammack, for example, of the Cleveland Fed, where she says she's very concerned about a potential financial stability risk should the Fed cut rates into an economy that's okay. Look, you can pick your poison with this, and ultimately the swing voters on the Fed are going to make the biggest difference.
There's something for everyone, as Jonathan and you have been saying this entire program. I think Governor Myron tomorrow is going to be leaning on 4.44% unemployment rate. We are just a hair away of 4.5% and continuing claims going up.
Coming up tomorrow, Cameron Dawson of New Edge Wealth, Stuart Kaiser of Citi, Gil Luria at D.A. Davidson, and that guy right there, Fed Governor Stephen Murray, joining the program at 8:30 Eastern Time. Looking forward to that. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. Have a wonderful day. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Now, you've written that younger people today are not as happy as their parents were. That's in part because of social media and things like that makes people isolated.
So it's a complicated thing, but there's basically a climate and weather problem that we find, and I don't mean that literally. The climate of happiness is all about faith and philosophy in life, about family life, about friendship, and about seeing your life as a calling, your work as a calling that is meaningful and serves other people. And all of those have been in a climb. That's the climate of happiness that's been ticking down since about 1990. Then the weather, the hurricanes in happiness have been really threefold. Number one was the advent of social media and screens in everybody's lives in 2008, 2009, 2010, which has just raised absolute havoc in the brains of everybody under 35 years old. That's what my new meaning book is about how we use our brains differently, and it's vacating the parts of our brain that we need to assess questions of meaning. The second is polarization, where baby boomers have tried to conscript young adults into their culture war, particularly on campuses. You should feel aggrieved. You're a victim. Everybody's trying to ruin the world. You need to be angry and afraid. And last but not least, of course, is what happened with the really misbegotten reaction to the coronavirus epidemic, which is to send everybody home, make sure that people don't interact socially, and that was catastrophic for happiness.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalize on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are off to the races after a beat from NVIDIA, a beat from Walmart, and a blowout jobs number. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA's bullish forecast reignites the AI trade and calms bubble fears for now.
And everyone rejoices. Stocks get another boost, not just from that, but a stronger than expected jobs report, with the data reinforcing bets that the Fed will hold next month.
And the world's biggest retailer, Walmart, warns that higher costs are coming, but it's feeling good about business overall.
By the way, I don't know if this necessarily reinforces that the Fed won't cut, because the unemployment number was also higher. So you can take from it what you will. But here's one thing that is having a decisive move, and it is NVIDIA. In the pre-market, it did not disappoint. Shares up 5%. It's expecting sales of about $65 billion in the January quarter and more than $500 billion in revenue in the coming quarters. That outlook made it clear that it still has lots of buyers for its products, soothing fears of an AI bubble. But if lots of people are buying and spending money, wasn't that kind of the problem to begin with?
Yeah, and don't forget that we now have more layoffs to talk about from Verizon. With regards to the potential Fed cut. Walmart boosted its sales outlook for the year as it gains market share from all income groups. Its push into e-commerce and AI helping broaden its reach. You can see the shares up 3 1/3%. It did, though, once again, coming back to the Fed story, warn of inflation. So, there's, on the one hand, you've got more job cuts. On the other hand, you've got inflation warnings.
Yeah, it did, though, also warn, as is the tension in this economy, that lower income consumers were feeling pressure too. By the way, Matt, back to big tech. NVIDIA CEO Jensen Huang spoke exclusively with Bloomberg after yesterday's earnings release. Here's what he had to say about chip demand.
We've done a good job planning for a very, very strong year, and we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Let's bring in the man who did that interview. It's Bloomberg Tech's Ed Ludlow. So Ed, the numbers, Jensen Huang, a soothsayer for this market. But is it enough to allay concerns that this is an industry that is overinvesting and there might be problems to come?
Seems like it based on the other names that are moving this morning as well as NVIDIA, right? So if you look at the Neo Clouds, CoreWeave is an interesting example given what Huang said in that answer, which is that all of the Blackwells they've already shipped are being fully utilized. Whoever has got Blackwell installed in a data center somewhere is running workloads on them to the max. And he kind of hit the trifecta because he said, here's the demand outlook, $65 billion in the fiscal fourth quarter. But as he explained just then, they also hit the supply issue as well and are very confident that this $500 billion figure, which runs through to the end of calendar 2026, could get even bigger if they are able to free up more supply of Blackwell chips and Vera Rubin comes online. The final piece of the trifecta is he also had some fighting talk about customers who looked at other chips, either from other GPU providers or maybe ASICs, Google's TPU, for example, and then kind of came crawling back, and the market loved to hear that.
This is a stock, Ed, as you well know, it's up 1,300% over the past 5 years. So the rise has been meteoric. But, you know, the first thing I thought of when I saw the numbers yesterday is that it's not knocking the cover off the ball the way it used to. You know, beating on a forecast level by only single digits is not the same as it used to be 20, 30, 40% better than the street expected.
Correct. But now we find ourselves in a slightly ironic position where NVIDIA does not formally give guidance. So this $500 billion figure, which is just Blackwell and Rubin and does not include China at all, is probably a bit conservative. You know, the analysts really went for that on the call, and we tried to get Jensen Huang talking about it in the interview. How much bigger could that number get and what's behind it? But if you consider that it was a forecast over a six financial quarters period, 2 of those quarters have gone, they'll basically do $350 billion of sales just on 2 products in the next 12 or 14 months. And that has given the market a lot of confidence. That means that whatever the street had modeled for the balance of 2025 or in the 9 months prior to yesterday, they were really, really behind it. You know, NVIDIA is tracking well ahead of consensus.
All right, Ed, thanks very much for the interview. It was a fantastic job, and I'm looking forward to your program today. Bloomberg Tech's Ed Ludlow, his program kicks off with Caroline Hyde at 11 a.m. The other story, one of the other stories driving markets today is the September jobs report. The shutdown-delayed data showed U.S. jobs growth picked up, beating all estimates. Let's break it down with Michael McKee, Bloomberg's international economics and policy correspondent. So it looks pretty strong from the headline number, Mike.
That depends on whether you think the Fed should cut rates or not. And this doesn't change the Fed's problem of having a really divided group, because total payrolls did come in at 119,000, higher than anticipated, about double what they were anticipated to be. But total payrolls in August revised down to a loss of 4,000 jobs, and I think that's gotten the market's attention, and one reason that stocks are rising. Private payrolls were pretty good. We know that a lot of people fall off in October, the federal payrolls. The unemployment rate, though, went up, and it's only 6 basis points below, rounding up to 4.5%, which would get people's attention. The way we were, this is the way we are now. Initial jobless claims also out today. 220,000 shows that there's not a lot of firing going on at this point. It's still a low firing economy. A little bit of an uptick in continuing claims. Better news from the Philadelphia Fed overall, but their prices paid number rises. So inflation is rising, and we saw that in the Walmart numbers today, the Walmart announcement. So here's what we have ahead of us. October payroll is going to be released with the November payrolls on December 16th, but only the number of jobs created from the establishment survey. The household survey data wasn't collected, no unemployment rate. So the real question now is, if you think that the labor market is getting better because we had an increase in jobs in September, then you think the Fed doesn't need to cut rates. If you think it's getting worse because unemployment went up, then you think we do need to cut rates, and it really isn't going to settle the argument.
I'm guessing it does the same for the Fed then. For those FOMC members who believe that they should cut or shouldn't cut, I'm guessing this just gets us to a place where the hawks continue to weigh out because they've been the loudest.
Yeah, and we know that the October number, even though we won't get it in time, is going to be terrible on the headline basis because of the federal workers falling off. The question is, on the private payroll side, did we see an adequate number or not, and we just won't know. Fed's not going to have any more data. The only thing that they're hoping at this point is maybe BLS can get CPI out, but they're not keeping they're not holding their breath.
Can't they just like delay their decision to wait for the data? Won't it come out shortly after the Fed decision? Why not just knock it back by like a week or two?
That's actually a really
right. Why couldn't they do that?
You know, a lot of
flexibility here.
A lot of people on Wall Street are raising that issue and suggesting that happen, but the Fed is not going to do that. I don't think they're going to pretty much stay on schedule. They all have their own individual schedules, and they're built around what the Fed.
They just want to go home for Christmas. Is that what you're saying?
Well, yeah, like everybody does. So I don't think that's going to happen.
All right, Mike, thank you very much. Bloomberg's Michael McKee after that jobs numbers. And later in this hour, we will be speaking to the Labor Secretary, Lori Chavez DeRemer, after those numbers coming out. Now let's move to the consumer, with Walmart boosting its sales outlook for the full year, but also warned that higher costs from tariffs are coming. We've heard this one before. Bloomberg's managing editor for global business, Shelley Banjo, joins us now. And Shelley, maybe that's why initially Walmart sold off. Up now more than 3% in the pre-market. What was your takeaway from what we heard?
Yeah, I think that stock traded down initially because the raise wasn't as high as people were expecting. Walmart has been known for the last forever, but definitely over the last few quarters to sort of the beat and raise. And so they didn't feel as, confident as many investors were happening. Then you saw the call happening. You saw a lot of positive words like positive, encouraging, so far so good language, and you saw that stock tick right back up.
What do we hear from Walmart about inflation? Because it's clear that not all companies have passed on tariff costs to consumers, but they're starting to do it more and more.
Yeah, so Walmart said we took a balanced approach. We absorbed some of the costs and we passed along some of the other costs, especially in things like, goods that, non-grocery goods. So, games, computers, things like that. And so across the board, they saw a 1% increase in prices across the board for them. But they're saying grocery prices are starting to settle a little bit, not everywhere. Beef is still very high, but egg prices, things like that coming down a little bit.
All right, Shelley, thank you very much. That's Bloomberg's Shelley Banjo. And of course, there was the news too that Walmart is going to be moving to the NASDAQ because it's now a tech-focused company. And just bringing around to the news at the top of the hour, Matt, with Verizon laying off 13,000 workers. In that, they also talked about some of AI making a difference in letting go some of their workers.
Yeah, well, I mean, that's going to be continue also on a one hand, on the other hand issue, right? Because it's replacing jobs, but also should be boosting productivity. So we'll see how well that works at Verizon.
Yeah, but is it just an excuse? It sounds better than to be like, we just want to lay off people because we want to have better margins.
Right before Christmas.
Yeah,
we did see a huge spike in mass layoffs in October, so I'm definitely keeping my eye on that story. In terms of what's going on with futures, though, the market likes this. Everything is up. In terms of risk assets, you have gains on equity index futures right now. S&P futures up 1.5%, NASDAQ futures up 2%, but we also see a rally in bonds. You see gains in crude. You see gains in gold. Bitcoin is up as well, so...
Good day to be long everything.
Yeah.
Some of the other movers on our radar. Okay, not everything. It's a bad day to be long. Bath & Body Works, they cut their full-year outlook due to weaker consumer sentiment and the expected impact of tariffs. The CEO also went on the call and said, it's not my fault. It's the prior CEO who had a super bad strategy.
What are the impact of tariffs on bath bombs?
I don't know. They have other stuff besides bath bombs.
Okay, I haven't been there in 25 years. Abbott will buy color guard maker Exact Sciences for about $21 billion, the biggest deal of the year in the global health sector, and it doesn't come on a Monday.
It's fancy that. It is a deals day today. Anyway, Palo Alto Networks, by the way, they also announced a deal on this decidedly not Monday. The shares are down. They had earnings. They did boost their forecast, but also announced a $3 billion deal to acquire Chronosphere. And again, Matt, as we mentioned, there's Verizon shares too.
Right. The Verizon layoffs, 13,000 in the announcement. It hopes to invest more in products that attract more customers. That makes a lot of sense, I would say, for a running operation. Verizon shares down 1/3 of 1%.
All right, coming up on the show, BNP analyst David O'Connor says NVIDIA remains in a strong position for megatrends in generative AI and autonomous cars. He's going to join the show next on his breakdown of NVIDIA earnings. That's next on Bloomberg Open Interest.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
I just wondered if any of you had a perspective of the reason to, put some of that capital into women's sports.
It's going to create you the fastest return. You will have so much success. If you look at the growth metrics of women's football, selfishly, in this country at the moment, it's phenomenal. We are the fastest growing sport on the planet. Our participation is up in this country. The interest that is around women's football is at a real, to your point, we're at a real moment in time to be able to capitalise on it. And if I was an investor looking to come into football in this country at the moment, I'd certainly be considering women's, because I don't have to invest an astronomical amount to become the best in the world, to really be put on the global stage, to be winning Champions League. Whereas if I wanted to do that in men's football in Europe, that's going to cost me a lot of money.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Getting out of high interest, look what's making headlines around the world. President Trump will meet with New York City Mayor-elect Zoran Mamdani at the White House tomorrow. Mamdani plans to push for help on housing and cost of living issues, while Trump has warned he'll pull billions in federal funds over Mamdani's tax and spend agenda. The face-off between 2 political opposites is shaping up as an early test of how Washington and the nation's largest city will coexist. Although they do have a lot, actually, in common. Blue Owl Capital scrapped plans to merge 2 private credit funds after investors balked at potential losses. The reversal comes as shares hit their lowest since 2023, with co-founder Craig Packer blaming, quote, negative articles for the slide. The move spotlights rising pressure across the $1.7 trillion private credit market as redemptions mount and scrutiny grows over risky lending. Blue Owl now says it's exploring ways to give investors liquidity, including possible asset sales or a public listing of its non-traded BDC, the one that kind of caused the problems in the first place. Short seller Carson Block says now is not the time to bet against big U.S. tech like NVIDIA, despite growing warnings of an AI bubble. He joined Bloomberg Television earlier.
If you're out there trying to short NVIDIA or any of these big tech names, you're not going to be in business very long. So there are, when I look at AI, you have all these AI adjacent companies, you have these AI player or AI pretenders. That's where you would want to look to short. However, so long as the leaders such as NVIDIA are still going up and to the right, I think that would be a very dangerous trade.
NVIDIA's outlook suggests that its $500 billion revenue expectations may be bigger than expected. CEO Jensen Huang told Bloomberg how its Blackwell chip is driving growth.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
My first reaction to that interview, what happened to his leather jacket? I guess he had the suit and tie to meet the president. Joining us now is BNP Paribas equity analyst David O'Connor, who has an outperform rating on NVIDIA and joins us now. David, great to see you. Thanks for joining in studio.
Thanks for having me.
So essentially, okay, NVIDIA reveals that big tech was spending a lot on AI in the third quarter. It's nothing new and it's nothing surprising. Why is that enough to calm market fears?
Yeah, you're absolutely correct. Solid numbers, but that was to be expected. Single-digit beats. I mean, no one's running out and buying stocks when you're just beating by single digits. I think what's the most important thing was the messaging around 2026 here. And the company came out and gave a very strong demand signal on 2026, talked about essentially being sold out on GPUs, supply constrained, and also within that 500 trillion you mentioned, you can back out this year, and it implies around $320, $350 billion for the data center business for next year. So very strong growth forecast, again, for next year. And we needed to hear that messaging given the concerns around the AI CapEx bubble that has kind of led to a correction in the last couple of weeks.
Well, Jensen delivered in terms of the positivity that was needed, both on demand and on supply. Are we past peak GPU pricing power?
I think not yet. While the supply chain is still constrained and demand ahead of supply, they still have pricing power in their pocket, and also on their roadmap, once they can deliver better performance per watt going forwards, that kind of leads them to better pricing. So while you're constrained, I would say better pricing is set to continue. So better units from bigger supply chain, and also better content due to better, more performant chips.
So for now, we can continue to rally and the bubble talk concerns get pushed to the side. But David, does talking about a bubble miss the point? Is it more about the financial health of these AI labs, of Anthropic, of Open Interest? Rather, Open Interest is here. We're not spending on Open AI. We're not spending on data centers as far as I know. But Anthropic, all of them to continue to raise these giant amount of fundings to push into that spending. Is that not the real concern? Do we not need to address that head on? And what happens if they can't keep raising huge trillions, numbers of money to continue to build out AI infrastructure?
Yeah, look, essentially there's 3 questions we keep getting from investors right now around AI names. Number one is, are we in the AI infrastructure bubble? Number 2, who's going to fund this, to your point? And number 3, AI monetization, like show me the money, who's making money out of this? That's front and foremost for investors at the moment. And I think last night we got some answers, or certainly NVIDIA tried to kind of address those concerns. Now they don't go away, but certainly kind of eased concerns from investors. And I think, on the first point, are we in an AI infrastructure bubble? I would say we are in an AI news flow bubble right now. Maybe not quite an infrastructure bubble. There certainly is a bit of a disconnect between the two, because essentially, we're most constrained here on power availability. That is the biggest headache for CSPs, biggest headache for NVIDIA and their customers.
Wait, is power the biggest constraint or funding? I mean, if
right now power is the
Altman
biggest.
wants to spend 1.4 trillion, but he only has 13 billion in revenue, where does he get the other, 1.39 trillion?
No, that's a good point, Matt. And but you have to look over what time frame is that, right? I mean, we're all cognizant of the fact that, data center number 2 doesn't get built until data center number 1 gets kind of filled up, essentially. So it will take time. So don't read too much into that 1 trillion. I mean, that's where we're going, right? That's a kind of aspirational. But in again, going back to kind of the reality, that disconnect between what the news flow would suggest and what actually can be rolled out in terms of standing up new data center capacity, it all takes time. And that's important here as well, because it gives us maybe more time to answer point 3, which is the AI monetization.
Yeah, like who's actually who right now, that's not Microsoft, or other big tech companies, actually making real money on this?
Yeah. I mean, that's front and foremost for investors. I would say, we started to see kind of a split within AI into kind of previously with the accelerated kind of AI. Now we're moving into a bit more generative AI, and then next is kind of agentic AI. On the first point, there's already monetization, there's already ROI on that. You can see hyperscalers, for instance, social media companies, better click-through rates, better market share, more screen time for users. So that is the ROI right there.
Is that enough to fill the gap should funding markets seize up, or at least become more complicated? You're already starting to see some of the fears. Oracle CDS spreads have started to widen out, doubling just over in the past month. If that funding market disappears, do these hyperscalers have the ability to get that monetization to replace it?
Well, I think on the second 2 points on generative AI and agentic AI, we haven't seen much in terms of monetization of those two yet. So the funding that has been done already by CSP has justified the kind of ROI that we've seen from essentially recommender engines. But the funding that's kind of coming next year and beyond that, we really need to see monetization on generative AI and agentic AI. And that is where there's a big question mark and not clear exactly what those business models will look like and how much revenue can be generated off that.
Well, we appreciate you holding our hands through this fog. David, great to have you here. Great to get your intel and your take. BNP Paribas equity analyst David O'Connor talking to us about NVIDIA and really the broader AI bubble debate. Coming up next hour, we'll discuss AI infrastructure and energy with Stonepeak's Mike Dorrell, who runs the largest privately owned infrastructure investment firm. This is Bloomberg Open Interest.
Coming to you live from Kuala Lumpur, the whole world is here.
The APEC Leaders Summit bringing together heads of states of 21 APEC economies.
The White House is trying to use the stops to gain additional leverage.
This big deal with a number of the biggest companies in South Korea.
That's a big number.
Deals can be done.
Trust Bloomberg for on-the-ground coverage.
Korea is not Japan.
Up-to-the-minute reporting.
In this latest salvo of this trade war.
What a visual.
And the analysis you need.
China's not going anywhere, nor are we.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Check right now on futures ahead of the opening bell after an NVIDIA beat, a Walmart beat, and a jobs beat. We have gains of 1.5% on S&P futures, more than 2% on the NASDAQ. So less than 4 minutes to go until the opening bell rings. Rayanne Mitrione of the Callan family office says NVIDIA earnings reinforced her optimistic view, and she joins us next.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know. What he doing? Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
We are moments away from the start of trading on a very bullish day for risk assets. You can see futures up more than 1.5%. On the NASDAQ, a 2% gain. The small caps gaining 1.5% as well. We've got kind of a SPAC attack here on the New York Stock Exchange. Viking Acquisition Corp ringing the bell, and down at the NASDAQ Central Bank Company, which is an very old company, I think 129 years old, but they also raised over $300 million in a stock sale. Danny, we're watching the big one.
Yeah,
today.
It's kind of like the only thing we're watching, maybe jobs too, but I mean, it's the stock of NVIDIA helping to lift the overall market here at the open, up 4.5%, and it didn't disappoint. Sales of $65 billion in the January quarter, more than $500 billion in revenue in the coming quarters, and that outlook made it clear that it still has lots of buyers for its products, soothing fears, at least for now, Matt, of an AI bubble.
Yeah, we're also watching Walmart boosting its sales outlook for the year as it gains market share from all income groups. I was going to say it's not an AI company, but Walmart's push into e-commerce and AI, those pushes are helping broaden its reach. It did warn of higher costs, concerns about inflation then. I wouldn't say front and center, but still existent there at Walmart. And speaking of macro, let's turn back to this morning's jobs data. Jobs growth accelerated in September, showing signs of a stabilizing labor market before the government shutdown. Joining us to discuss, we are pleased to say, is the U.S. Labor Secretary, Lori Chavez-DeRemer. Ms. Secretary, thank you so much for your time this morning. Let me first ask you about the headline numbers. It was a blowout. We were only expecting 51,000 in our survey, and far more than double that is what we got. How strong is this economy?
Well, 119,000 new jobs. I think that is a solid report for the American people and for the workforce. We have seen over and over again that we want to have these gains, and it's those investments by this administration and this president, I think, that's what you're seeing come online. So this was a solid report for the September numbers. We'll have to see how November numbers come out in mid-December, but I think that this is good for the American people. We know that more people are wanting to work, and they're actively seeking those jobs. And so it is my responsibility to make sure that we have that skilled workforce. And so I think that you're going to see consumer confidence. And again, with prices coming down, energy prices, gas prices, we're seeing, real wages go up. Blue collar wages have gone up over the last 60 years. And I think that that's the exciting part of this, is that we're seeing people who are wanting to get on the ground, have the skills that they need, and get in the workforce.
Secretary Travis DeRemer, you might sound very similar to those who don't want this Fed to cut, that this is a healthy labor market. The president, though, even jokingly yesterday was saying Scott Bessent would be fired had he not been able to get this Fed to cut. So in your view of this labor market, is it strong enough that it doesn't need assistance from the Fed?
Well, I think the president has been pretty clear on this issue. We did see the 2 rate cuts. I think the Fed does need to go ahead and cut again. You know, when I travel around the country talking to businesses, which I have hit 36 out of 50 states on my 50-state tour before, you know, the Democratic shutdown happened, those business owners are wanting to borrow more money at a cheaper rate to invest in their workforce. That is what they're asking. And so I think another rate cut is exactly what we need to really grow this workforce. I mean, we see GDP is up 4.2%. I think that that's positive growth, and we want to see more private sector jobs come online. Out of the 119,000 jobs, we saw 97,000 of those jobs have been in the private sector, which is way different than the Biden administration when we saw they were all government jobs. So I think we're on the right track.
It does seem like inflation is a concern. We heard that from Walmart today, that it's got to pass through these tariff costs somehow. Are you not worried that we have a rise in inflation that hits lower income workers especially hard if we continue to cut rates?
Well, I think what happens when you're talking to the American families every day, they want affordability. So they look for ways in order to provide for their families. As a former congresswoman and as a former mayor, I know how important that is each and every day. What we want to do is grow this workforce so that they can have more money in their own pockets. These policies that came forward with the working family tax cut are going to start to hit. No tax on tips, no tax on overtime, no tax on Social Security. I think that that's what people want to see, is more of their hard-earned dollars in their own pockets for their own choices. We've seen, again, these real wages go up. Almost $700, and I think that that's going to be key. Way different than the Biden administration, you know, when wages were down almost $3,000, and so, you know, to have $700 more in a family's pocket, that matters to the American people.
Don't we lose some of those dollars if we continue to see 3% plus inflation on top of the inflation that we saw during the Biden administration? Prices continue to climb for everything from food to housing. Isn't that a concern if we continue to cut rates, that we throw more fuel on that inflation fire?
Well, actually, food prices have been down. Energy prices have been down. We've heard over and over again, our Thanksgiving meal is going to be less than it was under the Biden administration. So while we have seen oftentimes that, you know, some prices have gone up, whether it's in beef and some of the other sectors, we have seen housing. We certainly want to address the housing costs because people want to be able to afford their homes. I think the Fed rate cutting will give us exactly that. So I'm standing behind the president on this. I think we need another rate cut. It's been a little bit,
Secretary, again,
too long down that runway, but we need to cut that rate.
Part of what you're saying, you want to cut the rate because you want more private sector hiring. We hear you loud and clear on that, but we have to say this latest jobs report, government jobs grew. Do you want to see that reverse? Why is it growing when this is a government that's been trying to cut back on what you say was a Biden administration that only supported the economy through hiring via the government?
The government jobs haven't grown. The only portion of government jobs that has grown in this last report that is showing have been at the state and local level, not at the federal level. Over 2 million private sector jobs have come online, and that has been for native born. We are seeing massive amounts of the private sector. Out of these 119,000 jobs, 97,000 of those were in the private sector. We're going to do more and more with the private sector to grow this economy, opposite than what the Biden administration did, where they were all federal jobs. That isn't what the mandate was when they elected President Trump. It was to grow the private sector economy, and that is exactly what's happening.
One of the other things the president is talking about is sending middle to lower income Americans rebate checks from the tariffs, which have been behind a lot of the inflation that we've seen, so giving some of that money back to those earning a little bit less. Do you support that, you know, $2,000 check push?
Well, certainly the president has been in consultation with his economic team. I think this is one way to give back to the American people. people work hard for their money, and when they provide that to the government, they have a contract that's going to be spent wisely. These dollars, though, are coming in from tariffs to give back to the American people, and I think that that is a good plan that the president has set forth. He will continue in consultation with his economic team, and what he determines. He's a man of the people. I say this, you see on my building, I hang his banner because he is the president of the working family. He is the president for the men and women of this country. Every decision I make at the Department of Labor is through the lens of the men and women who have built this country, and they deserve to be taken care of, and that's exactly what the president has been doing.
Ms. Secretary, before we let you go, just quickly, I know we're looking for a little bit of guidance on some of the tax code changes, specifically who's going to be exempted from overtime tax or who's going to get that overtime tax exemption. Do you have any clarity on that, or at least a timeline of when we can expect the Labor Department to come out with those clarifications?
Well, I'll be working with Treasury Secretary and certainly through the Department of Labor. I would imagine that with those policies in place from the working family tax cut, that we'll start to see stuff in the first and second quarter. But any specifics I don't have on an actual release date. But again, 119,000 jobs, I think, is a solid report. I'll be looking forward to see what the numbers are for November, which will be released in mid-December. And I know the economists all got it wrong on this, and so this is a good for the American people that we saw a solid report of 119,000 jobs.
Ms. Secretary, thank you so much for joining us this morning. That is the Labor Secretary, Lori Chavez de Remer, and of course, tomorrow, don't miss another important conversation, Fed Governor Stephen Myron on Bloomberg Surveillance. That will happen at 8:30 a.m. Wall Street time. So those jobs numbers helping to fuel a rally on Wall Street along with NVIDIA. Joining us now around the desk is Rayanne Mitrione, market strategist and founding partner at Cowen Family Office. Thank you so much for joining us.
Great to be here
This morning. So certainly the Trump administration is saying this is a really strong jobs number. It is good. How do you look at it when the payrolls figure on the headline basis is really strong, but unemployment moves to 4.4%? Is this as positive for risk assets as is being interpreted this morning?
It's certainly giving a little bit of mixed messaging, and we have to take into account that this is a little bit of dated data. So it's definitely a positive to see these numbers. I mean, much higher than what was expected. Unemployment did tick up. It's good for the market to see that the economy is still strong, that the labor market may not be as weak as expected, but also the impact that has on potential for future rate cuts, that may not be as positive for what the market was hoping for.
This could be, I mean, it could come either way, right? Good news can be bad news, or good news as we know, right? Because we want the economy to grow, but we also want rate cuts in this market. One thing that cannot go either way is the AI CapEx story. It has to continue fueling the growth that's priced in. Do you think NVIDIA showed yesterday that it is?
Absolutely. I mean, the market has been having some concerns there, right? We've seen this recent sell-off, and expectations were really high for what NVIDIA was going to report yesterday, and they managed to really exceed on revenues, on earnings, increasing their forward guidance. It's everything that we wanted to see, we really saw. And we've seen that too with the other tech companies, with seeing Google, Meta, Microsoft, Amazon, all increasing their plans for CapEx spending. That's going to be an aggregate of $380 billion this year, $500 billion next year. So really, we've gotten that support that the demand is still there, that this AI story is still intact, and should continue to be a tailwind for the market.
I have to ask, if you were to change your mind and say, okay, I'm a little bit worried about this, maybe it's gotten frothy, how would you even actualize that view? If you do start to get worried, like if you bet against these companies, that hurts. If you stand on the sidelines, that also hurts. What do you even do? Yeah, exactly.
And you have seen a lot of that. There's still a lot of cash on the sidelines, and I think a lot of investors who have missed out on this, thinking it had already run so much, and then it's continued to run. So you want to have that exposure. I mean, these companies make up such a big part of the index, and if you're not invested there, you really have been pretty far behind. But you do want to play both sides in a way. You want to hedge because, I mean, we saw that recent sell-off. So you want to have some value. You want to have some international. You want to have exposures in other asset classes as well, whether it's fixed income or alternatives. And having a little bit of cash for expenses is a good thing to have on hand too. But just making sure diversification is part of your strategy.
You know, we can add now to this AI bubble debate the private credit crack debate, right? The Blue Owl saga has gotten pretty dramatic. Which private strategies, which alts are good right now to get into without doubling up on your AI bet? Because it turns out a lot of it really is a data center play.
Right, and you want to have, if you're investing in private markets, you want to look for things that are a little different. I mean, and historically, you have gotten a 3 to 5% premium over public markets for having those investments. And 87% of companies with revenues over 100 billion are in the private markets now. And that's, you're missing out on the opportunity set if you're not invested there. So you want to have some private equity, you want to have some private credit, you might want some real estate exposure, but it's really important who you invest with, because the top tier managers in those markets, there's a much bigger divergence in returns between the top tier and bottom tier in private markets versus public markets. So you really want to be careful about where you're investing.
It does just feel like this extreme moment of concentration. To Matt's point, infrastructure used to be this asset class where you'd say, like, okay, this is great, it's giving you a diversified source of income. But the diversification now looks like AI. All the things are so related to that sector. How difficult does it become to just make sure that you haven't loaded up the boat on AI?
Well, and you want to think about that, right? That your equity exposure does include any private equity and any AI-related investments there. And there are differences. I mean, a lot of the AI exposures in the public markets are big mega cap tech companies now, but you have a lot of these breakouts in venture capital companies that could be, you know, the next NVIDIA potentially down the road. And so having some investments there and making some, that's, you know, you want to have some exposure in the private related to AI as well, because it is differentiated from what we're getting in the public markets.
Rayanne, great having you on. Thanks so much for joining us this morning. Rayanne Mitrione there of the Callan family office. Coming up, NVIDIA's $500 billion revenue forecast for coming quarters doesn't even factor in the potential for added business in China. This is the second quarter in a row that they say that. More from our exclusive interview with Jensen Huang next. This is Bloomberg Open Interest.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Thanks to Jensen Huang and thanks to payrolls data, much delayed payrolls data, maybe even stale and mixed, we are off to the races this morning. The NASDAQ outperforms up 2% about 15 minutes into your trading day with the S&P up 1.8%. Some of the top calls this morning, the analyst action that we are watching. Morgan Stanley, they have upgraded NASDAQ to overweight, saying its business transformation is gaining steam as capital markets recover. They're looking at an attractive stock, they say, after underperformance this year. And hey, they now have Walmart over at the NASDAQ, so that's good for them. Shares up 3.5%. Morgan Stanley, they upgrade Apollo to a buy, calling it a top play on private credit among improving macro conditions. The analysts there say that fading rate headwinds and stronger risk appetite should help re-accelerate growth. And finally, NVIDIA's blowout forecast is reigniting the AI trade. Everywhere you look, analysts say that demand for Blackwell chips remains red hot. JP Morgan, they say NVIDIA is clearly gearing up for significant upside in the coming quarter. Shares up 4.2%, erasing the past 7 days of declines. Now on NVIDIA, the CEO, Jensen Huang, speak exclusively with Bloomberg Tech's Ed Ludlow.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world, but we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the U.S. Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the U.S. has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the U.S. government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
That was NVIDIA CEO Jensen Huang with Bloomberg Tech's Ed Ludlow. Check out the full interview on your terminal at Bloomberg.com. You can go to YouTube. You can go to Bloomberg Podcasts. You can see it pretty much everywhere, and I'm sure they'll show it a little bit in the next program, Bloomberg Tech, because Ed Ludlow anchors that show that's coming up at 11. Still ahead, we have more on this push in NVIDIA, this push in equities and risk assets. This is Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on the rally we have on our hands in stocks. We're seeing gains of almost 2% on the S&P. Right now up to 67.56, so clawing back a lot of the losses that we've seen in 4 of the last 5 sessions. The NASDAQ up more than 2% on the NVIDIA beat. We had not only that, but a Walmart beat. We had a jobs beat. And you can see really the risk rally pretty much everywhere. The dollar is down a bit, but really little change, and it hasn't been weak to begin with. NVIDIA is up another 4%, 5% today. CoreWeave also gaining 7.3%. You heard Jensen Huang saying their GPUs are sold out, and the ones in the cloud as well. Walmart beat as well, also raised its forecast, so Walmart is up 6%. Bath and Body Works, on the other hand, I guess you're not going in there for your bath bombs these days, or if you are, they come from a foreign country, so tariffs hurt somehow. Warner Brothers Discovery, a gain of 2.7%, and Netflix down a little bit, so you can see a mix in the entertainment sector, and we're going to continue to talk about what's going on there. Coming up in the next hour, RBC's Amy Wu Silverman on the back and forth over an AI bubble. Plus, Kathy Bostjancic talks payrolls and the Fed and the CEO of the largest privately owned infrastructure investment firm, which now we say AI investment firm, will join us from Stone Peak. This is Bloomberg Open Interest.
Our North Star is do the work. Keep your head down and do the work. There's always going to be speculation in our business. We're in a massive time of disruption, and everyone's going to constantly be saying, what's going to happen next? Who's going to be there? You can't focus on that. You have to focus on the work. And I think what's so exciting about Warner Brothers right now, even though it's an over 100-year-old company, we all approach it with like startup energy. So it's actually a really great time to be making movies.
Our teams are used to it because it's
this company's been bought and sold.
Right.
Yeah.
Some of the inherited Warner people, understand this feeling, but when we started to work for David, one of his edicts to us is, challenge all assumptions. The business has to transform. It has to adapt to the moment we're in. And we talked about Moneyball a lot, because Billy Beane in that movie and in the book was all about adapt or die. The company right now has been battle tested and has been challenging assumptions for 2 years. As far as the day-to-day, we're heading for that split. That's the course that David has charted. And people trust David because this whole slate strategy, this whole diversified slate, the label strategy, getting DC up on its feet, getting New Line pumping, getting animation, which comes online for us next year, pumping, we still think it's the winning strategy.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
CBS News on the Hour, sponsored by Eggland's Best.
I'm Deborah Rodriguez. Stocks are off and running after solid numbers from a chip maker, a retail giant, and a delayed jobs report.
The Labor Department says employers added 119,000 jobs in September, more than twice as many as economists had predicted. The jobless rate inched up from 4.3 to 4.4%.
And that's the highest level in nearly 4 years.
Bank rate analyst Mark Hamrick says the job market is still cooling.
We're barely having enough jobs creation to keep the unemployment rate from going substantially higher.
He says the Fed has a tough call to make on whether to cut interest rates again next month. Michael Wallace, CBS News.
Walmart reported strong third-quarter earnings today. Chip maker NVIDIA, a robust quarter as well. Right now, the Dow is up 650 points. A senior White House official confirms to CBS News President Trump has approved a multi-point plan to end the war in Ukraine. But there's no sign Ukraine is willing to go along. The BBC's Jonathan Beale from Kyiv.
Essentially, some of the things in that proposal, those 28-point peace plan, include things that have been clearly rejected by President Zelensky in the past, like giving up more territory to Russia, cutting the size of his own military, not allowing foreign troops. These are things that have been rejected.
Florida Congresswoman Sheila Sher-Phyllis McCormick's been indicted for allegedly stealing government money. Here's CBS's Scott McFarland.
A federal grand jury indicted Sher-Phyllis McCormick and several co-defendants Wednesday. Prosecutors allege a healthcare company she ran with her brother was overpaid $5 million in FEMA funds for a vaccination staffing contract. They say the company received that money in July 2021, and Sher-Phyllis McCormick used it for her campaign.
New York City is dealing with the explosive growth of a movement called 3D2A. The NYPD's Courtney Nyland says members are using 3D printers to make their own ghost guns.
It seems to be a place that attracts people with extreme views, whether it be far left, whether it be far right, whether it be completely anti-government.
He says a lot of people are ordering parts kits online with no registration information. A memorial service gets underway at Washington's National Cathedral next hour for a former vice president.
I, Richard Bruce Cheney, do solemnly swear.
Cheney's old boss, President George W. Bush, will deliver a eulogy. Former President Biden will be there, too. Neither former Presidents Clinton or Obama will attend. Ditto for President Trump, who was not a Cheney fan. He did not issue a statement after Cheney's death earlier this month at the age of 84. Mr. Trump did order flags lowered to half staff as required by law. NASDAQ up 557. This is CBS News. U.S. News & World Report did some research on the best cars for your buck.
Honda's tops in cars, Ram leads in trucks, and Hyundai has the best SUVs. EV leader is Ford. Editor John Vinson says these vehicles have what buyers are looking for.
They want a reliable car, they want a car that they can afford, and they want a safe car.
While Genesis was the top luxury brand, Lexus was tops for certified used cars. Jeff Gilbert, CBS News, Los Angeles.
Hanging out at the airport waiting for your plane? It'll cost you more at some than at others. The website Casinos Canada tallied cost at 50 of the busiest airports in North America. The most expensive for a beer, one night of parking, and a hotel room, New York's LaGuardia, where they'll set you back $381. The cheapest, Tijuana, Mexico, with that beer, hotel, and parking at $105. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. Head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. It is Jobs Day, kind of a mixed bag. We got some economic data today, so we'll break that down. We've also got a lot of earnings out there. Our good friends at NVIDIA put up some solid numbers last night, and the market certainly likes that. So we're going to break down all the earnings and all the economic data over the next 2 hours. Scarlett Fu and Paul Sweeney with you here on the Bloomberg Intelligence program. We're going to start off with Jen Bartashis. She's in Bloomberg Intelligence. She covers all the retailers. Walmart came out what I thought were some really good numbers, and they had some pretty upbeat outlooks. So we'll break down the Walmart numbers. We're going to play back an interview from last evening. Ed Ludlow, Bloomberg Television, spoke with Jensen Huang, the CEO of NVIDIA, certainly the company of the day out there. We'll get his comments this morning. Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. She's going to be in our studio, and we're going to get her thoughts on this economic data and what it may mean for this Federal Reserve as it gets ready to meet in December 10th. So a lot going on, and Scarlett Fu and Paul Sweeney along with you, along with Lisa Mateo and a Bloomberg Business Flash. Lisa.
You got in this Bloomberg Business Flash brought to you by IBKR. Financial advisors, you can switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. We've got a nice lift to the markets. That's after a strong revenue forecast from NVIDIA, expecting sales of about $65 billion in the January quarter. Now, that said, Jensen Huang said he's not currently projecting any sales from AI chips in China.
NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Now, NVIDIA shares, they are up nearly 4%. This morning, Walmart opened its books. It increased its outlook for sales in the full year. Big part of it, e-commerce. It also announced it's transferring its stock exchange listing to NASDAQ from the New York Stock Exchange. Walmart shares are up about 6%. And Bath & Body Works cut its full year outlook. Shares taking a hit, down 24%. So over to the NASDAQ, up 2%, 485 points. We have the S&P 500 rising more than 1.5%. And the Dow up more than 1%, 580 points. The two-year yield, 3.56%. That's down 2 basis points. The yield on the 10-year, 4.11%, and that's down 3 basis points. And yes, it's jobs Thursday. Sounds weird. Non-farm payrolls increased 119,000 after declining in the month prior. The unemployment rate ticked up to 4.4%. Hourly earnings rose 0.2% from the prior month. And now news on the housing market. Existing home sales month over month for October. Expectation was for an increase of 0.5%. Came in with an increase of 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. As Lisa just reported, stocks are moving decidedly higher here. Let's get a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
We have to look at NVIDIA. Shares are edging higher by almost 4%. They delivered a surprisingly strong revenue forecast and really just pushed back on any idea that the AI industry may be in a bubble. So this eased a lot of concerns, and NVIDIA has really become just a barometer of AI health. I mean, I think both of them have become synonymous over time. So sales is expected to be about $65 billion in the January quarter. That's $3 billion higher than analysts expected. And NVIDIA also said that they have around $500 billion revenue bonanza in the coming quarters, which is also even bigger than expected. The CFO went further on Wednesday and said that it might even eclipse that target. And of course, there are also maybe headwinds in the horizon because they said that China is still going to be a problem. They have largely locked NVIDIA out of their massive market, and Jensen Huang said that our forecast for China is zero.
Right, but at least now they know that that's the baseline, and there wasn't confusion about whether it's included or not.
There's certainty in the zero.
Exactly. Next stock.
Next up is kind of sad, Bath & Body Works. It's down by 24%. This is the most since March 2020, according to SINS, S-I-N-S, and the lowest since July 2020. The ticker is BBWI. So they cut their full year outlook, and the company said that weak consumer sentiment is hurting shoppers' willingness to spend. And of course, again, the tariff, which I haven't heard in a while, which is impacting them. So the company announced a turnaround plan to refocus some of their home products retailers on its core business. So previously, their strategy was more aligned to drive incremental growth, but the new transformation plan is projected to have around $250 million in cost savings. So it lacks specifics, but one thing that they say is they will exit some categories like men's grooming and hair care. And I recently went to a store actually near my home.
Men's grooming stuff there?
Yes, and I was shocked because
Okay.
I was buying some little gifts because I'm going back to Asia tomorrow. And
Of course not.
they have
I go to Cleveland. You go to the Philippines.
They have men's stuff, and I don't know, that was just new to me. Because remember when I was in college or high school, which was just a year ago, the perfumes were big.
College was a year ago?
High school was a year ago.
They were big on the perfumes. Do you remember that, Scarlett? Everyone was giving each other the gifts in a plastic bottle, no?
Yes, that's right.
Right?
Yeah.
Yeah.
Okay.
Anyway.
I think sometimes it's a little too fragrant. It's like an overload on the senses.
Yeah,
you know?
yeah, exactly.
All right. Verizon.
Verizon ticker is VZ. Shares are down by 0.8%. Again, it's a company-wide layoff that they announced. This will shrink the company by as much as 20% of the non-union workforce. So this is worth noting because Verizon is the largest U.S. carrier in the U.S., and they gave notice that they will begin cutting 13,000 employees, and it extends to every level: business, retail workers, customer service representatives, and senior executives. So this was announced by CEO Dan Schulman, who was lead independent director at Verizon, and he was named the top job last month after two consecutive quarters of subscriber losses and lackluster stock performance. Anyway, he promised a simpler, leaner, and scrappier business, but I can imagine that it must be bad for sentiment. I actually have a friend who works there, and she said that, you know, it feels
tough morale there in
yeah,
that kind of environment. But I'm a Verizon wireless subscriber. Very happy with them.
Oh.
All right, Isabel Lee, thank you so much. We appreciate that. Isabel Lee, cross-asset reporter, Bloomberg News. And you're flying to where tomorrow?
Philippines.
Philippines.
The
How long is
stopover
that flight?
Taiwan. Maybe 15 hours.
Oh, jeez. Good luck.
You lose your mind after 10 hours, so it doesn't make a difference.
You have to watch like 3 movies and take a really long nap.
And then when you wake up, it's still 8 hours to go.
All right, better you than me. I couldn't do that. Isabel Lee, and for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. One of the names, companies that reported numbers was Walmart. Came out with some pretty darn good numbers, and the stock market likes it. Stock is up 5.7% today. It's up about 18% year to date. Let's check in with Jen Bartash. She covers all the retailers for Bloomberg Intelligence. So, Jen, what did you hear from Walmart with their earnings release?
Yeah, Walmart had another good quarter, and I think that it's very easy to attribute a lot of their success to just the value-seeking behavior of consumers in this environment. But I think that would also be overlooking a lot of the investments they've made in things like convenience that is really spurring the e-commerce growth. And that was really a notable takeaway from today's earnings release.
Yeah, that e-commerce aspect helps draw in higher income shoppers. So it's a larger pool of customers that Walmart now has access to. And in our Bloomberg News reporting, we indicate that the digital offerings now include luxury items like pre-owned Chanel bags. I had no idea that that kind of stuff was available on Walmart.com.
Well, Walmart has done a lot to really expand its marketplace, and that includes bringing in items that, will appeal to that higher income consumer. And the tactic behind all of this is that the more people are integrated with e-commerce in going to stores, they become sticky and they become loyal customers. So that when the macroeconomic backdrop fades, it really increases Walmart's ability to hang on to these customers going forward. And that just drives future growth. So it's a really interesting play out of how they're applying that tactic.
Jen, I also want to get your take on Walmart transferring its listing to the NASDAQ. That's going to happen on December 9th. And that, of course, is to reflect its focus on being a tech-forward company. But I'm wondering, how much of this is really just about being included in the NASDAQ 100 and therefore the QQQ ETF?
Oh. Yeah, there's certainly part of that, Scarlett, where, that's probably part of the motivation. I think that there is, obviously there's a perception with regards to being perceived more as a tech company, which Walmart, in all truthfulness, has evolved into a tech company, especially amongst other retailers, by being listed at NASDAQ. Long term, maybe it helps their valuation, just in terms of having that perception of being more aligned with peers. Amazon is listed on NASDAQ. Things like that. So I think that there's a lot of those components together, combined, are really behind the move.
Jen, nobody arguably has a better finger on the pulse of the consumer than Walmart. What are they saying these days?
Actually, they seem relatively optimistic. They talk about, spending holding steady for kind of that middle-income consumer. High-end consumers seem to be spending pretty freely. A little bit of concern about some of the lower-end consumer, but it does seem to be sort of evening out. And so when they were looking forward to the holiday season, which is the most important thing with regards to the retailers that I cover, they seem cautiously optimistic that there will be a pretty good holiday season this year. We do think that people will prioritize spending on kids. That's usually what happens first if they're holding back in other parts of their budget. But all indicators right now seem that we're headed towards a reasonably solid holiday season.
Jen, we tend to look at Walmart as a shortcut for the consumer, but if this strong performance is really more a result of strategy and execution over the longer term, how much of a read does it really provide on the state of consumer spending beyond the fact that Walmart has become this exceptionally well-run tech-forward company? You just look at Target, for instance, which has a lower outlook.
No, it's a good point, Scarlett. I think the thing is that nearly every household has some sort of interaction with Walmart during the course of a year, whether it's in terms of frequency or not. And so Walmart has really evolved their ability to capture data about the customers that are spending in stores, even though they don't have a formal loyalty program. And so they really do have that insight into sort of the motivations behind customers, where they stand. I think one of the interesting things with regards to just focus and discipline, Walmart talked today about apparel sales, and their comparable sales for apparel was up 5% every month of the third quarter. And when you contrast that to Target, who reported yesterday, they're still struggling with some of their discretionary categories. So It seems to be a story of execution and not only the consumer spending where they are.
All right, Jen, thanks so much for getting your comments here. Jen Bartashis, she is Senior Retail, Staples, and Packaged Food Analyst for Bloomberg Intelligence. I've said it before, I'll say it again. When this whole Bloomberg thing is over for me, I'm going to be a greeter at a Walmart.
Do you shop at Walmart?
Yeah.
What do you buy?
Just stuff. They got everything.
I know, it's
But
true.
I don't do the grocery thing by and large. We don't. We
Okay.
haven't done
I
that.
ordered AirPods off of Walmart.com because it was the cheapest price I could find anyway.
Yeah, I know.
I mean, by a huge margin, too.
Yeah, so yeah, that's going to be. I'm a friendly guy. I can be a greeter. Right?
I look forward to saying hi to you.
Outgoing guy. I'll come. Hey, welcome to Walmart. I can do that.
You're going to wear the blue smock then?
Absolutely, no question about it. I'm all in for that. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, it looks like the AI boom may have a little bit more room to run. This is after an upbeat earnings report from NVIDIA. NVIDIA shares up more than 4%. We go to the NASDAQ, up more than 2%, 504 points. The S&P 500 rising more than 1.5%, 113 points. points, and the Dow up nearly 1.5%, 638 points. In the yield space, we have the 2-year 3.57%. That's down 2 basis points. The yield on the 10-year 4.11%, and that's down 2 basis points. Commodities, COMEX gold, it's at $4,086 an ounce. It's up about 0.1%. Brent crude up more than 1% at $64 a barrel. WTI crude $60 a barrel. The Bloomberg Dollar Spot Index is little change. The Japanese yen weakening by 0.4% at 157.79 against the dollar. Over to company news. Verizon, they announced wide-ranging layoffs this morning. It's going to shrink the company by as much as 20% of its non-union workforce. According to this internal message to employees, it'll begin cutting more than 13,000 employees. Its shares right now are down about 0.5%. And Palo Alto Networks, they're going to buy Chronosphere for $3.35 billion to boost its AI-enabled cybersecurity offerings. But the company also delivered disappointing quarterly earnings and guidance, and its shares are down more than 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul, I'm out of breath.
All right, thank you so much, Lisa Mateo. With our Bloomberg Business Flash, it was a lot to go through, so I don't blame you.
She's been just crushing it all day because of all this economic
data. Well, she had to do
data.
the 8:30 a.m. release of economic data, which is like a page and a half on the Bloomberg terminal.
Yep.
Everything flashing all at once. All right, Lisa, go take a break for a moment here while we hone in on NVIDIA, because if you are worried about an AI bubble, some of those fears may have been calmed after NVIDIA reported results. It delivered a strong revenue forecast, projecting sales of about $65 billion in the January quarter. Now, after the earnings beat, NVIDIA's CEO Jensen Huang spoke exclusively with Bloomberg Tech's co-host Ed Ludlow. Huang talked about the company's new Vera Rubin platform and the outlook for demand from China. Take a listen.
Sales are off the charts for Blackwell. And NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells. And we have a bunch of Vera Rubins coming. And so business is very, very strong. But we've planned our supply chain incredibly well. We have the largest supply chain in the world. But we've got a bunch of Blackwells to sell.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start, that's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally.
During the call, the U.S. Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the U.S. has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the U.S. government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
That was NVIDIA's CEO Jensen Huang speaking exclusively with Bloomberg Tech co-host Ed Ludlow yesterday after the company reported results. Big get by Ed Ludlow. Congratulations.
This was a clean number for the investors and the analysts, i.e. there's no China revenue in there to confuse people. So it's a traditional NVIDIA beat and raise is kind of what the folks say in the tech space.
But a beat and raise from the biggest company out there and the one that really embodies the whole AI trade. Let's bring in Matt Stuckey now. He is Chief Portfolio Manager of Equities at Northwestern Mutual Wealth Management to get his take on NVIDIA's results. And clearly it's the outlook that drives NVIDIA here. And it's not just the outlook for this quarter, but the outlook for the coming quarters that soothed investors, perhaps even impressed them. Talk a little bit about the quality of the visibility and the transparency that NVIDIA provides, given the swirl of concerns that have started to crop up over the last couple of weeks.
Good morning, Scarlett. Thanks for having me. Look, I think that's the critical part of kind of what most investors want to hear on the conference call was some confirmation of the remarks that Jensen made a few weeks ago at the Washington GTC keynote, where he talked about $500 billion worth of data center revenue between calendar year 25 and 26. And on the call, you heard the CFO reiterate that forecast. And that was what a lot of investors were looking for. Additionally, they clarified that some of the recently announced deals between Anthropic as well as Humane, that was incremental to that 500 billion. So there is still a case for additional upside to that bullet forecast, which was just given a couple of weeks ago. So, the most important thing for NVIDIA, you talked about, how guidance drives the stock. We agree with that, but also earnings revisions drive the stock. If you put the numbers together, it's not very hard to underwrite a scenario in 2026 from a calendar year perspective of NVIDIA earning, $9 plus per share. And just to put some context on kind of where that number is relative to where we were when we started 2025, we started 2025 in the mid fives in terms of expected earnings. And so earnings have continued to rip higher. And that's why NVIDIA continues to lead the market.
All right, Matt, I think a lot of investors now are becoming comfortable with some of these huge numbers that NVIDIA reports and some of the magnitude of their forecast increases. In terms of some challenges for the company here, how did Jensen Huang characterize the either risk or the opportunity with China? Where do we stand with that?
Well, if you're an investor, I think it's somewhat of a bullish argument that those China revenues that used to be in the business are not in the forecast and could potentially be upside as you think about 2026 and beyond. I think though. China is a really large market as it relates to AI kind of data center and kind of where a lot of the demand is in the global economy, and NVIDIA being shut out from that market is a longer term risk if there were to be some local competition that over time starts to push against NVIDIA's dominance in the space. We're not there yet. We're not even close to being there yet, but certainly it's a lower risk profile for NVIDIA to be in those markets and having the ecosystem develop around their compute infrastructure than it is to be absent that and have local competition grow in the space.
Right, but as Paul said, this was a clean report. There was no China numbers embedded in any of the forecasts. So if there is anything with China, that would just be pure upside. One fact that just kind of blew my mind is that NVIDIA is on course to deliver more annual net income than what Intel and Advanced Micro Devices will report in combined sales. That is just kind of bananas to think about. Matt, there's NVIDIA, and then there's everyone else that's part of the AI trade. And what we've seen recently is Oracle becoming this representative of a way for traders to hedge against or maybe even bet against the AI market and perhaps bubble concerns. We've seen the credit default swaps, which are ways to insure against a potential default rise. Traders have been piling in. The volume has really surged. How do you think about that approach to hedging against AI?
I think it's interesting. Look, semiconductor cycles are just that. They're cycles. This is just a very powerful secular one that we're in right now. At some point, I don't know when. I don't think most investors really know when either. The cycle will end. And this might just be a way to hedge some of that, especially as, we're on year 3 of just this massive compute build out. And it looks like it's going to continue to accelerate into next year and maybe even to 2027.
However, if you're looking for maybe some cheap tail risk hedging, this might be a place to look at it. So some of the neoclouds or areas where, in the case of Oracle, they've taken a lot of leverage to expand rapidly their data center footprint. And so, I think that maybe is a good thing as it relates to investors kind of thinking about, okay, more of a balance of risk as it relates to kind of what we've seen just up and to the right for the last 3 years. But, certainly if you're looking at the fundamentals of NVIDIA, it's difficult to say that, that endpoint is in the near term.
Competitive landscape, Matt, how do you think about NVIDIA's competitive landscape? Scarlett just kind of gave you those numbers that shows how big NVIDIA is relative to some other, what we would consider big companies. What is the competitive landscape?
Well, I mean, just think about the sequential growth in the data center that NVIDIA had in this quarter, more than $10 billion from Q2 to Q3. That's 1.67 times the aggregate total amount of AI semiconductor revenue that Broadcom is expected to deliver in their Q3. And so, they are, more than 8 times the size of their nearest competitor. It's just the question of, it seems to me that, the perception of Google's AI business in the space has moved quite a bit higher just in the last 6 months. And Broadcom is their partner in delivering their AI compute resources. And so, how integrated is NVIDIA going to get with Google over time? We'll have to wait and see. But, I think that's kind of one of the reasons why, the ASIC provider of Broadcom is being thought about as being such a strong competitor to NVIDIA, even though NVIDIA just continues to be dominant in terms of market share.
Matt, we only have about a minute left, but if, let's just say you're one of the odd people who don't actually have exposure to NVIDIA directly and want to, is this still the best way in, given where it is at trading-wise, valuation-wise?
Look, I mean, I think in the near term, markets really do respond to earnings revisions, and the relative revision chart of NVIDIA versus the rest of technology versus the rest of the market, as well as what you see from the likes of Broadcom, which the fundamental story continues to be strong. These earnings revisions are continuing to be biased higher, at least for the next few quarters. And so if you have a momentum type of mentality as an investor, that's where you look for that type of exposure. From a relative valuation perspective, things are higher though, which kind of offsets some of that fundamental momentum. But, at the same time, you're looking for higher margin businesses, higher quality businesses. It's really kind of in this space.
All right, good stuff. Matt, really appreciate your joining us today. Matt Stuckey, Chief Portfolio Manager of Equities over at Northwestern Mutual Wealth Management on NVIDIA. And we can see the shares climbing more than 4% right now to $194. From New York, this is Bloomberg Intelligence on Bloomberg Radio. Coming up, Danielle DiMartino Booth joins us next.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, a tech surge leading equities higher with the NASDAQ up more than 2.5%, 567 points. The S&P 500 rising nearly 2%, 125 points. And the Dow up about 1.5%, 711 points. To the two-year yield, 3.57%. That's down 1 basis point. The yield on the 10-year, 4.11%, and that's down about 2 basis points. Over to currencies, we have the Bloomberg Dollar Spot Index, little change. The Japanese yen weakening by about 0.4% at 157.84 against the dollar. The British pound stronger by 0.2% at 130.88 against the dollar. Bitcoin right now, it is down about 0.2%, but just above 90,000. In company news, Novartis, it boosted its midterm sales targets for 2 key cancer drugs. Then we go to BNP Paribas. It announced a new buyback, plans to reach a target for capital strength early. And Moderna, it said it secured a loan for up to $1.5 billion. The company really trying to shore up its finances. It's been struggling with the decline of its COVID business. And finally, Abbott Laboratories. They've agreed to acquire cancer screening company Exact Sciences. It's a deal with a total equity value of about $21 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, thank you so much, Lisa. And you've recovered from 8:30 a.m., right?
I did.
Okay. Lisa had to, she had the
list.
honors of breaking all the economic data at 8:30 a.m.
Phenomenal job.
I mean, it must have taken her like 3 minutes to do it because there are all these data points. And of course, we're referencing the September jobs report, which just came out this morning. And the takeaway here is this was stale data that clearly has moved markets. We see stocks rallying right now after the non-farm payrolls topped every single economist estimate in our Bloomberg survey. So supporting this idea that the economy is doing well. Bonds are also rallying, pushing yields lower as a rise in unemployment and perhaps slowing average hourly earnings leaves room for a rate cut. So let's bring in Danielle DiMartino-Booth. She is the CEO and Chief Strategist at QI Research, and she joins us here in our Bloomberg Interactive Brokers studio. Danielle, what is the takeaway for you from this stale jobs report?
From this stale jobs report, the takeaway was that we're 0.6 percentage points away from the 4.5% year-end Fed target for the unemployment rate. So it was just a tenth shy of rounding up to 4.5%. I only emphasize this because several FOMC press conferences ago, Powell himself said, you know, these payrolls have become so subject to revision, almost like serial revision, that I'm going to be placing my focus more on the U3, on the unemployment rate going forward. So we know that's what he's looking at. And we also know that by the time we do get November, the November unemployment rate on December the 16th, that it will most probably, given all of these layoffs and all the warn notices, that it will most probably already be at 4.5 or higher.
The WIRP function, which is a great function, but I can't make you heads or tails out of it. I mean, it changes by the second here.
It does.
In terms of what people are, I guess, kind of factoring in for rate cuts. Right now, it's about 36% for a rate cut in December. The market really doesn't know, does it?
The market, no, the market really doesn't know. And in fact, you know, for people who don't have a terminal, there's the CME website, and it crashed. When this data came out, the server went kaput. You know, when as I was walking down here, we were actually up to 46% by the way they gauge it, and that was off of kind of a low of 27% yesterday. So it's clear that the rally that we are seeing in the bond market and what we're seeing in at least a rise off of the lows of yesterday in the potential for a December rate cut is reflective, again, of this unemployment rate move up.
Right. Okay, so we got this data point. We also know that we're not getting an October jobs report. The government made clear of that. Some of that data will be folded into the November jobs report, which will not come out until December 16th.
Yes.
After the December 10th FOMC decision. So how are you thinking through in terms of how the Fed compiles the data it needs to look at, it needs to examine? Is this the one that does it for the FOMC?
Well, if this is the one that does it, then we're going to get a rate cut. Because, again, Powell has recognized that revisions have become serial. If you look at what we have through August, we've had 515,000 negative revisions through the month of August. And data back to 1979, you know, outside of that one COVID moment, that is the worst first 8 months since they started collecting this data in 1979. So I think he's going to look past this headline 119,000 gain, knowing that a much larger gain was seen initially in June, and that's now been all the way revised away into a negative number. So I think that this is what markets are grappling with so much right now.
Let me ask the dumb question of the day. Why is our data collection declining in quality, do you think?
Because we can't afford AI as a country? I don't know. Or big data? Or I mean, there's really no explanation. Look, into this data breach stepped ADP and said, you know what? We're going to start giving it to you weekly.
Weekly, right.
So we're just going to do you a service during this data fog. And I'm sorry, but if other institutions can do it, surely the BLS can do it as well.
Maybe one day
We
they
can
can
hope.
get there. You know, we talk about how this was supposed to be published back in October 3rd, the September jobs report. Because of the shutdown, it was delayed, but the data collection had been completed. So this is a clean report for the most part, even with the prospect of revisions. But the following jobs reports may not be so clean, even when we eventually get that November jobs report.
Right.
Is this the last high-quality jobs report we're going to get until, say, middle of 2026?
I wouldn't say necessarily middle of 2026. You would think that the December collection would be hopefully as good as they've been lately, which is highly subject to revision.
Big asterisks.
Yeah, big asterisks. So you would think that come early January, we would have at least one somewhat clean report. Even though obviously they're going into December theoretically collecting it and producing it. You know, I mean, I think the greatest irony here is that Scott Bessent and people like Stephen Myron, you know, they're campaigning for a more aggressive easing path. Why on earth then release this data 6 days after the Fed meets? I mean, if the administration wanted to shoot itself in the foot, it has accomplished that task.
All right, that's not the first time. It's politics, I guess. I don't know. Talk to us. All right, so that's the labor market there. What do we know about inflation out there in the economy these days?
So, you know, it's interesting. In the ISM report, it actually stated whatever effect tariffs were going to have, we're not talking about it anymore. Our manufacturers are not talking about it anymore. When we saw the Bank of America investment manager survey come out a few days ago, we had tariffs drop out of the top 4 for the first time, and I can't remember how long. People are telling small business, Bank of America also put out a great report that small business are no longer profitable right now, that they've actually slipped into a net losing position. So Trueflation came out this morning, and I watch that every day. It's theoretically what the BLS could do with the blockchain and all kinds of technology that exists. It's at 2.41%.
That's above the 2% target.
It is above. But there's another asterisk there because the main drivers are food and electricity. Electricity is being driven by data center construction, and by the way, these are two things that over which the Fed has no control.
Yeah, all good points. So when you look at tariffs and the effect it's going to have on prices, is it going to be more like what Walmart indicated, that, you know, they've managed to hold the line pretty well, but it's going to start creeping in later on and just be very gradual? It'll be a persistent increase that it's above 2%, but nothing like a one-off that maybe some people had anticipated or worried about.
I think that you could see a slow bleed, but remember who you're hearing this from. You're hearing this from Walmart. If you look inside those earnings, you know, they had double-digit growth in pharmaceuticals and only single-digit growth in groceries and single-digit growth in the rest of what they sell, only because, like TJ Maxx yesterday, they're getting the trade-down buyer. So when it comes to discretionary goods, the purchasing power is simply not there.
Yeah, when I think about it, in my hometown, buying a toy, I mean, you could go buy a toy at Target or Walmart, and they could probably deal with the price increases, but you go to your local toy store in town, which we like to support.
Of course.
Much less, you know, movement and ability in their profit margins to take that. So,
and that's why you're seeing, as S&P's reported, bankruptcy filings at a 15-year high.
Yep, so the small business more at risk here. Danielle DiMartino, thank you so much for joining us. As always, she is CEO and Chief Strategist at QI Research. She's based in Dallas, Texas. She was at the Dallas Fed for a while, so we appreciate getting her here live here in our New York studio. We appreciate her coming in. S&P up 115 points, 1.7%. How about that? This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Company news out here today. Verizon announced the layoffs that will shrink the company by as much as 20% of its non-union workforce. That's big. And they have a big footprint in New Jersey from the old Bell Labs and Bell Core days. And so a lot of Verizon employees in the state of New Jersey. So that'll be a big issue for them. John Butler joins us here, senior telecom analyst for Bloomberg Intelligence. John, what's this job cut announcement from Verizon? What does this mean for the company? What are they trying to do here?
So, Paul, as you may know, there's a new CEO in town at Verizon named Dan Schulman. And I believe Schulman is he's been on the board for years. I think he's looked at the organization and believes it's a little too heavy, little too bureaucratic. He sees room for ample cost cuts. And I think his whole message to the employee base is, we need to move faster, and I think it's very tough to do that with a large bureaucracy. I also think he's cutting costs in order to free up funds and give them room to promote more. I think one of the reasons that Verizon has lagged its peers in subscriber growth is they're just not matching price promotions out there in the marketplace. And I think if they do that carefully, wisely, I think if they become a little less disciplined than they've been in promoting, they're going to find that they'll drive higher volumes. And, I think at the end of the day, Wall Street wants to see that. That really is a report card for the telcos, that sort of quarterly net additions number that all the telcos report.
And Wall Street is okay with a loss in margin or an erosion of margin in order to get those numbers, those subscriber numbers, because it sounds like Verizon is getting ready to jump into participating in this price war in a more robust way than it had been.
Yeah, good question, Scarlett. I think that's what these job cuts are all about. You can maintain margins. If you're cutting 13% of the workforce, there's a big cost savings there. So you're getting leaner on the expense line, which gives you a little more room on the revenue line to begin to promote more and really step up and match competitors like T-Mobile, which continue to be aggressive on price. And then at the lower end, of course, you've got the cable operators and their wireless brands, and they have been promoting very hard on price in order to drive up their wireless installed base.
John, I'm guessing if a lot of Verizon communications investors, they're there for the dividend. It's got a yield of 6.7% here. That is a serious yield there. Talk to us about their dividend strategy, their commitment to the dividend going forward.
So Schulman, when he first joined Verizon, reiterated a commitment to maintaining the dividend. I think with any carrier, as their stock price drops and the effective yield goes up, that dividend yield, it becomes a target for potentially getting cut. Now, the flip side of that is any telco that's cut its dividend in the past will tell you there is a very heavy price to pay for that. You typically get a big price correction when you cut that dividend because, of course, at least with the AT&T and Verizon, you're attracting a lot of investors to buying the stock based on the yield. So if you cut the yield, obviously you're going to lose some of those investors. So he's got a tightrope to walk here. Again, you're cutting 13% of the organization as a first move. I think there are other cost cuts down the road and efficiencies to be gained in not only network operations, but customer care as well, particularly with the advent of AI. So my hope is they're going to be able to sustain free cash flow, which will generate more than enough to sustain that dividend there.
Okay, so in Dan Schulman's drive to make Verizon a simpler, leaner, and scrappier business, how do its competitors, T-Mobile and AT&T, respond? Do they respond?
They always respond, Scarlett. You know, it's that kind of market. Wireless is a very mature business. It's a saturated market. It's a zero-sum game. And so I think what we've seen from all the big three recently is they are willing to promote heavily to protect that base. Verizon, again, has been the laggard there, but I think Schulman, who's very focused on subscriber volumes, is probably going to step up and play that game. So that's been the concern among investors, that it can get ugly very quickly. And frankly, I share that concern. So we'll have to see what the change in direction is going to be at Verizon with regard to promotion. But all indications so far is that they're getting ready to promote more.
All right, JB, thank you so much. We appreciate that. John Butler, he's the senior telecom analyst for Bloomberg in intelligence based down there in Princeton, New Jersey. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Looking at the markets here, continuing to rip here. A little bit off the intraday highs, but still well above earlier levels. S&P is up 102 points. That's 1.5%. NASDAQ's up 447 points. That's 2%. I'm going to call out the Dow Jones Industrials. I know John Farrow's keying on that number. Up 575 points. That's 1.25% there. So some big moves in. The VIX coming in dramatically, now sitting just above 20.7 on the VIX, 20.4. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio here in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. A lot coming up on this Thursday with the market rallying, both equities and bonds. We, of course, are in the thick of retail earnings season. Not only did Walmart report, but Bath & Body Works did as well. So we're going to check in with Lindsay Dutch, Bloomberg Intelligence Consumer Hardlines Senior Analyst, to get her take on that company. Matt Henriksen, Bloomberg Intelligence Senior MedTech Analyst, will join us to talk about Abbott buying a cancer screener company, Exact Sciences, for $21 billion.
Nice.
David Kudla is founder, CEO, and chief investment strategist at Mainstay Capital Management. We'll get his take on this rally and whether it's sustainable. And Kunjan Sobhani is Bloomberg Intelligence's senior semiconductor analyst to talk about the star of the show. That is NVIDIA, after it came out with an upbeat forecast, perhaps allaying those fears of an AI spending bubble. But first, let's go to Charlie Pellet for our Bloomberg Business Flash.
All right, thank you very much, Scarlett. Indeed, absolutely right about NVIDIA. We've got stocks surging today with the Dow, the S&P, NASDAQ solidly in the green. Right to the numbers here. Big day for the U.S. equity market. Certainly a big day for NVIDIA. We begin there with NVIDIA shares up now by 3%. The Dow up 536 right now, up by 1.1%. Walmart, by the way, after earnings up 6%. S&P up 94, up now by 1.4%. The NASDAQ Composite Index up 419. For NASDAQ, that is a gain of 1.9%. Our Mag 7 Index ripping higher by 2.5%, with the 10-year that's currently yielding 4.10%, with the 2-year 3.56%. Gold down $5 the ounce, $4,072 on the precious metal, down 0.1%. West Texas Intermediate crude back above 60.09 a barrel. WTI up 1.1%. And Bitcoin with an $89,000 handle, 89,700 on Bitcoin, down now by 0.9%. So a tech surge leading equities higher after NVIDIA delivered a solid outlook, pushing back on the idea that the AI industry is in a bubble. Matt Stuckey is Chief Portfolio Manager at Northwestern Mutual. He was a guest right here on Bloomberg Intelligence, and he told us earnings revisions are helping drive NVIDIA higher.
if you put the numbers together, it's not very hard to underwrite a scenario in 2026 from a calendar year perspective of NVIDIA earning, $9 plus per share. And just to put some context on kind of where that number is relative to where we were when we started 2025, we started 2025 in the mid fives in terms of expected earnings. And so earnings have continued to rip higher. And that's why NVIDIA continues to lead the market.
Northwestern's Matt Stuckey interviewed right here on Intelligence. Again, NVIDIA up by 2.9%. Cannot ignore some of the other cloud names, cloud-related names today, specifically Alphabet up 3.7%, Meta Platforms up 1.3%, Microsoft up 0.8%, CoreWeave surging 5%, Oracle up by 0.9%. Bottom line, broad-based rally, tech leading the way higher, S&P up by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as Charlie's reporting stocks moving higher today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, the big one today, and it feels as though every day, we're looking at shares of NVIDIA, ticker NVDA. Of course, we know that's a company that reported just last night after the closing bell, and we are really seeing a lot of people digesting this. You're really seeing this ricocheting across the market. We're seeing the market in the green. NVIDIA shares up as much as 5.1%. This is after the company gave an upbeat forecast, and of course, it's really allaying a lot of those concerns that we were hearing about a potential bubble in terms of AI spending. So this, it seems to be soothing some of those fears here. So it'll definitely be interesting to see how this continues, but we are seeing shares of NVIDIA up about 43% so far this year.
All right, stock number two?
Stock number two, looking at consumer, WMT, that's Walmart. We've got that in focus. Shares up as much as 6.7%. So the company boosted its outlook, but they are also warning that higher costs are continuing to loom here. But I mean, this company raised its full year sales and profit outlook here. It's really just about what the consumer is able to spend on and grappling with this tough environment here. So you are seeing a lot of people trading down. So of course it's going to benefit a retailer like Walmart, but they also did talk about strong e-commerce performance. We are really seeing them venturing out, similar to Amazon. They're trying to give you same day delivery. I was actually seeing that when I was scrolling on Walmart.com the other day here. So it's interesting as we're kind of seeing this broader retail trend here. Home Depot and Target saying that they were struggling, but then you've also got a lot of names coming out saying that things are going well. So we'll have to see as this continues next week. We'll hear from Kohl's, Abercrombie, Best Buy as well.
What I did not know is Bath & Body Works has a men's department. I didn't know they had one.
See, this is exactly what I said earlier. I didn't know that they do men grooming. Yep. Also hair products. Where have I been?
I don't know. I mean, Alex Steele once told me you have to invest in your face. I obviously missed that memo. Talk to us about Bath & Body Works.
Well, it's been a brutal year for them. I mean, shares on the year-to-date level down about 58%, but today down as much as 26%. This is the worst day for the stock and lowest level for the stock since 2020. This is after the company slashed its full year outlook. They're announcing a turnaround plan that they're really hoping to focus on its core business here, but the company is planning to leave some of the categories, including men's grooming and hair care, which of course Paul and I did not even know existed, but they are also planning to launch their brand on Amazon.com's web store. They're really just trying to lay out a transformation plan here. So we'll just have to see whether or not that actually works out for them here. But it seems as though the street is not liking that slash to the outlook here.
Okay. Nora Melinda, Bloomberg News, Bloomberg Television Markets correspondent. Yes. Thank you so much. Can't forget that. All right, and for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, I did not realize that Bath & Body Works had a men's department, but it doesn't matter now because they're exiting that.
But that's obviously the problem.
Yes.
That we did not know about that.
Yes. I mean, because you would have been customer number one. Hair care as well, because I use a lot of that given the TV appearances. So let's bring in Lindsay Dutch, Bloomberg Intelligence Consumer Hardlines Senior Analyst, to talk a little bit about Bath & Body Works. And Lindsay, if Paul Sweeney had no idea that they had a men's grooming brand, and I had no idea that they had a hair care brand, what do we know about these categories that Bath & Body Works is now exiting, but probably cost a lot to set up and run?
Yeah, so it's an interesting move, exiting men's. Men's was one of their biggest, what they would call adjacent categories, which really included men's, their largest business, but also hair, lip, and laundry products. So it sounds, the new CEO has been hinting for some time that they were going to sort of pare down the assortment, get focused. There obviously needs to be a stronger focus on the core. I'm a little surprised they're exiting men's just because that was their biggest adjacent category. But when you think about those adjacencies, last year it accounted for about 10% of sales, so relatively small to the whole. It will still definitely be a headwind to get out of those categories when we think about growth going forward, but not a significant part of the business as it stands today.
Talk to us just about kind of the personal care business, and even the makeup business. Talk to us about how that business is today, how it's growing, and what challenges it has.
Yeah, so it's interesting because the personal care beauty market is typically a very defensive market. It typically outperforms during hard times. People still want to feel good about themselves. But we've seen a little volatility in beauty in the past, I would say, couple of years, actually. Ulta had their own struggles, with, fierce competition in the market. And now we're seeing Bath & Body Works, which really caters towards like the average American consumer. They have a very, a consumer base that very much represents sort of the United States. They saw a significant and I think surprising to themselves pullback in demand in late third quarter, and they were pushing promotions. We saw very significantly increased promotion activity coming out of Bath & Body Works, and it still did not allow them to drive sales. And they're basically seeing, high single-digit sales declines extending into the fourth quarter, which is very concerning, heading into that holiday. So I think it is a little bit of a company-specific problem. It's a demand problem that they're having, really fueling the demand from their customer base. Whereas beauty as a whole, it's a little bit softer than we would expect, but it still is growing, low single digit type of pace.
Okay, so there's a strategy and there's an execution issue with Bath & Body Works. Does that make this company a takeover target, a target for private equity even?
So they do produce pretty strong cash flow. Obviously that's a very, positive attribute. In terms of the turnaround, I think growth is a pretty far out prospect for them at this juncture. Once you start scaling back, your assortment and your product, there's significant headwinds to getting into growth. They also, have a very interesting customer base. They have very, very loyal customers. They have these loyalty members. They drive 85% of sales in a year, who go there for specific products and specific scents. And so you have to be very careful about what you cut, and you don't want to lose that customer. But at the same time, they're also really looking to get a new, younger customer, in the door. And I think, satisfying those two factors is very difficult to do at the exact same time.
How exposed are some of these healthcare or home care companies like Bath & Body Works to tariffs?
So I actually think tariffs is a relatively small headwind for Bath & Body when I compare it to the broader consumer universe. They have a pretty vertically integrated supply chain. They make a lot of their product in the U.S., so their direct exposure is fairly small. I do think, it's been put out there, when they've been talking about weak earnings growth as, a potential reason. But I think the impact is really smaller. The bigger issue that they're really facing is sort of reigniting demand. They also have other costs. They've been having trouble getting profitability up and sort of reducing their cost base. This has been going on for a couple of years now, sort of not related to tariffs. And as they continue to invest in the business, which they do need to do, we expect cost pressure to continue into next year, but not necessarily related to those import costs that we've seen for other retailers.
All right, good stuff. Lindsay, really appreciate your joining us on Bath & Body Works Cutting its 2025 Outlook. Lindsay is Bloomberg Intelligence's Consumer Hardlines Senior Analyst. Let's take a look at what's happening in the biotech and pharmaceutical space. There's a big M&A deal. Abbott Laboratories agreeing to buy the cancer screening company Exact Sciences with a total deal value of about $21 billion.
Nice.
Yeah, pretty large. Let's get some perspective now from Matt Henriksen, Bloomberg Intelligence Senior MedTech Analyst. So, Matt, I guess this is a surprise given that we're looking at Exact Sciences shares moving quite a bit. This deal price represents a 51% premium to its last close.
Yeah, and this includes yesterday there Bloomberg News reported some of the initial rumors that there was this deal taking place. So the fact that it kind of materialized so quickly and with that type of premium is a little bit of a surprise, given kind of that it started leaking yesterday. But when you look at it from a multiple standpoint, it's trading. It's the sale is about 7 times Exact Sciences 2025 sales. It seems pretty reasonable for the growth that could be incorporated into Abbott's overall portfolio.
And the bankers on the deal, Morgan Stanley, exclusive financial advisor to Abbott, fully funding this deal. So that's good for them on the sell side. Centerview Partners and XMS Capital Partners advising the seller there. So again, more M&A fees there. I have no idea who Exact Sciences is, and I think I speak for most of our audience here. Who is Exact Sciences? What do they do, and why does Abbott want to pay such a big price?
Well, you actually might know of them because they have been doing a lot of TV commercials for their Cologuard product.
Oh, they're the Cologuard people.
Now, the Cologuard.
I was like, oh, I know who they are.
So there we go. So it's kind of one of those things where they're the ones that have been the pioneers in driving the force around that take-home pre-screening test to kind of just help the continuum of cancer screening and to provide an easier access for that pre-screening before you have to go into kind of more of the invasive colonoscopies to make sure you have that colorectal cancer risk.
That thing sat in my closet for like a year. It's like, oh my God. Really?
I know, it's one of those things you have to do, but you don't want to do.
You have to do it. I do it.
So, Matt, is there any reason to think that regulators may, raise their hand and say, hold on, let me just take a closer look at this?
I'm sure they will, cross their T's and dot their I's. But just in general with medtech acquisitions, it's usually pretty straightforward unless there's a clear, 100% of the market may be going to, one company. And in this case, there's enough competition where I don't think that should be a hurdle for Abbott or Exact Sciences.
And for such a big deal, Abbott stock is only down about 1.5% today on the news. So presumably, is this a deal you think is a good deal for Abbott?
Yes, I think it checks off a lot of boxes potentially for Abbott. One, once it becomes fully integrated and starts contributing to organic growth, it should be accretive to that organic growth that Abbott already has. They're already, for a company that is almost $45 billion in sales, they're generating 7.5% organic sales growth. Exact Sciences comes in with double-digit sales growth, so that's going to be accretive for them in the long run. You can also look at the gross margin profile. Abbott, is around a 56-57% gross margin profile. Exact Sciences comes in at 72, improving to 73% based off of consensus in 2026. And then lastly, you look at the expenses that Exact Sciences has, because they're still it's the emerging growth story, so they're still investing a lot in their S&G&A kind of commercial profile to help generate these growths. We kind of expect Abbott to come in and be able to slash some of that SG&A costs to be able to make it more profitable overall for the Abbott once it kind of gets fully integrated.
And we should mention that this purchase by Abbott is the second biggest in its history. The biggest was St. Jude Medical back in 2016 for $30 billion. And I look at the buyer profile function on the Bloomberg terminal here, and I can see that so far this year, Abbott Labs has made 3 purchases. The other 2 pale in comparison. They're like chump change compared to this Exact Sciences deal. But is Abbott done with making deals for now, or is it still on the lookout?
So I would say they probably want to look for more deals, and MedTech has gone towards a tuck-in variety of acquisitions. So you're talking about those 2 other acquisitions being tiny. You're seeing that broadly across MedTech as well. There was that phase when Abbott bought St. Jude Medical. There was a wave of large acquisitions by Medtronic, by Zimmer, all those companies. And it took a while for them to digest those acquisitions.
Got it.
So they went back to the tuck-in acquisitions. Financially speaking, management talked about There, oh yes.
Matt Henriksen, we got to leave it there. Matt Henriksen, Bloomberg Intelligence Senior MedTech Analyst. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got an NVIDIA rally underway. We're off session highs. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. So the Dow, the S&P, NASDAQ all advancing today as the rally in stocks continues. Optimism over AI technology outweighs doubts over whether the Federal Reserve will cut rates in December. It is also a jobs Thursday. Here's what where we stand with the S&P right now up 52. That is a gain of 0.8%. So the S&P at 6691. The Dow up 274. Dow Industrials up 0.6%. Nasdaq up 208 now, up by 0.9%. The Russell 2000 index of small cap shares now up by 1%. Our Mag 7 index up 1.5%. You talk about that index, you got to discuss NVIDIA. NVIDIA shares up now by 1.1% after earnings. 10-year at 4.09% with a 2-year 3.55%. Spot gold little changed at $4,069 the ounce, down now by 0.2%. West Texas Intermediate crude back below 60 at 59.80, up 0.6%. And Bitcoin now down 2.4%. 88,320 on Bitcoin as the rout continues. A story we were talking about with our John Butler. Verizon announcing wide-ranging layoffs this morning that will shrink the company by as much as 20% of its non-union force. Verizon shares, they're up by 0.4%. Rival T-Mobile up 0.3%, and AT&T up by 0.7%. Again, recapping, we've got stocks higher. S&P up 0.8% after earnings. NVIDIA up by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Appreciate that, Charlie Pellet. We are here in the Bloomberg Interactive Broker Studio, Scarlett Fu and Paul Sweeney. We're also streaming live on YouTube as well here. So as Charlie is just reporting, still have green on the screen, although well off the earlier highs of the day, but certainly in the face of NVIDIA earnings, some positive momentum for some of that tech trade there. David Kudla, he does this stuff for a living. He's the founder, chief executive officer, and chief investment strategist at Mainstay Capital Management, joining us from Troy, Michigan via Zoom. David, what do you make of today's action in the context of what we've seen over the last 2 or 3 weeks, which is a little bit of a pause in this market?
Yeah, good morning, Paul. It is, it's very encouraging, and actually it was NVIDIA's earnings report last night or yesterday afternoon, beating on revenue, earnings, and especially the guidance. It was really an exciting earnings report, and that's really what everyone was waiting on. We had from the highs in October, the S&P 500 through Tuesday off about 5%, the NASDAQ off about 6%, started with the December rate cut that had been priced into the market, and then it looked like they weren't going to do it. We look at the odds on what's happening with the cut, and then investor sentiment kicked in, and it's incredible how sour investor sentiment turned when we're only 4 or 5% off the highs for the market. But it was key because if NVIDIA wouldn't have come through, I would have expected the markets to go down another 4, 5, 6%, actually. Yep. And that was just such a strong report. I think now, we saw it in the futures last night, off hours trading last night, after hours trading, and we're seeing it today. I think this sets us up well for the rest of the year. In the non-farm payrolls, when we net that all out, we think that leans towards a December cut, and they don't have much more data between now and the next meeting.
Yeah, just kind of wanted to go to that, David. We kind of got that change in non-farm payrolls, and I guess you can see what you want in there. The September numbers came in better than expected, but the revisions were noticeably weaker, so you could go either way, presumably, and the market kind of reflects that, maybe a 40% chance of a rate cut in December. So how do you think they will proceed?
It's getting more difficult to tell because there's such there's dissension, right, within the FOMC, within the Fed, dissenting votes. So we'll have to see. But I think that this data, which is very important, a doubling of estimates on actual non-farm payrolls for September. But as you said, August revised down, 4,000 loss. Continuing claims still running very high, and unemployment at 4.4%. Before you round it off, 4.44%. Very, very close to 4.5. So I think that those things will give them pause, even though the actual jobs number was good. And this is old data, right? When we're talking about August and September, sitting here in the second half of November, but it still matters. It's a data upon which, they have to make a decision.
And it certainly moved markets today as well. And I think about the anecdotal in the meantime with Verizon reducing its workforce by over 13,000 employees, really aimed at cutting 20% of its non-union staff. David, what do you think about the state of the consumer? We got numbers from Walmart that suggest things are good, but I feel like Walmart is almost its own story because of how well it's executing on its game plan. And most companies don't have the scale and the capability to do that.
Yeah, good morning, Scarlett. Yeah, I think that we do need to look deeper into it because we talk about this, I don't know if this is the right way, K-shaped economy, right? This bifurcated economy we have. The upper K is AI, GDP now at 4.1%, 13.1%, just really spectacular, stellar earnings for the third quarter. And then that lower K is the weak labor we just talked about. It's credit card delinquencies running at record highs, auto loan, a lot of personal debt. And that is, absolutely an area for concern because when we look at the traditional economic factors that would point towards a recession, a lot of them are there. But that upper leg is so powerful because of AI CapEx. GDP now, the closer we get to the end of the quarter, the more accurate it gets. We're running around 4% for GDP, hardly recessionary. And, I think that that coupled with just, we've had multiple quarters of double-digit earnings growth. And this is setting for third quarter. We're setting a multi-year record for earnings growth this quarter. So we netted out as being constructive on stocks, looking at that upper K, the upper leg of the K, but we're keeping a watchful eye on that lower leg, the traditional parts of the economy that we just keep seeing anecdotal data that should concern us, but the economy and stocks keep rolling along.
I know in the past, David, we've talked about gold and silver. What's your view there on the precious metals? Seem to be more than holding their own here.
Yeah. The great thing about gold and silver, and Paul, we've talked about this. I'm not a gold bug, but we're tactical asset allocators. So when it makes sense, it's a great place to diversify into. Silver is a higher beta play on gold bullion, and we're even in the miners and junior miners in some of our portfolios. There's just a real opportunity right now because of central bank buying, Basel III. The appeal for individual investors, those concerned about fiat currencies and the future of fiat currencies. And we think gold and silver has a long way to run. Right. It has a non-correlation with stocks, sometimes almost a negative correlation. And we love that for the diversification of our portfolio. But we are not sacrificing returns with the kind of returns that gold and silver have this year, and especially the miners.
Yep, absolutely. They've been a stellar performer. David Kula, thank you so much for joining us there. David Kula is the founder, chief executive officer, and CIO at Mainstay Capital Management. Let's get back to this NVIDIA story. Certainly a big player in this story in the market today. Stock's up about 1.5%, giving up some of its gains here. Kunjan Sobhani joins us. He's a senior analyst. He covers the semiconductor companies for Bloomberg Intelligence. He's based out there in San Francisco. Kunjan, I'm sure you've had the opportunity to, not only look at the numbers, listen to the conference call, but talk to institutional investor clients. What's the narrative coming out of this earnings release?
Yeah, and this was one of the more bullish earnings we have seen from this name in a while, not just on the numbers of the 3Q, 4Q guide, which they blew past even the loftiest buy-side targets, but just beyond that, the long-term, the 26 sort of, and going into 27 demand signals that they showed, namely the $500 billion of the pipeline, which we think now is a conservative number, given the number of deals they have announced. So if supply keeps on coming up as it has, and if their customers continue executing on these bills without any missteps, we think there's significant upside to the current street numbers.
Yeah, just looking through the numbers, clearly a beat and raise report, but the scale at which it can beat and raise is impressive. Although within the third quarter numbers, I did see that chips used in gaming PCs missed analyst estimates. And I know that that's a shrinking part of the business, or at least it's not as big a part of the business, given that the data center is where the growth is really at. Are there any flaws in this earnings report, Kunjan?
Not really. I mean, look, the gaming is becoming so unimportant for analysts that the reliability of or the predictability of those numbers against which we're comparing the beat and miss for gaming is no longer as reliable. So no real flaws to really point out in this. We did see their supply commitments go up quarter over quarter and inventories rising. I don't think that's a negative, while it might seem on the face. That's just them gearing up and getting ready for that next wave to supply the chips in the next year.
So, Kunjan, what's the latest from Jensen Huang about how he views China going forward?
Nothing has changed on the China side. They still don't assume any revenues when it comes to data center, AI, China GPUs, or the H20 is being shipped into. They do have the clearance licenses, so they could, but it seems because of the geopolitical issues, China has basically been shut down for American GPU providers or ASIC providers to be able to ship in the country. There is, to be honest, no demand. So it seems, because of geopolitical issues, the customers in China are not just ready and getting up to buy NVIDIA chips right now.
Jensen Huang said that he, from his vantage point, does not see anything like an AI bubble. We see something very different. And he says competitive pressures remain fairly low because this is a company with more than 90% of the market for those high-end, super fast AI chips. Who is the closest competitor, if there is one, to NVIDIA?
Yeah, in terms of the size of the markets, the next closest competitor would be the AI ASIC chips. So Broadcom is one of the biggest providers of AI ASIC chips, namely the TPU that Google uses. Another example would be Amazon's Trainium chips, which a different AI ASIC designer supplies. So in terms of revenues or units in terms of the market, those are the next closest competitors. Within NVIDIA's realm, which it sells merchant GPUs, AMD would be the second closest competitor in that.
All right, Kunjan, thanks so much. We appreciate that. As always, Kunjan Sobhani, Senior Analyst on Semiconductors for Bloomberg Intelligence. He's based out there in San Francisco, right in the middle of all that's going on there in Silicon Valley. So he is plugged in on that. And again, a good quarter. And, I guess if nothing else, Jensen Huang put a pretty strong effort out saying, hey, business continues to grow, and we're seeing it in their business. So now, but he can't really go to the, here's the return that you're going to see. That has to come from the people actually buying this stuff, like the Microsofts, like the super hyperscalers.
He's just moving the stuff along, right?
Yep.
So it's all upside for NVIDIA right now.
Exactly.
They own this market.
They do. S&P's up 40 points at 0.6%. We're well off the highs that we saw early as the market opened here, but still trading higher. The NASDAQ up 182 points. That's 0.8%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Van Eck, celebrating 70 years of helping investors stay ahead on a world that never stands still. Visit vaneck.com. The Dow, the S&P, NASDAQ, well off session highs. Still a lot of green on the screen, but right now we have got the S&P up 24, 66.66, a gain of 0.4%. With the Dow up 181, up by about 0.4%. NASDAQ holding on to a gain of 94 points, up 0.4%. The Russell 2000 index up by 0.6%, and the Bloomberg Mag 7 index up 1%. NVIDIA after earnings up now by about 0.5%. Bottom line here, the rally in stocks continues as optimism over AI technology outweighs doubts over whether the Federal Reserve will cut rates in December. Indeed, Morgan Stanley now saying it no longer expects rate cuts in December. Yield on the 10-year, 4.10%, with the 2-year, 3.56%. Gold is down $15 the ounce at $4,062, down by about 0.4%. West Texas Intermediate crude, lower little change, $59.34 a barrel, down 0.4%. And Bitcoin continues its slide, 81,190 on Bitcoin, down right now by about down by about 2.6%. Walmart after earnings higher. Walmart up 6.5%. It did raise its full-year sales and profit outlook. It also announced a move to NASDAQ from the New York Stock Exchange. Jen Bartashis is a senior analyst for packaged food and retail staples at Bloomberg Intelligence.
I think that there is, obviously there's a perception with regards to being perceived more as a tech company, which Walmart, in all truthfulness, has evolved into a tech company, especially amongst other retailers, by being listed at NASDAQ. Long term, maybe it helps their valuation, just in terms of having that perception of being more aligned with peers. Amazon is listed on NASDAQ, things like that. So I think that there's a lot of those components together, combined, are really behind the move.
Bottom line, stock up by 6.3%. Jem Bartashis, a guest right here on Bloomberg Intelligence. Recapping, S&P higher now by 0.3%. The stock everybody's watching, the stock everybody's talking about, NVIDIA, up now by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. Wow, those gains have really faded quickly here, Paul.
Yes, exactly.
We're late morning, approaching midday, and we're clinging on to gains now as opposed to the big advances we saw earlier. It's Thursday, so it's one day before Friday when we usually talk about business of sports, but you know that I can't resist a good sports story. Yep. So let's talk a little bit about sports as an asset class. Obviously a lot of interest from private investors in an uncorrelated asset class, given that valuations of so many public markets are so high. Let's talk with Jonathan Goldstein. He is the co-founder and CEO of Kane. Kane is a global real estate investor, but they also have a lot of projects in sports as well. And Jonathan, in particular, uses his experience, his background in real estate and experiential investments to inform his sports investing. Jonathan, good to see you.
Morning.
We should mention that one of your sports investments is Chelsea Football Club, the storied franchise. How's the team doing?
Oh, well, I'm on the board of Chelsea, and obviously the buyout was led by my partner Todd Bowley, and in partnership with Clear Lake back in 2022. Team's doing well. Obviously, huge success in the summer in New York, winning the Club World Club Championship, which was a proud moment for the fans. The women's team done extraordinarily well, winning the Women's Premier League for multi-times in a row last summer. So, we're very proud of the development since we've been involved in 2022, and we think there's more to come. We're very excited.
So the valuations on some of these franchises, whether it's huge franchises like in the English Premier League or the National Football League here in the U.S., just beyond the realm of arguably even 100 millionaires. These are billionaires, if not private equity, corporate money. So that leads some people to say, hey, I'm going to go to some of these smaller sports or where I can maybe get some better value. How about cricket? Trent Rockets. What's the play there? And I don't know. That's all I got for cricket.
First of all, let me explain the way that the 100 competition works. that we've invested in and try and put it in American language.
Please.
Let's assume you have a baseball game where you have 100 pitches per side. And the objective is to score as many runs off those 100 pitches as you can. It's a short form nature of the game, 2 to 2.5 hours, exciting. Every pitch is important. And this is what the English Cricket Board created 5 years ago in London, in the UK, with 8 franchises around the country. Now it modeled itself on the Indian Premier League, which obviously has been a phenomenal product for the Indian population and globally for those who like cricket. It has the second most valuable broadcast rights per game in the world, behind the NFL, on a per game basis. There are larger broadcast contracts, but not on a per game basis. So we have watched this competition in the UK, and we thought there was a significant opportunity for us to get involved, add value.
Nice.
And we watched other people get involved, obviously, and there's, of the 8 teams, 4 of them are owned directly by Indian Premier League teams.
Okay.
One of them is owned by a group of what they call themselves the tech titans from the west coast of America. The Microsoft CEO, by way of example.
Okay.
And so, a lot of, Indian heritage love cricket.
Yep.
And so we thought, here is a significant opportunity to create the baby product to the IPL and over 5 to 10 years grow that. It's a great window of the summer in the UK. Obviously, you have to, just like in America, a good external climate to play cricket. You want it outdoors, and you can't play in the rain, just like baseball. So it's a great time, mid-July to mid-August, where there's a window for an opportunity to build huge product and broadcast and spectator. And I think what's really important is that you're building it in a country which has an undercurrent of love for the sport. So therefore, you're building off a good base.
Thing for me to go see. I'm not getting to see a cricket match.
Well, I'm going to invite you next summer. I have to tell you, today's a very big day in the world of cricket because tonight England start their
Ashes.
Desperate bid to win the Ashes in Australia. We haven't won it for very many years down there. We often get beaten very badly. So it's a really exciting day. But I think what we're doing here, and playing back to your initial question, we've watched the valuations of the NFL teams, of the baseball teams. I mean, Todd obviously led the way with the Dodgers, over 10 years ago at just around $2 billion. And we've seen what trades are happening today. We saw, the valuations being put on the NFL teams recently. And even the MLS is trading at very high levels. So, you try and see a situation where you think you can add value and grow a franchise and grow a business.
Jonathan, do you see a future for cricket in the U.S.?
Look, I think there's a future for most sports in most places. It depends upon the depth of demand and the depth of local participation. I don't think you can just pick up a sport and put it in each country unless there is an underlying desire. But in my view, there's a much greater opportunity in the UK because of the inherent nature, the love of cricket that people grew up with.
The history,
and I think there's so much competition in the US for, again, basketball and baseball and football and all the major sports. I think the MLS has made a breakthrough, but it hasn't really got up to the top table. And I think if you look at how many years that's been at it, I think cricket will find itself even harder to get to that top table in the US.
Go to any of the parks in Queens, Brooklyn.
Across the street from my house.
World-class cricket dudes out there.
Yeah. They're playing every Sunday and every Saturday.
Yeah, it's crazy. Everyone's
I think Americans have had a view of cricket overall, which is wrong.
Right.
It's an amazing sport. Even the 5-day variety is probably the most enthralling sport you could ever watch.
Yeah.
And I think that, I think that cricket is a growth area, and that's why we put some money behind it.
The multi-day cricket match.
Yeah. I don't know. Jonathan, thanks so much for joining us. Appreciate you coming into our studio. Jonathan Goldstein, he's a co-founder and chief executive officer of Kane, into sports, into hotels, real estate, all that kind of fun stuff.
You know the Aman Resorts?
Yes.
That's them.
Really?
Yeah.
All right.
I dream about going to an Aman Resort.
Yeah, well, Raffles Boss. I love the Raffles name. It's now in the U.S. That's where I stay when I go to Singapore those 8 times.
Yeah, no,
Raffle, the long bar, the home of the Singapore Sling.
Yeah.
You do. I did it all.
With its rich history.
Yep, absolutely. Boy, the market's really giving it back, folks. It's time for us to bail out here. I mean, the S&P is up 15 points. That's 0.2%. Again, we were up more than 1% earlier in the day. The Nasdaq's up 69 points, 0.3%. We were up 2%. So we'll keep an eye on that. Yields, 10-year Treasury yielding 4.1%. That's down about 3 basis points. We'll have more coming up for you in just a moment. This is Bloomberg. Good morning.
Bloomberg is...
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Folks on Wall Street, they're used to kind of betting. A lot of people feel like it's a casino anyway, every single day on Wall Street. I certainly felt that way when I worked there. So prediction markets. I don't know a whole lot about prediction markets. I don't think Wall Street knows a whole lot about prediction markets, but that's changing. We're seeing deals going back and forth between a lot of these investment firms and a lot of these prediction market companies. And here to break it all down for us and make sense of it all, tie it all together is Catherine Doherty, finance reporter, Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Catherine and some of her colleagues came out with a story, and the headline is Vegas and Wall Street collide in prediction market gold rush. Catherine, what's going on here?
There's about an announcement every day to keep track of. So what we did today in our story is break down the why. Why is this happening? Who is it happening with? Because there's so many partnerships, and it's both from the traditional institutional firms like ICE, the parent of the New York Stock Exchange, putting $2 billion into Polymarket, the emerging new prediction market.
Can you define what a prediction market is first?
Sure.
The deals?
So in the simplest terms, you are placing a bet, and it's a yes or no, it's a binary yes or no, on whether or not an event will happen. And these events span sports, so it could be whether or not the New England Patriots will win again this weekend, or it could be on an event that's tied to the market. So there are very traditional, or what would look like maybe an options contract, but it's structured where it's a yes or no, will the S&P reach a certain amount, or will inflation get to a certain amount? And you're just taking a yes or no bet on whether or not the outcome will happen or not.
So again, an example of that is you're mentioning Intercontinental Exchange, the owner of the New York Stock Exchange, a $2 billion investment in a company called Polymarket, right? So that's what got everybody's attention, I think.
It was a big number, and ICE, known for being the parent of the New York Stock Exchange. Jeff Sprecher has been pictured with the CEO, who's a 27-year-old Shane. And then you have Kalshi. They're backed by Sequoia, and they're fully up and operating, and the volumes that they have been reporting specifically with sports. So this is activity that's happening over the weekend. I think that is noteworthy given that it's such a divergence from traditional Monday through Friday trading in stocks, options, bonds. Wow. And really now you're seeing the industry have to pay attention to the growth of prediction markets, because with these partnerships and with retail brokerage firms like Robinhood that are offering these event contracts to their users, it's starting to, that's what we mean by saying that these worlds are bleeding together.
Because, I mean, you've got this great table in there of the tie-ups out there, that the deals have been announced in DraftKings and Railbird, NHL and Kalshi Polymarket, Trump Media and Crypto.com. I mean, these are names that we've all come to know over the last several years, real names. Is there a regulatory angle here? Because it feels like gambling is regulated to a certain degree. Is this market, the prediction market,
it's a great question, and it's something that is evolving. But overall, yes, prediction markets are regulated by the CFTC. If there is a license, which Kalshi has, Polymarket bought, so they are getting back into the U.S. and they will be up and running. But they are regulated from the same regulators that regulate exchanges and brokers in the options market and the futures market, derivatives. And on the flip side of that, you have FanDuel and DraftKings. So they're known for their sports betting books. This is outside of prediction markets. And they are offering sports betting in the states that allow it, but they do not offer sports betting in the states that is illegal. What's interesting is they just announced that they are getting into prediction markets, but they are offering prediction markets only in the states, get this, where sports betting is illegal. So it's really where they can't reach their customers right now with their sports betting, because they're not allowed to, but they can do it with the prediction markets. And if it gets legalized in a certain state, they have also said that they will pull out the prediction markets from that state. So they're really still focusing on their core, which is sports betting, those books, and not prediction markets. But it is a defensive move for them to move into prediction markets, because they see all of the activity and all the partnerships outside that is going to take some of their users that want to put a yes or no and buy into those types of contracts.
Wow. So, all right, real quickly, 30 seconds left. Donald Trump Jr. and the Trump Organization, as I saw in your reporting, they're a part of this industry. They've invested in this industry.
They're advisors to these firms.
Okay.
And as you mentioned, Trump Media has announced that they want to get into prediction markets. So this world is really, the tentacles are growing, and it seems like every week there's another big development. So
all right, so this, I'm just
see you next time.
The Venn diagram in my head is, exchanges, Wall Street trading in one part of it, the predictions market in the second part of it, and then the gaming market, the betting market in the other, all kind of converging. So great stuff. Catherine Doherty, we appreciate that. Catherine from Bloomberg News with that reporting. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Your top stories and global biz headlines are coming up in just a moment. The markets, believe it or not, have turned negative, and decidedly negative. The S&P is down 27 points. That's 0.4%. The NASDAQ is down 120 points. That is about 0.5%. So that is a tremendous turnaround.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. The first jobs report since the long government shutdown indicates 119,000 were created in September, and figures from the 2 months prior were revised lower. Mark Hamrick of Bankrate.com.
This job market has been cooling. That's been a theme that's been in place for quite some time. We're barely having enough jobs creation to keep the unemployment rate from going substantially higher.
Verizon said today it's cutting 13,000 jobs, about 20% of its management workforce. Also in play today, a strong earnings report from the chip maker NVIDIA and Walmart. CBS's Kelly O'Grady.
The retail giant is often considered a bellwether for the average consumer. These results say the consumer is still spending, even if looking for deals.
There's a new round of deadly attacks in Ukraine carried out by Russia, and CBS's Ramy Inocencio reports some high-ranking Americans are in Ukraine.
As massive Russian aerial attacks continue, a U.S. defense official told CBS News that Army Secretary Driscoll intends to meet with Russian officials. A Russian official confirmed to CBS News that Russia is open to talks.
There is word of a new U.S. peace proposal that includes major points that Ukraine has previously rejected. Attention is shifted now to the Justice Department now that President Trump says he signed the measure passed by Congress designed to force the Justice Department to release the Epstein files. CBS's Ed O'Keefe.
The Epstein documents are stealing the spotlight from what the president had hoped would be the focus this week. The $1 trillion Saudi Arabia says it plans to invest in the U.S. And while he's encouraging Republicans to move on from this affair, it's surely going to continue to dog the administration as those documents released and some information, at least, may be withheld.
Hurricane Melissa, it turns out, set a record last month, as we hear from CBS's Michael Wallace.
One of the weather instruments, a NOAA Hurricane Hunter airplane, dropped into the storm last month before it made landfall in the Caribbean, recorded a wind gust of 252 miles per hour. That broke the record of 248 miles per hour set by Typhoon Maggie over the western Pacific Ocean in 2010. Melissa made landfall in Jamaica as a major Category 5 hurricane and killed dozens of people, mostly in Jamaica and Haiti.
At Washington's National Cathedral, a bipartisan turnout at the funeral for former Vice President Dick Cheney, who died earlier this month at 84. President Trump, who's been publicly silent about Cheney's death, was not invited. And checking Wall Street, right now a rally has fizzled. The Dow is down 31 points. The S&P is down 10. This is CBS News. At the preliminaries for the Miss Universe event in Bangkok, a sudden fall.
As she was sauntering off the stage in a glittering orange gown after her own introduction at a preliminary round, Miss Jamaica stepped off the edge of the dark runway and plunged to the floor. Audience members jumped out of their seats to try to help Gabrielle Henry, who's a doctor herself of ophthalmology. Footage posted to social media shows her being carried away on a stretcher. The Miss Universe Jamaica organization says she was rushed to the hospital. The group says she didn't break any bones and her injuries are not life-threatening. No word on whether Dr. Henry will make it back for tomorrow's final round. Deborah Rodriguez, CBS News.
The Oscars are making room for one more award on the live TV broadcast next year. The Academy says the new prize for achievement in casting will be part of the 98th Academy Awards. Brings the total to 24 awards for the Oscar broadcast. Steve Kathan, CBS News.
from Washington, D.C., this is Balance of Power with Joe Matthew.
A look in the rear view mirror is not encouraging. Welcome to the Thursday edition as Washington serves up a rare dose of economic news here in the form of a September jobs report delayed and shows the highest unemployment rate in 4 years, but also stronger than expected payrolls. We're going to try to put this all together when we discuss with Anna Wong from Bloomberg Economics. Affordability is the word of the moment in Washington politics, certainly at the White House. We're going to look at new polling on the economy with Cliff Young at Ipsos. And as Congress takes up a stock trading ban this week, we'll discuss with our political panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Now, we need to start on Wall Street. Day after NVIDIA, the whole rally just went flop. And Charlie Pellet has the latest on the markets live from New York. Charlie, what the heck's going on?
Very good question. I almost want to invoke the name of Ross Perot, because right now we are looking at a market that is just falling out of bed. At one point this morning, tracking on the Bloomberg, we had the S&P up 128, up 1.9%. You asked the right question. What's going on? Right now, renewed concerns about valuations. The S&P, by the way, I mentioned up 1.9%. It is down now by 0.3%. A lot of red. Dow, S&P, NASDAQ, all declining, with the S&P down 84, drop there of 0.2%. S&P down 0.3. We've got NASDAQ down 0.5. The Mag 7 index holding on to a gain barely, up under 0.1%. But the stock everybody wants to know about, after initially ripping higher after earnings, NVIDIA is now down, certainly weighing on markets, certainly weighing on sentiment. NVIDIA down 0.8%. Your 10-year 4.09%, with the 2-year 3.54%. Gold down $30 the ounce, 4,048, drop there of 0.7%. And West Texas Intermediate crude down 0.1%. WTI 59.36 a barrel on crude. Bitcoin just above $87,000 now. Bitcoin is down 3.7%. The day's other major story outside of NVIDIA, Jobs Thursday. Job growth did pick up in September. The unemployment rate ticked higher, suggesting the labor market showed signs of stabilizing before the government shutdown. With the U.S. economy adding 119,000 new jobs, Neela Richardson is chief economist at ADP. She was interviewed this morning on Bloomberg Surveillance.
Only a few sectors are strongly producing jobs. It makes it challenging for workers with a general skill set to find employment. And I think that's what's going to challenge the Fed in December. It's not just a strong jobs market they have to look at the demand side. It's how the supply side is faring in a very concentrated labor market.
Neela Richardson of ADP. Again, the 10-year 4.09%. But bottom line here, stocks wiping out in advance. We are lower across the board. Lots going on. Back we go to Washington, but there's always a lot going on. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, many thanks. Charlie Pellet will have more on Wall Street in about 15 minutes to see if this thing turns around, or maybe this is an important inflection point in the markets. Who would have thought a beat and raise on that scale from NVIDIA would be a sell the news moment? But this is where we're at, and we'll stay close to Charlie. We'll talk a little bit later on this hour with Nora Melinda on exactly what's happening here with this reaction on a day that we did get economic data. Go figure. We're not too used to this. Didn't know what to do with myself at 8:30 this morning when a jobs report came out. Yeah, it is Thursday. Thanks for being here. 20th of November. Bloomberg Radio, satellite radio, channel 121, streaming live right now on YouTube. And if you've got YouTube TV, by the way, they've got us up there as well. Watch Bloomberg Originals if you want to see the radio on TV. So it's all about numbers here, right? You've got a White House talking about the strength in the job market. You've also got a market worried about strength in the job market, keeping the Fed from cutting. But let's see what we have here. Unemployment, highest level in 4 years. Now, again, this is September, right? This is when the government was shutting down. They didn't put out all the data that was had. So we're going back in time here. Positive dynamic, as I read on the terminal, of more Americans participating in the workforce. And as well, the gloomier reality of more people losing their jobs. Payrolls today coming in at 119,000. It's more than twice the estimate, but it depends on the estimate, because Bloomberg Economics saw a net gain of 100,000 jobs. And that's why we thought we'd spend some time with the face of Bloomberg Economics. Anna Wong is with us, chief U.S. economist at BE. Great to see you, Anna. How come you were closer than everybody else?
Well, the way we forecast is that we look at home base, which is a small business centric private payrolls. And what we have noticed is that small businesses have improved hiring since I would say the middle of this year. So I think for that segment of the job market, there's some job openings that's going on. But I think at the end of the day, what's worrisome, as you mentioned, Joe, is the unemployment rate. That we are seeing that the permanent job losses, the U2 unemployment rate, which tends to capture more of the cyclical dynamics, show that the number of job losses in terms of permanent job losses is almost back to where it was last year. So July 2024 was a very weak moment in the labor market, and that was what prompted the Fed to cut by 50 bips in September of last year. And we're almost close to that now. So I think there is a case for the Fed to cut in December.
All right, there you go. Now, the word in our headline on the terminal is fragile, that the fragility under the hood is what this market is concerned about, and you're reflecting that in your statement. What is this going to mean for a month from now? Is this the beginning of a longer-term trend?
Yeah, so there are a little bit of good news not a little bit, a lot of good news in this jobs report too. For example, the strength on the headline payroll. One of the reasons was the construction sector, and you would think it's surprising because the housing sector is definitely cooling.
Is that data center?
Yes. So it is specialty trade construction workers that are in high demand. So the AI is showing up even in the payrolls data. And also you have leisure and hospitality increasing, and because I think the weather was great in September, and also the dollar depreciation from earlier this year is supporting foreign tourism. However, but if you think that AI is ultimately going to improve productivity, and as I do think that AI will be boosting productivity growth into 2026, this weakness in hiring will continue because that's how the productivity gains come, where they come from. So I do think that we are going to continue to see a lot of payrolls that could be fluctuating between, 10K to 80K.
I want to hear from the Labor Secretary. We spoke earlier today with Lori Chavez-DeRemer on Bloomberg TV and radio. Here's how she reflected these results this morning.
This was a solid report for the September numbers. We'll have to see how November numbers come out in mid-December, but I think that this is good for the American people. We know that more people are wanting to work and they're actively seeking those jobs, and so it is my responsibility to make sure that we have that skilled workforce.
So talk to us in this case about participation and how that played into the unemployment rate.
Right. Recall that earlier this year, we had 3 consecutive months of drop in labor participation. And that was one reason why unemployment rate was stable. But suddenly today, we see this over 400,000 increase in population growth and over, I think, 200,000 in labor force increase. And that was one reason why the unemployment rate increased today. I think that this might be an anomaly. I am not at all confident that labor force participation is improving, because if you think that the AI trend is going to happen, that should lead to decreased hiring amongst college graduates, the people from in 20s to early 30s, as we have seen in China, because China's AI adoption is faster than the U.S. And I think that society provides a little glimpse of what the labor market could look like once it is faster at AI adoption.
That's fascinating. I would love to hear more about that, because this is what we're hearing, that jobs, for instance, new college graduates are just falling off a cliff right now. The push and pull here in Washington about how to regulate this to protect the job market is a difficult one, because no one knows exactly what it's going to look like. Do we each get a digital twin, or are we replaced by a bot? What's China teaching us about that?
I think China is teaching us that AI is deflationary. In fact, Jensen Huang's presentation yesterday in the earning transcript, I was surprised that they actually mentioned how AI is deflationary. It is they were talking about how AI is reducing costs in all these other areas. They named like a whole bunch of companies that are buying NVIDIA chips, from a range of industries, from healthcare to Lowe's, helping with the supply chains.
And is that by simply increasing productivity, or what's the construct?
Lowering costs.
But how do you lower costs through AI? By increasing productivity or eliminating labor?
It's the same thing. Okay. Productivity is exactly the flip side of the coin. It's just a better way to say limiting labor.
So it's already happening then. That means some of people's fears are being realized here.
So I think so. But that view is quite polarizing, because I think if you survey like economists, you will see half of them saying that there's no evidence at all of productivity from AI, because I think generally aggregate labor productivity takes about 2 or 3 years before it shows up clearly. Like in the 1990s, the statistics didn't show any sign of productivity boom until 1997. Then they revised all the data, and suddenly 1995 was when it started booming. However, the evidence of productivity starts at the firm earning, at the micro level, and we are seeing that right now.
Incredible. So, you start thinking about the near-term boost in hiring that you point out, construction workers, the data center expansion. So it puts everybody to work to build this whole thing out. Also, we can end up without a job by the time it's over.
Well, I think two things are happening at once. You have this labor demand generating from building out the infrastructure you require for broad-based productivity gains. Because right now the productivity gains from AI is really concentrated in IT or sales or legal, white-collar sectors. But for it to generate broad-based gains, everybody needs to be adopting it. And in the NVIDIA earning yesterday, Jensen said, AI is everywhere, and he named all these sectors that is using AI. So we're in the beginning of that. And I think in a year or two, once this infrastructure is built out, in the meantime, getting a lot of labor demand in those, then we'll see more productivity gains. But in the meantime, in the transition phase, I do think that the slowdown in labor demand as a result of adoption of AI would more than offset the increase in demand from building data center in the construction sector or HVAC or these specialty trades.
We better figure out a way to retire here pretty soon. I know producer James is working on it. Anna, thank you so much. I learn something every time I talk to Anna Wong, and I think you probably do every time you listen to her, and it's a great pleasure to spend time with the chief U.S. economist at Bloomberg Economics on a Jobs Thursday. Still getting used to that. I'm Joe Matthew in Washington. Cliff Young from Ipsos on the way in next as we turn to polling on the economy on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ very much in the red right now. We've got stocks selling off. S&P 500 index down 45, drop there of 0.7%. The S&P currently at 65.96. A renewed bout of volatility is gripping Wall Street as concerns about lofty AI valuations resurface, while doubts grow over whether the Fed will have room to cut rates in December. The 10-year currently yielding 4.08%. We've got the 2-year at 3.53%, while the price of gold is now down $18 the ounce, down 0.5%. West Texas Intermediate crude down 0.8%, and Bitcoin right now down 3.7%, 87,040 on Bitcoin. So bottom line here, U.S. stocks selling off. We've got concerns about valuations, volatility as well, also after the jobs report, also questions about whether we will indeed see a rate cut in December. So here's where we stand in terms of the equity markets. S&P right now down by 0.6%. We've got the Dow down 0.4, the NASDAQ lower now by just about 0.9%. Ford shares now trading lower. We've got Ford down by 3.7%. Ford lower after a fire broke out at an aluminum plant in Oswego, New York, owned by its supplier, Novelis. Again, Ford shares right now, they are tumbling. Ford today trading lower by just about 3.5%. Recapping, stocks down, S&P 500 index giving up a gain of almost 2%, now trading lower by 0.6%. Balance of power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
Okay, Charlie, thank you, sir. Not great on Wall Street. Sure felt different when the bell rang this morning coming off NVIDIA earnings, and we'll be tracking the markets carefully through the program today. We'll be back with Charlie in about 20 minutes. We'll talk as well with Nora Melinda a bit later on this hour as she keeps her eyes on the markets here. Who would have thought a sell the news moment after a beat and raise like that? It's pretty interesting to see what's going on, knowing, of course, that we've got economic data in the mix today. We just talked about it with Anna Wong. We've got concerns about a slowdown in jobs, although that seems to be helping people get their heads around another interest rate cut. I don't know. Look, you can find a way to make good news bad news and make bad news good news when it comes to the Fed pretty easily. So we'll put that down for a moment. The issue of affordability is very real for many Americans. And when you think about what Anna Wong just talked about, the permanent job losses that we're seeing, for instance, in the September data, put against the prospect of rising prices once again, or at least stubbornly high prices. And we've got some issues here. This is why the White House has been talking about so-called affordability, or dare I call it inflation, for weeks now. The president has been saying in interviews and speeches that no, prices are lower. And he got to this yesterday during the big Saudi investment conference that took place at the Kennedy Center. That was a heck of a speech. We could do a lot of different cuts on this, on a lot of different topics. But he got to this issue. Let's call it inflation for a moment, or just prices for that matter. Costs. I think we heard a lot about costs in the election the other day. And I know this is a game of semantics, but the president seems perplexed by the changing rhetoric here around this very stubborn issue. Listen to what he said about affordability.
So making incredible strides to make America affordable again. That's a new word that they're using, affordability. We're bringing prices down, but they came up with a new word, affordability. And they look at we were all about affordability, and everyone assumes that that meant that, no, their prices were high.
They're being, I guess, Democrats? Affordability. It is a term that we use pretty often in the American lexicon. Just like the word grocery, which the president has also wrestled with. He was grinding through that term grocery for some time on the campaign trail, and it still comes up, grocery, and the things it represents. Here, you remember.
A simple word like that, groceries, it was like almost a strange word. I hadn't heard the word in so long, but what could be more beautiful than the word grocery? It's such an old-fashioned term, but a beautiful term, groceries. It sort of says a bag with different things in it.
It's a bag with different things in it. As he said a couple of times as well, BLT. Right? Grocery, bacon, lettuce, tomato. We wonder, again, how much time the president has spent in a grocery store. And you have to consider the origin of the term. He is right. It's an old word. You might think it's beautiful. Comes from the old French grocery, meaning wholesaler. Did you know that? Yeah. It was used to describe merchants who sold goods in large quantities. By the gross. I get it now. It doesn't mean that something is gross. The earliest use of grocery in English around the 14th century referred to a wholesaler, or the goods they sold in bulk. Or in the words of the president, everything that you put in a bag. Now, I fast forward to the numbers that they're churning out at Ipsos here, because I'll put this all together for you in a minute. Affordability, grocery, and the headline from Cliff Young. Trump's inflection point. The economy rears its ugly head. Cliff is the U.S. Public Affairs Chair at Ipsos, professor at Texas A&M University's Bush School of Government and Public Service. Cliff, it's great to have you back. What do you think of when I use the term grocery?
Yeah, well, first and foremost, I think the president, there's a bit of disconnect there between what real people, real Americans in the day-to-day lives are experiencing and how you call it, right? It doesn't matter whether you call it groceries or affordability or a banana. The problem is if you talk to people, you talk to the average person, they can't make ends meet. They don't have as much money at the end of the month. And they're scared because it's not just about the present problems. It's also about future anticipation. There's trepidation about tariffs. There's trepidation and fear about AI. And you put that all together, and Americans, I would say, are in a surly mood.
So if I say grocery, that doesn't help if I say it different. Affordability, cost, inflation. Do people care about this? Are you doing like word bubbles on this stuff?
No, us analysts call it affordability. Us analysts call it inflation rate. The average American is talking about making ends meet, how much money is left over at the end of the month. They're worried about their kids that are coming out of college that can't find jobs. These are very practical, very real issues. And indeed, just to emphasize again, the disconnect that you just showed with the president, Biden committed the same error, the Biden administration as well, by saying that the economy was doing well when it wasn't doing well. It's very important for decision makers to understand that Americans truly don't feel like they can make ends meet today.
Well, I wonder what people make of this rhetoric. Obviously, some of that was from the campaign trail, and he was obviously elected after that. Mike Waltz used to make fun of the whole grocery thing on the trail. But you remember a time when George H.W. Bush was mocked for not knowing the price of a gallon of milk, right? He didn't know what the scanner was at the grocery store, and people said, my God, he doesn't even know what it's like to live in this country. That doesn't seem to be an issue for Donald Trump. But his approval ratings when it comes to the economy are not good, Cliff. What are you learning?
Yeah, well, I think it's showing, by the way. I think that the economy is having its impact. People are feeling it. Donald Trump obviously started off as the second term in a lower place relative to historical averages, but in a pretty good place. He's been outstripping for a big chunk of this year, 2017. Right now, he's at 42% approval rating. That is the average of all the polls out there, not just Ipsos. Is that good or bad? Well, I would say it's trending negative. If you put that into historic context, the decline over this year for Donald Trump is about 8 or 9. The historic average is 5. And when you get close to 40, that's like the inflection point. That's the moment when administrations really have to worry about things. Going below 40 is a really negative signal to the markets in general, and more specifically to the political market. So no, he's not in a good place. And the primary driver of this is the economy. It's how people are feeling day to day.
Look no further than Walmart. I don't know if the president's been inside a Walmart lately, but number one, we know a lot of people are trading down. So Walmart's a pretty crowded place these days, and we got earnings from the company this morning. It was a beat and raise, but the company warned that higher costs are coming. Walmart's been eating the tariffs largely, and we're about to start getting shipments of goods that have higher tariffs on them from different parts of the world here. The stock is higher at the moment. but separately announced this concern about the quarters ahead. Cliff, what would that mean for the president if this story continued to get worse?
Yeah, well, retail writ large, including Walmart, have been trying to manage the inflationary aspects of tariffs in the short term. They can't keep a rein on that forever. If you look at chief economists, whether at associations or banks, they're basically saying that the impact, that is the tariff inflationary impact, will hit in the fourth quarter and the first quarter. That is not good for Donald Trump and his administration. And inflation has a negative impact. Now, it won't be huge, probably. We're not talking about 5 points, 5% greater inflation or 10%. We're talking a few points. But even then, that will affect his approval ratings. Our estimate here at Ipsos between 1 and 3 points. So if he's at 42, that takes him down to 40 or 39. So again, there are difficult headwinds right now. Presently, not a good place. Looking forward, because of inflation, a pretty negative scenario from a political perspective.
Yeah. President's been talking about Thanksgiving at Walmart a lot. He actually referred to it as a study at one point. It's basically a promotion, right? It's a coupon. You get this bundled meal that is, according to Walmart and the president, it's true. I think it was 25% cheaper or something like that than last year, but it also includes a lot less food. So it's maybe no wonder. Would sending $2,000 checks to everybody in the country help?
Well, it wouldn't hurt, right? And I think that at the very least, give Donald Trump and his administration credit for trying to align with the problem, with the scenario. That is, people are feeling the pinch or the squeeze of affordability. I think it speaks to it. But I think the problems are greater than just that. Ultimately, our experience with this sort of pump priming done, not just in the United States, but around the world, is that it has a temporary impact, but the macro conditions tend to swamp them out. So I would say, yes, it's not bad. It's directionally correct, but probably too little, too late to have an impact from a public opinion standpoint.
Always great to spend some time with you, Cliff. Thanks for coming back to see us. Cliff Young, Ipsos, of course. You can also, if you're lucky, sit in his class at Texas A&M University's Bush School of Government and Public Service. Pretty interesting story. I guess the president will continue talking about affordability and grocery. And if you think about the $2,000 checks, well, you could buy a lot of groceries with that, right? I mean, as the president says, bacon, lettuce, tomato, eggs. Prices are down on eggs. He talks about that a lot. I'm getting hungry around here. So is Cab Calloway. Turn that up, guys. Our panel's coming up next. Rick Davis and Jeannie Shanzano as we consider affordability in the United States on the fastest show in politics. This is Bloomberg.
You better eat if it kills you. Pass me a pancake, mandrake. Having a derby. Looking to fendle, mandle. Everybody eats when they come to my house.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Those earlier gains for the U.S. stock market, gone, fizzled. We're in the red big time right now with the Dow, the S&P, NASDAQ all declining. A lot of exuberance in the early going over NVIDIA's earnings. That has completely faded with NVIDIA shares now down by 1.6%. Bottom line here, it's all red. S&P 500 index down 48, 65.93, drop there of 0.7%. We've got the Dow down 272, now down 0.6%. NASDAQ lower by 232, down 1%. Our Mag 7 index now down by 0.6%. And again, NVIDIA trading lower. NVIDIA shares down by 1.8%. Our Nora Melinda's going to have a whole lot more on the markets for you coming up in just a moment. 10-year, 4.09%, with the 2-year, 3.54%. Gold is down $22 the ounce to $4,055, drop there of 0.5. A retreat for crude oil at $58.97 a barrel, down 0.8%. We're also keeping an eye on Bitcoin, now with an $86,000 handle, 86,750 on Bitcoin. For Bitcoin, that is a drop right now of 4.1%. Bottom line here, stocks are declining, wiping out earlier gains. At one point this morning, we had the S&P up by 1.9%. All of this amid resurfacing worries about the AI trade and elevated stock market multiples. S&P again down 0.6%. Balance of power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, thank you. Charlie's doing a great job for us today, walking us through in real time this deterioration on Wall Street. We had a Bafo rally underway after 9:30. Thought Jensen Huang reinvented himself last night to the moon. Not that we saw NVIDIA hit a new all-time high today, and actually didn't even get above $200, but this is something else. It's not just NVIDIA, as you've been hearing from Charlie. The whole neighborhood's going down the tubes. Micron down 8% now. Broadcom is flat after a fat gain this morning, and we're looking at tech across the board, even cyber, CrowdStrike, Palo, Salesforce, they're all down. Mag 7, not looking good, with the exception, and this has been the case lately, of Alphabet. It is still positive, barely. Apple's looking flat. We need to find out what in the world is going on here. What prompted this? Sometimes it's tough to tell in the moment, and we are always very reluctant on Bloomberg to assign a headline to what represents billions of trades. But we wanted to take a deeper dive here with Nora Melinda. I'm really glad that Nora could join, Bloomberg TV markets correspondent on Bloomberg Radio. Nora, what happened?
Well, we clearly are seeing a massive reversal here. As you mentioned, we did see the NASDAQ 100 rallying earlier in the day. Of course, all of this on the back of what we saw from NVIDIA earnings just last night. I mean, we saw stronger than expected revenue forecast. We're just seeing a lot of optimism on the AI front. But what has still been in the background, and for some people in the forefront of their minds, is whether or not we are potentially dealing with an AI spending bubble. And so you are really seeing that reflected in the trade right now as people are really digesting earnings and trying to get an idea of what the future looks like. Of course, we have the Federal Reserve rate cut in focus as to whether or not they will cut rates at the December meeting. This is something that a lot of people were betting on prior, but have really been pairing a lot of those bets as of late. So it is a lot of people trying to digest, investors, Wall Street right now, trying to figure out what the outlook is as we think about artificial intelligence and what it's able to deliver.
Are you seeing analyst notes that bring any rationality to this? I mean, it's a sell everything, it looks like right now. Bitcoin, by the way, is down hard. We're looking at just over 86,000. That's wow, that's big stuff, down 4%.
Right.
Nora, the VIX is coming up above 26 right now. We could be at 27. This isn't just a sell the news, I feel like. This is a sell everything.
This is clearly a sell everything. I'm seeing in terms of the S&P 500, I'm seeing only 3 sectors in the green. That's consumer staples, real estate, utilities, everything else in the red. That led lower by information technology. As I'm talking to other different sources of mine, and what I'm also seeing through a lot of analyst notes coming out of Wall Street, is just genuinely the fear as to whether or not we're going to see all the investment that's being made into artificial intelligence right now, as to whether or not we're going to see that profitability maintaining or even ramping up 5 years from now. Of course, we know tech is a very speculative sector, so we really are betting on the future here, and a lot of people clearly betting on NVIDIA. But of course, we know this tends to be the star of the show as we think about NVIDIA earnings. Coming into this earnings report, we were looking at the options market and thinking about how people are looking at volatility heading into this major event. But this tends to be make or break for a lot of people as we think about sentiment in the market.
Betting on the future with Nora Melinda. That could be the name of the book, Nora. Remember that. Bloomberg TV markets correspondent. Are we lucky Nora's on this beat now? You know, it is higher, though. Retail. You saw Walmart this morning. They beat estimates and even warned of higher costs because of tariffs coming down the pike. That stock is still up over 5%. Costco's up a little. TJX makes sense. Trade down. Stock's up about 1.5%. Can't imagine the last time Target was higher, but that's a whole other story here. Even Williams-Sonoma is moving higher. So this is a curious moment. And maybe if you're a member of Congress, you would have felt a little bit better at this time if you were paying attention to the new stock trading ban that has yet to materialize. This is a big story in Washington this week that you probably haven't heard a lot about, with the Epstein stuff happening on one end of Pennsylvania Avenue and the Saudis on the other. Stock trading ban. We've had this conversation before, and Republicans, as we read, are putting pressure on the speaker to advance legislation that would make it, well, it would prohibit the idea of insider trading for lawmakers, which has a different wrinkle on Capitol Hill. They're in hearings that involve a lot of different companies and a lot of different policy that impact companies, and you obviously don't want your government representatives trading on that. You wouldn't think it was that controversial, but it was a big deal when this piece of legislation finally got a hearing this week in front of the admin committee. And Tim Burchett, the Republican from Tennessee, spoke to reporters when it was done. Listen.
Everybody talks about this place being a dadgum swamp. It's not a swamp. A swamp is something cool God created. It filters water. Animal life lives and flourishes around it. This is a sewer. This is created by man, and it needs to stop. We've you know, for years, Congress has been using hardworking American taxpayers' money to get rich. Dadgum, it's got to stop. America knows what the heck's going on. Everybody wants to knock Pelosi. Heck, she's not even in the top 10.
Wow. Yeah. You know, there's a whole ETF tracking the Pelosi trades. So I thought this was a swamp. It's not a swamp now? I was feeling good about being in a cool place God created that filters water and allows animal life to flourish. Let's see how the panel feels about this. Rick Davis is with us, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital. And look at that, Kristen Hahn is here as well, Democratic strategist and partner at Rock Solutions. Great to have you both here. Rick, you can't beat a good Tim Burchett line like that, but I'm just curious your thoughts on this and why it is so controversial on Capitol Hill.
Nice to hear a Southern accent on the show every now and then, and Tim's right. I mean, swamps are nice. This used to be one in Washington, and we built a sewer right on top of it, and that's called Capitol Hill. Look, this is a bipartisan thing. Democrats and Republicans have been complaining about this, the lack of implementation of the current ethics rules governing stock trades, and yet leadership, whether it was Pelosi or Johnson or any of his predecessors, have really ignored this, not taken it seriously. But the door is getting busted down. I mean, like these Republicans and Democrat backbenchers, non-leadership types have taken control of the chamber. They shoved over a huge bill to release the Jeffrey Epstein files, and now they're on a warpath, and they're even talking about doing a discharge petition on this one if they aren't given a vote on the floor. So my guess is that Johnson's picked a few fights too many to control this Congress, and now he's got a divided Congress, and it's not R's versus D's, it's leadership versus everybody else.
Yeah, wow. And by the way, I believe it's Anna Paulina Luna who's behind that discharge petition. Yeah. So the walls may be closing in here for Speaker Johnson. Kristen, we're going to try to play a Tim Burchett cut like that every day just to make everybody smile. But while we're sitting here in the swamp or sewer, depending on what you want to call it, can Speaker Johnson withstand the forces of nature here?
I think it's really interesting. You know, Rick, I'm from Texas. I can bust out a Texas accent if you'd like every once in a while when we're on the panel together. But no, I think, you know, they got a taste of what it's like to be successful with a discharge petition, and Congresswoman Luna has this one. I will add a few little nuances here. This is hugely popular with the American people. I think it polls at like 90% across the board, Republicans and Democrats. There are some complications, though, and I can tell you that a lot of the members really don't like it. And, you know, if you're looking at this from, you know, when you decide to run for Congress, and there are a lot of restrictions what you can and can't do, this is one more of those. So, you know, say if you have a child, you're a member of Congress, and their grandparents pass down some stocks to them, you know, they have to sell those within 180 days. It's another barrier to entry. Not to say that nothing should be done, but I think that there are a lot more mixed feelings behind the scenes about this than a lot of the members are saying out loud, because they know how popular it is with the American people.
Well, that's true. And boy, we should note there was a Stock Act already. There is a set of rules here for lawmakers to follow. Rick, how come that's not enough?
Well, they held a hearing on this yesterday. That's part of what has percolated all the press interest in this. A hearing, by the way, that Johnson was not allowing anybody to attend. I mean, he was trying to stop the hearing until he finally let, you know, Fitzpatrick and Burchett and others, you know, take it on. And basically, it is a set of ethics regulations that are really not effective. And what they really want to do is just basically say, you can't trade individual stocks. You want ETFs? You know, you want to trade on the Pelosi ETF? No problem. But when you start picking stocks, you betray the fact that every major issue, and some in a confidential nature, pass through that chamber. And you can't recuse yourself on everything, because that's basically what you would have to do if you see the kinds of confidential information that goes through the Congress. And so rather than worry about the conflicts, just take them out. Take out individual stock trades. The current ethics regulations do not require that, and that's really the key crux of this bill.
There is something called the Unusual Whales Subversive Democratic Trading ETF. This is real. The ticker symbol is NANCE. NANC. This is for Nancy Pelosi, Kristen. This is real. It mirrors trades that have been recorded by Democrats, the trading activities of Democratic members of Congress. In the last year, it is up 12%. In the last 5 years, if you followed the trades of Nancy Pelosi and Democrats in the House, you would be up 78%. It's now trading above $44. This is obviously some kind of a game here, Kristen, that people are having fun with, and you know, the Nance ticker symbol and all that. But a lot of stock investors in the Capitol, members themselves, say this is part of their income because they don't make as much money in some cases as they think they should. What do members actually think of this?
I mean, I think there's been a lot of coverage of that. You know, I think, you know, members of Congress, it is, you know, the level that they make, it's in the high, almost 200,000, which is a lot of money, but they also have to, you know, pay for out of their own pocket places to stay in Washington, D.C. Now, I don't want to be you know, an apologist for everybody. It's very difficult to figure out, you know, the rules and the ethics violations, and a lot of times they're not enforced. So, you know, I understand that something needs to be done with these members as far as enforcing all of this, but there are challenges to being a member of Congress if you're not independently wealthy already, which is a problem.
Yeah, Cece just put up the Nance chart in the clutch. Incredible. Ed reminds us, this compares with an 11% one-year gain in the S&P 500. You would have beat the market, Rick, if you followed Nance, up 12%. Is this the problem?
Yeah, I think it is part of the problem, and members tend to look the other way when, you know, some of the more scandalous things happen, where you have a committee member who's seeing confidential information, trades on it, and, you know, it tends to get swept under the ethics rug. I think one of the tactics that Brian Fitzpatrick's talking about is actually since we know it, start listing all the members' trades when they happen. I mean, you know, so if you really want to make a living at it and you need extra capital, then you won't mind all the taxpayers seeing exactly what you're up to. So those guys who walk out of hearings and trade on the information, just make it public. No problem.
Here you go. Rip the covers off the bed. Rick Davis, Kristen Hahn. This was a great conversation, and one that's right down the middle on Bloomberg, the true intersection here of Washington and Wall Street. We'll let you know what happens to that legislation as it makes its way potentially to the floor. I'm Joe Matthew in Washington. Thanks for being with us. A great hour on Balance of Power, only on Bloomberg Radio.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Markets tank even after NVIDIA earnings and a jobs report that topped estimates. Welcome to the Thursday edition of Balance of Power here on Bloomberg TV and radio as we embrace stale numbers on employment that aren't making anybody feel better today, just as the White House tries to soothe concerns about rising prices. I'm Joe Matthew alongside Michelle Jamrisco in for Kaylee today in Washington, D.C. And we're going to have much more on this ahead as we compare notes with Bloomberg's Michael McKee, digging inside the data. And we'll share insights as well with Kitty Richards from the Groundwork Collaborative. It's all after a look at Wall Street. Let's start there now. Charlie Pellet's got his eyes on the markets, live from World Headquarters in New York. What happened to the rally, Charlie?
Indeed, completely fizzled, perhaps putting it mildly. At one point, we were up as much as 1.9%, Joe Matthew, but right now I'm looking at the S&P. Pull up the chart on the Bloomberg, and we are down by 0.9%, not just lower, but just about the worst level of the day right now on the S&P. We're down 57 now. 65.86 where we stand. We have got the Dow Jones Industrial Average down 286 points now, a decline of 0.6%, while the NASDAQ Composite Index down now by just about 1.1%. 10-year at 4.09% with a 2-year 3.55%. Gold down $12 the ounce, 4,065. Drop there of 0.3%. And West Texas Intermediate crude down 0.8%, 58.97. So bottom line here, seeing losses in a number of different asset classes. Bitcoin, major story there, major sell-off down now by 4%, 86,990 on Bitcoin, so a decline of 3.9%. NVIDIA had been the star in the early going, that star fading with NVIDIA now down by 1.4%. Bottom line, losses for the U.S. equity markets. Do want to mention Ford shares now down by 3.6%. Ford is tumbling after a fire broke out at an aluminum plant in Oswego, New York. That plant owned by supplier Novelis. Again, recapping here, stocks lower. The Dow, the S&P, NASDAQ, all in the red. S&P down 0.7. Checking NVIDIA one more time, slumping now by 1.4%. Jobs Thursday, stocks selling off for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
Hey, Charlie, thank you, as ever. We'll get back to Charlie in about 20 minutes and see where we're at. Supposing things could turn around again if it happened once already. We'll take heart in Walmart rising today, as we've been telling you. Stronger than expected earnings, stocks up 6%. Then again, we could also worry about the fact that more people are trading down, which is improving business at Walmart. We might also take note of the fact the company's warning of rising prices thanks to tariffs. So we've got a lot of noise here when it comes to the economy. And with regard to this jobs report today, we're going to talk about this with Michael McKee in just a moment. It's interesting to look at the way the administration is framing this. Michelle Jamrisco with us again today in Washington. You see the statement that came out of the White House that Caroline Leavitt has her take, the press secretary, the labor secretary has a slightly different, maybe more nuanced take.
Well, it's always a politicized report,
That's
of course,
right.
Joe, in any administration. This is something we can talk about with our own Mike McKee, but, you know, it's hard to say how much power, how much credit or blame a president should get for these jobs reports, but certainly we're in territory that I think anyone would think the inflation is kind of now this administration's story. It's not so much the Biden inflation that we hear about.
Or the affordability, as the president was referring to yesterday. He seems to think they changed the language on him there. But let's start with the labor secretary. Joined us on Bloomberg TV and radio this morning, Lori Chavez-DeRemer, framing the report this way. Listen.
This was a solid report for the September numbers. We'll have to see how November numbers come out in mid-December, but I think that this is good for the American people. We know that more people are wanting to work and they're actively seeking those jobs, and so it is my responsibility to make sure that we have that skilled workforce.
Caroline Leavitt, the press secretary, going a step further. Quote, in stark contrast to the disastrous Biden economy, she writes, almost all of these new jobs were in the private sector and went to American-born workers instead of illegal aliens. Wages for workers continuing to rise, a reversal of the Biden years. The strong report is more proof the president's pro-growth America First agenda is already making great progress. Michael McKee now joining us from New York with his view of the September jobs report. I don't know how much this even matters or should matter to us, Mike, with this being pretty stale by now. This is old news, but is the press secretary right?
No, the press secretary got almost everything wrong. The labor secretary is more correct. It was a fairly solid report. It was the strongest hiring since April. And the unemployment rate went up, but that was largely because a lot more people entered the labor force. So it was what we call a rise in the unemployment rate for good reasons rather than bad reasons. But Caroline Levitt got a couple of things wrong. You can't parse the number of people who got jobs based on ethnicity from the reports. It's a misunderstanding of the data, and that's sort of an ongoing mistake of people who are trying to make that case. Also, the average hourly earnings on a year-over-year basis averaged 4.4% in the Biden years, and that's even with COVID, and they averaged about 3.3% so far this year. So she's wrong about that as well.
Wow.
So, Mike, on the unemployment side, I know we always get headaches about trying to unpack all those dynamics. As you mentioned, the participation rate kind of falling into the story as well. I want to unpack another metric in this jobs report, and that is the long-term unemployment rate. I noticed it declined overall, but now we're looking at the shorter-term unemployment in a surge. So what is that combined with what we heard out of jobless claims? What does that all tell you about the firing side and the job loss side of the equation?
Well, it's a little hard to draw a straight line, Michelle, because we're missing a lot of data in the middle. But what it does seem to underscore is that people who are losing jobs are not finding them as quickly, finding new jobs as quickly, but we're not seeing a lot of people getting laid off. The jobless claims numbers, 220,000, still very low. So it just ratifies this idea that we're in a low hiring, low firing environment at this point. And the question is, how long do you keep balanced on that high wire before you fall off on one side or the other? And that's the big debate for the Fed, is which side you're going to fall on. And right now we're kind of split down the middle on the Open Market Committee.
Well, that was my next question, how the Fed's going to view these numbers, Mike, and what November might tell us as well.
Well, right now it doesn't look like there's been any change in thinking. We've heard from a couple of Fed officials, Beth Hammack from Cleveland, saying that we definitely do not need to cut rates now. Inflation is still too high and the labor market is strong enough. Michael Barr saying something similar, not quite as strong, but those two out today suggesting they would not support a rate cut. We have yet to hear from some of the others who are more in favor of that. I don't think we're going to see a whole lot of change. And the problem is that the November report and what we do get of the October report won't come until after the December 10th Fed meeting. So they're still going to be working on this sort of alternative data mode and not have something firm to hang their decision on.
Bloomberg's Michael McKee with his read on the numbers today. Michael, thank you, as always. Curious what Kitty thinks about all this. Kitty Richards is with a senior strategic advisor at the Groundwork Collaborative, former official at the U.S. Department of the Treasury in the Biden administration. It's nice to see you. Happy Jobs Thursday. Feels kind of weird to say, right?
I know, it's strange.
So there's a lot of strange going on here, and I'm wondering how concerned you are about a rising unemployment rate, realizing that participation drove that. But what is driving people to start looking for work?
Well, I think that I'd like to take a step back because we were just talking about the Fed and how they're going to think about all of this. You know, one of the really strange things about this is we usually would be talking or would have been talking a couple of weeks ago about October's jobs release. Right. And instead, just a reminder that today we're talking about September and we're not likely to see an October job release.
It's canceled, they said, right?
That's
so is this
right.
too stale to matter?
It's not too stale to matter. It's still important to have this data. And one of the things that I'd also draw your attention to is we got revisions for the previous 2 months, which were slight downward revisions, bringing the overall rate of job growth over the last year to a very low level, a level not seen outside of recessions. That's worrying. The unemployment rate ticking up a bit is worrying. That long-term unemployment rate is worrying. But, you know, all in all, this is kind of in line with the story we've been seeing for months now of persistently high inflation above the Fed's target, accompanied by a softening jobs market that hasn't seemed to fall off a cliff yet, but unfortunately, the jobs situation can go south very quickly and then can build on itself. The other piece is, it seems like a million years ago that we were talking about Elon Musk and Doge, but those federal employees who were pushed out at the beginning of the administration by Doge through the fork in the road email, those folks started to roll off payrolls just as the government was shutting down, right? Because it was the beginning of the fiscal year. And that is the October jobs report that we are never going to see. And so I'm really concerned about what else is going on in the economy that we just have no insight into and won't until the next jobs report, which will be right around the time that the Fed is meeting again.
Well, Kitty, obviously an especially imperfect basket of data that we have right now, but this debate has been raging particularly all year about the data integrity. Are we measuring the economy properly? Of course, it's become a politicized debate as well. What are you watching? What alternative data or traditional data are you relying on right now to really kind of gauge where we're at?
I think like everyone, I was looking to ADP and other private sector sources, but the truth is there is no private sector source that can match the government's statistical power. The Bureau of Labor Statistics puts out huge surveys where they contact many, many, many more people than any private sector survey can do. A lot of private sector data is, it's administrative data from payroll processors, et cetera, but that's not necessarily a representative sample. So that's one of the reasons that many of us are so concerned about the politicization of the BLS is there's really no replacement for it.
When you see participation rise like this, is it because people are encouraged that there are more jobs to be found, or because they are suddenly having trouble making ends meet?
It can be a combination of both. And actually, labor force participation rate growth was one of the bright spots of the post-pandemic recovery.
Yes, right.
However, we saw a huge labor force participation drop off during the pandemic, understandably. Rebuilding that sense that there are jobs out there and drawing people into the labor market, I think also really demonstrated how important it is to keep a tight labor market that can draw people off the sidelines. For many years, especially after the Great Recession, there was this sense that we were just going to have to live with 5.5% unemployment, and there was a lot of discourse about workers being unprepared or other things driving people out of the labor market. What we saw is when you have a really hot labor market where wages are growing and workers have some power to demand better working conditions, those jobs become more attractive and people are drawn in. I think on a month-over-month basis, it's pretty hard to tell what's going on.
So, Kitty, I want to ask about two big trends in one question, and that is the immigration crackdown as well as artificial intelligence. I'm wondering if anything out of this report or the data recently tell you about what the impacts have been most recently.
I think it's still, again, I'd love to see October's data, and it's still a little bit difficult to tease apart some of these pieces. We know anecdotally that the immigration crackdown is going to have effects on sectors like construction, other sectors that are heavily reliant on immigrant labor. I know here in Washington, D.C., there have been a lot of difficulties for restaurants and, many of these folks, it's not even that their employees are undocumented, it's that their employees are concerned about getting harassed on their way to work. It's really created a chill, I think, for those workers who kind of keep the city running. And I think that we're seeing that it doesn't necessarily show up quickly in the data, but we're seeing that in people's lived experience, especially in blue cities that have been targeted by the Trump administration for heavy ICE activity. In my own neighborhood, there are kids having to be walked to school by other adults because there's a lot of very aggressive activity.
Well, this points us to the affordability issue, if I can use that term. We call it costs, prices, inflation. The president's obsessed with the rhetoric right now and brought this up yesterday at the U.S.-Saudi Investment Forum at the Kennedy Center. He seems to think that somebody changed the wording here to have a political impact on the conversation. At least that's what it seemed to be he was suggesting. Let's listen to what he said. Here's the president.
We're also making incredible strides to make America affordable again. That's a new word that they're using, affordability. We're bringing prices down, but they came up with a new word, affordability. And they look at we were all about affordability, and everyone assumes that that meant that, no, their prices were high.
They came up with a new word. Did you come up? Was he talking about you or Groundwork? Who did this?
Well, Groundwork Collaborative has been using affordability for quite some time now, so I am happy for us to take some credit. And I think that, inflation, we've talked about this before. Inflation is a word that has a very specific meaning inside economic circles, right? It's a percent change in the absolute price level across a basket of goods.
Wow, very good.
What people really care about is not how much prices have ticked up for that basket of goods in the aggregate over the last month. What people care about is whether they can make ends meet. Yeah. And the affordability crisis has really been brewing for quite some time. This has been a problem for American families across the country. And it's driven both by grocery prices and those sorts of things that we really saw shoot up during the inflationary period and that are still rising. But also it's driven by big ticket items like housing and healthcare. And, healthcare is a really good example because the government shutdown was really about trying to extend these really, really important subsidies. 24 million Americans get their health insurance on the Affordable Care Act exchanges, and they just saw their premiums for next year more than double on average. And this is hundreds of dollars a month for a typical family, and that is not something that they can afford.
So, Kitty, I don't want to make you play the political consultant, but is affordability the most, people-friendly term that we can use? I mean, economists often get bogged down in terms that are a little bit heavy for ordinary people that are just trying to, make ends meet. Inflation can be a very deep concept. Is affordability the best we can do in terms of attracting people to the idea that prices just need to get better and I think a tagline here?
I think that if we're really talking to people, talking about the specifics of being able to afford your mortgage or your home insurance, being able to put food on the table, pay your rent, put a little away for a rainy day, get childcare, those are the pieces that people are really thinking about. And so, affordability is a word, but really it's trying to capture something deeper about people's experience and whether they can afford the things that they and their family need.
He also loves the word grocery. He was kind of working through that in the campaign. He says it's an old word, a strange word, a beautiful word. Grocery. In our remaining 30 seconds, is that where the president finds some relief, having lifted tariffs off a number of food imports, everything from beef to cocoa to coffee?
I mean, it's always welcome when a policymaker who has made an error corrects it. It's better than sticking with failed policy. Yeah. It is a little bit bizarre to see the president trotting out his relief from his own tariffs as a big part of his affordability agenda.
But if it brings relief, we'll take it, right?
We will see, but I'm not sure it's going to bring prices down to where people need them to be.
Interesting. Let's keep talking about that. As always, Kitty, great to see you. Kitty Richards, Groundwork Collaborative, with us here in Washington, D.C. I'm Joe Matthew alongside Michelle Jemrisco. This is Balance of Power on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all remain lower. We are off session lows, but still looking at losses. Familiar themes for investors, specifically AI valuation worries. The Dow, the S&P, NASDAQ all in the red. S&P right now down 30 at 66.12, a drop there of just about 0.5%. The Dow down 103, a decline of 0.2%, while NASDAQ down 154. The NASDAQ Composite Index, a drop there of 0.7%. Our Mag 7 Index down 0.3%. NVIDIA part of that index. NVIDIA after earnings trading lower by 1.2% right now. Keep in mind, earlier in the session, NVIDIA had been surging. The 10-year, 4.10%, with the 2-year, 3.56%. Gold at $4,060 the ounce. The precious metal down 0.4%. West Texas Intermediate crude, we'll call that flat on the day at $59.41 a barrel. Bitcoin now down by 3.8%, just above $87,000, $87,030 on Bitcoin. So the S&P 500 index lower, wiping out earlier gains amid resurfacing worries about the AI trade, along with elevated stock market multiples. S&P again down 0.5%. Balance of power continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, we do thank you. We'll get back to Charlie on the markets. It's been a little bit of a depressing afternoon here on Wall Street after a very big rally this morning, but we'll keep tabs on this. Things could change. We'll have more from Charlie in about 20 minutes on the Thursday trade. President Trump has a big day ahead tomorrow, making a big announcement, big Oval Office meeting, not with a head of state, but with the future mayor of New York. On Truth Social, Donald Trump, communist mayor of New York City, Zoran Kwame Mamdani, has asked for a meeting. We have agreed that this meeting will take place at the Oval Office Friday, November 21st. Further details to follow. This is how you set the stage for a nice conversation, right? The president's been talking about the mayor-elect since long before the election, framing him not as a democratic socialist, as Mamdani describes himself, but as a downright communist. This is the baseline, the groundwork set for this meeting tomorrow. Let's remember the ways.
You have a communist running, and you shouldn't vote for him. He's a disaster.
You know, he's running against a communist. I would think that he would have a good shot of winning. He's a communist. I don't think our country is ready for a communist.
I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy. Democrats have become radical left lunatics. They have policies that nobody's going to buy. And, you know, I see what's going on in New York. We're going to have perhaps a communist mayor. It's not even believable, my beautiful New York.
My beautiful New York. Thanks to our video producer, Cece Cherendoff, also our resident archivist, as it turns out. It takes some work. You'd have to go back in time and follow the string of rhetoric when it comes to Donald Trump and Zoran Mamdani. Michelle Jamrisco is with us, of course, today in Washington as well. You saw Mamdani respond to this invitation. He was on MS. We call it MS Now.
Yeah, I think that's the new term, yes.
I want to speak plainly to the president, he said, about what it means to stand up for New Yorkers and in the way in which New Yorkers are struggling to afford this city. Does this sound like a fun meeting?
It's going to be fireworks, Joe.
You
I
think?
mean, I think Fridays are always fun in this administration, as we know, and I think Trump wants to own the narrative into the weekend, but we could see some fun on either side.
Well, as he calls the Oval Office, the greatest show on earth, and this could be one to watch. Let's see what the panel thinks. Bloomberg Politics contributor Rick Davis, our Republican strategist, a partner at Stone Court Capital, is with us alongside Kristen Hahn, our Democratic strategist and partner at Rock Solutions. Kristen, what is the Democratic socialist, Donald Trump would say communist, mayor-elect of New York going to say to the president tomorrow? Are we going to find out that they become friends?
I don't know about friends, but, you know, you've got the politics, and when you're running for office and running campaigns and that type of rhetoric, and then once you're elected, you should be able to shift to governing. And so asking for this meeting is typical of a new mayor of a city like New York to meet with the President of the United States. I'm not sure if Donald Trump is capable of that type of shift. The funny thing is, you know, there are a lot of people who voted for the same reasons for Donald Trump and Mamdani. So it's about cost of living, affordability, all of those things. So one would hope that there would be a productive conversation. I do not have any hopes, and I'm sure that Donald Trump will be posting on Truth Social all about this tomorrow. I have no doubt.
No doubt, indeed.
Well, Rick, as Kristen mentions, of course, there will be a lot of politics in this. Of course, anytime a foreign leader or a domestic leader comes, or a visitor of any kind comes to the Oval Office, there's an opportunity to kind of warm the conversation. We've seen that in recent weeks with some controversial figures visiting the Oval. Is that what Mamdani would want as part? I mean, obviously he wants the funds, but does he want to be seen as a sort of frenemy with the White House? I mean, would that help him?
It's hard to tell, and I think this is pretty unique. I mean, I don't recall the previous two mayors in New York after they got elected calling up the president, whoever it was, Republican or Democrat, say, "Hey, I'd love to come and hang out with you." And in this case, obviously, Donald Trump's already made up his mind on Mayor-elect Mamdani. He's been actively campaigning against him. He's had some really tough stuff. Him a communist, and the administration already looking at plans to withdraw $10 billion of federal aid from the city of New York. So, like, if you're sitting around thinking, I'm not even mayor yet, but I'm going to go up there and sit down and break bread with Donald Trump, what do you hope to accomplish? I think somebody ought to sit down with him and just have a conversation and ask, maybe he should phone President Zelensky and say, "Hey, how do you avoid happening to me what happened to you?" I think this is perfect bait for Donald Trump. Come on into the Oval Office, decor, 24-karat gold, neoclassical, and you want to talk about affordability, cost of living, good luck. I think this could be a real political mistake on the mayor-elect's part.
Interesting. So it sounds like Rick sees an ambush in the making here, Kristen. What can Mamdani do? He's no dummy, and he's been very effective on television. He's been very effective with retail politics. Does he take a cue from other leaders who have come through the Oval with a gift and maybe something nice to say in front of the cameras?
I don't think a gift, I don't know if that's really his style, but I think, taking the message of the people he's going to represent directly to the Oval Office, there is a way to talk about that and take that message back to your constituents and show that he's actually doing something. I mean, the president is all about political retribution against people that he didn't support, and that's what he's doing, but this time he's doing it to the entire city. The entire city of New York by, threatening to withdraw all of these funds. So the mayor, I think, it's incumbent upon him to have that conversation with Trump. And I think that he is, whether I agree with all of his policies or not, which I certainly don't, is very good at, he's a great communicator and can communicate that back to the people of the city of New York.
Well, Kristen, as we saw earlier this month, Mamdani, from a Democratic Socialist position, alongside two centrist Democrats, all one under the banner of affordability, arguably. What can Democrats looking toward midterms next year learn from perhaps tomorrow and how Mamdani proceeds in his leadership role now?
Yeah, I think that, the mayor of New York is always going to have a huge platform, just given the city that he is with. But you've also got, I'm glad you brought up, Abigail Spanberger and Mikey Sherrill. And I think that you have people in the candidates they are and the members of Congress who they were, who were connected with the people that they represented. Mikey Sherrill is very good at communicating with people from the state of New Jersey. Abigail Spanberger represented a very purple district, if not red district, in the state of Virginia. And so I think taking it into the midterms, I always say to these candidates, go local. Make sure that you're talking about the local issues, that you're talking about them in ways that people want to hear about them. Now, the mayor of New York, the way he talks to the people in a city like that is not necessarily how somebody running in rural Ohio or Iowa, should be talking. But I think that if you have candidates who are really connecting with the people and talking about the issue of affordability, because it's always about economics and people's ability to put food on the table, that's going to resonate with voters because it hits at home.
Rick, we remember when the South African president was brought into the Oval Office, the president played him a video. They actually had the screen up there in the Oval and played him a video of what he said was evidence of genocide against white Afrikaners. Are we going to see something like that where he's going into the lion's den, will likely be surrounded by people on the couches, right? J.D. Vance will probably be there, Susie Wiles, maybe some others, big room full of media. So you're totally out of control, which I think is the point that you were making. Donald Trump is going to run this show. And I wonder what point he's trying to make. Or could we be in a world where the president is trying to reach out to, as he says, his beloved New York to have a working relationship?
Yeah, that example you used, Joe, is a good one. When President Ramaphosa came there from South Africa, it was an ambush, right? I don't think he actually expected to be treated that way or to see a video that was dummied up to show some kind of a conflict. And so, but this isn't an ambush, right? Donald Trump's been very clear, even in his latest post, that yeah, you asked for this meeting. Well, you can come to the Oval Office and meet with me, but like, there's no promise that you're going to come out alive. I mean, like, so yeah, politically, I think Donald Trump, it's a kind of a gift to Trump, right? I mean, like, he's got so many problems in Washington right now, and he gets to like spend Friday beating up on a socialist, or is his description of a communist. I mean, like, everybody in this Oval Office is like, thank God we've got a meeting with Mamdani this Friday afternoon. And so, like, if you're Mamdani, I don't even know what your message might be, that you don't understand New York. I mean, he's defined by New York, that you don't do enough for my people. Well, he's about to do a lot less if you take that approach. I mean, like, how do you actually form a message that doesn't result in taxpayers bearing the brunt of your meeting because Donald Trump will use the opportunity to take away some of the projects, like he's already done with the Harbor Tunnel into New Jersey? I mean, like, there's a lot of examples of Donald Trump punishing his adversaries, and that's exactly what he's giving an opportunity for Donald Trump to do.
Well, Rick, I'm glad you brought up the Friday news dump, because I did want to ask about this from a political point of view, what you would advise. It's been a rough week on messaging. Aside from the celebratory mood at the White House for the MBS visit, they've had to deal with more on the Epstein files, and of course some of the redistricting news that did not work in their favor. What is the bar for Trump being successful on owning this message into the weekend? Do you think we'll still be talking about Mamdani through tomorrow night and into Monday?
Yeah, I mean, the Trump folks will probably, offer to book him on Sunday shows. I mean, like, yeah, anything we can do to keep people talking about you would be a good thing for us. I mean, it's been a disastrous November, right? Starting with the elections and a massive defeat for Republicans. That press conference with the MBS was a hot mess. This is a welcome meeting on a Friday afternoon.
Well, we'll be playing that for you if they let us in the room. I'm assuming that reporters, cameras, and microphones will be part of it. Rick Davis, Kristen Hahn, great to have you both with us, and thanks for the insights. Our great panel here only on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Earlier gains absolutely fizzled. Right now we are trading close to session lows. At one point this morning, we had the S&P up by as much as 1.9%. Those gains completely gone. We're very close to session lows. The S&P right now looking at a loss of just about 0.9%, down 57, 65, 85, where we stand now. The Dow is down 233 points on the Dow, a drop of 0.5%. A NASDAQ down 272 for the NASDAQ Composite Index, a drop there of just about 1.2%. We'll have a whole lot more with our Norm Melinda on the selling coming up in just a moment here on Balance of Power. The Bloomberg Mag 7 Index, a lot of focus there. It is down 0.8%. NVIDIA, of course, one of the Mag 7, down 1.9% after earnings and after giving up earlier gains as well. The 10-year at 4.10% with the 2-year 3.55%. Spot gold down $14 the ounce, 4,063, drop there of 0.3%. West Texas Intermediate crude down 0.1%, 59.39 a barrel. And Bitcoin now down 4.3%. Bitcoin 86,604 on Bitcoin. Bottom line here, the Dow, the S&P, NASDAQ all declining on this Jobs Thursday. Also earnings this morning out of Walmart. Stock surging after earnings, up now by 5.9%. It is increasing its outlook for sales in the full year. But the other big announcement out of Walmart today, it is transferring the listing of its stock to the NASDAQ stock market and will begin trading there on December 9th, all part of a move to reflect its focus on tech. Again, Walmart, after earnings, higher by 5.9% on a down day for the rest of the market. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Michelle Jamrisco.
All right, Charlie, many thanks to you. Charlie will have more on the markets coming up at 2 p.m. Eastern, top of the hour, as we watch things develop here over the course of a Thursday that started with a massive rally on the heels of NVIDIA earnings, and boy, things have certainly changed since then. One of the big questions we've had about NVIDIA this week is the transfer of its technology to not only Middle Eastern nations, but of course, eventually, or not, China. The company's earnings report did not show sales of the H20 chips in China, and we knew that would be the case because there have been no export licenses talked about here when it comes to advanced chips like Blackwell chips, which the president had floated at one point potentially selling to China. Michelle, this is something that's not going to go away anytime soon. The president is selling these chips to Saudi Arabia, and there are concerns, of course, about them getting into the wrong hands.
Right, and well, these chips and F-35 technology and everything else that came up this week as we're looking at these Saudi tentative deals.
Absolutely. We talked about it with Denver Riggleman just yesterday, as a matter of fact. The former Republican congressman has his eyes on this creep of technology. Here's what he told us on Bloomberg.
Regardless of the relationships you have to have for certain strategic goals or objectives, you have to look at the government itself, but you also have to look at what happens with something called FME, foreign material exploitation. And the fact is, if we're providing chips or F-35s, we're providing technology, advanced technologies, and the Russians are there also with their technologies, they can exploit what we have without us having insight into that.
It's a concerning prospect, and it's where we start our conversation with Congressman Andrew Garbarino, the Republican from New York's 2nd District, who serves on not only financial services, but also Homeland Security, where in fact he is chair, and that's why this is central to the conversation that we're having. Mr. Chairman, welcome back to Bloomberg TV and radio. It's great to see you. Do you share Denver Riggleman's concerns when we talk about multi-billion-dollar deals with the likes of Saudi Arabia, knowing that China built a good amount of Saudi Arabia's internet infrastructure, and there are worries about this getting into the wrong hands? Do you share them?
Well, absolutely. It's always a concern. When we develop great technology here and then we export it, it's always a concern that it gets into the wrong hands because that's what the bad guys do. So I'm always concerned that the good work that we do here falls in the wrong hands, which is why we have to be extra vigilant in making sure that we protect our critical infrastructure here at home to protect against these foreign actors if they get access to this technology.
Mr. Chairman, I know among the things that you're working on in this space is looking at Anthropic and their concerns that there was a Chinese hack of their AI technology. I'm wondering, where do we stand on that? Have you seen the evidence of that case?
Well, we haven't. The federal government has not determined FBI. They have not determined if it is if it was a Chinese-backed attack. Anthropic did come out in its report saying that China was behind it. What I do know is it was the most aggressive use of AI in a cyber attack. We've seen AI being used by the bad guys in cyber attacks for years now, but this was the most aggressive use, and it is very concerning that it could just get worse. So one thing I've been talking about with the private sector, 85% of our critical infrastructure is held by the private sector, is controlled by the private sector, is if the bad guys are going to be using AI to attack us, we should be using AI, implementing that in our cyber defenses, because it's going to be impossible to fight this aggressive use of AI and cyber attacks by just human intervention and defense alone. So we have to step up our game.
You need AI to beat AI. It brings us to, speaking of cyber and AI, some of the legislation that you're putting forth, Mr. Chairman. The Pillar Act supports state and local cyber programs, as well as strengthening cyber resilience against state-sponsored threats act that would create a joint task force focused on external threats, the likes of which we're discussing right now. Does this argue with the type of deal that we were just discussing between the U.S. and Saudi Arabia, or help to make it possible?
Well, I think the second bill you mentioned, the one dealing with the foreign state actors, is hugely important because it's actually going to help us streamline our response to these attacks by our foreign adversaries. We kind of did this after 9/11, where we had intelligence agencies that were not talking to each other, and then after 9/11, we made them so they had to talk to each other and they had to share information. Now our cyber border is a new battlefield, and making sure that the FBI, CISA, other federal agencies are sharing information and sharing it also with the private sector, so we can protect against these foreign adversaries, especially when it comes to attacks on our critical infrastructure. That is something that, and why I'm so proud this bill passed. Hopefully the Senate moves it, so we can streamline our response to the thousands and thousands and thousands of attacks that we see every day from foreign actors from the likes of China, Russia, North Korea. And the other bill, the Pillar Act, the federal government has a lot of money, they have a lot of expertise, but our state and local governments, municipalities, counties, mayors, the cities, they don't have the money, they don't have the expertise, even though they also control a lot of critical infrastructure. So this grant program is a continuation of one that's been going on, will help these local governments stay protected because they need it. And I think this year we've said 44 states have been hit by cyber attacks. So we need to prepare them so they can defend against these cyber attacks as well. So very proud of the two pieces of legislation that passed the House this week.
Mr. Chairman, let's talk about the other side of the equation, too. Of course, as you're aware, the debate has been raging this year between the strict national security hawks and those who are taking kind of a more pro-tech stance. Some in the White House kind of are trying to find that nice middle ground there. You mentioned protections earlier. I'm wondering, how does this apply to the TikTok case? We haven't heard movement on that. The Chinese, of course, said that they're ready to help resolve the issue. Where do you think that will fall? I know you voted for the divestiture ban, the so-called bill.
Well, it's again, we're waiting for information, like you said. It's going to be interesting to see who's controlling the algorithm, who's controlling the data. This is all questions that we haven't gotten the answers to yet. And I understand that a lot of people want TikTok to continue, but I have major concerns over what happens with that data. So I'm going to save judgment on what I think of the final deal until I get some more information on it. But I am very concerned about who controls the data, who controls the algorithms, and it's something that myself and my colleagues are keeping a close eye on. But data protection across the board, all these new technologies that are coming, the use of AI. I am a major proponent of including when Congress acts, when the federal government acts on laws or regulations, there should be some sort of cybersecurity protections built into these regulations, into these requirements, into the language, so we have that extra protection for our people.
Congressman, tomorrow's a big day for New York here in Washington. As you all know, the mayor-elect, Zohran Mamdani, is going to be in the Oval Office for a meeting that he requested. The president has been talking about this on Truth Social, and just now the press secretary, Caroline Leavitt, said that a communist is going to be coming to the White House tomorrow. What do you hope comes from this meeting? What's this all about?
Well, I appreciate the president taking the time to meet with the new mayor, the mayor-elect. But my main focus is, as a New Yorker and chairman of the Homeland Security Committee, is that New York remains a safe place to live, visit, and work. And I hope the president makes clear to the mayor that his past anti-police comments, his past anti-police rhetoric, is not going to it's not going to last. It's not going to exist. He can't act this way as mayor. And if he does anything that makes New York less safe, the president has my support in doing what he needs to do in making sure it stays safe. Next year's the 25th anniversary.
It could be a schooling tomorrow.
Yeah, I look, this is an important topic. Next year's the 25th anniversary of 9/11. This was, Department of Homeland Security, the Committee of Homeland Security, this started after 9/11. So I'm not going to sit by, and the president's not going to sit by, if the mayor decides that his policies are going to make New York less safe. We're not going to put up with it. And I hope the president makes that painfully clear tomorrow in the meeting. I'm sure they'll discuss other things, but my number one concern is making sure New York City remains a safe place.
Well, we'll be keeping our eyes and ears on this. Congressman Andrew Garbarino, Republican from New York, second chair of the Homeland Security Committee. It's great to have you with us, Mr. Chairman. Thanks for your insights today on Bloomberg TV and radio. I'm Joe Matthew in Washington alongside Michelle Jamrisco. We've got our eyes on Wall Street as Washington and Wall Street collide today with September jobs data at hand and a big question about what happened with NVIDIA earnings, a beat and raise that sparked a big rally this morning, and it's long gone. We want to get back with Nora Melinda watching the markets for us at Bloomberg World Headquarters in New York. Nora, this doesn't seem to be getting better. What's behind all this?
We're still seeing a lot of red on the screen. Of course, we are seeing a reversal from the optimism that we saw after NVIDIA results just last night and that bleeding into this morning. But now we are seeing a major turn in sentiment here with a lot of these names in the red. Of course, we know NVIDIA has been the fulcrum of the bear versus bull debate here, and we did see bulls taking quite a victory lap earlier today. But as I'm chatting to sources, it seems as though maybe there's no energy left to sustain this bounce here. I mean, of course, we do know the NVIDIA print was strong. Did little to dissuade fears, though, that we are approaching a peak here in terms of how bears are thinking in this environment. We know that we have a combination of worries between a potential AI peak here. If you think about the results that we got out of NVIDIA, 62% in terms of revenue growth figure is strong, but of course that's lower than what we had seen in past years when we saw quarters where it was 200% plus growth. So you are seeing a lot of expectations continuing to be high in this market, and a lot of investors right now wondering whether or not we are seeing the peak.
Well, there were lofty expectations for NVIDIA, Nora. I'm wondering, what are you looking at from here to see if they actually meet what the market's demanding?
Well, that's certainly the question that a lot of traders are currently outlining. As we're talking to analysts here on Wall Street, the forward look right now is whether or not they're able to deliver on all of the plans that they're laying out. And that has really been the case for the tech stocks more broadly. Of course, if we think about this AI run, we're seeing the business model really shifting for a lot of these tech companies. We're seeing more of an asset heavy landscape right now instead of asset light. So you're seeing a lot of these businesses continuing to take on more debt. So it's about whether or not they're going to be able to continue to finance all that they're laying out here. And additionally, if they're able to give some sort of return on the investment there.
Well, it's interesting that one of the few bright spots today is retail, and specifically Walmart. With the beat and raise here, Nora, is that stock defying the other trends in the market today because more people are trading down?
Right. So we are seeing a lot of people trading down, and Walmart clearly being a bright spot here. But it has been a bit of a mixed earnings season here as we look at retailers. I mean, Walmart doing well. You're seeing people trading down. TJ Maxx, you're seeing people going there. But then you are also seeing the likes of Target struggling. And a lot of those retailers, when we're thinking about pricing pressures right now, you're seeing a consumer that's incredibly strapped. So you are seeing a lot of companies that are discounted names really doing well in this environment.
Great to have you with us today, Nora. With the heavy lift in this market, Nora Melinda live in New York alongside Michelle Gemrisco. I'm Joe Matthew, and I'll meet you back here on the late edition of Balance of Power. Starts at 5 p.m. Eastern Time. We'll see where the markets land by then. We've come a long way from that earnings report last evening. Stay with us here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. And I ask, what rally?
Yeah, well, there was a rally earlier today. NVIDIA was up as much as 5% earlier in the session. There
Major indexes in the green, Carol. Now, it's not the same story.
Yeah, if you blinked kind of mid-morning, you missed the gains that we saw earlier. Same story for, as you said, NVIDIA. So we're on the markets, no doubt about it. Also this hour, we did finally get a monthly jobs report for September. We're going to get into the U.S. economy with Mike McKee. He's settling in here right in our studio.
Well, on that NVIDIA story, it rallied, then it dropped back. Why the chip giant needs investors to party like it's not 1999.
All right, gonna get into that. Also, is Blue Owl the canary in the coal mine? Just a question, folks. We're not pointing fingers or anything, but we're trying to understand what's going on in private credit. We'll get to that over the next 60 minutes. First up, let's get to that selling on Wall Street. Here is Charlie Pellet.
And I thank you very much. Happy Thursday to you both. Not such a happy day for the bulls with the Dow, the S&P, NASDAQ, all retreating right now. Running the GIP screen on today's S&P chart. We are just about the low of the day right now. Looking at a loss of 1.1% on the S&P, down 76 points to 65.65. The Dow Industrials down 350 now. That is a drop of 0.7%. NASDAQ down 352, drop there of 1.6%. NASDAQ 100 index down 1.7%. Russell 2000 index of small cap shares down 1.1%. With a close eye on the Mag 7 index down 1.1%. NVIDIA down today after an earlier pop. Tim mentioned up by roughly 5% in the early going. NVIDIA right now down by 2.4%. So again, the S&P down 77, drop there of just about 1.2%. 10-year 4.09% with a 2-year 3.55%. Gold down $14 the ounce. Spot gold $4,062 right now, a drop of 0.4%. West Texas Intermediate crude down 0.5%, 59.12 a barrel, and Bitcoin now down by 4.6%. Bitcoin 86,314 on Bitcoin. We're keeping a close eye on that. NVIDIA, though, the big equity market story today, it is down by 2.3%. We've got other big tech names tumbling as well. Google down by 0.2%. Alphabet, to put it correctly. Meta Platforms down 0.9%. Microsoft down 1.4%. CoreWeave now down by 2.2%. And around other cloud-related names, Oracle down by 4.8%. So recapping here, NVIDIA down 2.2%. S&P low of the day down by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, you are up to date on the market trade. Thank you so much, Charlie Pellet. We're also getting up to date, slowly but surely, on the U.S. economic picture, courtesy of U.S. economic data from the U.S. government. It has started to flow after the longest government shutdown in U.S. history. We did get the monthly jobs report for the month of September. Job growth topped expectations in September. Non-farm payrolls, Tim, rising about 119,000. The unemployment rate, though, continued to rise.
I want to bring in Mike McKee, Bloomberg Television international economics and policy correspondent for Bloomberg Radio as well. Mike, is this information could have been useful 6 weeks ago? Do we get any? Do we glean anything from something like this?
Not really. It's been described by one analyst as a sort of Rorschach test. You see in it what you want to see. Maybe some people see clouds or something like that. But those who think that the Fed should be on hold point to the strong job creation and the fact that inflation is still going up. And those who think the Fed should be cutting can point to the unemployment rate, although this unemployment rate rose because of a large jump in the number of people looking for work. The labor force rose significantly. So
can you explain that?
Good reason. Well, it's just it's math. It's the denominator is higher.
Well, I understand that, but why were more people looking for work? Why was
we
the
don't
pool
really
bigger?
know. There are some theories. Steve Stanley at Santander pointing out today that that they have had trouble in the summertime adjusting for all the college graduates who have not been able to find work coming out of college these days because companies aren't hiring, and so that seems to have caused a problem in measuring the number of people who are in the labor force, and that may be one reason. I don't have a good other reason, but there are a lot of people coming into the labor force according to these data.
We also got weekly jobless today, right?
We got weekly jobless, and at 220,000, it's pretty much where it was when we last left you back at the 1st of October. So the story is still the same: low, higher, low, fire.
Low, higher, low, fire. It's interesting because we keep trying to figure out, we talked to everybody about kind of where we are in the U.S. economy, and it seems like not too bad, but there are still inflationary worries, and it does feel like the job market's softening. I want to layer something on top of that, and this is from Fed Governor Lisa Cook, who she said officials should monitor how unexpected losses in private credit may spread to the broader U.S. financial system due to the, quote, increased complexity and the interconnections, end quote, with leveraged firms. It's something we've been focusing on a lot here, and I know all of Bloomberg has been. You know, we're going to talk about Blue Owl in just a moment, which is among our most read stories. But how are, you were here during the financial crisis, and I don't want to say that the sky is falling, but what are the things that you watch to get an idea if there is stress in the financial system that might portend some problems?
Well, I think the important thing about the financial crises is that they're never the same. We have one, regulators patch the holes, and then we have a different kind. And now we're looking at private credit, which has grown tremendously. And it has also grown in the area where regulators don't have a good idea of what's going on. And that's what they're afraid of here, is the interconnections that might be among these lenders. The lenders say, we do extra due diligence because we're private, and we have to make sure that we're not going to lose money, so we make sure that the borrowers are okay. But we've seen some of these not work out. And so do they have it? Does that mean if you're not getting paid for one, okay, you're going to maybe make payments on the other, which is always the real start of these problems, is contagion. So you're looking at defaults and the default rate, and you're looking at the rate of fallen angels. Now, all these private lending are in most cases to private companies, so you're not going to get a complete picture, but you get some idea of what's happening out there in the credit world. And then you can watch some of the interest rates that, what are people charging for subprime loans, and how does that maybe translate into a private equity.
One thing I just want to ask you quickly, though, when a Fed governor starts to talk about this, I mean, I know this is what they're supposed to do, right? They're in touch with certainly the financial community, but I mean, I don't know, should we read anything into it?
I think there's a rising concern because of the overall state of the economy, but the Fed doesn't have a lot they can do about it because they don't have supervisory ability for this situation. So that maybe raising the issue is the best they can do to try to get people's attention on this.
Hey, Mike, one thing that got my attention yesterday, and you were in Washington, D.C. for the Fed minutes, so we didn't have a chance to talk to you about this, but just about 24 hours ago, the president made some comments to the U.S. and Saudi investment community, and he made this joke that he'd fire Treasury Secretary Scott Bessent if interest rates don't get lowered. We know that the Treasury Secretary does not have direct control over interest rates, but we also know that he's leading the effort to select the next chair of the Federal Reserve when Powell's term is up in May of next year. I thought that was like a different tone coming from the president, and it showed that there were a lot of comments, too, about the Fed chair in the last 48 hours that didn't get as much attention as they've gotten in the past. But I'm curious how you look at comments such as those and whether or not Scott Bessent is actually going to have an influence on rates because of the selection for the next Fed chair.
Well, it's a sort of a second level impact if he picks somebody that would then lead the Fed to cut rates more, then yes, you could say he would have an impact. He's not going to have any impact on Jay Powell and the current makeup of the Fed. But the question is, who does he recommend to the president? Who's the president going to pick? And one has to assume that given all the comments he's made, that Trump is going to sit his nominee down and say, look, I expect you to cut rates. Now, who can say no to the president? I mean, that's going to be the key question, and that's going to be the question that all Wall Street is going to ask when whomever it is appointed. Is this guy going to stand up and do what's right, or is he going to do what Donald Trump wants?
Well, right, there's the predicament of saying no to the president, but also saying yes, cut rates, and then you're answering like yes to the financial markets, who might be like, wait a minute, are you just doing this under duress and doing this under pressure from the president? And then it's not an independent Fed, and then you see potentially
that's the question,
market instability.
Will people be upset by the idea of an independent Fed? Now, markets have turned around today, but this morning we saw them go up on the jobs news because people thought that meant that the Fed might cut rates, the unemployment rate going up, and that, when Fed cuts rates, stock market is happy. But in this case, it'd be a step beyond, and they'll have to raise the question of, okay, now are they going to cut rates and bring about inflation, which we don't like?
See, it never gets boring.
Who was it? Stuart Paul yesterday talking to us about the measure that Bloomberg Economics has about the Fed independence and a lack of, or not so much, a lack of political persuasion over the Fed.
Yeah.
Yeah, right? The administration at this point doesn't have any. You see Stephen Myron flailing about, saying the same things over and over again about we should be cutting rates 50 basis points and giving economic arguments that Wall Street just rejects. And the rest of them are, right now, the majority of the people who've spoken out have said they want to leave rates where they are.
It's still a vote, ultimately, right?
It's a vote, and it's 12 people out of 19, and so one person isn't going to necessarily make a difference.
All right, good stuff. Mike, thank you so much.
Welcome back, Mike.
Yeah.
It's lovely to be back.
We're going to talk about his travels in the weeks to come. He's been doing some cool things on assignment.
It was for work. It wasn't vacation. I want to clarify to everybody.
It was for work.
It was for work.
Working my fingers to the bone.
Yeah, it's good for you. Bloomberg TV international economics and policy correspondent Mike McKee. Hey, quick check on the trade, if we may, because we have seen markets. We were down as much as 2% on the NASDAQ 100. We bounced off that low. Still a decline of about 1.8%. The S&P 500 down 1.1%. And if we take a look at NVIDIA, we're looking at that stock. It is down. Let me just pull it up here. It is down, Tim, about 2.4%. We've been down just shy of 3% at its lows. Also at its highs, we've been up as much as 5%.
Well, after the close Wednesday, NVIDIA delivered a surprisingly strong forecast and pushed back on the idea that the AI industry is in a bubble, easing concerns that had spread across the tech sector. The world's most valuable company expects sales now of about $65 billion in the January quarter. That's roughly $3 billion more than analysts predicted, Carol. NVIDIA also said that a $500 billion revenue bonanza due in coming quarters could be even bigger than anticipated.
Yeah, there's been a lot of talk of an AI bubble, and the CEO, Jensen Huang, said on a conference call with analysts that from his vantage point, we see something very different. We highly recommend you check out our Ed Ludlow's exclusive interview with Jensen Huang. You can find it on the Bloomberg and at Bloomberg.com. Right now, we want to bring in our Bloomberg Opinion U.S. technology columnist, Dave Lee. He's got a couple columns on the terminal, but one that caught our attention, that the chip giant, meaning NVIDIA, needs investors to party like it's not 1999. He put this column out ahead of earnings. Good to have you here with us, Dave. What do you mean by this?
Well, look, the question is no longer, is this an AI bubble, right? I think we've all come to the agreement there is a bubble of some kind, but is it going to be a bubble like the internet.com bubble where there was just devastation when many of these companies that had, suspect balance sheets turned out to be suspect companies? Jensen Huang, he is saying, look, there's huge hype, there's huge excitement, there's a lot of questions about how companies are going to use AI, but from where he's sitting, as you were just saying, they're still seeing this incredibly strong demand for what they do, which is obviously create the world's best semiconductors
to be
for
fair,
AI.
He's got a fiduciary responsibility. He's not going to say, right? Like, he's got to be careful in terms of how he quantifies or qualifies his business. And the numbers, many would say, there is still strong demand.
Still strong demand. I think that it was interesting to see the reaction to the earnings last night, because the immediate reaction was, wow, this really pushes back on the idea there's a bubble. Today, we're seeing a retraction of that somewhat, right? We're seeing traders sort of say, well, the problems we were still worried about before the earnings, they still exist, despite the earnings being so strong.
What I found so interesting about that is that we did see highs of close to 5% in the morning, and then starting at about 10 o'clock, shares started to fall, ultimately now down 2.7% for NVIDIA. What is your take on why the collective market sort of recognized something here? There's no catalyst, at least to my knowledge, that no new information came to light. that would send shares lower?
Well, look, one of the defining parts of this new bubble so far has been, whenever there's a slight clue as to the future AI, the reaction needs to be overstated. So you remember that afternoon or that morning when DeepSeek was released, the reaction to that
day back in January.
I mean, just devastating, right? Everyone was sort of panicking, and then when people really thought about it, they thought, well, you know what, maybe this isn't so bad after all. The same is being, I think, could be said for sort of positive moves. And look, nobody was coming into NVIDIA's earnings yesterday thinking, oh, this could be, these could be bad, or everyone was expecting it to be a great quarter. Now, it's stronger than some people had thought, obviously, based on the analyst estimates beforehand. But the dynamic that people are worried about isn't so much how NVIDIA is doing, but how are their clients doing? When they buy all this computing power, is it going to be worth it for them? And that's where the
ROI ultimately.
The ROI, yes.
What?
Profit margin. I mean, whenever we talk about bubbles in the 1999 and late 90s, early 2000s, what people come on who were there tell us, and their pushback is, yes, but these companies are now profitable. I mean, NVIDIA sees fourth quarter adjusted gross margin of 75%. Like, we're not talking apples and oranges here. Like, this is a completely different type of company than we saw supported in the late 90s.
I think, no one's, and I said this in my column, no one's calling NVIDIA the next pets.com, right? or the risk of that. But NVIDIA's clients could be the next pets.com. OpenAI, there's a company burning billions of dollars with an unsure way of getting that money back. CoreWeave was a catalyst for a lot of the worries around, just data centers in general. They're still finding it very hard to build data centers. It's going to be a big problem finding the place to build them, finding the energy to power them. There's a lot of unknowns that could be at play here. And when we compare it to that dot-com bubble, I have to say I wasn't covering it because I was a child. However,
you and me both.
All right, I was covering it. And I will say there is a difference, and we talk about this, that there are companies with earnings, but it's so I'm trying to understand, the demand is there, and you're saying, we get it, they can't build the data centers fast enough, they don't have the energy to power them. Is that enough to mean that this is not a real thing and that AI is not going to impact us and the spend continues in terms of the build out? Is it just case that we have the timeline wrong?
The timeline is the question, right? Because when we look back at the dot-com bubble, people say, and again, this is in the column, they say, well, what about Amazon, right? There's a real company, changed the world.
Not profitable, not profitable, not profitable.
Exactly, for years and years and years. And it didn't recover from its dot-com slump for another 8 years after 1999. Right. 8 years. I noted that Cisco, 25 years. It only recovered from the dot-com crash this week. And so, sure, AI could be as big as the internet or even electricity, as some people are saying. Whether or not there'll be a slump in the meantime that could take a huge amount of time to really recover, I think that might be one of the concerns that people should be having.
So the debate continues.
Patience, I think, is the key.
But okay, all right. Because it's like the back and forth, right? Like, we feel like in any given day, it's like, what is the right narrative? And at the same time, while there's concerns, we continue to see companies spending big time in it. And they're getting more and more interconnected. It's like a bad game of Twister. It's the AI version of Twister. Am I aging myself?
No, that makes sense.
That makes sense to me.
I'm just trying to visualize the companies.
Come on, work with me on this.
Get the graphics department on it.
We are. Dave Lee, thank you so much. Bloomberg Opinion, U.S. tech columnist. Coming up, one of the most read stories.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We got ourselves a stock market sell-off on this Thursday. A Jobs Friday. Losses for the Dow, the S&P, and NASDAQ. S&P right now down 63 points to 65.79. That is a drop now of 1%. You got to keep in mind that at one point the S&P had been higher by almost 2%. Dow Industrials down 203 now, down 0.4%. NASDAQ Composite Index down 326 points, a drop there of 1.4%, with the Bloomberg Mag 7 Index down 1%. NVIDIA, key part of that index, it is now dropping by 2.4%. Your 10-year 4.10%, with a 2-year right now at 3.55%. Gold up $2.50 the ounce, up by about 0.1% to $4,080. And West Texas Intermediate Crude WTI 59.17 a barrel, down 0.5. And Bitcoin now lower by 4.3%. Bitcoin selling off to 86,630. Verizon Communications this morning announced wide-ranging layoffs that will shrink the company by as much as 20% of its non-union workforce, a major step in a turnaround plan led by the new CEO, Dan Schulman. Verizon shares on a down day for the rest of the market. They're up a little, changed up 0.1%. T-Mobile down 0.3%. Rival AT&T up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So once again, this week, a story around Blue Owl Capital is among the most read on the Bloomberg terminal, has been all day. This is as the company's shares had fallen to the lowest level since 2023, with co-founder Craig Packer blaming, quote, negative articles about private credit for the decline. Now, the latest stress point, I got to say, we talked about yesterday. If you might recall, Blue Owl Capital scrapped a planned merger of 2 of its private credit funds after scrutiny rose over potential losses for some investors. So the story's still a live one, and we wanted to dig a little bit deeper.
To do that, we're joined by Bloomberg News Chief Wall Street correspondent Sri Natarajan. He's here in the studio along with Davide Shiliuzzo, Bloomberg News Chief Correspondent for Private Capital. Both join us here in the Bloomberg Business Week studio.
All right, welcome, welcome. Sri, I do want to start with you. You reminded us yesterday, Blue Owl, this is a firm that has been held up as kind of a poster child when it comes to the world of private credit. Is it, again, I want to ask you, the merger coming undone or something more? Like, is it just a company-specific thing that's a problem, or might it be the canary or owl in the coal mine? Like, is it something more in terms of what's going on in the private credit world?
Look, Blue Owls are supposed to be fictional characters in the real world, and it's now up to the Blue Owl management to prove that their marks are not illusory. In a credit market where you're dealing with private loans, the investors, your investors, are reliant on what you believe those loans are worth. Unfortunately for Blue Owl, many of their investors in their publicly traded BDCs don't quite believe the book value, and that's why it's trading at a big discount to book value. If you want to blame negative articles, that does sound a touch defensive, and it's not going to really help the cause. And there are a lot of Wall Street veterans who are pointing in this direction and talking about trouble. But I would like to take a step back and say, you know, when you ask about whether this is a canary in the coal mine, we haven't seen some crazy implosion. When you're investing in 100 companies, there will be some defaults along the way. Right. The question is, can you keep it below what your peers are experiencing, and is it below your historical averages? So that tells you where you are in the credit cycle. And on those metrics, Blue Owl and the rest of their peers are seemingly doing just fine. But the mind goes back to the kerfuffle last month when Jamie Dimon got on the earnings call and gave what sounded like sage advice about the credit cycle and said, you know, when there is a problem somewhere, you can expect a few other problems to crop up, a few other cockroaches. For some reason, a lot of players in the private credit market took it as a direct insult hurled in their direction and got worked up about it. Prominent in that was Mark Lipschultz of Blue Owl, who really took a real swing at Jamie Dimon. A month later, you kind of feel like saying, if you come at the king, better not miss.
Well, before, I want to bring in Davide, but Jamie Dimon, how many times have we had conversations with you? We all wait to see what he has to say about any situation. He doesn't, or does he, just drop something to stir the pot? Does he do that?
Let me tackle this carefully. I think the fact that Jamie Dimon has been the CEO of JP Morgan, the largest bank in the United States with a $4.6 trillion balance sheet for 20 years now, right? Like it makes you think that he's coming from a vantage point that is unparalleled, to be honest. And he's got the experience and the position and the pedigree to speak his mind, and thankfully he does. In this case, and if you look back over the years, some of the things that Jimmy has said, whether it's about work from home or a myriad number of topics, can veer towards the extreme. But what he said here seemed fairly innocuous. All he said was, there's never just one cockroach. There will be other troubles that crop up. He didn't necessarily say the others will be in deep distress. Why did the private credit industry take it so personally?
So Davide Scializzo, come on in here, because you cover private capital for Bloomberg News. The focus that we've had this week has certainly been on Blue Owl, not just investor reaction, but also the press that we've seen around the company. Is this something you're seeing in your world outside of Blue Owl right now too?
Yeah, and I would say one thing to Jamie Dimon's comments, like he wasn't wrong, because we have seen more of these situations and across the industry. By the way, we've seen them on the bank side too. So I think there is a broader issue kind of in credit markets where people are questioning like some of the underwriting standards and red flags that may have been ignored in the past, and that cuts both ways. I think what Blue Owl really put on the map is an issue that all of these firms are kind of wrestling with, which is how do you sell this asset class to retail investors, and what is the right format to do that? You can, historically, they've done permanent vehicles, like very long dated stuff that it's great for institutions. You lock up your money for 7 years and it works well for them. But if you're making a push into individual investors, you have to provide some kind of liquidity. And what is emerging with this failed merger of Blue Owl is that liquidity is an in-between between daily liquidity and 7-year liquidity, and it doesn't kind of work as intended sometimes.
Well, how big of an issue is that for private credit overall if they don't have the market that includes retail investors?
I mean, I would say it's a big issue because a lot of funds are being set up in a similar way where they provide quarterly redemptions subject to a cap. And you can either come out at NAV, which is basically the value of the assets in the fund that the manager assigns to them, or if it's in a public structure, you come out at the price that the market assigns to it. And the market right now is believing that most BDCs are 20 or 30% below their asset value.
But here's the thing. There was nothing crazy or revolutionary or wacky about Owl Rock or Blue Owl wanting to merge a private fund with a publicly listed BDC. It has been done in the past. The problem and the challenge was it was being considered, or at least it was presented to the market at a time when the amount of redemptions in that private fund were climbing. And if it climbs above a certain mark, Blue Owl might very well gate redemptions, and you never want to be in a position where you tell your investors you're not allowed to get your money back. They had been honoring all their redemption requests so far, but if you ever had to get to the position of gating redemptions, or basically saying, right now we will not allow you to pull all the money that you want to pull, that spurs panic. That results in more people wanting to run away from your vehicle. So instead, when they talk about wanting to merge it with this public vehicle, which is trading at a 20% discount to book value, which means once you're in there and then you want to get out, you have a 20% loss on day one, it starts to feel a bit icky. And that's what really resulted in this market reaction that makes Blue Owl, or at least pushes Blue Owl into this defensive corner.
But all this makes me feel like, okay, if Blue Owl is supposed to be the poster child, like if we're talking icky or redemptions or gating those redemptions, that to me, if you're talking about the poster child for private credit, then it makes me wait, like, okay, if they're supposed to be up here and they're maybe potentially having issues, what else is out there? Because not everybody's in the same situation.
And that
in other
goes
words,
back,
they're in weaker situations.
And that goes back to the broader concern about the industry. It's not just Blue Owl. I think Blue Owl is in the spotlight because they tried to do this at what some people, many people probably now would argue was terrible timing. But it is an issue that everyone in the industry has to kind of deal with.
I guess the crazy thing is, and we've had so many guests, I feel like you go to Milk in the last couple of years. First of all, everybody, all they want to talk about is private credit. And then it feels like the last year or two, it's more like, how do we get out of these deals? And like anybody who's got investments are thinking about their investors who after 3 to 5 years want to see some kind of returns, and they've struggled to get out of these investments. And I feel like they're just trying to figure out all these ways. And I just wonder at some point, do we have some kind of problems as a result? Or no, it's just, again, the timeline of how this has to come
But
or work out.
it's also the nature of credit markets, right? It's not equity investors. Credit investors generally tend to be a little more cautious because your upside is kind of capped.
Yeah.
You get principal back and interest on that, nothing else. Whereas if you're a stock investor, your stock could go today from $10 to $300 and then back to $150. You still would have made a lot of money.
Right.
Your 100 cents on the dollar will be 100 cents on the dollar when it comes back, or it goes down to 50, 30, or God forbid, 0. And that's why whenever there is a concern of, is the cycle turning? Is there a credit crunch coming? And when you have a space like the private credit space where funds that have been flush with cash, you see the enormous growth in that space in the last few years.
Crazy.
When they're all competing with each other to actually win deals, to put money to work, your automatic question is, did some people cut some corners, and so therefore when the cycle turns, could it be problematic? You talk about the potential issues with Blue Owl. We don't even see a ton of Blue Owl deals where there have been very obvious issues, but and David is too polite to point this out, but look at some of the coverage out of BlackRock and their credit investments. You've already had a trio of investment. They had, just last night we reported about how one of their private credit CLO had to waive management fees because they failed one of the critical tests on the CLO. There's a alleged fraud related to big telecom receivables. And then there was another deal that Davide wrote about just last week, where the mark on that investment at one of the BlackRock funds went from 100 cents on the dollar to 0. 100 to 0 in a matter of weeks.
34 days.
Well, and as we're having this conversation, one thing I keep thinking of is this comes at a time when, over the last few years, we have had a lot of people in the private credit space and in the private investment space, Davide, say, these are the assets that we think Americans should actually have in their retirements. And I'm wondering if this exposes maybe a potential flaw to that strategy, this idea of marking it to market and having the traditional retail investor understand that this type of thing can be locked up for a long
And
period
are they
of
just
time.
looking for a new line of demand?
A new place
so that
to
is
put the
absolutely
assets.
right. Like the new line of demand has been retail and insurance because the institutional market kind of tapped out. The second point I'd make is that it's very easy to sell private credit as a great opportunity when rates were rising and capital was available, and you had all of these dynamics where you could go to your investors and say, hey, you're investing in, senior loans that are at top of the capital structure and getting, low double-digit returns with leverage, and that's great. Right now, we have rates coming down, and there is a question about, at least investors not being prepared for some disappointment when it comes to returns, but potentially credit issues when it comes to individual companies that just can't exist in that shape, and that's when you get the markdowns that we've been writing about.
Okay, so
to be continued.
Yeah. Okay.
Can I just leave you with one thought?
15 seconds.
I'll wrap it up in 15 seconds because there's been too much doomerism here. When David Solomon yesterday was asked about the concerns in the market, he said something. He quoted a friend and said, "Skeptics often sound smart, but optimists make a lot of money."
Nice final thought. Shui and Davide, thank you so much. We really appreciate it. This is Bloomberg.
We do check markets all day long here at Bloomberg. We have got the S&P 500 index close to session lows. 1 hour, 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all declining right now. We did see a gain early on of 1.9% in the S&P, but that almost 2% gain has now vanished. Indeed, a loss of 1.1%, very close to session lows on the S&P, down 72 at 65.70. The Dow down 0.5%, lower by 243 points. We've got NASDAQ down 1.6% with the Mag 7 index down 1.1%. NVIDIA, of course, big part of the story today. It is now down by 2.5%. The 10-year 4.10% with the 2-year 3.55%. Gold up $4.50 the ounce, up 0.1%, 4,083 on the precious metal. West Texas Intermediate crude 59.14 a barrel. WTI down by 0.5%. Bitcoin, what a story there. Bitcoin down 4.5%, 86,392 on Bitcoin. Walmart now with earnings. Walmart shares up 6.1%. Walmart also making another major announcement this morning. It is transferring its listing from the New York Stock Exchange to NASDAQ. That effective December 9th. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here on Bloomberg Business Week Daily. It is time for Bloomberg Business Week's Women's Health segment. This is where we focus on key issues developing technologies impacting the present and future of women's health around the world. And in many ways, we get into health generally. But with us right now is a special guest, Hugh Herr. He's professor from the MIT Media Lab, co-director of the K. Lisa Yang Center for Bionics at MIT. Dr. Herr joining us from Cambridge, Massachusetts. Hugh, great to have you here with us. Thank you so much.
Pleasure to be here.
Yeah, great to have you here. And if you may, your story, you know, my understanding is you lost both your legs at 17. You're now helping others that have gone through similar things and helping them in their future. Could you just share a little bit about maybe what happened and really how it's shaped what you're doing today?
Yeah, sure. As a young man, I was passionate about mountain climbing. And when I was 17, I was in a mountain climbing accident and suffered frostbite. And my medical team gave up the fight to save my biological limbs, and they were amputated just below the knee. So today, I use very high-tech powered prostheses to stand, walk, and run. So from that experience, I really realized how limited current prosthetic technology was, and I really dedicated my life as a young man to really advance the field and enable extraordinary technology that will allow people to do what they want again, to move again.
Well, and if I may,
have the bodies that they seek.
Right. And my understanding, you've been at the MIT Media Lab for, I think, 21 years. You have a doctor of philosophy from Harvard. What has changed when it comes to prosthetics since you joined the lab?
Yeah, good question. When I was first fitted with prostheses when I was 17, the prostheses were made of wood and foam and metal. They didn't have any computational intelligence, no sensories, information, no actuation. And I said to myself at the time, really, this is it? This is what society can provide? Today, there exist computer-controlled prostheses that adapt and are even connected to the human nervous system that can convey human agency and ownership and really restore physicality for humans.
So if that's what exists today, then what's coming in the next 10, 20 years? What are you working on?
Yeah, we're laser focused on integrating human biology with mechatronics. Our key goal is to connect the human brain to a built construct like an exoskeleton or a prosthesis. Our mission is to restore physicality. In the case of when a person loses a limb, or in a case where a person suffers a stroke and has paralysis, or has muscular weakness or joint damage, we can build these bionic systems to restore movement.
I am curious too, and you know, we've been doing these segments for a while, and often we do any kind of medical segment, we do think about the differences between men and women. And I'm curious what you've come across when it's, developing technologies or outcomes or prosthetics for men versus women. Are there differences?
Yeah, absolutely. In the case of limb amputation, amputations caused by traumatic injury are predominantly performed on men. In the U.S., it's about 70% men and 30% women. So because of that male dominance, the prosthetic technology seems to be developed through the lens of needs that men face and not women. So there's a tremendous need to develop truly personalized prosthetic limbs that reflect the needs of the individual and don't have that male bias. And that's a key area of research here at MIT.
Is that male bias because of war and military, or no?
I mean, it's typical for traumatic injury that there be a male dominance. I won't make a joke there, but whether it be spinal cord injury due to car crashes or amputation, there's typically more men than women. So the prosthetic industry needs to not only reflect the needs of men, but also obviously of women.
I have to say,
and that's a tremendous focus for our research.
No, I've got 4 brothers, 2 sisters, and my brother's man, risk takers, and there were more accidents and runs to the emergency room. And
I didn't want to say that.
And broken limbs and things, unfortunately. So yeah, we definitely saw that.
100%.
So Hugh, I'm wondering about at what point, look, and it's a question that we have when it comes to any innovation, but we know that the work is always ongoing and the work will always continue, but what is the ultimate outcome and when do you think we're going to be able to get there? You said the goal is to have this type of medical device be completely controlled by the human and as close to somebody's limb as actually possible. Can you give us a timeline when you will say we have achieved this?
Yeah, again, broadly, we're rebuilding limbs after amputation. We're also augmenting limbs that are fully flesh and bones. For in the case of a woman suffering a stroke, for example, we want to restore the functionality of her leg, as an example. Or a person that suffers osteoarthritis, we want to allow them to move again without pain. What's the broad goalpost? What's the broad goal? That people don't experience unwanted limitation, unwanted disability. Imagine a world where when you lose a limb or you have a spinal cord injury or suffered a stroke or have joint disease, that you can move again. You can move without pain. You can dance again if you'd like. That's the world that we seek.
One thing I want to ask you, and certainly in terms of, I think about diabetes and how much that impacts our population, and that can lead to certainly difficulties or amputations, certainly with feet, toes, all that stuff that certainly impacts your mobility. GLP-1 drugs, is that something you think about and how that might impact some of what you are doing in that regard?
I mean, any strategy that, in time mitigates the probability of an amputation being required from a severe diabetic state is, of course, fantastic. In many developed nations of the world, the cases of diabetes are increasing precipitously, and some of the cases are so severe that amputation results and prostheses are required. So yeah, we can approach the problem in 2 ways. Preventing a severe state of diabetes. And in cases when there is an amputation that occurs, developing extraordinary bionics that enables a person to restore their movement capacity, their cardiovascular capacity, and maintain a high level of health.
Well, we so appreciate getting time with you. We want to talk to you about AI, but maybe we can get you back here and continue this conversation, because we know technology and medical devices and healthcare overall definitely intersecting. Dr. Hugh Herr, professor from the MIT Media Lab, co-director of the K. Lisa Yang Center for Bionics at MIT, joining us from Cambridge.
Hey, when we come back, check on trading and stocks on the move. This on a day where stocks are in the red, 1.6% to the downside on the NASDAQ Composite.